multi-year trend, for example, of central banks around the world having more gold in their reserves relative to dollars and treasuries. That's partially because of price appreciation, but also because of different purchase rates, more of a shift toward gold. And I think that this current approach of tariffs further accelerates some of those trends. It encourages more bilateral trade agreements and things like that. Various organizations such as Shanghai Cooperation Organization and BRICS, BRICS Plus, they've had frictions over the years, but I do think that these are very real trends that are slowly coalescing so that countries around the world have these alternatives. And I expect this to gradually keep happening, maybe 2 steps forward, 1 step back, 2 steps forward, 1 step back. But I think it has legs to it.
All right. Hi, Lynn. Good to see you. And as always, well, you have been in the camp that prefers emerging markets over developed markets. The Indian markets have gone through a set of challenges. And those tariffs, they weren't just a negotiating tool because now they're implemented. What's your view on the emerging markets from here on? And where does Indian markets place? Because no two ways about it. We have underperformed of late. But obviously, in the longer term, we have got our tailwinds.
So I continue to be pretty bullish on emerging markets. My preference has been toward more Latin American markets. Brazil's another market that has been hit with pretty high on the tariff range, and yet they've managed to have decent performance this year. So it's kind of market specific. One of the things I've highlighted before is that with a weaker dollar this year, some of these previously underperforming emerging markets, such as Brazil, such as others, they've caught more of a bid this year. Whereas India historically has been a stronger equity performer, and they've generally suffered this year. Structurally, I'm still very bullish India longer term for multiple reasons that are pretty well known. But in the intermediate term, I continue to like and have a preference for some of the more value-oriented emerging markets out there. So the Brazils, the Chinas of the world, at least until we see some sort of rotation to the contrary.
Okay, so the B and C for now. Out of the BRICS, India, perhaps a more longer-term story. Got it, Lynn. Thank you so much for joining in. Good to have that perspective from you today. Let's quickly tell you what else we've lined up for you on the show over the course of the next 2 odd hours. At 8:35, we will have a full-blown discussion on Reliance. What were the key takeaways from the AGM? What does it mean for the stock, the geo listings, so on and so forth? Prabal Sen of ICICI Securities and Balaji Subramaniam of IIFL Capital Services will weigh in. At 9 o'clock, we have Param Desai of Prabhudas Liladhar joining in. We'll talk about some of the important trends in the pharma sector, including the fact that ownership quietly has been shifting big time in favor of private equity. What does that mean for shareholders, for, of course, all stakeholders of the sector? We'll discuss that. At 9:20 a.m., Ramdev Agrawal of Motilal Oswal Financial Services joins in. He's a market master and he's joining us from the sidelines of the 21st Motilal Oswal Annual Global Investor Conference. At 9:35, it's macro's full throttle. That huge GDP number, 7.8%. What does it indicate? Does it do we have reasons to look at higher estimates for the rest of the year? Pranjal Bhandari of HSBC and Sameer Narang of ICICI Bank join in. And after that, we get into a conversation with Keynes Technologies. Jairam Sampath joins in and we talk about demand trends. And of course, the whole China perspective. If there is more cooperation with China, what does it mean for electronics manufacturing here in India? Towards the end of the show in our special segment, It's the Economy, Lata will be in conversation with Ashish Vaidya of DBS Bank and Mutul Kotecha of Barclays as the rupee hit a brand new fresh low versus the dollar on Friday. In fact, talking of Lata and the macros, let's bring her right in. Because at least the one great piece of news that we had after market hours on Friday was this GDP print, which is much above estimates. But is it more in the technical statistics or does it really indicate a lot of buoyancy in the economy? Let's go across to Lata for some perspective on this. Lata, morning.
Well, first up, it is a good GDP number. But the point is it as good as 7.8%? For that, we have to understand the difference between real and nominal GDP. The NSO, the Statistics Organization, doesn't collect real GDP. It collects how much value has been added at today's prices, current prices. And that is the nominal GDP, which has grown by 8.8. Then, having collected that, it deflates it. It brings it down by the extent of the inflation. Now, what inflation? WPI or CPI? What it does is it takes 60% of WPI and 40% of CPI. Some mix, various headlines of WPI, various ingredients of CPI in that proportion. But the point is, neither of these contain too much of services. Whereas our GDP is 66% contributed by services. At a time in April, May, June, the WPI was negative in June. The 3-month average is 0.28. And then there's the CPI, whose average is about 2.5%. So when you deflate it by such a small number, you get a very high real GDP. But services inflation is not included in that. Because we don't have a PPI. Other countries have a producer price index. We need to evolve one, and the NSO is working at it. Until then, in all years when WPI goes to negative or very low numbers, we get this, slightly extremely good-looking GDP. Having said that, there is a statistical overstatement, but having said that, it's a very good number. Because even if you take nominal GDP, our poll threw up 8%. The number that came in was 8.8. So it is better than expected. And certain categories like services, which have done very well, it's 9.3. And public administration, government services is up 9.8. That is a real growth because you have seen government capex. If you compare this Q1 to last Q1, it is up by 52%. So there is a real growth over here, but you have to admit that there is an overstatement. What is the result? The Reserve Bank may not cut rates in September. Much was expected, but if the economy is growing gangbusters, how will you justify the rate cut? The other thing is most of the economists have upped their forecasts. I'll just cite one or two. CLSA has upped it from 6.1 to 6.3. Kotak has upped it from 6.1 to 6.5. Citi, Samiran Chakrabarti always expected this WPI, problem. So he already had 6.7. Now he's taken it up to 7.2.
All right, Lata, thank you very much for that. That's a very precise explanation. Of course, it's a great number, but there is some technicality involved. Low deflator, perhaps a reason for that very large blowout number, which you saw on Friday. We'll take a quick commercial break here. We're going to come back. More stock-specific action that we want to get to you. Top 10 stocks on the other side. Stay tuned.
Welcome back. So the cues across Asia are fairly mixed this morning. Two large markets going in totally opposite directions. Japan is down, reacting to US tech stocks declining on Friday. And China is up because the PMI numbers out of China, the private survey, Caixin survey, it goes by a different name now, that is at a 5-month high. So manufacturing data out of China looking good. Hang Seng's up over 2%. Let's get the implied open up. Now, given the fact that we have such good news coming in the form of GDP, and of course, there's a GST meeting this week as well, despite all of that, just getting about a 35-point uplift at the start. But let's see. Maybe the bulls can try and build on this during the course of the day. As always, we have some stocks as well that you should be keeping on your radar. So let's straight away get to the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. So now let's quickly recap Reliance Industries. The big takeaways, obviously the Jio IPO is finally going to be a reality.
Oh, yes. So there has been a timeline which is announced now. Jio plans its IPO in first half of calendar year 2026. The broadband traction and plans to sell in 5G stack to overseas customers as well. So that's the other big news. Retail ambitions that included 20% CAGR growth target for the next 3 years. FMCG also should see large investments coming in from the company, $12 billion in the next 5 years itself. They also announced a new JV with Meta, and this is for expanding its partnership with Google Cloud. There's a lot of focus on AI as well, and new energy ambitions, they have been scaled up. The targets have been outlined, specific capacities in specific years as well. Brokerages, they are sanguine. Kotak Institutional Equities has an ad call, target 155 per share. HSBC has a buy call with a target of 1630, and JP Morgan has an overweight call on the stock with a target price of 1695 per share.
All right, Sonal, thank you very much for that. So Reliance, and of course a discussion coming up in a short order on what was announced. I mean, it's of course important for Reliance, but also perhaps for some other sectors out there. Well, let's talk about IndusInd Bank and RBL Bank. Financials in focus. Gaurav is here with details. Gaurav, morning.
Well, good morning. Both the banks actually held its AGM. So there are two things to highlight. For IndusInd Bank specifically, the highlight from the AGM was that shareholders have now rejected the proposal to have additional director nominated by promoter. Remember, this was earlier the news, and because of which there was some speculation that this will also turn as a positive news, because the promoter is also asking RBI to give approval to add additional stake. When we look at the promoters and shareholders, around 54% of the shareholders voted against the proposal because proxy advisors raised some observations about the said resolutions. In fact, promoter also issued a statement. What they said is that they believe there is a misinterpretation and they will be happy to address the concerns. So definitely on the back of this news, IndusInd Bank is definitely going to be in focus. RBL Bank, on the other hand, there also we saw board actually approving the fundraising. Remember, this is going to be enabling resolution for around 6,500 crores of fundraising in this year. So definitely both these banks are going to be in focus today.
Okay, all right. Thanks a lot for that, Gaurav. Well, let's hop across to Rima. She's here to tell us about Vodafone Idea. Morning, Rima.
Hi, good morning. So TRAI has released the July subscriber numbers, and the key takeaway is that Reliance Jio has added the most subscribers, but both Bharti and Reliance Jio have added more than 4.5 lakh subscribers. Vodafone Idea is in focus because they continue to lose subscribers. In the month of July, Vodafone Idea has lost 3.6 lakh subscribers, which compares with a 2.2 lakh subscriber loss in the prior month. And I'm just going to leave you with how the subscriber base tally stands as of now. In terms of not revenue market share, but subscriber market share, Jio is right on top with about a 41% market share. That's 477 million subscribers. But we know that Mukesh Ambani, in his speech, AGM speech, spoke about how Jio's subscriber base has crossed 500 million. And Airtel follows with nearly 400 million subscribers. That's about a 34% subscriber market share.
Okay, all right, Rima, got it. So we'll keep all of those stocks on our radar as well. Let's talk about Ather Energy, because Ather Energy had a big day and it announced a lot of new plans, etc. Sudarshan's here. Sudarshan, I forget the name of the day, what they called it, but big announcements coming in.
So it has made major announcements over the weekend, but before I talk about those announcements, let's take a look at the registrations that was seen in the month of August. Company has seen highest ever registrations in a month. It was up 61% year on year and up almost 9% month on month. Now coming to the new announcements. First, it has announced new platform, that is EL. Second, it has showcased Redux, that is a concept motor scooter. And third, company is saying that it will release Ather Stack 7.0 that will be used for interaction with scooter via voice. through the help of AI. Now talking about the commentary, company is saying that it can build 3 to 4 scooters with the help of new platform over the next few years. An EL platform that company has launched is going to play a major role in improvement of margin over the next few years. Second, on the pricing front, company is saying that it's not looking to launch any new product under the price of rupees 1 lakh, and 1 lakh it believes that it's going to be Lakshman Rekha for that. Now the market share, 20% market share, company is saying that it's very much on the horizon, because already in South India, its market share is already up more than 20%, and overall India market share 20% is very much on the horizon. And last is rare earth magnet issue. Company is saying that its supply has improved, but as per its base case, it's moving to low rare earth from HRE, that is heavy rare earth magnet. But overall commentary is positive from Ether Energy.
All right, Sudarshan, thank you very much for that. So that is Aether in focus. Now, Zydus Wellness and Aurobindo Pharma are the other two names we want to focus on from the pharma space. Vinny is here with details. Vinny, good morning.
Hi, good morning. So Zydus Wellness, we are seeing positive news for coming in here. Zydus Wellness has acquired UK-based Comfort Click, which helps them foray into the UK as well as the European market. Now, obviously, 100% stake is what they've acquired. This is at a equity value of around £239 million. Now, this will help them in vitamins, mineral supplement, and this is estimated, the market in Europe for these two things are estimated at around £11 million. So positive, takeover or acquisition that is coming in from Zydus Wellness. Overall for Comfort in terms of revenue also, it was £134 million revenue in FY25. EBITDA was at 21 million, expected to be positive for the company. Now on the flip side, we have Aurobindo Pharma, which is actually expected to be under pressure given that its Telangana unit had seen an inspection from the US FDA from 21st of August to 29th of August. And this is an API manufacturing facility in Telangana for the company. They've received Form 483, 5 observations for this one. It's procedural in nature, not more in terms of integrity issue, nothing on that front, but a procedural nature in terms of the 5 observations. Keep an eye out on both these stocks.
Oh. Okay, all right. Thanks a lot for that, Vinny. Well, let's hop across to Upasana. She's here to tell us about some more stocks that are on the news. Morning, Upasana.
Good morning. First up, let me start with NCC. The company's water division has bagged 2 orders in the month of August worth nearly around 788 crores. Next up is REITs. Now, company has bagged orders worth nearly about 25 crores from NTPC for a period of nearly about 24 months. Hence, even this stock will be on our radar today. And lastly, coming to PG Electroplast, the company has signed MOU with Government of Maharashtra to invest nearly about 1,000 crores in Greenfield project in Kamargaon, that is in Ahilyanagar. So all in all these 3 stocks we'll be closely watching out for today.
Okay, all right, Upasana, got it. Thanks very much for that. We'll keep them on the radar. So let's actually recap our list of stocks to watch this morning. The ones that have positive news flow would include names like Reliance, RBL Bank, Aether Energy, Zydus Wellness, NCC, REITs, and PG Electroplast. Stocks with negative news flow would be IndusInd Bank, Vodafone Idea, and Aurobindo Pharma. Okay, so those are the equity market cues for the morning and the equity stock list to watch. Let's also quickly catch up with what's happening in commodities. Manisha is joining in with the latest. Manisha, good morning.
Morning, and thank you for that. I'll start with the crude oil prices, which are extending decline. Of course, if you look at the month of August, this is the first monthly decline after 4 months of gains that we've seen in case of the crude oil prices. It has to do with weak demand concerns, excess supply that we're looking at into the market, the U.S. summer demand season also with end us with this long weekend. The markets will watch out for the OPEC Plus meeting, which is on 6th of September, where we will understand on what their output plan going forward is. In the meanwhile, it is all about the SCO summit in focus, where you have the India, China, Russia state of heads in attendance, and the statements coming in from there could also be moving the crude oil prices. What also is trading quite firm is the precious metal prices. In the Indian space, we have gold and silver both trading at all-time highs. In the international market, gold is just $50 away from hitting that $3,500 of an ounce, which is an all-time high yet again. And silver is trading at 14-year highs in the global markets there. The month of August has been quite strong, and the markets are taking support from trade tensions, supply tightness, high investor demand, and the gold-silver ratio also quite supportive. And the markets also seem to be looking at almost baking in that 25 basis point rate cut in the month of September, the decline in US dollar index, a very strong safe haven buying. All of those factors have kept the precious metals in favor.
All right, Manisha, thank you very much for that. So that's precious metals in focus. Well, Sudarshan is back with us with the brokerage call of the day. So what are you picking up? Good morning.
Good morning, Prashant. So first one is CLS on IT. It says that by US Fed, so it's expecting a rate cut of almost 75 basis points over the next 1 to 1.5 years. And this could lead to a 10 to 15% increase in valuation multiples for Indian IT companies. And there is a potential for a discretionary demand revival in realty, utilities, materials, staples, and energy. And it is positive on India's IT sector, attractive valuations. It maintains high conviction, outperformed two stocks, and those are Persistent and Tech Mahindra. It also maintains outperform call on TCS, Infosys, HCL Tech, and Wipro, and it has a hold call on LTI Mindtree. Morgan Stanley has initiated coverage on CG Power with buy call and target is 799. It says it is among India's most diversified capital goods players with a strong presence in manufacturing. It also is going to be a beneficiary of strong growth in power. For industrial segment, it sees revenue and EBIT CAGR of 14% and 15% respectively over FY25-28. For power systems, it sees revenue and EBIT CAGR of 35%, 42% respectively over FY25-28. Last one is Indigo. Investec has come out with a no. It has a sell call and target is 4,050 per share. It says globally, airlines typically do not have concentrated promoter holdings. But in Indigo, Bhartiya still owns 36%. That is exceptionally high for a volatile business that is airline. And valuations are already pricing aggressive growth strategy for FY30. And valuations are looking very stretched. And any additional supply could weigh on the stock price. And that's the reason it has a sell call.
Okay, all right. Sudarshan, we'll keep all of those stocks on our radar. Thanks very much for joining in with the update. Let's take a quick break. We'll come back on the other side. We'll have Ambrish Baliga joining in for some stock ideas for the day. And also we get into a full-blown discussion on Reliance and the key takeaways from the AGM. Prabal Sen of ICICI Securities and Balaji Subramaniam of IIFL Capital Services join in.
Welcome back. Hope you're having a good morning. Well, as promised, let's get in Amrish Baliga, independent market expert who joins us on the show. Hi, Amrish. Good morning and good to see you. And as always, well, let's focus on the banking names because the Nifty Bank itself has recently underperformed. What's your view on IndusInd Bank? You know, there's that news piece that's come in over the weekend that the shareholders have defeated the resolution for promoter to appoint an additional director. Well, the management has come out and said, you know, they clarified that, you know, they're happy to iron out any kind of issues.
Right.
But what's your view on IndusInd Bank? And RBL Bank as well as looking at some fundraise. View on both these two names.
See, in the short to medium term, I think there will be pressure on IndusInd Bank because whenever there is a management change and with a new CEO coming in, there would be further cleanup, irrespective of whatever the earlier management or the board has talked about already cleaned up balance sheet. But then whenever a new CEO comes in, there's a further cleanup which happens, and that could also surprise the markets going ahead on the negative side. So I think for the time being, we should see pressure on IndusInd Bank. So right now, I would not recommend. RBL, yes, the stock has already moved up, but then when there's a further fundraise happening, I think the stock will hold on. But from here, I don't know how much upside would be there. I think that could be a bit limited because the way the stock has moved, I think the upside is limited. But for the time being, I think there'll be a cushion because of the fresh fundraise.
Amrish, hi, good morning. Markets, overall, what's the view? A bit of a downdrift, right? And the rupee also not helping at the margin. Hit a new all-time high, past 88. What's the view building?
See, on the markets, I don't see too much of a downside from here because anyway, the tariffs have been there for a while, and just because it has been, reconfirmed and applied from 27th, and because of which we saw that, knee-jerk reaction in the last couple of days. But then, I really don't see the markets going too much below that 24,200 levels. And let me tell you, as investors, we have a choice. Unlike a business owner, I think as investors, we have a much larger choice because the business owners who have been affected by tariff, I think it'll be very tough for them, at least the near future, at least in the medium term. But then from a market perspective, I think tariff has also created some sort of opportunities because, we have clearly seen that the government is working overtime to push consumer demand. So I think there would be a lot of opportunities in this pocket of consumption, especially FMCG, white goods, automobiles. I think that's where the opportunity would be. And as investors, I think we should always look for opportunities and utilize that.
Okay. All right, Amrish, we'll get to some more stocks and questions in a bit. But for now, let's put the spotlight on Reliance Industries. Big announcements coming in from the AGM, including the Jio IPO timelines. Let's go across to Sonal once again and take stock of the street view. What are the broker calls saying, Sonal?
Largely positive, but of course the big headline was the Jio IPO and the timeline there. Let's start with Kotak Institutional Equities. There's an ad call. They say company reiterated target to double EBITDA between FY22 to FY27. That is an important reiteration. Jefferies says they have a buy call and FMCG should see large investments to propel revenues to $12 billion in 5 years. New energy ambitions have been scaled up. With Jio's IPO, it could lead to potential holdco discount in Reliance Industries. So the valuation continues to be very important. HSBC has a buy call. They say commitment to improve pace of growth of retail and launch of new energy business was the theme. So the new aspects in terms of capacities and timeline in new energy business was very important this time. JP Morgan has an overweight rating. They say key announcement was, of course, intention to list Reliance Jio by June 2026. This may not be value unlocking anymore. Street valuations for Jio in Reliance Industries SOTP has been marked to market to peer multiples already. There is a probability of higher tariffs into IPO. The increases could be a catalyst for the Reliance Industries stock as well. They say there have been concerns around eventual holdco discount crystallizing for Reliance Industries, but a fair degree of the discount is already priced in, so that's not such a big worry, according to JP Morgan.
Okay, all right. Sonal got that. Thanks very much for a quick roundup. Well, let's take this conversation forward. The AGM, of course, saw Mr. Mukesh Ambani lay out the growth blueprint for the company. Reliance Jio is all set to go public in potentially what is going to be the biggest listing that we've seen in the history of the Indian stock market. And also there are big plans on AI and, of course, the plans for the new energy business as well. Prabal Sen, from ICICI Securities, as well as Balaji Subramaniam of IIFL Capital are with us. Gentlemen, morning. Thanks so much for being with us. Balaji, I have to open with you. How many months and quarters of us discussing, right, what is happening with the Jio IPO? Well, it's finally coming through, but it was interesting that the stock didn't show the kind of enthusiasm that you'd expect now that we have a formal timeline. Your first thoughts?
Good morning. Thanks for having me on the show. So finally, we have the announcement of a potential IPO of Jio platforms, which has been, long lingering. And, finally, there is some clarity with the company itself saying that, it should happen by the first half of 2026. So firstly, I think, one of the reasons why the market did not react could be that they are going ahead with an IPO and not a demerger. Because with any IPO, once a new listed company comes in, there is this holdco discount, which will start getting applied. And that could be anywhere between 20 to 50%. But that said, the comforting fact is that since we don't know how much exactly is going to be the IPO size and what percentage of the company would be getting listed. So if it's a small enough chunk of the company that gets listed, then the holdco discount should not be that high. And there's also a trade-off involved, because if you go with a demerger, then unlike, say, an IPO, then Reliance will also lose hold of the majority stake that it has got today in Jio platforms. So maybe between the two, the company and the board felt that it would be better to go via the IPO route.
Morning, gentlemen. Balaji, and how does this differ with what happened with JFS, Jio Financial Services?
So JFS was an out-and-out demerger, and there, things were quite different. Here, there are private equity investors that are involved, and let us not forget that telecom is a capex-heavy business. So to that extent, I think in this case, Reliance wanted to ensure that they hold on to a majority stake even after the IPO.
So that explains the concerns, this holding company discount, Balaji. But overall, I mean, they are talking about top dollar valuation, one of the largest IPOs ever, largest entities. And also, we don't know the details. I mean, we don't know the exact mechanics of it. But, what is the kind of valuation that right now you're putting to Jio, to the telecom business, and the fact that they're looking at these big strides in AI? Remember, there were a lot of other announcements, the alliances with Meta, with Google, AI for all in India, etc., which is going to be the next big piece that is being built through Jio.
If you look at my SOTP, I'm ascribing somewhere around $135 billion EV to Jio platforms. So this includes the telecom business, which is Reliance Jio Infocom, and it also includes the digital businesses where the annual EBITDA run rate is close to $500 million. So put together, I am at $135 billion. There is a debt of around $21 billion. So my SOTP builds in around $115 billion of market cap for Jio platforms. And my $135 billion EV roughly translates to around 12 odd times FY27 EBITDA for Jio platforms. So for reference, Bharti today, if you just take the India business and if you remove the tower company, that is Indus, it is trading at somewhere around 10.5 times FY27 EV EBITDA. So to that extent, Jio at my SOTP kind of implies a 15% premium for Jio or rather JPL versus Bharti. So that is where we are. As far as these new announcements are concerned, these are all, clearly long-term positives. They may not contribute a lot in the near term. But as JPL is looking at more and more enterprise businesses, they are talking about digital services beyond connectivity. which they are targeting to offer to enterprises. Even now, they have been offering some of these, but I think in the long run, all these AI tie-ups will help JPL cater more to enterprise demands. Some of them, like GeoPC and all, will be more relevant from a home broadband rollout perspective. If you look at Geo, they today have around 21 million homes connected through either fiber or through FWA. And as this number rises going ahead, I think these are some of the areas through which they can extract a higher wallet share of the households.
Okay, all right, got that. So you're ascribing a value as of now, an enterprise value of 135 billion to Jio. Let's also talk about the other big announcements, of course, when it comes to O2C or the new energy business. Prabal, hi, morning. Thank you for waiting by. So the big headline was, right, Mr. Ramani saying that the new energy business could eventually be as big, if not bigger, than overall oil to chemicals. What were the key takeaways for you, and in terms of watching the traditional energy side of Reliance, O2C, and the new energy side, what will be the key triggers or watch points over the next couple of months?
I think, first of all, in terms of discussing the scale of the business, new energy today, if you look at it, the 75,000 crore investment that was announced initially when the plans were announced, I think way back in 2022, very clearly, if you have to get to 50,000 crore plus of EBITDA, which is what is the average OTC EBITDA, let's say, for the last 5 to 6 years, if you have to get to that kind of a level, number one, the investments obviously will go up by a factor of 4 to 5x, depending on what kind of pre-tax ROC you assume. If you assume, let's say, 16% pre-tax ROC, which is sort of a standard kind of an IRR that you would expect in investments of this size, that itself takes you to about a 3 trillion investment. So I think very clearly there would be a more aggressive capex rollout in terms of the plans that have been announced. What is obviously encouraging is now that the contours of the business are becoming much clearer. There are much more clearer milestones being shared for the individual segments of the overall new energy value chain. So obviously the visibility on those businesses taking shape and basically starting to monetize the investments that have already been made or will be made in the next couple of years. I think that is something that's becoming clear. In terms of scale, as I mentioned, it is obviously a very ambitious objective, as are most objectives when it comes to Reliance. But, achieving a 50,000 crore EBITDA is something that will not happen in a hurry, from what we understand, but it is something that definitely is on the cards, given the sheer scale of the projects that have been announced and the plans that have been announced in terms of, sort of bringing together the entire chain of producing renewable energy, using it to produce green hydrogen, and then going on to produce green chemicals. And on the side, selling the green energy that is left surplus after captive requirements are utilized. So it's a value chain that is being set up, similar to the entire integrated value chain for the downstream petroleum business that they've set up over the last 3 decades. This is something that's a long haul, but it's a massive transformation in terms of their overall energy business.
All right. Thanks very much, both of you. Quick insights, but I think really good to get them. Prabal and Balaji, appreciate your time here on CNBC TV18 with that perspective on Reliance and what they plan to do in each of the businesses. I mean, the other, of course, is the consumer business, right? I mean, big plans there as well. We'll talk about that in a bit. We'll take a break. We're back. Technical Trade, Sudarshan Sukhani and Siddharth Rai will be with us with exactly that. We'll also focus on the big movers on Friday, which saw a sort of large volumes, and of course we'll get you the delivery stats as well. Stay tuned, coming up.
Welcome back. Well, let's now get to some interesting stock movers. Hormaz is joining in, looking at some interesting volume buzzers, delivery stats, technical aspects. So let's see what are the stocks on Hormaz's radar this Monday morning. Hormaz, take it away.
Good morning, Surbhi. And just some of the names that bucked the trend in an otherwise weak market on Friday. Granules India was one of them. Of course, it ended off the highs of the day, still with gains of around 5%. And it was the highest volumes that the stock had since the 3rd of December last year. And that was the day when its Gagillapur unit had received that OAI status from the US FDA, post which the stock tanked over 10%. So almost 1.7 crore shares traded on Friday's trading session, which is well above the 20-day average of just around 16.5 lakh. And for the last 4 sessions, the volumes on Granules have all been higher than its 20-day average, and even almost 27 lakh shares were marked for delivery compared to a 20-day average of just 7 lakh shares. So interesting volume activity seen on Granules. The other one, of course, is Vardhaman Textiles. Profit booking came in after that strong up move on Thursday, but the common factor between Thursday and Friday was that both the sessions saw very high volumes. Even Friday's session saw almost 69 lakh shares traded. Thursday's session had close to 3 crore shares traded, and you take that for the 20-day average, that is only almost close to 19 lakh shares, and excluding Thursday, that 20-day average falls to even lower, to almost 5.7 lakhs. So it's continuing to remain above that 20-day average, and almost 6.5 lakh shares were marked for delivery, which is not only higher than its 20-day average in terms of traded volumes, but of course on the delivery volumes as well, of close to around 2 lakh shares. Jindal Poly was the other one that bucked the trend on Friday, almost 15% higher in that final trading session of the week, the biggest single-day gain since August of last year. And if you go back to volumes, almost 51 lakh shares were traded, which is the highest since almost December of 2010, and the 20-day average is only 27,000, and 3.5 lakh shares were marked for delivery compared to a 20-day average of 13.5. And Panama Petrochem is the last one on the list. 5th day of losses on Friday, the biggest single day fall since June last year, highest traded volume since July of last year, 3.5 lakh shares traded, a 20-day average of just around 25,000, and for delivery as well, 1.5 lakh shares marked for trading compared to a 20-day average of just around 13,500.
Okay, all right. Thanks a lot for that, Hormaz. Well, time to slip into a short break. Come back. We'll continue our focus on markets. In fact, we'll get you pre-opened rates, and Param Desai Prabhudas Leela will also be joining in to discuss the key trends in the pharma sector.
Welcome back. This market pre-open we just kicked off, and just 14 and a half minutes to go for the market open. So that's where we're at. August sales numbers are all starting to flash at the bottom of the screen. Bajaj sales at about 4.17 lakh units. And of course, the comparable figures also are coming up. Sudarshan Sukhani and Siddharth Rai are with us with what they'd want you to do as far as specific trades go. Gentlemen, good morning. Great to have both of you here. Sudarshan, how things set up to your mind? Bit of a drift lower for the market over the last few sessions. Are we at the lower bounds now?
Yeah, good morning. See, we are already in some kind of a downtrend. That could be a correction, that could be a longer downtrend. But the trade is to look for shorting opportunities. So that drift is likely to continue on the downside. Now, what really happens is that intraday, sometimes markets move on their own. So I'm not giving an intraday suggestion. The larger view is that the Nifty should break down and seek lower levels towards 23,000 or 23,000 plus somewhere. So every rally should be used to build short positions. That's the view. Intraday, anything can happen.
Okay, that's a straight, clear statement that every rally should be used to build short positions. Take that on board. Thanks for that, Sudarshan. We also have Siddharth Rai joining us. Siddharth, what's your view? I mean, would you be looking at any index trades at all? If yes, what's the preference, Nifty or Bank Nifty?
Yes, sure. Subhi, good morning. And first of all, thanks for having me on the show. See, we saw quite a bit of a rough last week in the index. Even today, after some good GDP numbers popping in through the weekend, we're not seeing some very strong signals of a very strong opening, even if we look at the GIFT Nifty index. So this tells us that the momentum is still clearly not bullish. Having said that, so we see the first 1.5 hour is going to be very crucial for the index today, because this is going to set the undertone for this whole week. And for this 1.5 hour, we have to look at one level, and that is 24,500, because that will be the make or break level in today's session. See, if the index manages to go back above 24,500 in the first 1.5 hours, we can see a good short covering, a swift short covering towards 24,650, and in fact, even 24,700. But if we fail to do so by the end of the first 1.5 hour, we can definitely see this weakness continuing towards the next important level, that is 24,150. So I would suggest that only all the positions in an index should be taken considering this one level, that is 24,500.
All right. Hi, Siddharth. Good morning. Good to see you in, and Sudarshan as well. Siddharth, from a couple of perspectives. One is the PCR is moving to the lower end of the range, and the FI is net short. Well, that supports our case. And today, since the US markets will not be trading, hopefully the FI selling reduces. That's just a couple of points out there. Tell us individual stocks. What's in your radar?
Yeah, sure. Anijal, see, two stocks, both of them we have to buy because they are trading against the market's momentum. First is definitely from the FMCG space, where we are seeing some good, strong momentum building up. The stock's name is Marico. See, there has been a very good structure building up in the Friday session. We saw the stock running up from the day's low, and right now the kind of momentum is building up in this stock. I can see the stock moving towards 750 slowly and steadily. So Marico can be bought in spot. It is trading around 726.27. So the stop loss will be 715, and our targets will be, as I said, the first target will be 749. Second target will be 765. The second stock is Dalmia Bharat. See, we've seen a very good momentum building up in this counter. It has completely ignored the volatility and weakness that is building up in the indexes. So even in Friday's session, there was a very good breakout seen in this stock. So momentum can be strong. The stock has managed to close above 2,400, which is another good signal. So Dalmia Bharat can also be bought. In spot right now, the price is around 2401, 2402. It can be bought. The stop loss will be 2379, and our targets will be, the first target will be 2455, second target being 2470.
So two counter trend kind of trades, Marico and Dalmia Bharat. Good to get that, Siddharth. Sudarshan, what about you? You were saying you'd look for, along with the trend kind of ideas, things to sell. With stocks as well, is that where you're at?
Well, the selling mainly should be done in the Nifty. That's a much safer instrument to sell. But in stocks also now, there is a mixed bag. I have two buys and two sells. So CG Power is a buying opportunity with a stop under 680. ITC is a buy with a stop under 401. Paytm is an intraday short with a stop above 1228. And SJVN, which was Satluj Jal Vidyut Nigam earlier, SJVN is an intraday short with a stop above 95. So 2 buys, 2 sells. Primarily, the market should drift down.
Okay, all right. Gentlemen, thank you very much. Both of you, 2 buys, 2 sells is the sort of setup in terms of trades, etc., which we are getting at this point in time. I think the pre-open has now come to a close, and maybe we can look at some of this stuff in some detail in terms of where we are at. So the Nifty is absolutely flattish. I mean, we saw a bit of a swoon, bit of a dip, and then it's kind of sort of come up very, very nicely and very, very sharply at this point in time. Let's get in Param Desai. He's with us. He's with the Prabhudas Leader. Param, good to have you with us here. We're talking about hospitals, healthcare. We have the management of Narayana Health with us. This is, I mean, last week, and we asked them what's happening with this insurers versus and that was, of course, a case of a specific insurer versus hospitals. But, I mean, we've seen this with other insurers as well, where hospitals have refused to sort of onboard, this or that insurer. It's been resolved now. I'm talking about, of course, the Association of Hospitals versus Bajaj Allianz General Insurance. How are you looking at this, Param? From a hospital's perspective, one factor which keeps coming up when we speak with investors with a slightly longer-term horizon, even those who are invested and have made money, is, they all say at some point, will there be some kind of government intervention because healthcare costs have gone too high? So let's just start there, Param.
Sure. So if you see, generally for most of the hospital listed companies, around 25 to 40% of their payer mix is coming from the insurance. Having said that, I think post-COVID, this insurance mix has gone up and largely it's been getting replaced from cash or say from government scheme. So in that extent, I think the overall volumes have gone up with the insurance mix also going up. You also pointed out the healthcare cost going up. So if you see the ARPOB, which one of the indicators which we follow in the hospital space, has been growing around 7 to 8% in the last say 2-3 years, slightly much higher. If you see that is not a function only of price increase. I think that is also a function of say average length of stay going down, robotic surgeries going down, your efficiency has been improving more digitally. Most of the companies have been going up. So that has also been aiding the ARPOB to go up. So that is not only purely a function of the price increase in my view.
So this risk, I mean, is there a probability? I mean, should one consider this risk at all? I mean, over the last couple of years, this came. Stocks sold off 10-15% if you remember. But then, of course,
yes.
That realization happened that is kind of very difficult to do. So just your thoughts?
Yeah, so if you see on the regulatory side, it's very difficult to tell in terms of what, but I think clearly Supreme Court or the government had passed on the statement that the standardized pricing won't be there. And to be fair, most of the listed corporate hospitals in terms of their services, quality of services are much different, superior than some of the standalone hospitals. So to have a standardized pricing, practically it won't be possible given that the private market share in India is largely 60-65%. One needs to largely depend on the private infra setup. So I think regulate the pricing may not be the right answer. But yes, from insurance, as the insurance mix goes up, I think to that extent, I think some bit of say price rationalization can happen. But eventually, this will take some time to take place. Right now, I think hospital companies have a reasonably upper hand in terms of negotiation skills.
One thing I heard from someone I was talking to is why not, every time this debate comes up, I mean, you have all these government schemes, right? I mean, I think the flagship covers you for 5 lakh rupees. Instead of regulating everything, you increase the amount for people who are eligible under this scheme, say from 5 to 10 lakhs. Yeah. So it's a more focused kind of approach instead of going for a one-size-fit-all kind of approach. Nigel.
All right. Hi, Param. Good morning. Good to see you. Well, Piyush Goyal has co-chaired, a meeting with the diplomats in UAE. What kind of a business opportunity could it throw up for the Indian pharmaceutical sector on the whole? Do you see any kind of opportunity coming up?
Yeah, so if you see, largely the large cap guys are largely dependent on the export side. So US continues to be a key market in that extent. But if you see, non-US also has been picking up, say Europe or ROW markets. All these markets have been picking up for most of the guys. So gradually, I think that it's been picking up, but it will take some time. In the near to medium term, I think US will still continue to remain a critical role in terms of scaling of the business, specifically for the large guys.
Right, got that. Param, in your coverage universe, just run us through the top ideas.
So in the hospitals, we are very positive on the entire space. We are very constructive. I think the last 3 to 4 years, the growth was largely a function of say, sweating out the existing assets. I think from the next 3 to 4 year perspective, most of these guys are doubling, say adding 50 to say 50% or 100% bed capacity in the next 4 to 5 years. So that will be largely the growth driver. So we are very constructive on the hospital space, and most of the we have a buy rating across the names on that. On the pharma side, I think the Revlimid thing, there is one more quarter, but I think Q3 second half of onward, I think Revlimid will go down. Most of these guys are companies are investing in the complex generics, biosimilars, and say GLP opportunities. That will also play out, but unlikely to compensate the kind of Revlimid which has played for in some of the names. So in that scenario, we prefer names like Sun and Lupin in the large cap, wherein Sun is largely the play on more on the specialty pharma. Lupin don't have any exposure on the Revlimid, but they have a very interesting US pipeline. So I think even on this base, they will be able to grow. So in the large cap, we are positive on Sun and Lupin. And on the slightly on the domestic oriented names, we are positive on Torrent Pharma and Eris Life Science.
All right. Param, we leave it there. Good getting those ideas from you. Appreciate you joining us, and thank you once again for being here. Well, I think we'll just quickly recap some of the stocks that we put out with regards to news flow, I mean, brokerage calls, etc., and how they've settled up at the end of the pre-open session. So Reliance, of course, is first up. Stock's absolutely flat. Board's approved fundraising for RBL Bank. It should come up, 0.25% lower, nothing very much. New announcements, products, etc., 3.25% higher on Aether Energy. There's the acquisition from Zydus Wellness, stocks reacting about 0.75% higher. Order wins with NCC, and there was rights as well, so 2% and 1.25% higher. There's a MOU, PG Electroplast should come up. It's recovered about 100 rupees from the lows, so stocks up another 2% or so this morning, 543. And there are other stocks with news flow. IndusInd Bank, Vodafone Idea are some of these names which are coming up. There's also Aurobindo Pharma, which we highlighted, which will come up on your screen to give you a quick sense of how we are likely to start. Well, let's get to Nimesh now, who's standing by with what's the standout brokerage report of the day. Nimesh, take it away.
Hi, morning, Prashant. So today's standout is on Emphasis. Morgan Stanley has put out a note and they've raised the target price on Emphasis to 36.25. They have an overweight rating, and they believe that they say that the company is positioning for a breakout. There are a lot of micro factors which are aligning for Emphasis going forward, and any macro support in terms of rate cuts in the US can further fuel the growth for the company. In fact, they see multiple re-rating triggers playing out in the very near future, which includes first, consistent pipeline growth. Second, size of quarterly deal wins are inching up for the company. Third, the diversification in terms of top 10 clients and BFSI is improving. Fourth, there is going to be if there is a consistent rate cut, there's going to be the risk of digital revenues falling will be eluded. And fifth, and not the last, one potential large shareholder can fully exit over the next 2 to 3 years, and that could mean how Coforge got re-rated. They expect something for Emphasis as well. In fact, Morgan Stanley has raised the revenue growth forecast for FY27 by 50 basis points and for FY28 by 100 basis points. So on back of all this, they have an overweight rating, but they've raised the target price now on Emphasis to 36.25.
All right, first rate starting to come up. Thanks very much, Nimesh, for that. We'll look at the indices and we'll look at individual stocks. 24,474 is where the Nifty is at. 53,824 is where the Sensex is at right now. So 0.25% higher on the Nifty, about 1/3% higher on the Nifty Bank. Nifty Bank, of course, is the big underperformer. The small cap index is starting about 1/3% higher, and you've got the mid cap index, which is up 0.5%. So this is a much better start as compared to, of course, what we saw last week and generally the trend that we've seen now for some time. Just the Nifty heat map in terms of how many stocks are up and down. So it's largely, 7-8 names are lower, but everything else is starting in the green. There is IT, which I can spot a bunch of names there. On the other end of the sort of spectrum is Tata Consumer, which is starting lower. But it's largely up and about this morning. 78, 80 points nearly on the Nifty. Surbhi.
Okay, it's quiet and quiet, but with a positive bias. So it's not bad. I mean, getting an 80-point pop. Movers on the upside. Infosys, IndusInd Bank, there's Trent, which is seeing some traction. Bajaj Auto, Power Grid. These are the stocks. So they're basically cutting across sectoral lines. But yes, IT is actually doing a little better. And remember CLSA's note where they see perhaps higher levels ahead of some of these stocks. They're all up and about. Tech Mahindra as well, Wipro, there's some green on overall IT. L&T is continuing its good form from Friday. There's buying in Eternal in Trend, so some consumer names as well. On the flip side, on the Nifty, you have Reliance, which is still a drag. And, Balaji explained to us why. That this Jio, if the IPO happens without a demerger, then there could be a risk of a holding company discount on Reliance increasing. And therefore, that's putting pressure on the stock. Tata Consumer, HUL are some of the other weak names. But beyond that, it's a green-looking screen for the Nifty. So not too bad, 24,500.
Well, that's right. The big mover actually today has to be Torrent Power. They have won that LOA for a 1,600 megawatt thermal plant in MP. A couple of brokerages believe the plant can generate 15 to 17% IRRs. So that's why that stock, in fact, is up close to 3.5%. The loser on the downside actually is Sterlite Technologies, because the US subsidiary is facing a penalty that amounts to $96.5 million. So because of that, I think that's one of the big losers from the broader markets. The stock is much lower. Last time I checked, yes, it's still down close to around 5%. So big downtick is what we're seeing on that particular name. What else? A few more stocks actually that are coming on your radar. You have some strength that we're seeing in Godavari Power and Ispat. Stock is up close to around 4.5%. Samvardhana Motherson, that's up close to 2.5%. BSE, the stock has fallen one way from around 3,000 to around 2,000. Today, in fact, it's popping up close to around 2% in trade. So decent start, 80 points higher. Remember, we're looking at making a higher high from a bullish perspective. So that 24,572 mark becomes the important mark to track on the upside. But 100 points up, pretty good.
Yeah, absolutely.
Just adding one more stock to Nigel's list, Zydus Wellness. The market is receiving that UK acquisition pretty well. Stock's up 3.5%. This company called Comfort Click that they've bought it for about 240 million, which is just a little under 2 times sales. The market seems to like it for the time being, at least.
Okay, well, lots happening, lots moving, and we will, of course, get you more as we go along in terms of individual names, etc. Well, I think for investors, there's a marquee conference which kicks off from today, which is the Motilal Oswal Annual Investor Conference, which is underway. We, of course, got you a preview of what the lineup is last Friday. But let's sort of get into it. Ramdev Agarwal is chairman and co-founder at Motilal Oswal Financial Services. Ramdevji, good morning. Great to have you with us here once again. Last we saw you was with the beautiful Kenyan background. And this is a nice background as well. Hustle, bustle, early morning, conference vibes.
This is completely changed. I mean, I'm really enjoying to be back from Kenya and straight into the conference. I mean, thousands of participants, hundreds of companies, thousands and thousands of meetings. I think this next 3 days are going to be quite intense, and also it will set the tone for me to figure out now that wherever tariff and all things are. So what's really happening in the real economy, how the companies are taking it, and how hopeful they are about the so-called avalanche of reforms which the government is promising. So I think there is a lot on the agenda, and days are ahead.
Yeah, from lions and cheetahs and giraffes, different kind of crowd, right? But all looking for ideas in terms of different kind of food, stocks as food. Now, but there's so much right on the table. The only thing is, what do you really? It's so many moving parts. There's always moving parts, but I guess this time especially more so. But would you imagine the crux at the end of the day for investors? The bottom line is going to be to find which are the companies where there is a little bit of predictability and sustenance of earnings growth, decent earnings growth in these volatile times. Do you think that's going to be the ultimate aim at the conference?
Yeah, I think Buffett or somebody said, uncertainty is the best friend of the long-term investor. Okay, so right now we are in the midst of uncertainty, And where now you need a very clear thinking about how to invest. I mean, in investment candidates, what all you are looking for. And this uncertainty leads to a lot of mispricing of very good stocks because there could be some very short-term challenge of 2-3 months, 4 months. People might come and dump it, and you know, you might be able to get it for at 30, 40, 50% cheaper. So what is important at this juncture is to really have a deep thinking and have a very clear strategy, what kind of stocks you like and are they available now at your prices, you know. So it is quite possible those companies are available at a depressed prices. So this is a great time for the investors. I don't know how good it is for the traders, but definitely a great time for investors for stock picking.
Well, absolutely. Investors can at least apply their mind. Stock prices aren't running away to, you know, stratospheric heights. So perhaps it's easier to pick good businesses right now. Thanks for joining in, sir. You know, my question to you is more on one of these big ticket reforms that's almost happening. I mean, the meeting is this week, the GST Council meeting. And it's pretty landmark. I mean, what they're talking about, a lot of items moving to 5%, many moving from 28% to 18%. The market's reaction to it after the initial pop, I mean, after 15th August speech, we had that initial pop, and then the market went a little thanda. So do you think it will eventually start leading to a bigger move around the festive season when the cuts really kick in? Or is the market concerned about something else? And, you know, there's a GST meeting and then there is the GDP number, which was also very, very good, even if you remove the technicalities aside.
Yeah.
But again, market is a bit thanda. Wow, why so?
Yeah, I think it is that this tariff issue is all over. I mean, if you see even the PM's visit, you know, everything is colored. I mean, this visit is also colored with the tariff issue with the America and all. So I think there is too much of right now noise, not so much intelligent argument, but there is a lot of noise about this issue, and everything is clouded by one particular issue. And it's not that this is final forever. It is, there is going to be negotiation, there is going to be a deal, and maybe in next 10, 15 days, 1 month, there is going to be a deal between India and America. We are long-standing partners. There will be a deal. What will be the deal? I don't know, but it will be far better than what it is right now. So uncertainty will get cleared at some point of time. So a lot of things are going to happen, but right now that looks to be overriding. It's the nature of the market. They need one headline, and for 10-15 days they will talk about it, and after that they'll move on to the next one. And whatever happens in the first one, nobody is bothered. So I think as the GST thing comes closer and actually people come to know that 28 is abolished and it has come down to 18%. So you look at some auto companies, particularly where the demand is very sensitive to the price cuts, say like motorcycles particularly, say if it comes down from 28 to 18, I mean, you could see massive surge in the demand. But since it has not happened, it is very difficult to figure out whether it will be 20%, 30% jump, or will it be just a muted kind of situation. My sense is if it is honestly implemented from 28 to 18 for motorcycle companies or entry-level car companies, I think automotive will be one of the segments to watch out for in next 1 year. But since it is not done, nobody believes these kind of reforms can happen. I think markets are skeptical, and then on top of it, this tariff thing is also playing out.
Hi Ramdevji, good morning. Good to see you. And the problem with regard to this Trump's tariff tantrum is that it's become a reality. So that's an issue, right? Because it's hurting sentiment. And I think that will be the single biggest trigger just in the near term to help those animal spirits to come back. But if we don't get clarity, say in the next month and a half or so or thereabout, it'll continue to weigh on the markets, right? Difficult to move up when you have only 10% earnings growth, you have this tariff issue and uncertainty. What is your take, sir?
Yeah, Nigel, it is not about one thing. There is you always get a package deal in the economy. You always get a package deal. You have the GST coming in. You have the government has so many powers of non-financial reforms also. I mean, there can be things on education. There can be things on tourism. There can be things on judiciary, on a home front. I mean, see, it's not everything is linked to just tariff and kind of GST and things like that. So I mean, let's see when the PM comes back in next week from all his tours, what kind of energy he brings in and what kind of avalanche of reforms they unleash. So I would remain a lot more optimistic about how things are going to shape up, even for earnings. You see, just yesterday, all the economists, they are wrong by 1.1% for a quarter. I mean, the GDP grew at 7.6%, where the expected was about 6.5. I mean, consensus was 6.5. Even your biggest of the bank economists, they were at 6.5. And here comes a number which is 7.6. So I think we don't know everything. And this momentum is big. This 7.6 has come without full flow of the credit, without full flow of the fiscal concessions, without full flow of the rate cuts, and now the promises of GST cuts and all. So there are a lot of emanations to counter. If there is anything, of course, 50% tariff, if it becomes long term, it is going to hurt the trade. But the trade itself will find its way, and I think the economy is just not slave to just this tariff. So I think we have to be much more calibrated, and it's a good time that market was a little overpriced. Global markets have run up big time, so we have underperformed in the current year. So now the corrected market, or I would say steady market here, thanks to the massive flow we have, domestic flow, is holding it here, and it is an opportunity for the long-term buyer to look at some of the opportunities.
Mr. Agrawal, just a question, sir. Is the market currently underpricing the positives that we've seen in the last 2-3 weeks? GST cuts, GDP, build up ahead of festive season. Is the market underpricing it because it's in a bit of a negative sentiment state of mind? Or is it right in the wait and watch approach?
No. Surabhi, you just see the pace at which the foreigners are selling for whatever reason, and domestics are countering that. So if it was not for the domestic flow, you imagine what would have been shape of the market. I mean, if you sell $1 billion in a day, cash, what would the shape of the market? Market cannot absorb that. But just that we have a much bigger flow from domestic. I think last month was a record. In August, DI itself has bought almost 1 lakh crore. I mean, at least that is what the SEBI number is saying, that 96,000 crores have been bought. It's a record in itself that in 1 month we have bought a lakh crore cash. So I think we must not undermine. The biggest force, I would say, are two things. There are two biggest forces. One, the sustained flow of domestic flow and participation. The GDP is rising, and that's my main presentation today. India, the multi-trillion-dollar opportunity. So if you go through the presentation, the GDP is growing, savings are growing, and on top of it, participation is growing. So this combination of both is just explosive in terms of demand for the paper in the economy. Now, just because there is a demand for paper, stock markets are not going to go up. It is going to go up when the economy does well and when the earnings start climbing, which is what we expect in the second half of the year, or particularly the next year. I think we are going to see bumper increase in the earnings by maybe 15, 17, 18%, depending on the slew of reforms which is implemented.
I was just thinking, Ramdevji, I remember when a year and a half back, the situation was exactly the opposite. Local flows were very strong and FIs were also buying. And then I remember somebody, I don't know who it was, said, well, if this continues, there will be, prices will go berserk. I mean, they won't make any sense. Because mutual funds will get money, they'll have to buy. You can't sit on the cash. So you need supply, supply of paper. So it's always, a bit of this, a bit of that, right? Depending on where you are at. So a couple of questions, Ramdevji. One, just to go back to the conference, what are you, apart from your own presentation, who are you most excited to listen to? Just give us 2-3 names or 2-3 sort of, the things at the conference.
So that way, it's a full, it is designed always. The organizer, they sit with me and they ask me, quiz me, which are the sectors or what kind of themes you would like to see. So, one of the things I was telling them was about AI. So there is somebody who is presenting from McKinsey about the AI actual impact. How much is hype and how much is the real impact? That's what, because AI is continuously evolving so rapidly, trillions of dollars being spent, and we have no idea from where the earnings are going to come. So is it a hollow hype, like what happened when the internet came first in 2000, and then it leads to a complete collapse? Or is it earnings supported? It is going to have a huge impact immediately on the earnings of the corporates globally also. And hence that trillions of dollar investment is good. So that's one theme. Second is about the real estate. So I think Abhishek Lodha is presenting on that. we are talking about quick commerce. I think Adit Palicha is the thing. So like that, every single slot has been, even, and I think one of the most coveted participant would be our Commerce Minister, Mr. Piyush Piyush Goyal. So I think, so there is all this, I think 16 or 17 CEO tracks have been very, very well curated to represent one issue or other, which is there in the top of the mind of all the investors.
Ramdevji, I think Prime Minister Modi is speaking right now. Stay with us. We're just going to cut across to it and come back.
SCO को लेकर भारत की सोच और नीति 3 मुख्य स्तंभों पर आधारित है। SCO, S सिक्योरिटी, C कनेक्टिविटी, O अपॉर्चुनिटी। पहले स्तंभ S यानी सिक्योरिटी के संदर्भ में मैं कहना चाहता हूं कि सुरक्षा, शांति और स्थिरता किसी भी देश के विकास का आधार है। किंतु इस मार्ग में आतंकवाद, अलगाववाद और अतिवाद बड़ी चुनौतियां हैं। आतंकवाद सिर्फ किसी देश की सुरक्षा ही नहीं, बल्कि पूरी मानवता के लिए एक साझा चुनौती है। कोई देश, कोई समाज, कोई नागरिक अपने आप को इससे सुरक्षित नहीं समझ सकता। इसलिए आतंकवाद से लड़ाई में भारत ने एकजुटता पर बल दिया। इसमें SCO रेट्स की बहुत महत्वपूर्ण भूमिका रही। इस वर्ष भारत ने जॉइंट इंफॉर्मेशन ऑपरेशन को लीड करते हुए अल-कायदा और इससे जुड़े आतंकी संगठनों से लड़ने का इनिशिएटिव किया। हमने रेडिकलाइजेशन के विरुद्ध समन्वय बढ़ाने और मिलकर कदम उठाने का भी प्रस्ताव रखा। टेरर फाइनेंसिंग के खिलाफ आवाज उठाई। इसमें मेरे समर्थन के लिए मैं आभार व्यक्त करता हूं। एक्सेलेंसी, भारत पिछले 4 दशकों से निर्मम आतंकवाद का दंश झेल रहा। कितनी ही माताओं ने अपने बच्चे खोए और कितने बच्चे अनाथ हो गए। हाल ही में हमने पहलगाम में टेररिज्म का बहुत ही घिनौना रूप देखा। इस दुख की घड़ी में जो मित्र देश हमारे साथ खड़े रहे, मैं उनका आभार व्यक्त करता हूं। यह हमला केवल भारत की अंतरात्मा पर भी आघात नहीं, यह मानवता में विश्वास रखने वाले हर देश, हर व्यक्ति को खुली चुनौती थी। ऐसे में प्रश्न उठना स्वाभाविक है, क्या कुछ देशों द्वारा
Okay, that's Prime Minister Modi. Important comments coming in from, of course, he's in China and is due to fly back today. We'll, of course, have it on the side of the screen and continue to put out the flashes in terms of what he's saying. Ramdevji is with us. Ramdevji, those comments coming in from the Prime Minister. Two questions. I mean, you outlined the themes and the speaker track list, what you most actually started with AI. So I just have 2 questions. One, is there a AI play in India? And this is a piece I did some time back. Most large markets have, and this is where global interest is at an all-time high, right? Maybe it's a bubble or not, we don't know. We'll see. But some of actually, it's just food for thought. Lack of AI plays perhaps also reason for foreigners, lack of interest, enthusiasm. That is one. And second, you began by saying that this is the time to be opportunistic. So is there a watch list for you, and what's on that watch list? Go on.
Yeah. So clearly, I'll tell you one thing. AI or no AI, of course, you need some iconic things to happen in the market for the attention to be drawn for these foreigners. But actually, the sustained high earnings growth rate of about 12-13%, that's sufficient. Whether it comes from even oil companies, whether it comes from steel companies, whether it comes from retail companies, consumer companies, the issue is that we have had a slowdown in the earnings. And the reasons could be many. It could be a slowdown in the credit flow. It could be inflation. It could be high interest rates. I mean, there could be multiple things. It is for me. I'm not a macro guy to figure out why it happened, but definitely there was a slowdown in the earnings in the last 2 years. Once the earnings growth picks up to say 12, 13%, 14%, I think your P multiple, aggregate P multiple, which is at about 22, that will start coming down, and that will make it. And good thing is that rest of the emerging markets, they are on the boil, and particularly China. So I think the gap between China and India P multiples, which is at about 16 and 22 right now, if that goes down a little more, say we stay 22 or 20, and they come up to 18 or so, I think there will be natural flow of the money into the market from foreigners also. So let's not bother about whether there is an AI play or not. And maybe right now, AI plays, pure AI plays in India would be in more of a private equity space, unlisted, very small. They are trying out. If you see today's paper, there are a lot of AI startups which have been encouraged by the government, and awards have been given. So I think we will find our way.
We'll wait for them. We'll wait for them. We'll wait for them.
You have to wait for them. Yeah.
Yeah. And watch list, Ramdevji.
Yeah. So I'm looking for, since I don't invest directly, my asset management company, the fund managers, they are looking for the ideas. And the theme of the asset management company at our end is high quality, high growth. So within QGLP framework, they are looking for high quality, high growth companies. And because the moment high quality, high growth comes together, market tends to misprice them. It looks 30p, 40p, but then if the company is growing at 50-60%, I think there is always a potential for them to rise in terms of prices and beat the markets. So I think index composition, if you see, is slowly changing. In next 10-15 years, you will see a lot of internet-based companies which are growing at very rapid pace of 50-60%. They will come, despite the fact that they may not be earning today much, but their market caps are high, and they would become prominent contributor to the market caps in the indices, and eventually also very high quality earnings to the index. So I think Indian indices, Indian market is also undergoing change in the changing landscape of the kind of corporates which are going to make money.
Absolutely. Finally, sir, like you've taught us and like how we've learned, there are only two things you need for a bull market. One is strong earnings and the other is obviously strong liquidity, right? So on the latter, I'm just curious that in the conference over the next 2 days, what's the mix of investors like? Is it largely local? And in local, what kind? Is it family offices? Are you anticipating to see some foreign clients as well? What are you expecting from the mix of the investor base? And the questions that they'll probably have, also for the companies.
Yeah, so actually it is a very good mix of FIIs. A very large contingents of FIIs are coming from Hong Kong, Singapore, London, from these places. And then on top of it, you have now actually importance of domestic mutual fund is paramount. Our own mutual funds are now, we are talking about 3 lakh crores, 5 lakh crores, 7 lakh crores of equity. So these are the real gods of Indian equities. So we have, of course, they'll be fully represented here. And there are hundreds of companies who are coming between 3 days. So they'll all come at different point of time. But I would say the most important segment is the domestic mutual funds, insurance companies, so DII so-called, and then of course good mix of FIs. They are trying to see what kind of mood is here. And we are getting guys from Taiwan and Korea and some far-flung places I have never even visited. Yes, there's a lot of interest from the foreigners. Yeah, but allocations are small compared to what DI can do.
So we're looking forward to the next interview, which will probably happen from these far-flung places in the Far East, right? We'll have another beautiful backdrop with Ramdev ji and more insights as always.
Yeah.
Thank you. Thank you so much, sir, and good luck for the conference.
Yeah.
And we'll of course, catch you there over the course of the next 2 days. All right, well, with that, let's turn the spotlight on the big headline that came in on Friday evening. It was a very positive headline. GDP numbers for the first quarter coming in at a much higher than expected. The number finally that came through was 7.8%. Most estimates were ranging between 6.5% to about 6.8%. So to talk about this and to figure out how to understand and interpret this big number, we have with us Pranjal Bhandari, Chief India Economist at HSBC, and Sameer Narang, Head Economics Research Group at ICICI Bank. Pranjal and Sameer, thank you so much for joining in. So, we were just speaking to Lata about this, and we understand that, yes, there was a deflator issue at play because inflation is so low, whether you're looking at CPI or WPI, so therefore the deflator is low, so the number optically looks higher. But my point is, I think everybody knew this, right? And economists would have baked this into the estimates, and yet the beat is almost a 1% beat. 100 basis points beat above most of the consensus estimates. So, Pranjal, let's open with you. I mean, X of the technical implication, what is your assessment, or what does this number tell us in terms of the actual growth and buoyancy in the economy?
Yeah, thank you very much. So look, our forecast was just north of 7%, but not as high as 7.8%. There is a deflator issue out there, and we have tried to quantify it. I think it has overstated both industry and services. Our senses by about 1 percentage points. So if we shave that off, our senses real GDP growth number is closer to 6.8%. and not 7.8% that was announced. And even this 6.8% number, is a strong number. India's potential growth, its ability to grow is about 6.5%. So if you have a number which is higher than that, that's actually a good number. And there were a few good things that happened in the quarter. I think consumption was strong, both government and private sector. The government, both center and state, have front-loaded some of the expenditure. And when I look at consumers, I'm finding that there has been some increase in the informal sector. Look, at the end of the day, with oil prices falling, inflation falling, purchasing power rising, rains being good, my sense is that the rural India and the informal part of urban India have actually been beneficiaries. And I think that did show up in the number. So I think it's safe to say right now that on the eve of the 50% tariff, actually India's growth was pretty decent, close to about 6.8% when we take off the deflator boost.
Got that. Pranjal, good morning. Sameer, good morning. Sameer, your first thoughts in terms of what you made of the numbers and what have you done to your own estimates post this beat?
No, so I think, I agree with Pranjal. Deflator had a role to play. Also, the fact that, both center and states have front-loaded their capex by quite a bit. So if you put them both together, both center and states in aggregate spent around 3.8 lakh crores in the quarter, and nominal GDP is around 87 lakh crores. So, a number in excess of 40% there implies almost a 2 percentage point boost to growth just because of front-loaded government capex. Over the next few quarters, this boost will not be there because for the year, the government is likely to spend around 10% on capex in the year. So in the subsequent quarters, you're likely to see much lower government capex, and that is likely to impinge on growth, along with lower exports, which have been weak in general, apart from exports to the US. So in aggregate, what we have done to our estimates, given this macro backdrop, is that we revised our estimate to 6.6% from 6.3% earlier. For the next 3 quarters, growth will be 6.5 or thereabouts, or 6.7 in Q2, but then it averages around 6% in H2. So for the year, number is around 6.6. Not a bad number given the global backdrop.
Pranjal, what does this do to rate cuts? I mean, a second rate cut in October, chances of that?
Look, my sense is that RBI is going to continue to cut at this point of time, given the growth drag that comes from the 50% tariff. But it may not happen as soon as October. I myself have it penciled in for December. And the reason is that by the time we have the October policy meeting, we won't get a lot of the slowdown data. most of the slowdown is going to happen in September, and the data will start trickling in from the middle of October. So on the 1st of October, when the RBI meets, it may not actually have all the data available to claim that this is a growth slowdown and they're going to be cutting rates. So I think we'll have to wait for a little longer, and I think that is what, in a way, the bond market is fearing at this point of time. The fact that there is no easing, which is in the horizon very soon.
All right, got that, Pranjal. Sameer, coming across to you, what are your expectations with regard to the RBI? We are thumping the table. Yes, the Q1 print was good, but then it doesn't give us, from an equity market perspective, maybe that rate cut that people were sniffing may not come about. How do you expect the RBI to move going ahead?
No, I think, Nigel, I agree. Our view is that we don't expect a rate cut in this financial year anymore. Basis what is happening on the growth front, number one, in Q1. And in H2, though we expect growth to slow down, but it's largely driven by exports. Domestic economy, because of the GST rationalization and the proposed cut, will see a big rebound in consumption, particularly from September 22nd onwards, when the new rates will be applicable and the Navratras start. So we believe a bumper Diwali ahead, and that would make sure that RBI holds back on the growth front, because domestic economy should be doing well. And on the second part is that we do expect inflation also to pick up. Our numbers are pretty much in line with the RBI's at 4.5% for March quarter and 5% for the next year, Q1. So overall, we expect inflation around 4.7%, but with GST rejig, it could be 20 basis points lower than that. So 4.5% is where we see next year's inflation. On back of that, we do not see RBI cutting rates in this financial year.
All right, Sameer, what about the second quarter? If I look at the trends, whether I look at the movement of cement via rail or the auto sales as well, that's likely to take a temporary hit, because of wait for clarity on the GST rates. So that's when the near term we'll like to see some kind of pausing in terms of purchases. So Q2, do you think will be an absolute washout?
No, Nigel, we don't think so, because July has been a good month. Manufacturing growth is around 5.4% that the number came in. August also should be okay, because the impact of the tariffs will be felt in September. And by end September, we expect the domestic economy to be humming by 22nd of September. So maybe 3 to 4 weeks, there could be somewhat of a lull. But I think there will be an inventory stocking ahead of the festive season, when demand should be much more than normal because of the GST rejig. So overall, we believe for the quarter, we should be around 6.5%, if not more. And the deflator will play a bigger role even in the next quarter, when WPI is actually running negative right now.
Okay. And Sameer, you said for the full year, FY26, you're at 6.6% GDP growth estimate, right?
Yes.
Okay. Pranjal, same question to you. I mean, your growth expectations for the full year, how do the final numbers now stack up? And what are your expectations from festive season? Clearly, Sameer is very, very optimistic. He's saying it's going to be a bumper Diwali, and it'll probably help mitigate the tariff impact as well. But your thoughts on the way the GST cut will play out through the economy?
Yeah, I think there's going to be a big difference between growth on the ground and official GDP numbers. And I think that's going to keep the markets a little confused. My sense is growth on the ground for the FY26 fiscal year will be about 6.3%. But the official numbers, because of the deflator problems, could be closer to 7%. It could be like 6.8% or so. And I think we have to live with this at this point of time, that there are going to be two vastly differing numbers and two vastly differing sentiments around GDP in the economy. In terms of how growth feels in the next couple of months, I'm going to agree with Sameer that July and August looked pretty good. So we were good on the eve of the 50% tariff. But I think September is going to be very weak, not only because new export orders are likely to fall, but also we're going to see some of the postponement of GST purchases. Beyond that, some of the fiscal spending may also come off, because a lot of state governments have front-loaded spending. So I would say that we could see some softness on the ground for several reasons in the next couple of months. Will GST help? On the margin, it could. But there's one thing I'm going to look out very closely. Is it going to be revenue neutral or not? Because if it's not going to be revenue neutral, it means that rate cuts in some items will be compensated by rate hikes in some other items. And then we have to be very careful. Is the net impact going to be positive or not? So we'll wait for this in the next couple of days. I think there are important GST meetings. But for me, the one thing to watch out is it revenue neutral or not?
Oh, very extremely valid point out there, Pranchal. So we'll have to keep an eye out with regard to clarity on that. But final question to you, Pranchal, before we let you go. What about the Indian rupee? Post the S&P upgrade, one would have expected, some kind of cooling off in the yields, bond yields. That hasn't really happened. The rupee as well has slipped. What's the trajectory? Because money market is the lead indicator, right? And, that was looking a little bit weakish. So what levels are you working with out there?
Well, look, at the end of the day, if you have exports to the US falling quite a bit, the trade deficit will widen. And we're already seeing that capital inflows have not been very strong. We have net FDI, which is not growing at a particularly impressive rate, and portfolio inflows are uncertain. So all of this, makes it very uncertain on how the rupee might behave, going ahead. So I think we'll have to work with the weakness that we are seeing at this point of time. In terms of bond yields, look, my sense is that if fiscal can broadly remain in check, if GST is broadly revenue neutral, inflation is low, I think RBI is going to cut more. The sentiment should overall turn positive at this point, at some point, but it's not now. Right now, I think there's this big risk aversion across all asset classes, which is dragging down, everything, equity markets, the rupee, and rates. But I think once the dust settles, I would imagine some parts of the bond yield will start looking attractive again.
All right, Pranjul, Samir, we will continue this conversation and continue to ask you as things develop, right? I mean, as both of you agree, the impact of these tariffs, of course, will take some time to show up, but show up they will, unless, of course, something gets worked out very, very quickly, and at least these additional 25% tariffs go away. Thanks, both of you, for being here on the program. We'll come back with Jairam Sampath of Keynes Technology. He'll be with us to discuss demand trends and their F526 outlook. Stay tuned, coming up.
Welcome back. It's actually a pretty decent morning. I mean, these days when you get a nice 0.5% upward drift on the index, 100 points up, it's nice and steady, looks good. Actually, the mid-cap screen is looking even better. Look at the mid-cap index. It's up almost 1.5% now, and we have a very positive advance decline ratio as the day kicks off. Well over 2,000 stocks advancing. So it's a really, really good looking screen. I just want to pick out actually some names since there is momentum and some buoyancy building in the market. Look at a Garden Reach Shipbuilders, 5%. Ola Electric, which has been absolutely electrified in the last 1 month, stocks up 40% in the last 1 month. It's up another 7% this morning. That's Ola. You just saw Garden Reach Shipbuilders. Zydus Wellness on the back of that acquisition is still building on those gains, 4-5% up on Zydus. Rate gain, 5.5% up on rate gain as well. So there's plenty going on in the market, and the mid-cap screen is looking really good. Actually, on that note, let's bring in Vamakshi. She is watching out for power stocks specifically. Vamakshi, morning. What are you looking at?
Well, good morning, Subhi. Taking a look at Torrent Power, there is a note that came in from Morgan Stanley. They have an overweight call on this counter, target price of 1,444 rupees. And this is on the back of an LOA that the company won for almost 1,600 megawatt thermal plant in MP. They believe that the plant can generate an IRR of almost 15 to 17%, assuming a 70 to 30 debt equity ratio. They believe the capacity charge could range between 4.1 to 4.3 rupees per unit. And they have also highlighted that the balance sheet has enough headroom for growth with current net debt to EBITDA of 1.4 times and net debt to equity of 0.4 times. So they appear to be quite bullish on this particular counter. Let's also put the spotlight on CG Power because there is an initiating coverage note from Morgan Stanley. They've initiated coverage with a buy call, target price of 799, and they say that the company is among India's most diversified capital good players. They say that the company has a strong presence in manufacturing, ranging from motors. It also is a beneficiary of strong growth in power, which includes transformers as well as switchgears. And the company is also aiming to build capacity in critical sectors like semiconductors as well as railways. So what they're highlighting essentially is that the company is a very diversified capital good player. Other than that, they believe that the industrial business revenue is expected to grow between 14 to 15%. The power systems revenue could see a growth CAGR of almost 35%. And semiconductors, the peak asset turnover here could be 1.9 times by FY31. So they appear to be quite bullish on CG Power as well.
Okay, all right. Thanks a lot for that, Vamakshi. Well, as promised, let's move on to our next management, Kaynes Technology. That's the company on our radar. We're now joined by Mr. Jairam Sampath, the whole-time director and CFO of the company, who joins us on the show. The key focus points of this conversation will be basically three broad themes we're looking at. The AMX sector amid the India-China talks, India's semicon boom and the key players in the value chain, and the OSAT business outlook. That's going to be important. Well, Mr. Sampath, thanks a lot for joining in, sir. Let's focus on the OSAT business first. When will it be commercialized? I believe the facility is almost up and running, but revenues will start coming in from Q4. So could you confirm that? What kind of revenue recognition should we see from the OSAT facility in 26? That's only Q4, I think so. And in 27, what should it look like?
Yeah, so certainly significant revenues will happen in FY26. Already the pilot plant is up and running. We have in the process of producing samples and getting it approved and so on. So hopefully we'll be off the block first, if I'm not mistaken. And then, of course, there are two other clients lined up. So there are three major clients lined up: Alpha Omega Semiconductor, Fujitsu L&T, and also Infineon. And so we have our hands full right now for the next 2 years or so when we establish production for all these clients and some more. And so it's on schedule. Pilot plant is already ready. The main plant is also coming up. Maybe in a month's time, it will get outfitted with machinery and so on. So we hope to announce the shipments as soon as possible. So the first set of shipments will go for testing and all that, and commercial supplies will start in the Q4.
Yeah, that's what the company had indicated earlier as well, Mr. Sampath. So it's good to know that you're on track with those timelines. So that's the first headline, that commercial shipments of chips from your OSAT facility will start in Q4 of the current year. Yes. Some sense, sir, on what this may mean for the company's revenue. I understand it will take time to scale up, and these are only the pilot lines, I think, that are currently ready. Yeah. But how will this revenue, your semiconductor revenue, scale up from Q4 going into the next couple of quarters?
Yeah, so earlier we had put a small, let's say, structure to this revenue. We said we do about 1,500 crores by FY28. So we might increase beyond that too, because what will happen is that this year and FY27, we'll do bulk of the investments. And the first phase, which is legacy packaging, wire bonding, and all of those things will probably be up and running, and we'll probably start working with some of the advanced packaging too. So by FY28, I think we should get significant number up, even beyond what we thought earlier. Earlier we had set a target of about 1,500 crores. We might even exceed that in FY28 in semicon business alone. Yeah.
Okay, all right. So, recently Kaynes, they've committed, I think, around 50 billion for the PCB project in Tamil Nadu. Could you tell us what is the plan out there? Yeah. Will it be you're funded via the current QIP money, or or is the company planning any fresh issue to fund this plan there in Tamil Nadu?
Yeah, let me just clarify that.
Yes.
So 1,400 crores, which is 14 billion rupee, already committed, and we have raised funds through QIP. It's funded 65% of the cap is funded by state and central governments. We have government order to that effect, and then the remaining we put in as equity and little bit of transient debt. then the remaining 3,600 odd crores is for a new project, which we have signed a non-binding agreement with the state government, and we are awaiting their government order on how much of, let's say, subsidies that they will provide. So we expect a similar, and if not more, maybe about 65-70% under the CMS plus the state government subsidy. And so the remaining portion of it, we think that the first set of investments that we have done will start yielding cash in a couple of years time frame. So some of it will be put from there. And so we don't think we will raise any further major quantum of funds though. And this project is for prepeg and copper-clad laminates, and it's at a different location. It also augments capacity of our PCB plant too. So it may take its own 2 to 3 years time frame beyond the 2 years that we require for the Chennai plant to come up. So yeah, so that's the actual status. So 3,400, maybe 65-70% through subsidies. The remaining we will generate from our PCB business, and also, if necessary, a small bridge loan also we might take.
Okay, got that point. So now we need to understand the implications of all the tariff changes and what's going on in terms of just global realignments, right? So let's start by understanding what you've told us earlier. You said that your exports could go up to 25% of the total revenue pie by FY27. Now, how much of that is going to be dependent on exports to the US market? And currently, I mean, because of that specific section, I think electronics is exempt. And I'm not sure if all categories of electronics, I think some categories are exempt. But tell us, are all your exports currently exempt from the tariff?
Yeah.
What happens if they come under the tariff?
Yeah, the HSN code 8541, I think broadly by and large where we operate is completely exempt from import tariffs there. But then we are talking about situation as announced now. So we think that the semiconductor exports will probably not be directly to the US, but they'll be more to their warehouses outside of India, like maybe Singapore, Hong Kong, and other places, maybe even Taiwan, etc. And similarly, PC board also will be, PC board, some of the exports will be probably to Europe and maybe Japan, and then bulk of it will come to India too. So we don't see any major disturbance due to this tariff structure. It is just that it is causing a bit of anxiety among the, let's say, investor community more than the production people. And what we hear on the ground is that people are now, they have put in place long-term measures to move alternative production, to create alternative production sites in India as compared to China. And these moves earlier, only the American companies are contemplating. Now it's European companies, Korean companies, and Japanese companies. This plus one has become a little, so I don't know whether it was intended or not, but the entire thing is benefiting us now.
But and exactly to round that up, a little short on time, maybe we'll have a longer conversation on this later. But on this China plus one, and now we are engaging with China. Now, as an electronics manufacturer and someone with large export aspirations as well, does that at all worry you? We don't know what shape and form eventually this bilateral, trade ties with China will take. But if India decides to open up in some way the electronics sector, I mean, I don't know, that would be a cause of concern for you, I believe.
Yeah. So what will happen is, see, this gives us a unique opportunity to take the best out of the Western markets, which are like revenues, and best out of China, which is like technology and inputs. So I think we've got to be cautious about what we do. But I think all in all, it is beneficial to have good supply side relationship with China and a good sales side relationship with the rest of the world,
Okay. All right. Very quickly, sir. FY28 and FY30, you had given some ballpark PAT guidance. Could you just reconfirm that? What is the outlook? Because currently you're doing just 400 crores of PAT. Market cap is close to around 40,000 crores. But the street believes this 300-400 crores of PAT can go up substantially. So for FY28 and 30, what is the number?
FY30, we said about $2 billion is the kind of number. And maybe about two-digit PAT at 11%. So 11% of 18,000 crores is what we think we'll hit at the minimum. Of course, we think that it might be north of that too.
So around 1,800 to 2,000 crores of PAT by FY30.
Minimum, yes.
Got it. All right. Thanks a lot, sir, for joining in and filling us in with all of those details. We look forward to having a chat with you and see how things are progressing on the OSAT front, on the PCB front, as well as on the core EMS business. That said, well, let's get back to the technicals of the market. Nagraj Sethi is back with us. Hi, Nagraj. Good to see you in. Good start to trade, at least today. Markets are holding with gains. What are the levels you are looking at, and what's the fresh trade?
Hi, good morning, Nigel. Yes, the market has bounced back after a few sessions of decline, but still, I think markets are not out of woods. Though this bounce back could face strong resistance around 24,700 levels. If Nifty sustains about 24,700, then one may expect some more upside towards the near term. I think there is a possibility of Nifty bouncing, rebounding from the highs towards the support of around 24,200 to 300 levels, which is a strong cluster support with regards to a previous swing lows, 200-day EMA, as well as the previous gap area of May 25. So in terms of stocks, I have a couple of stocks on both sides. One is from a short and one is from a long side. From a long side, granules, the chartically granules has bounced back very well recently in the last couple of sessions after a consolidation. Currently moved above the 200-day EMA hurdle. Right now trading around 514.5. One can look to buy at this point of time. The upside target would be around 545. One can place a stop loss at 499. Second one is from a short side. OMCs, especially BPCL, was showing some.
Oopsie. Okay, all right. I think, that line snapped out there, but BPCL is the one that Nagraj wanted to talk about. We'll try to get him back for the time being, slip into a short break, come back, continue to focus on markets. Stay with us.
Welcome back. So the equity market is having a good morning, currently 100 points up on the Nifty. Let's find out what's buzzing in commodities. Manisha is here with us. Manisha, what's capturing your imagination this Monday?
Well, there's nothing left to imagination, really, with the kind of gains that we've seen, especially coming for the precious metal prices. I mean, you have to take a look on the kind of run-up that we've seen in both of these. So gold is just very close to that $3,500 an ounce mark, which is an all-time high that the gold prices saw in the month of April. For the Indian markets, we're trading at an all-time highs at around 1,05,000 rupees per 10 grams. So it has been a one-way rally that we've seen happen in case of 2025. And it's not just about gold. Take a look at silver prices. 2% of gains in Asia right now. And we've crossed above that very important psychological mark of $40 an ounce. For the Indian markets, it yet again is an all-time highs for the silver prices also. That is because rupee has continued to decline. 3% down in this year, a worst Asian performing currency, and that has led the Asian prices or the Indian prices quite on the higher side. This is what we've done in sense of gold prices in the last many years, and I've taken a 5-year gap as I put this chart across for you. In 2005, you had gold prices trading at around 7,700 rupees. This is per 10 grams. And then we've seen prices continue to gain very, very strongly. Last year, we were trading at around 75,000 rupees. This was the price that you saw in the markets there. But this year, we are trading at 1,05,000 rupees. 2020, the prices were at 50,000. And as you can see, between 2010 and 2015, the gold prices did not move so much. It was a year of consolidation in those 4 or 5 years. But then 2015 to 20 to 25, it has been doubling every 5 years when you look at the gold prices therein. Take a look at that in sense of percentage terms as well. In the last 5 years, we've seen prices decline only once, and that was in 2021. And the kind of gains that we're looking at in sense of gold in 2025, gold clearly has been the best performer in last 5 years in that sense. So 2025 really going forward as the best in 5 years in case of gold there. The last 4 years have given you very strong returns continuing. 2024 was strong gains as well. But this is the year that we've seen string of all-time highs starting from the month of Jan itself. And it's not just about gold. Take a look at the silver prices. We've seen very strong gains come in for this one as well. And as you can see, it has been doubling up every 5 years since 2015, same as the way gold has done. We were trading at around 33,000 in 2015. That was 10 years ago. 2020 was 68,000 rupees, and currently we are trading at 1,23,000 rupees a kg. It has been very strong gains that you can see in case of silver as well. This is what we've done in sense of percentage terms, and silver, this is the best performing year in last 7 years when you look at silver as well. The negative day return was in 2021, but then as you can see, since 2022, it has been a string of positives, and 40% of gains is what silver has given you in 2025 till time. We still have 3 or 4 months to go, but silver price is clearly on fire here. Well, the major reason for this is, one, you have expectations of a US Fed rate cut in the month of September. There is decline in the US dollar index. The markets are looking at a lot of uncertainty, and there is some safe haven buying because of that as well. So while the US court has ruled Trump's global tariffs illegal, but it's been kept until October 14th. So that is something that the street will watch out for. And then when you look at the gold and silver ratio, that has been supportive. The US inflation data has boosted expectations of a Fed rate cut at least twice in this year. That clearly has been supportive. And the way the markets are slowing down, the economic data has been on the weaker side, not just in China, but in US as well, has been supportive as well. And then the markets have seen very strong investment demand, whether it comes in from central banks, from retail, in the digital front, ETF buying in gold and silver, all of that has seen net inflows. The street does expect that going forward from here as well, you could be looking at higher highs as the market is just about broken a very, very strong psychological levels on the higher side.
Well, Manisha, looking at your historic charts, it just tells me our grandmothers were perhaps the best fund managers, weren't they? Really, they've been proven right and how. All right, with that, we have to take a very quick break, but coming up, our special segment, It's the Economy. Lata today speaks with Ashish Vaidya of DBS Bank and Mitul Kotecha of Barclays as the rupee hit a new all-time low versus the dollar last week.
Welcome to It's the Economy. The rupee touched a fresh all-time low of 88.30 per dollar on Friday and continues around that range this week as well. The rupee has seen the highest fall among all EM currencies versus the dollar in calendar 2025 and in August as well. For the year, it has fallen 2.5%, while most Asian currencies have actually risen versus the dollar, which in turn is because the dollar index itself has fallen this year from 106 to 97 levels. The rupee has also been depreciating against the yuan. It's at its lowest level against the yuan as well. So is this entire depreciation of the currency partly being blessed by the Reserve Bank to help exporters who are facing high tariffs? Or, is this something because of FII flows? And where is the rupee headed from here? For all these questions, I am joined by Ashish Vaidya, the Managing Director and Treasurer, Global Financial Markets at DBS Bank, India, and Mithul Kotecha, Head of FX and EM Macro Strategy Asia at Barclays. Ashish and Mithul, thank you very much indeed for your time. Ashish, first up to you. This fall, first let us see where we are headed from here. What is the sense you are getting now that 88 is crossed? Will 89 look easy in 2025 itself?
So let me start with the fact that, it's a well-known fact that, whatever is happening to the rupee is basically because of the Trump tariffs situation we are seeing in India. And some bit of it has already been sort of discounted. Having said that, now, technically speaking, I think the support for the rupee is somewhere about 87.80 to 87.90 in the near term. And on the higher side, top side, I would think that the rupee has a potential to go to about 89 or 90 levels, depending upon obviously the news profile that comes in. Very important to actually, the situation right now is very, very dynamic. You got to look at probably somewhat like a 4-pillar approach to look at how the dollar rupee will trend. Basically, the announcement that can be made by chiefs of the countries in the various media platforms. Second would be the views and the stand that the central bank takes. The third could be the economic policies and reforms, like we've seen the GST reforms sort of being talked about in India, and probably in the near future we're going to see that. And obviously the actual data that gets published. So broadly, from a medium term or from a day-to-day term also, these announcements will make a lot of difference. So it's really about day-to-day. But technically speaking, like I mentioned, about 87, 80, 90 levels on the lower side, but to an extent it could be 89 or even 90 on the higher side, depending on how worse the news gets.
Okay. Well, Mithul, to come to you, isn't the worst priced in? I mean, it's almost an embargo in terms of exports to the US, and nothing else pretty much has changed. The global GDP numbers are not getting recalculated anytime soon. So would you say this is the worst, or do you think there is further depreciation, further sharp depreciation?
Yeah, look, I think I think a lot is in the price. I would agree with that. I think, when we look at the levels that we're at now, the rupee is cheap. It's cheap on a rear basis. It's cheap on a near basis, and cheap from spot perspective compared to its peers. And so I don't think now incremental weakness from here is going to do that much in terms of exports performance. There is a real risk that the more the rupee weakens, you're going to increase the oil import bill at a time when pressure is there to actually reduce imports of Russian oil. So I don't think there's a lot of value in further weakness. The big question at the moment is when and if RBI will step in, at what levels. It's very hard to catch a falling knife here. So it's hard for me to say, look, this is done for now. But I do think that we were amongst the most bearish on the rupee earlier this year. But it's actually gone through even our end year forecast for dollar INR. So you can see how quickly this move has happened. We'd been forecasting a move through 89 into next year. So I don't think here that there's a lot more weakness to be had. I do think it's oversold. We've been saying that. Obviously the 50% tariff was worse news. But again, I think a lot is in the price. I think if the RBI comes in, that's going to be important. FPI flows are quite negative, and especially on the equity side, bond flows are certainly more positive. And that is adding as well to the weakness of the rupee. So like I say, I wouldn't want to call a bottom here, but it does look technically and fundamentally oversold at these levels at above 88.
Okay, I was actually even coming around to the same point. Ashish, the current account deficit has been revised higher, the forecast for the current year by many economists because of the tariff. I mean, assuming our exports to the US fall by, $20-30 billion, the current account deficit has been increased. The forecast has gone up from about 0.7 of GDP to about 1.2% of GDP by most economists whom I polled. But that is, all of $50 billion. Our reserves are $640 billion. So would you agree with Mithul that immediately perhaps the worst is priced in? Or would you say that, 89 is like in the near term?
No, so I completely agree on a fundamental basis. I think India is sort of well poised. You look at the GDP, you look at the local growth numbers, everything is looking positive. But having said that, markets and traders have a tendency to overshoot, right? And that's where I'm saying that. And typically, when you see outbursts of rupee, it's probably in the range of about 2 to 3% kind of moves, and then it sort of settles down. So I'm just looking from a pure technical sense. Fundamentally, I simply have no disconnect with that. That rupee is extremely cheap, and I think eventually we, as things stabilize, we will surely get into the appreciating bias, because the growth inflation dynamics of India versus the rest of the world is actually improved substantially. So on a fundamental stack, I'm completely with both yourself as well as Mithul. But in the short term, I really think that what if next the European Union announces an embargo on India exports and all that kind of stuff. So we really don't know how things, and one tweet or one news in the media can change the entire sentiment. It could be 87 the next day. It could be actually 89, 90 the next day. That's where I'm really coming from.
Okay, no, fair point. Mithul, what's the view on the dollar itself? Is not the dollar also expected to weaken, and therefore would not that put a floor to rupee depreciation?
Well, I think the dollar has already weakened a lot as well. And if you look what's happened to the dollar this month, it's been heavily sold. Whether it's to do with actually, everyone thought tariffs would be positive for the dollar. It clearly wasn't. There has been outflows earlier in the year. But again, from our perspective, a lot of the dollar selling has already taken place. It's similar, we would not want to call a bottom at this point, and maybe in the next few weeks, you might still see some of that pressure linger. One of the biggest focuses for us from a dollar perspective is really what happens with the Fed and Fed credibility, and whether President Trump has his way in terms of actually removing Governor Cook, whether and how quickly he can get his nominee Miran into place. Don't forget there's already 2 nominees in the Fed board. So there is a lot of focus on the Fed, and I think investors would take fright at a potentially significant hit to Fed credibility. That said, from a rate pricing perspective, we've already got pretty much 2 rate cuts priced this year. We would agree with that. So for now, notwithstanding any knocks to credibility of the Fed, we think a lot of the dollar selling is already behind us. So from a point of view of dollar rupee, on the margin, you would argue if the dollar flat lines or is slightly firmer in the next few months, that doesn't bode well for the rupee. But like I said, a lot's in the price. I do agree that it's now depending on a day-to-day, it's the news flow, it's what tweets are going to see. All of this is important if we see more tariffs, but there's also an equal chance that 50% is not going to be remaining in place on tariffs on India, that we could end up seeing much reduced tariffs eventually, especially if there are going to be eventually talks between Trump and Modi and there's some progress on discussion. So I wouldn't necessarily say this is the end of story in tariffs.
Okay. Oh, yes, most economists are not penciling in a full year 50% tariff. They are hoping, expecting that it may be only for a few weeks or months. Ashish, the rupee is also depreciating versus the renminbi at 12.32 or 37 at this point in time. It's only once before touched that number in 2021 when China was in the throes of very severe COVID. Otherwise, we are at the lowest in terms of rupee yuan as well. Therefore, do you think that there is a bit of a blessing from the authorities that a depreciated rupee will help exporters when other things are against them?
No, absolutely. We don't know really whether that's in the mind of the authorities. But having said that, I think I completely agree. The CNH has actually depreciated in the last 3 months, roughly about 4.3% versus the INR. The euro has actually, the INR has depreciated 5.5%. And against the USD, the INR has depreciated only 3.2%. So broadly, from an export balance point of view, it really helps the exporters. But I think there is more to this. We really have to watch out. And in fact, even if you look at the trade balance, we had a deficit of about 27 billion. And with an average of about 5.5% depreciation, the imports become more expensive. So the gap actually moves in to 33 billion. That is without the Trump tariff impact. So with the Trump tariff impact, the things could get a little bit more worse. I'm not being an advocate of a complete doomsday, but what I'm saying is if this scenario continues for some few more days or weeks, the impatience in the market will only grow. And looking at how the equity markets outflow we have been seeing on a consistent basis, all designed towards pressurizing India into a very weak spot. I think we need to be very careful, and I don't want to call it a top or a bottom, but I think broadly we are in a very volatile range.
Okay, just a final question to Mithul. The Indian yields are actually rising for a whole host of reasons. There is a bio strike here, but a stronger than expected GDP number has also removed any expectations or some expectations of a rate cut on September 30th when the next monetary policy meeting happens. Will that also put a floor to the rupee's fall? The fact that, rate cuts are now perhaps off the table.
It could do. Look, India still offers decent yield. And from an Asia perspective, it has one of the best carry advantages. So I would, if markets are now paring back, easing expectations, then that clearly helps. That said, look, even if there's one cut, we still expect, our house view is one more cut from RBI in October. We're not, we still think there's a risk for the RBI cuts. We actually think there's actually scope for at least swaps to move lower, even if bonds have been selling off. You're right, there's concerns. Obviously, GST rationalization could also raise a little bit more on the fiscal side of concerns. We think that's overdone as well. We're not that worried. Obviously, there is a bit of a bias strike. The strong GDP didn't help on that front. It just shows you the economy is still doing well and would probably be able to withstand the impact of tariffs quite effectively without any massive knock-on impact on growth. So, there is that pressure in the near term. But look, we also think bond markets look like they're oversold here. We still think there's potential for a rate cut, even if it's not as much as perhaps a week ago. And in that sense, but look, one more 25 basis point cut, India will still offer decent carry. And again, that will be a factor that eventually puts a floor on the rupee weakness.
Okay. Well, thank you very much for both of you saying that perhaps a lot of the fall is done, but we still remain vulnerable to the odd tweet and the odd hot-headed decisions. But otherwise, perhaps most of the bad news is in the price. Thank you very much for joining me, Ashish and Mithul. We wrap up on Bazaar on that note. Chartbusters coming.
IT stocks, they trade higher on the back of CLSA's bullish commentary on the sector. The brokerage expects a 10 to 15% increase in valuation multiples aided by Fed's rate cuts over the next 1.5 years, maintain their outperform rating on TCS, Infosys, HCL Tech. All these stocks support the frontline index.
Bajaj Auto's August sales beat street expectations, growing at around 5% on a year-on-year basis. Escorts Kubota's sales also beat expectations, registering sales volume growth of around 25%.
Shares of Torrent Power rise after Morgan Stanley issues an overweight rating on the stock. The brokerage has set a target price of nearly $14.44 on the stock following a letter of award to develop a thermal power plant in Madhya Pradesh.
Zydus Wellness forays into the UK and US supplement market with the acquisition of Comfort Click at around £239 million. The stock rises over 4%.
PG Electroplast signs an MOU with the Maharashtra government to invest 1,000 crore rupees for manufacturing unit in the state. The stock higher by 3%.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Manglam. And it's a good start to trade actually because the Nifty is holding up in the green. We're up still close to around 100 points. The breadth of the market is good. And the Nifty Bank as well, after underperforming, that's bounced back a little bit, Manglam. And the reading on the screen as well, manufacturing data looking good. So you have a good GDP print, manufacturing data looking good. Yes, there are challenges, but we would like to hear some positive noise. And that's precisely what we're getting.
Take that point, Nigel. You know, from a domestic standpoint, good GDP, which is the lag data. So far, the auto sales as well have not been particularly bad. And then you have the festive season as well. So all things will be considered as we speak out there. But, you know, when we were children, we had Captain Planet. And there was a line, with your powers combined, I am Captain Planet. I think after a very long time, you and I have come on Chartbusters together. So with our powers combined, perhaps all the four indices in the green, we hope to ensure that, you know, they stay in the green as we speak. But let's speak about some corporate conversations. This morning, I spoke with Radhiko Khaitan, CFO, Dilip K. Banthia from the sidelines of the Motilal Oswal conference. And most importantly, asked him about the demand in the second quarter, the expected volume, especially after a stellar first quarter performance that the company had, and a few niggles we had in the second quarter so far. Hear him out.
This is one of the best time for liquor industry, alcohol industry. It's due to the various regulatory changes done by the state governments, which is improving the revenue as well as this thing. In first quarter, we grew our volume by 32.5%. Our top line was also in line with the volume growth. Our EBITDA was up by 55% and the bottom line was up by 76%. The trend continue and the volume growth will continue to be in this full year, FY26. We are going to have our volume growth of more than 20% in our P&A and 20% plus in our this thing. So we are confident to deliver an excellent and all-time high number in FY26.
All right, so that sounds very optimistic, largely because after the first quarter, you said that you are targeting 20% volume growth for the entire year and 15% plus volume growth for P&A. Now you say that 20% plus volume growth for P&A and 20% plus growth coming in for your overall volumes as well. But you know, during the second quarter, there were also a lot of weather-related disruptions that took place. Has that impacted your sales in North India?
No, I don't think so. Weather-related disruption is taking any this thing. The demand and the consumption is intact in our industry. The volume is coming. Radico is growing double the volume of the industry. And we are confident because of our offerings on bouquet of the brands we have delivered in the market, right from Indian Single Malt Rampur, Jaisalmer Indian Craft Gin, the Ranthambore, Royal Ranthambore, which is a whiskey at the Scotch price point, entry price point, is doing extremely well. In the first quarter, we grew by 90%. Another Prestige Deluxe whiskey, it is After Dark, it grew by 130%. So we are growing every brand. And I think the two new offering are also going to do, which we are taking the Spirit of Kashmir. It's a luxury vodka at 3,000 rupees price point. And Morpheus Super Premium Whiskey, which is again higher than the current blend in the super premium category.
All right.
I think the brand bouquet is doing extremely well.
So what proportion of your overall sales currently comprises of this luxury portfolio, and at what price, at what rate will this grow, and what will the overall contribution be here over the next, say, 3 to 5 years?
So luxury and semi-luxury portfolio comprises roughly 10% of our bouquet. It's growing more than 50%. Last year also we achieved a turnover of 340 crores, and in FY26, as we have guided, that we will cross more than 500 crores in our luxury and semi-luxury portfolio. I think in next 4-5 years, this will be 20% to 25% of our top line, which is what we are envisaging.
So what does that do to your overall margins then? Because 20 to 25% coming in from a business that has much higher gross margins. In the very near term, you have tailwinds in the form of, the UK-India FTA impact that will come by, which will reduce your import cost on bulk scotch. And all the other prices have been fairly stable. They've, after a lot of volatility, entered stable environment. So what kind of margin improvement can we expect this year and over the next 3 to 5 years?
As we guided that this year we are going to improve our margin by 125% to 150 basis points, and next for 3 years we are going to achieve 125 basis point margin improvements on CAGR basis. That's how we are going to achieve margins of high teens in 2028.
All right, high teens margin by 2028. And I just wanted your thoughts on competition right now, because recently, Imperial Blue was bought by Tilak Nagar Industries. So obviously that brand will have a fresh new set of owners. The business will grow a little faster than what it was growing earlier. And we have Sula as well, which is the wine company, which we understand from our sources, which is looking to acquire a couple of smaller whiskey brands too. Is it getting competitive? Because, on the one hand, you have listed companies, on the other, you have these acquisitions that are taking place. And then you have, smaller Indian single malts as well, which are making waves in the market. So all of this, will this impact your market share?
So in fact, Radico is known for its organic growth. We continue to work on our brands, and market has always been competitive. And I think competition makes the best out of you. So best brands wins the market, and ultimately the consumer choice prevail. So I think we are doing on our work, and let the competition actually bring, so that the consumer gets the best. So that is our endeavor, to keep delivering the product which are better and keep doing the work for consumer. I think the competition is welcomed, and we will continue to compete in that.
All right. Your balance sheet has become a lot better than what it was, say, a couple of years ago. Now you have a debt of close to around 410 crores itself. Are you looking to pare this down further, or do you believe you're comfortable at these levels? And if you're comfortable, then will you invest some more in capex going forward, maybe take a little more debt?
So as far as debt is concerned, we've repaid 160 crores of debt in Q1. And I think the run rate for debt repayment will continue in coming quarter as well. There are no large capexes lined up. There are capexes on malt and other things which are in the range of around 150 crore every year for next 2 years. So I think by mid of next year, we will be almost debt free.
All right, that is a confident sounding management of Radico Khaitan, on track to do their best ever performance in this year, over 20% volume growth in this year, along with margins improving by about 130 to 150 basis points, targeting late teens margins by FY28 as well, with the luxury portfolio growing in contribution from 10% to 25%. More importantly, they become debt-free by the middle of next year. The stock, which was in the red for most part of today's trading session, has just inched mildly higher, but has been a bit of an outperformer in the past as well. Take a short break, come back, get you more of the markets and a lot of stock-specific action. Stay with us.
Welcome back. Well, as promised, let's get in Shivangi Sarda of Motilal Oswal for a technical check on the markets. Hi, Shivangi. Good morning. Good to see you win. What's your take in terms of the Nifty's move? You know, the problem is the up move is good. It's good to see. But sustaining this is going to be challenging because the markets are in the bear grip. Do you think that we're trying to form some sort of a bottom closer around the 200 EMA and maybe we could, see a near-term rally?
Morning, Nigel. Thank you for having me and welcome back, Mangalam. So we've seen that, of course, the markets have witnessed some sort of recovery today. And while it might feel like a dead cat bounce, but we are still holding about 24,500, which is a plus. So, of course, we are seeing that some of the broad-based market buying interest can be emerging in the sector-specific action, which is holding the entire market today. But this actually needs to hold above, 24,650 for the next leg of rally to commence after the 6 days of weakness that we've seen recently, because it's already given up the gains of the August month, and we're back to, where we were standing at the start of August. So overall, we are seeing that some sort of capped upside will remain, but then multiple attempts of recovery are being made, which is a positive for here. So we could, for the meanwhile, go with buy on decline strategy, but then again, 24,650 is the next cap that we're looking at, and the next hurdle at 24,800 marks. Of course, with the support of 24,350 levels. Talking about Bank Nifty, we've seen that some of the NBFC space stocks are, holding up this index. Of course, there has been major underperformance here as compared to the broader market, and we've seen consistently downtrend in this index from the last 9 weeks. So this index is going to take a little more strength as compared to the Nifty index, and we are expecting some range-bound move over here with capped upside. And we're looking at levels as 54,500 as the cap on the upside, with the support of 53,350 levels on the downside.
All right. What about individual stocks? Shivangi, what do you have on your list today?
So individual stock-specific action, first up on my radar is Dixon Technologies, that has resiliently stayed at the higher zones from the last 5 weeks. We've seen a consolidative band, which it has respected. Recently, from the last 3 days, we're seeing volumes are above average, and it is re-attempting to cross the previous hurdle of 17,300 levels as well. So, of course, RSI is showing a good positive divergence here with good amount of open interest addition here as well as we commence in the September series. So this one's looking quite positive with the next support of, with the next target of around 17,850 levels and a support of, 16,800 zones. And the second one on my radar is Exide. Of course, there is a lot of sector tailwind happening here ahead of the festivity that you mentioned earlier. And, seasonality-wise, these quarters tend to be quite good for this entire sector. Exide has seen a price volume surge today. The consolidation breakout of the last, 16 weeks, which is quite a good risk-reward over here. So recommending a buy here. Now, the next targets that we're looking at for Exide is 420 levels with a support of 398.
All right, take that point, Shivangi. Thank you so much for joining in and giving us your views on the index and individual stocks. With that, let's go across to our colleagues from Money Control Pro who have an idea for profit coming in. And today we have Anubhav Sahu joining in with the stock. Anubhav.
So let me briefly start with the global operating environment for Indian equities. Now, a sharp increase in the US tariffs and related uncertainty has impacted export shipments of companies across the chemical sector. Now, at the same time, FII outflows about 41,000 CR in last 2 months is now more than the inflows India had during the relief rally of April to June. Now, given this backdrop, we believe in coming days, investors can get an opportunity to accumulate stocks having strong fundamentals at an attractive valuation. Now, one such company to keep in radar is Galaxy Surfactants, which is a key oleochemicals player and gets about 10% of sales from the US. Now, some of the company's products are under exemption list as far as the US tariffs are concerned. At the same time, performance surfactant products can be manufactured and shipped from the company's Egypt plant. Now, while company needs to plan for US-bound specialty products business, we believe that the company's long-standing relation with the MNC clients and the multi-geography presence can help it to navigate the headwind. On the other hand, domestic consumption demand is on mend, supported by various policy measures. Further, the stock has a free cash flow yield of 4%, ROC of 16%, and given its defensive profile and clean balance sheet, it warrants attention in our opinion.
Thanks a lot for that. Time to slip in a short break. You come back, we'll get more focus on the markets and stock-specific action. Welcome back. Well, the markets are holding at around that 24,540. To make a higher high, which hasn't happened in the last 5 to 6 trading sessions, we need to get to around 24,572. So that's going to be the important mark that you're looking at. In terms of stocks that are moving around from the front line, well, you have Bajaj Auto. That's spiked up, particularly in this hour, so it's done quite well. And on the flip side, you have Sun Pharma as well as ITC. Both of them have moved a little bit lower. So that's from the frontline action. But Zydus, that's the one, Mangalam, that's in focus. It's rallying quite well today. Tell us more.
Yes, it's the first overseas acquisition that the company has done, and it's a sizable one as well. Why do I say that? Because, the company has gone ahead and made an acquisition worth nearly 2,400 crore rupees, 239 million British pounds, that is the first overseas acquisition. The company that they've bought is called Comfort Clicks, and it is in the business of vitamins, minerals, and the supplements segment. Now, that's a big market because the potential size of this market right now is close to around 11 billion, British pounds. And for that market, which is growing at around 8 to 9%, the company itself has been making strong inroads. Comfort Click 5-year revenue CAGR has been 57%. So just for perspective, the revenue that the company did in FY23 was close to 52 million pounds, and that has surged all the way up to 134 million pounds in FY25. How much does that account for in the overall, business? Currently, Zydus does revenues of almost 2,700 crore rupees. You add around 1,300 crore rupees additional revenue, so that's an immediate bump up that you get of 50% of your revenue. And also, we add better profitability because the adjusted operating profit of the company is 21 million pounds, and the margins come to be around 15.6%, which is higher than Zydus's own margins of 14%. So you have a deal of a great market, you have fast-growing company, and then the question is valuations. It's done at 2x sales and 10x EBITDA. Zydus itself trades at around 4x sales. So it's a deal which is margin accretive and growth accretive. At the same time, it's valuation accretive as well. The company said that the acquisition is expected to be cash EPS accretive from year one itself. So those are the positive triggers, which explains the 7% up move that we've seen on Zydus Wellness. Comfort Click currently operates in geographies complementary to Zydus Wellness. So obviously there would be synergies of revenue scale coming in, and majority of the revenue is generated through e-commerce and D2C. So that's another channel that opens up for them as well. So higher margins, newer channels, newer geographies, fast growing market and decent valuations. All of that means it's a potent combination. Stock up 7%.
All right, Mangalam, thanks for explaining that to us. Let's hop across to Sudarshan. August auto sales numbers are trickling in. Sir, how are they looking?
So far, both the companies, Bajaj Auto and Escorts Kubota, have reported numbers, and the numbers are looking better than estimates. So first, talking about Bajaj Auto, total sales have increased by 5%. Good parties, domestic sales have seen a dip, but the numbers are slightly in line or better than estimates. And exports continue to do well. Even three-wheeler segment continue to do well. Exports has seen a growth of almost 29%. Even three-wheeler segment has seen a healthy growth of more than 20%. Now, going forward ahead of the festive season, the demand, we'll have to see how the demand pans out. So overall, it's looking positive for two-wheeler segment. Now coming to Escorts Kubota, it has reported a healthy set of numbers for both domestic and export segment. Domestic segment has seen a growth of 27%. Export segment has seen a growth of almost 50%, and the numbers are 7% higher than estimates. Tractor segment is one of the best performing segments in the auto sector. Now ahead of the festive season, and the rural segment is doing much better than urban segment. It's looking much better for tractor going forward as well.
All right, Sudarshan, thanks a lot for that. So that's about the auto sales segment. With that, we are out of time on this edition of Chartbusters, but you stay tuned to CNBC TV18. The team of trading are waiting by for you.
Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema Tendulkar and Hormis Fatakia. It is a new month, a fresh week as well, and it started on the positive note. Last month was nothing great in terms of the moves that we saw. In fact, it was the biggest weekly fall in 5 months that we saw last week. So some of those gains have come back. A lot is happening. Geopolitically, we have been talking about that summit that's happening in China. The GST numbers have been better than what the street was working with, but those are backdated, and Lata explained what the internals are looking like. But a lot of things to look forward to. The biggest question remains what happens geopolitically, what happens with supply chains globally, IT taking it forward, mid-caps doing really well. So yes, barring few sectors, it's a good-looking screen overall.
You know, if you have to pin it down to, few factors driving, one, that Q1 GDP print, 7.8%. Two, as you said, geopolitically, Modi in Beijing. Three, you've got the GST Council meet, which is coming up. Numbers are one, you've got the Council meet also up ahead. And not to forget that in the last 3 trading sessions, markets were actually in the red. They closed lower. So there is a recovery from weaker levels. Mid-caps are doing very well. The mid-cap index is up 1.3%. And particularly on IT, there was a CLSA note, which basically said that, the street is now globally penciling in Fed rate cuts. A Fed rate cut is positive for valuations of IT companies. IT is not performed, it's under-owned, and therefore it's positive. And as and when these Fed rate cuts come through, which is why they're overweight. And I think they went on to even say that we could see a 10 to 15% increase in valuation multiples of Indian IT companies. 10 to 15% PE re-rating. Well, that's about the big picture, the sectors which are doing well. Hormis is now at the big wall, and he's going to tell us about the stocks.
Oh, plenty of broader market movers. Starting off the week on a positive note, starting off the month on a positive note as well. And Hindustan Zinc, of course, being the only listed pure play silver play in the country. Silver prices at a record high, having an effect on Hindustan Zinc as well. 4.5% higher on this stock, and has snapped a 3-day losing streak as well. At last check, it has had already 40 lakh shares traded compared to a 20-day average of anywhere between 5 to 6 lakh. And courtesy of this move, the stock has also broken above its 50-day moving average, which was at around 433, now comfortably above that 50 DMA. Capital market stocks are doing well for themselves today, and Anand Rathi Wealth is one of them, along with other names like BSE, CDSL, all of them doing well, 5% higher on this stock as well. And on last check, almost 2.5 lakh shares had already changed hands compared to a 20-day average of just around close to 45 to 50,000 shares. And the stock is trading at record highs today, and it was the 4th straight month of gains that the stock had seen in the month of August, as a result of which the stock is up 50% so far in 2025. The other one that has bucked the trend or has snapped a losing streak is Manali Petro. It snapped a 6-day losing streak in today's session. We've already had 10 lakh shares change hands compared to a 20-day average of just 1.5 lakh. 7% higher on the stock, and another important level on the stock to watch is that 50 DMA level of 68.7, and it's still just above those levels as well. And as a result of this move, the stock has turned positive on a year-to-date basis after 3 years of negative returns. And of course, a news-driven stock, Zydus Wellness, after the acquisition that it announced, the biggest single-day gain since July of last year. Volumes also at the highest level since June. Almost 4 lakh shares already having changed hands compared to a 20-day average of just around 10,000 shares. So a very heavy volume mover is Zydus Wellness, and the stock is also up 10% so far on a year-to-date basis.
All right, makes sense. Thank you so much for all those buzzing names, some interesting ones there actually. But mid-caps, they continue to soar higher. We have a lot of buzzing elements around. Sterlite Tech is one of the stocks which is on our radar. Reema, what's the news here?
Well, the news is that the company is likely to pay a very large order. So they've lost a legal case. So let me just run you through the details. So Sterlite Tech, there was a jury in South Carolina which ruled in the month of August that Sterlite Tech's subsidiary misused trade secrets which belonged to another company, its Italian rival. So the case claimed that they breached some non-compete confidentiality agreement. They shared, the other company's confidential information with Sterlite, giving it an unfair advantage. So that jury has ruled that Sterlite Tech subsidiary will need to pay $96.5 million in terms of damages. But this is the jury ruling. Sterlite Tech has informed the exchanges that they intend to file an appeal, and the ultimate financial implications will be assessed on the final resolution of the matter. So that's hurting the stock, 4.5% down, $96.5 million. That's about 800 crore in damages is what the jury has said Sterlite Tech needs to pay, but the company has said that they will file an appeal and contest this order.
4.5% lower on Sterlite Tech. It's slightly off the lows of the day though, and considering the fact that there is some recovery in the broader markets is playing out there as well. But for Sterlite Tech, the stock is down for the 6th straight session and almost 17% gone in these last 6 sessions, and as a result of this fall, the stock has also broken below its 50-day moving average of 117 as well. So not good going for Sterlite Tech. Of course, the big event on Friday was the Reliance AGM, and the biggest announcement from that, of course, was the Jio IPO, and a lot of brokerages have written about that as well, Reema.
Indeed. You know, I think the big question that everyone had is that this Jio IPO was so awaited, but why is the Reliance share not reacting positively? It was down even in Friday's trade, and it kept falling in the last 1 hour. And even today, you aren't seeing that optimism, right? We kept saying that this is such a value unlocking measure. It should reflect in the stock price. Now, you can go about an IPO in 2 ways. Either you retain Reliance Jio under RIL and simply list it. So the beneficiary of any fundraise would be Reliance Industries. The shareholders of Reliance Industries do not benefit. They will only benefit if the valuation of RIL as a whole rises. The other way is, which is what they did with Jio Financial, you basically demerge it and then you will get proportionate shares of Reliance Industries. Basically, you demerge it and then list Jio. So if you have one share maybe of Reliance Industries based on the merger ratio that they agree upon, you will get some shares of Reliance Jio, for instance. So these are the 2 options. The company has said has not clarified which option they will go with, but the street believes they will go with option 1, which is basically retain Jio under RIL and simply list it, which means the proceeds flow to Reliance Industries and Jio continues to remain a subsidiary of RIL, and RIL will now have a holding company discount. So that's the reason. The reason they're not going with that other option of demerger and list because it's far more complicated, which is why you're not seeing the stock reaction. But that said, what the street is saying that we could see a round of tariff increases before the Jio IPO. If you remember, many big global investors had invested in the company in 2020. Now, there would be a certain IRR you need to give them. Right? So Jefferies has done some analysis and they're saying that if those global investors need a 10% IRR, then the EBITDA of the company has to be this much. And therefore, to arrive at it, they're saying a 20% tariff increase is possible before the IPO. JM Financial also says that I think they spoke about a 15% tariff is possible. So that is a broader implication, which is beneficial for everyone. Reliance Industries, Bharti Airtel, and even a Bharti Hexacom, for instance, or Vodafone Idea.
Okay. Is there any valuation that brokers
about $135 billion to about $150 billion is the enterprise valuation that the street is currently now assuming.
Okay, all right. So that's about Reliance Jio. The next thing, of course, to watch out for will also be the tariff hikes that Reema just spoke about. Let's go across to Vamakshi because power stocks are in focus on the back of some brokerage notes. Vamakshi, what's the take?
Well, hi Sonal. You know, first of all, Torrent Power is in focus on the back of an LOA that they won for a thermal plant in Madhya Pradesh. There's a note that has come in from Morgan Stanley. They have an overweight call on this counter with a target price of 1,444, and they say that this plant can generate 15 to 17% IRRs, assuming that the debt to equity ratio of around 70 to 30. Now they believe the capacity charge could be 4.1 to 4.3 rupees per unit, and they've also highlighted that the balance sheet currently has sufficient headroom for growth with the current net debt to EBITDA of 1.4 times and the net debt to equity of 0.4 times. So Morgan Stanley appears to be quite bullish as far as Torrent Power is concerned. The next stock we're watching out for is CG Power. Morgan Stanley again has initiated coverage on this counter with a buy call, target price of 799. They say that the company is among India's most diversified capital good players. They have a strong presence in manufacturing, which includes motor franchise, as well as they have a very strong growth in power with their equipment such as transformers as well as switchgear. So overall, what they're saying is that it's a very diversified entity. Apart from that, the company is also building capabilities in both semiconductors. Keep in mind that they had recently announced the launch of their pilot sort of plant in Gujarat. Apart from that, they're also expanding their presence in the railway segment. So overall, it seems like a very diversified capital theme company. They've also gone ahead and given their estimates for different segments. So industrials over here, they're expecting the revenue to grow at 14% and the EBIT to grow at 15% between FY25 to 28. For power systems, revenue growth of 35% and EBIT growth of almost 42%, much higher as compared to industrials is what they're expecting. And semiconductors, as far as that is concerned, they believe that the peak asset turn of almost 1.9 times could be expected by FY31. So overall, they appear to be quite bullish on CG Power as well. They've got a buy call on CG Power.
Indeed, CG Power 4% higher on the stock, was up 5% on Friday as well. 15% upside is what Morgan Stanley is projecting as a base case scenario. Their bull case target is 1,044, which based on Friday's closing is a 50% upside from those levels. Vamakshi, thank you for that update. Take a short break. On the other side, we put the spotlight on cryptos in our special segment. Stay tuned, we'll be right back.
CNBC-TV.
Welcome back. The Nifty is holding above 24,500. Reclaimed that in the morning with a 100-point up move. Sensex has gained close to about 350 points. Sectorally, IT is on the front foot. The Nifty IT index is a gain of about 1.25%. You've got the PSU banks higher. Realty is up. Oil and gas is seeing some amount of gains. And on the mid-cap end of trade, the small cap and the mid-cap index is showing considerable strength. You've got Ola Electric. We'll discuss that. Very large volumes. But the stock, even after the up move that we've recently seen, 46% higher this month, is about 51% away. I mean, it's not 51. I think it's about, I'm not sure. It's about, I think, 50% away from its all-time high levels. Rico Auto, GMDC, Ather Energy, Granules India are a couple of the other stocks which are buzzing in trade. Let's now go across to Manisha for a quick check on what's happening in the commodities market.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
In Crypto Corner today, we are talking about Bitcoin halving. I mean, this is a thing that has been buzzing every year. Every 4 years when Bitcoin halving happens, we do see a price impact as well. And we do see pardon me, and investment and participation has increased as well. As you all know, Bitcoin, the supply is limited to 21 million Bitcoins here. And that clearly has been the major backbone of the kind of price run that we have seen come in for Bitcoins there. The underlying code ensures that there can be no more than 21 million Bitcoins that will ever exist. And in that sense as well, Bitcoin halving comes in as very, very important there. So the finite supply that you have of Bitcoins does ensure that you see prices on the higher side there. The economic statement and the support that its value system gets because of that is also one of the main reasons. From here, the 21 million Bitcoins, the way you see it, it's distributed through mining. There are miners in various countries doing that. The 21 million Bitcoins in existence are scheduled to be mined through and finished by 2140 there. At this point in time, when you look at all of those numbers, codes and calculations, we do understand that almost 90% of Bitcoin's total supply has already been mined. Also, currently, about 900 Bitcoins are mined every day. This is as per the calculation. Now, the process of reducing and to sustain emission and increase scarcity, the number of Bitcoins emitted per block is regularly needed to be reduced. And that is where Bitcoin halving comes into place. This is the reason that you have an importance of that as well. Now, nearly 3 million of Bitcoins are currently forgotten. This is another number that the street looks at. This is because there is scarcity. One, it also has to do with the reduction in rate there. The missing Bitcoins also comes in from the fact that you have forgotten wallet details, missing passwords or forgotten passwords. It also has to do with the lost hard drives and owned by deceased investors. Now, these are lost forever. So 3 million Bitcoins are lost forever at this point in time. This is the latest data that we have from 2024 end. Now, when you look at the halving dates, well, the first halving did happen in November. That was in nearly 2012 there. And we're also looking at first halving event that was done to reduce Bitcoins mining there. So from 50, it was reduced to 20. The last of the recent of the Bitcoin halving happened on 20th of April 2024. The halving happened at a block height of around 840,000 there, and it has been reduced quite considerably. So the number that we did see was from 6.25 to 3.125. Now, the next Bitcoin halving, as I said, happens every 4 years. So the next one is going to be happening on 17 April 2028 at a block height of nearly 10 lakh Bitcoins there. And the expectation is that the number that we saw in the previous halving, that was in 2024 at 3.125, the rewards will reduce to 1.5625. So the miners would get that as a reward there. After the complete Bitcoin mining has happened by 2140, the way the miners will earn would be in sense of transactions, in sense of royalty as well going forward. So that is where the Bitcoin halving importance comes into picture.
Indeed. Interesting there, Manisha. Thank you for that update. Ashok Leyland's numbers for the auto sales on your screens now. Domestic sales up 2% and total sales at 15,239. Slightly better than expectations as well. By the way, the Nifty back at 24,550 as we speak. So take a short break. More news and updates on the other side. Stay tuned.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Just before we move to Jay Thakkar for a chart check, take a look at Ola Electric yet again. Stock is up 12%, now is above the mark of 60 rupees and has broken above its 200-day moving average, which was at around 59.5. So well above its 200 DMA. The month of August, the best one that it had since its listing in August of 24. And the last 2 weeks have seen the stock surge as much as 50%. So most of the gains that the stock has seen in the month of August has come in the second half of the month. That's Ola Electric for you now, closing in on 61. Of course, still below its IPO price of 76 and well below its post-listing high of 157. But recovering some lost ground from its all-time lows is Ola Electric. Jay Thakkar from ICICI Securities now joins in for a quick chart check. Jay, good morning. Thank you for joining in. There's some recovery that you're seeing from lower levels. But the question, as has been the case, is this sustainable? Even we started off last Monday on a positive note, but then things just fell apart as the week went by. What are the charts indicating for the Nifty right now? And what are your stock recommendations for the morning?
Good morning to you, Hormaz. And yes, in fact, the weekly close was not that great for the indices. I mean, we had seen negative weekly close, clear selling pressure, and we had seen the rollover as well. I mean, which was quite weak. We had a monthly expiry last week, and Hormaz, we saw that maximum on the most of the stocks had in fact seen a short rollover, barring few sectors or stocks from the auto sector and the cement sector, or maybe some from the FMCG consumption as well overall. The rest of the market had overall seen a good short rollover, and in fact for the indices also, if you see Hormaz, then it was 83 to 81% respectively for Nifty and Bank Nifty, and that clearly indicating that shorts had got rolled over, and we saw again a negative close on a Friday. Fortunately, we had a good GDP numbers post-market hours, and the reaction of the same has been seen in today's market. And FI net positions also in index futures is still negative. I mean, it's at 8.5% net long only, and which is also one of the lowest, I would say, or at the extreme. Things are quite oversold. Hence, we are seeing some technical bounce back. I mean, Nifty is bouncing back also nearly from its 200 DEMA. So all of these factors, Hormaz, is resulting into a bounce back in the indices, both Nifty and Bank Nifty, which can help Nifty to bounce back to 24,650, 670, 700, probably on a Bank Nifty 54,500 to 55,000 range. But I'm seeing this bounce as a technical bounce back only as of now, or a dead cat bounce, you can say, as the overall derivative data is not that great, which indicates that the bottom is in form. Bottom is already formed. That's not the clear indication. So the short-term bounce, and I have two buy recommendations for this bounce back. One would be from the auto pack, of course. It's a Bajaj Auto. As a disclaimer, we have recommended a bull call spread to our clients on this. Bajaj Auto is trading at around 88.62. One can target 9100 to 9250 in the near term. One can place a stop loss at 8700. And the second buy recommendation would be from the cement pack. Dalmia Bharat has seen a good long rollover, good breakout. It's trading around the levels of 24.16 right now. One can place a stop loss below 23.40 and target 2600 to 2700 going forward in the short term.
Thank you very much for that. Moving on now to Zydus Wellness for more on the news and to understand the story behind it. Mangalam joins in.
Well, Zydus Wellness is one of the top gainers today, and that's largely on account of an acquisition that the company has made. And more importantly, it's an acquisition that ticks all boxes. Why do I say that? Because, one, it's called Comfort Clicks. It is the first overseas acquisition that the company has made, and it's a sizable one, nearly 240 million pounds, which amounts to about 2,400 crore rupees. And it's in the business of vitamins, minerals, and the supplements segment. Remember, this market itself in the UK and Europe is close to around 11 billion pounds. And the 5-year revenue CAGR of this company has been 57%. So to put things into perspective, the last year, this business did about 1,340 crores of revenues, which is a 50% addition to Zydus Wellness's own revenues. And that has happened at better margins as well, because the adjusted operating profit of, close to 21 million pounds amounts to about 15.6% as margins. And this compares with Zydus's own margins at 14%. So you have a sizable chunk, good growth and margin accretion coming in. The question is at what price? It's coming at 2 times sales and 10 times EBITDA, which is fair because the company's own valuations right now are nearly 4 times sales. And they've themselves said that this will be cash EPS accretive from year 1 itself. The biggest trigger is Comfort Click operates in geographies which are complementary to Zydus. So obviously there are revenue scale synergies for either of them. And the second part is that a large part of their revenues come in from online and D2C channels. So this opens another channel up for them as well. So all things clicked and the stock doing extremely well.
Oh, yes, it is. The stock higher in trade by 7%. Thank you so much for bringing all these details to us, Mangalam. Before we slip into a break, this is a reminder for our viewers. Unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interaction with our journalists, along with curated studio tours, e-learning sessions and masterclass, and curated lifestyle benefits. Okay. All right. Actually, before we get into the break, let's get a check on what's happening in the world of F&O as well. Sudarshan is bringing us all the latest trends now.
So it's a good start to the week, and thanks to the all-round gains that we are seeing in the IT pack. Nifty IT is up almost more than 1%. But one sector that has to outperform is the Nifty Bank. Currently, it's underperforming, and if market has to move higher, the financial sector has to move upward as well. Currently, it's just up around 0.3%. But we're getting a positive indication from the volatility index. It's currently down 2%. It's at 11.50. Put call ratio also, it's at 0.89 versus 0.75. Now, I was talking about the Nifty Bank. So support remains around today's intraday low that we have seen of 53,650. But the major buying will only come when Nifty Bank crosses the level of 55,000. Now coming to the Nifty options data. In the call options, 24,550 and 24,600. Both are seeing huge option buildup and also good parties. We are seeing an increase in the premium. For 24,550, premium has increased to 43 from 39, and 24,600 premium has risen to 67 from previous day's close of 53. But in contrary, put option 24,500, premium has come down to 33 versus yesterday's close of 104. So it tells you that for now, support for Nifty remains around 24,500. Looks tough for Nifty to go below 24,500. So I've taken the support around 24,460, 24,500 resistance. So basically for Nifty also, major buying will come only when it crosses the level of 24,600. Two stocks I have taken. First one is Kaynes Technology. All these like stocks, Kaynes Technology, Dixon Technology, or you talk about Amber Enterprises, all these stocks are seeing huge buying. So Kaynes Technology, fresh longs, and another stock seeing on the back of positive brokerage note is the CG Power. There also we are seeing fresh longs.
Yeah, we just heard from the management of Kaynes Technologies earlier in the day. Fresh longs seen there, fresh longs seen on CG Power as well. Sudarshan, thank you for that update. Take a short break, continue our conversation on the markets with Varun Lochab of HDFC Securities on the other side. Stay tuned.
Welcome back. Let's just quickly talk about CLSA and their view on IT. They're saying the CLSA global macroeconomist is expecting 75 basis points of rate cuts in the US over the next 1 to 1.5 years. Now, this could result in a PE re-rating of 10 to 15% for Indian IT companies. Plus, there is a potential for discretionary demand reviving in sectors like real estate, utilities, materials, staples, and energy, which have been weak so far. So therefore, CLSA remains positive on the Indian IT sector because valuations, according to them, are attractive. They have an overweight call on Persistent Systems, Tech Mahindra, outperform on TCS, Infosys, HCL Tech, Wipro, and a hold on LTI Mindtree. So basically, that's the call coming through on CLSA on IT. Moving on now, Varun Locha from HDFC Securities is now joining in. Varun, your entire thesis for building the model portfolio is back companies, individual stocks, where there is an earnings visibility. And we could see like a mid-teens at least kind of an earnings potential. Now, IT doesn't fall in that category. Earnings, at least for the next 1-2 years, is going to remain subdued. But on the other hand, some believe valuations are fairly attractive. And plus, there will be that kicker on account of that Fed rate cut as and when it comes. So, I mean, how are you looking at IT right now? And which are the IT stocks in your model portfolio, if any at all?
Yeah. So, on IT so far for last 12 to 18 months, we were negative. So we were running a big underweight sort of a position on the sector. However, I think after the recent correction in several years, again, for the first time, IT is looking okay, at least from a risk reward perspective over next 12 to 18 months. As you rightly said, earning growth still remains a challenge. On our bottom-up basis, we are still not projecting a double-digit earning growth for the sector for the next couple of years. But, I think the valuations are also more or less reflecting that. And in that context, couple of large caps, we have added our weights. So both Infosys and TCS, we have added weights in our model portfolio, and we are no longer negative on these two stocks. However, mid-cap IT, we are still staying away, given stretched valuations. However, growth in some of those names like Persistent have been good, but still, I think risk reward on some of the mid-cap IT names is not as favorable. But large-cap IT we have been adding now.
Okay. You've been adding large cap IT, but you have been excluding some of these oil and gas names. You remain underweight there, but the exclusion also includes GAIL. Can you give us a sense of what's happening here? Because GAIL does have some triggers going forward, be it the tariff hikes. This is something that the street is watching out for. What makes you underweight on this one?
I think it is more a case of, GAIL again, we have held in our model portfolio for last 3 to 4 years, and it has done quite well in that time frame. Now, in the recent rejig of our model portfolio, we are looking at fresh ideas which have corrected quite sharply in last 12, 18 months. So some of the consumption names we have added, IT, as I said, we have increased our weight. So it's just a case of, how much upside are we seeing now? Because last 12 months, we were more into the protect the downside kind of a mode on our model portfolio and what we were advising to clients. However, I think now we are not being overly negative on markets, and therefore now looking for fresh, ideas which can give you higher upside over next, 12 to 18 months. So GAIL, while it's still positively rated and within the gas stocks, it's our top pick. From the analyst perspective, we have just removed it from the model portfolio given, some of the better stock ideas which are presenting themselves now after the correction.
So does a similar thesis apply to MCX as well? You have removed that as well. You have decreased your weightage in the model portfolio for the stock. So do you continue to maintain your a positive stance on the capital market space overall? And this weightage reduction is only because of the fact that the stock has run up significantly in the past?
Yeah, so see, capital markets as a theme now in the last 6 months itself, we have not been, it's not a theme that we are now overly bullish on. In fact, we had removed BSC from our model portfolio almost 6-9 months back, and MCX we still have. So that's the only sort of a capital market stock we have in our model portfolio left now. But even out there, we have trimmed our weight, given, it has done quite well over last 12 to 18 months. And as I said, we are just taking some money off the table where valuations now present less upside. And, so similarly, something like Sirma, from the EMS space. We have reduced our weight a little bit, but we still continue to hold these names, which means that within that space, they are still the preferred names. But, valuations are now making us slightly, take some profit off the table and redeploy it in other areas which have become more attractive.
Varun, we won't have time to discuss all the stocks in your model portfolio. So why don't you just tell us, 2-3 stocks where you have the most conviction now at these levels and why?
Yeah. So, it's in terms of, it's like, varies by sector. So in terms of autos, we have increased our weight. Again, this is one sector we have become more bullish. Maruti is our top pick out there, Maruti and Ather Energy. So we have, Maruti, M&M, Hero, multiple auto stocks in our model portfolio, but those are the top picks. Industrials, we are still, fairly positive. While consumption we have increased, we have not decreased, industrials and real estate that much. So out there, L&T and Cummins, the two are the top two ideas, and Shobha in the real estate space. We see good absolute upside in some of these names over next 6 to 12 months. So it varies across sectors. In terms of consumption, also, as I said, we have added names. We have been adding for last 6 months. So DMart and Swiggy we had added around 5-6 months back when they had fallen down. We still continue to hold them. They are our top picks in the consumer discretionary space. So now, at least in multiple sectors, we are able to spot opportunities, which was not the case in the last 12-18 months when, valuations was bigger concern. I would not say that they have become really attractive now, but at least you are able to, get some stocks where, earning momentum would be positive and valuations are at least not completely stratospheric.
Okay. Varun, you mentioned Sobha, and that is something that you like now. I wanted to understand, since we talk about being in the later stage of the uptick that we've been seeing in the real estate cycle, do you think most of it is not priced into Sobha? Because other real estate stocks did see that surge last year. What makes you confident on this particular name?
Yeah, so I think you're right. As an overall space, we are no longer as positive on real estate as what we were in the last 2 or 3 years. So you're right, a lot of these stocks are pricing in the residential upcycle continuing. However, in case of Sobha, we believe, the pre-sales momentum is actually, kind of picking up this year compared to previous year. So if you recall, FY25 was a sort of a weak year for Sobha from a pre-sales perspective. FY26 will be strong. We are going to see a 30% plus growth, and we believe this momentum can sustain in FY27 as well. They are entering multiple new cities. The response to their projects has been good across some of the newer geographies as well. If you look at the developable land bank, which they already have, there is room to improve the pre-sales momentum over next 2 to 3 years just basis the old land bank. So it's very stock specific sort of triggers in this year, but at an aggregate real estate level, you are right that probably it's not the sector to be really overweight on. But as I said, the market right now is all about stock picking rather than, taking sectoral calls or broader market calls.
Right. Varun, pleasure having you as always. There was a lot of questions to ask. We're running out of time. Thank you so much for joining us today on the show. Take a short break. On the other side, our big story of the day on the auto segment comes up on the other side. Stay tuned.
Welcome back. You're still tuned into Trading Hour, and it's time for our special segment, The Big Story. And today the spotlight is on the auto sector. The focus is ahead of the GST Council meet on September 3rd and 4th. The industry has once again raised its demand of a uniform GST rate. Also in focus is the monthly sales data, which has largely been in line. Of course, we'll talk about it in greater detail. Let's get started with that. The key topping point, of course, is the GST change that is expected. Sudarshan, tell us more. What is expected in the upcoming GST Council meet?
So all important GST Council meet starts this week on Wednesday. So we'll have to, first we had some news through sources, and that we'll be seeing some GST changes, basically GST reduction. So first I'll tell you which all segments might see certain GST reduction that might happen to 18% from 28%. So first one is ambulance vehicle. If it happens, the biggest beneficiary is expected to be Maruti Suzuki. Next one is petrol, diesel, LPG and CNG vehicles. But for petrol vehicles, engine capacity has to be up to 1200 cc and in length it has to be of 4000 meters. Second, for diesel vehicles, engine capacity has to be 1500 cc. So for these two only, there will be a reduction if it happens. Third is bikes and three-wheeler segment. Especially for motorcycles, rate will be reduced only for those bikes which have capacity up to or less than 350 cc. And fourth is auto accessories like auto parts, seats and all those auto parts. There also we can see GST reduction. But there are certain segments where we can see GST increase, and those are first, racing cars, second, motor vehicles of more than 1200 cc in petrol segment and in length 4000 meters, and third, bikes if capacity is more than 350 cc. There also we can see GST increase.
Well, Sudarshan, there has been a lot of chatter around this GST with regards to the automobile space, and there has also been a demand from the industry for a uniform GST rate. How does one read into this, and what will be the impact in case GST is hiked for bikes of more than 350 cc capacity?
So I'll tell you, immediate impact would be negligible. Now, everyone thinks that Royal Enfield, which is leader in 350cc or more than that, 86% of their volumes come from the segment which has capacity of 350cc or less than that. So immediate, there would be negligible impact. But the problem is all these companies are moving towards premiumization. So if they believe that if GST Council goes ahead and increases GST rate for engine capacity of more than 350cc, it would be tough for them to compete with global players. So Siddharth Lal over the weekend has said that raising GST for motorcycles above 350cc would damage a segment that is vital to India's global edge, and a split tax regime would cripple investment and scale, and also it would restrict global reach and also hand on opening to foreign competitors. Hero Moto chairman also made a comment, but actually he welcomed GST cut if it happens and it's approved by GST Council. He said GST cut will offer much needed relief to first-time buyers. So overall, immediate, there would not be impact even if GST Council goes ahead and increases GST rate for bike having capacity of more than 350cc.
Got that. It's also 1st of September. The August monthly sales have started trickling in. What's the picture? How are the numbers looking?
So as of now, incumbent players, if we talk about Bajaj Auto, Escorts Kubota and Ashok Leyland have reported sales, and sales of all these three companies have been largely in line or slightly better than estimates. So first talking about Bajaj Auto, domestic sales have slipped but are in line with estimates. Export and three-wheeler segments continue to do well. Export has seen a growth of 29%. Even three-wheeler segment has seen a growth somewhere in the range of 29 to 30%. For Escorts Kubota, both the segments, domestic as well as exports, have seen a healthy growth. Domestic has seen growth of 29%. Export has seen a growth of almost 50%. Ashok Leyland has reported numbers largely in line with estimates. They have also seen a somewhere growth of 2 to 3%. Now, biggest positive from August auto sales has come for electric two-wheelers. Both Ola Electric and Ather Energy have seen an improved increase in Vahan registration data. If you talk about Ola Electric, it has reclaimed number 2 position on market share front, and Ather Energies for this company, August 2025 has been the best ever month.
Okay, all right. So best ever months for some of these stocks. What are some of the tailwinds for the sector going forward, Sudarshan, now?
So festive season is approaching. So normally festive season is very good for all these companies which have huge presence in the entry level segment. In two-wheeler segment, Hero Moto might do very well. Similarly, in four-wheeler segment, we can see the similar picture from Maruti Suzuki. Third, implementation of GST cut timeline will be very important. Last week, we had some reports saying that it might happen ahead of the festive season. If it goes ahead, it will be very positive for the auto sector. Third, for CV sector, there might be an improvement if government goes ahead and increase its capex further. And fourth, healthy monsoon. We had very good monsoon across the country, and we have been saying that rural segment has been doing much better than urban sector. That will be positive for tractor segment. So today, early morning, we had Ramdev Agrawal on the channel. He commented about GST cut and its impact on the auto sector. Let's listen in.
A lot of things are going to happen, but right now that looks to be overriding. It's the nature of the market. They need one headline, and for 10-15 days they will talk about it, and after that they'll move on to the next one. And whatever happens in the first one, nobody's bothered. So I think as the GST thing comes closer and actually people come to know that 28 is abolished and it has come down to 18%. So you look at some auto companies, particularly where the demand is very sensitive to the price cuts, say like motorcycles particularly, say if it comes down from 28 to 18, I mean you could see massive surge in the demand. But since it has not happened, it is very difficult to figure out whether it will be 20%, 30% jump, or will it be just a muted kind of situation. My sense is if it is honestly implemented from 28 to 18 for motorcycle companies or entry-level car companies, I think automotive will be one of the segments to watch out for in next 1 year.
Well, on that note, it's time for a very short break with the news that still hovering around 24,550 on the Nifty.
Welcome back. The stock in focus is Premier Energies, and that is on the back of an order win worth around 2,700 crore rupees. Now, on the other hand, almost 18,000 crore rupee worth of shares of the company have freed up for trade today as their lock-in period has ended. Vinay Rustagi, the Chief Business Officer of the company, is joining us now from the sidelines of the 21st Motilal Oswal Annual Global Investor Conference. Vinay, good morning. Thank you for joining in. I'll start off with your order book position, but first off, tell us more about the order that you have just won, that you have announced today, the 2,700 crore order win. What does that do to your order book? And is your order book completely domestic focused, or is there an export component involved in it as well?
Sure. Good morning. Thank you for having me. So, our order book, if you look at the end of last quarter, was 8,500 crore rupees. Including these new orders, the order book now stands at more than 10,000 crores. These orders have come from top-tier IPPs in India, and they're all for consumption in India.
Okay. All right. So, Vinay, wanted to understand your export exposure as well in terms of order book overall. How much is it currently? And, earlier you had indicated that you're insulated from Chinese market. We're seeing a lot happening geopolitically as well. How would it change the supply chain overall for you, for the industry as well?
See, in terms of, first of all, the order book, more than 99% of our order book comes from India. So, as a consciously given the movement in various parameters, we have kind of diverted and positioned ourselves almost 100% on the Indian market, which stands us in very good stead. In terms of the supply chain, we are again increasing more and more of the value chain of our production domestically. We obviously still buy, some components and raw materials from China. We have not faced any problems so far. And even for our new lines, the new investment projects, we are diversifying systematically away where we are buying equipment from a host of countries, wherein any short-term supply disruption is not going to affect our operations.
So, Vinay, if you can just tell us how much of the raw material or equipments are imported overall, and which are the countries where you're importing from currently?
So, if you look at what percentage of the raw material is imported, that varies from quarter to quarter and order to order, because our customers dictate, they basically tell us, where the bill of material is going to come from. And it is also very different for cells as well as the module part of our business. But more importantly, as I said, with the government's Make in India policy, government is now very keen that all raw materials, whether it is glass, back sheets, aluminium frames, etc., are all made in India. We ourselves are integrating backwards, and our expectation is that in the next 2 to 3 years, almost the 100% bill of material for both cells and modules will be made in India.
Some of the players, what we picked up from the industry is that there were delays in setting up solar power setups, land availability, etc. What is the situation on the ground right now? And give us a sense of your capacity utilization across cells and modules.
See, yes, there are, the solar sector is expanding rapidly. First of all, we have to understand that we are going from a pace of 15 gigawatt per annum 2 years ago to about 30 gigawatt plus this year. So there's a huge jump in capacity addition and growth factors. On the ground, inevitably, there are some delays related mainly to land and transmission. Notwithstanding that, we feel that there is a very, very strong growth momentum, particularly with schemes like Surya Ghar Yojana, Kusum, open access projects, etc. So overall, the demand environment is extremely positive. And we are seeing that directly in our business. Our production lines are almost fully sold out for the next almost 12 to 15 months of production. And our lines are working at nearly full capacity utilization.
So in that case, you're working at full capacity utilization. Is there any plans to expand capacity? That is one. You've outlined a capex of 1250 crores. So how much of that will you incur this year, and what's the asset turn that you're expecting on this too? And clubbing one more question in, from the Reliance AGM on Friday, there was a big announcement that was made that they are planning to develop one of the world's largest solar projects of around 550,000 acres of land. What kind of opportunity do you see in this announcement, if any, if you could quantify all of these for us?
Sure. So yes, we are rapidly expanding our capacities. In fact, our plan is to grow by more than threefold over the next 2 years. We aim to become a 10 gigawatt integrated manufacturer, including ingot wafer, cells and module capacities. And then we are also entering into new market segments like battery storage and inverters. In terms of your next question was about the capex plan. So our capex plan is 12,500 crore rupees over the next 3 years, including the current year. This year we will spend about 20% of that money, and then the rest will be spread over the next 2 years. In terms of Reliance's announcement, I think from what our understanding is that bulk of their capacity is meant for internal consumption. They have a huge plan for achieving net zero target in their very large petrochemical and energy business. So to that end, we don't see any impact on our business.
Okay, all right. Thank you so much for joining us today and giving us a sense of what's happening on ground as well. Those, by the way, are the visuals, the bilateral meet which is happening between Russia and India. A lot of updates coming in from the SCO meet. We'll keep getting you all those updates as well. Some update from the US Embassy in India as well, where they're talking about how India and the US are partners in terms of trade. There is an enduring friendship between two peoples that fuels this journey. So a lot happening in the geopolitical arena. We'll keep getting you excerpts of what's the outcome of this bilateral meet as well. Very important. Remember, a big chunk of imports come in from Russia in terms of oil, and a lot more in terms of imports and exports. So we'll keep discussing that. But for now, we'll also talk about the share of oil imports coming in from Russia. Now, remember, back in 2021, 2022, it was around 10%, less than 10%, and now it's around 34%, and that's been something that is benefiting overall the crude economy because it's coming in as a discount. And yes, there you go, the footage that is coming by Modi and Putin's bilateral meet in China.
You know, this SCO has been there for so long now, I think about 25 years, but it's the first time that it's assumed a scale of this significance, right, in the wake of, the tariff tensions, etc., and the friction taking place. And so many world leaders are in attendance, and some of them sharing the stage for the first time after months, like for instance, India and Pakistan too. Right. So
India is attending it after
7 years. This is
years,
Modi's first visit to China after 7 years. So this summit is really setting the tone. Geopolitics is going to be the big market theme this week, and we'll keep watching out for what comes out of it with the various bilateral talks.
Assuming greater significance indeed, and these are of course visuals, the bilateral between Prime Minister Modi and Russian President Vladimir Putin. We take a short break. On the other side, of course, with that we call time on this. And just as but of course, as you mentioned, right, is assuming greater significance of these bilateral meetings, there is also now this lingering uncertainty over whether these tariff impositions would even last the test of time, because the appeals court has deemed them illegal, although they've of course given them time to until the 14th of October to appeal against this in the Supreme Court of the United States. And what the mathematics suggest is that the Supreme Court is a 6-3 in favor of the Trump administration. So logically speaking, of course, these tariffs would most likely be upheld by the US Supreme Court unless something dramatic happens. But yes, this tariff threat and all of these tariff tantrums from the US administration has definitely started to create new allies, or bringing countries that had a rift earlier closer together again with China and India after what happened in Galwan in 2020. This is, of course, the Prime Minister's first visit to China on this, and of course there is a lot of cooperation between Russia and India.
It's basically, oil and gas and energy security is going to be at the center stage, right? Because India's additional 25% tariff is on account of India importing Russian crude oil and the supplies coming from there. And so far, India hasn't taken any sort of a policy decision on that front. Well, we'll keep getting you more on that. For now, it's time up on Trading Hour. Thank you for watching.
एक्सेलेंसी, यूक्रेन में चल रहे संघर्ष के विषय में हम लगातार चर्चा करते रहे हैं। हाल में किए गए शांति के सभी प्रयासों का हम स्वागत करते हैं। हम आशा करते हैं कि सभी पक्ष कंस्ट्रक्टिवली आगे बढ़ेंगे, संघर्ष को जल्द से जल्द खत्म करने और स्थायी शांति स्थापित करने का रास्ता खोजना होगा। ये पूरी मानवता की पुकार है। एक्सेलेंसी, एक बार फिर आपका मैं हृदय से बहुत बहुत धन्यवाद करता हूं।
Уважаемый господин премьер-министр, дорогие друзья, мы очень рады нашей встрече.
आदरणीय प्रधानमंत्री जी, साथियों, आपसे मिलकर हमें बड़ी खुशी हो रही है।
Символично, что проходит на полях саммита ШОС.
ये बहुत प्रतिमात्मक है कि वो SCO शिखर सम्मेलन से इतर हो रही है।
Организация, которая позволяет объединять усилия глав государств глобального Юга и Востока.
ये एक संगठन है जो ग्लोबल साउथ और ईस्ट के देशों के नेताओं को प्रयास मिलाने को एक मंच प्रदान करता है।
Усилия по созданию в Евразии архитектуры равной и неделимой безопасности.
यूरेशिया में समान और अविभाज्य सिक्योरिटी ढांचे को बनाने के लिए प्रयासों के लिए एक मंच प्रदान करता है।
Уважаемый господин премьер-министр, дорогой друг, 21 декабря исполняется 15 лет со дня принятия совместного заявления, в котором отмечен выход наших отношений на уровень особого привилегированного стратегического партнерства.
महामहिम प्रधानमंत्री जी, प्रिय दोस्त, 21 दिसंबर को 15 साल पूरे हो जाएंगे जब से एक संयुक्त वक्तव्य पर हस्ताक्षर किए गए थे, जिसमें हमारे स्पेशल प्रिविलेज्ड पार्टनरशिप पर किस तरह हम पहुंचे। 15 साल हो गए।
И можно уверенно констатировать, что многоплановые российско-индийские связи активно развиваются на этих принципах.
और हम ये सच्चाई से बता सकते हैं कि हमारे रिश्ते इस सिद्धांतों पर बढ़ते हैं।
Налажено многоуровневое взаимодействие.
हमारे बीच बहुत बहुमुखी सहयोग चालू है।
Торгово-экономическая кооперация в целом демонстрирует положительную динамику.
व्यापार में सकारात्मक गतिशीलता देखने को मिलती है।
Развивается туристический обмен.
पर्यटकों का आदान प्रदान विकसित हो रहा है।
Мы тесно координируем наши усилия на международной арене.
अंतर्राष्ट्रीय मंच पर हम हमारे प्रयासों को समन्वय से करते हैं।
ООН, БРИКС, группа 20 и, разумеется, ШОС.
UN, BRICS, SCO जरूर इस गठन में से शामिल हैं।
И сегодня хорошая возможность обсудить основные задачи дальнейшего развития многопланового двустороннего сотрудничества в различных областях.
और आज की मुलाकात से हमारे रिश्तों को आगे बढ़ाने पर रास्तों पर बातचीत करने का एक बहुत अच्छा मौका मिलता है।
Уважаемый господин премьер-министр, дорогой друг, Россия и Индия поддерживают десятилетиями особые отношения, дружеские, доверительные. Это фундамент для развития наших отношений в будущем.
आदरणीय प्रधानमंत्री जी, प्रिय दोस्त, रूस और भारत के बीच बहुत विश्वसनीय रिश्ते बने हुए हैं। इस सिद्धांतों पर वे विकसित हो रहे हैं।
И эти отношения носят абсолютно внепартийный характер, поддерживаются подавляющим большинством народов наших стран.
और ये किसी से पार्टी या राजनीति पर आधारित नहीं है। लोग, हमारे दो देशों के लोग इस रिश्तों का समर्थन करते हैं।
Спасибо.
धन्यवाद।
Okay, so that's the India-Russia bilateral meet and some important statements which have come in from there. The India-Russia relationship has moved forward in the toughest of circumstances, and India-Russia closely coordinating talks at efforts at an international level. Prime Minister Modi has said that they hope for the Ukraine war to move on constructively. So some important developments coming in there, and we'll keep getting you a track of that. For the markets, it's been a good day. So we have the Nifty, which is up around 116 odd points, the mid-cap index, which is outperforming. So there's some amount of risk-taking, which is probably coming back into the markets at this point in time. So the mid-cap index, as you can see, is up around 1.5%, and the advanced decline ratio, which is holding very steadily at this point in time. So 1,940 stocks advancing to around 839 stocks declining on the National Stock Exchange. Welcome to Halftime Report, live from the Motilal Oswal studio. I'm Ekta Batra, and with me,
this afternoon is Mangalam Malu as well as Vinny Motiwala. Hi, guys.
It's good to see some green on screen. After what was all of last week, we did see, the Nifty see one of its worst week in the last 5 months. It's good to know that despite the weakness that we saw on Wall Street on Friday, things are progressing for the better. The only question is, do we see supply at higher levels or not? Because we managed to hold on to those gains. The question is whether we build on to this or not. The mid-cap index has you believe that there are more stocks advancing, way more stocks advancing than the number of stocks which are declining. And the good part is that today's rally has been led by the IT pack on the back of that CLSA note. So the IT stocks are doing their bit. And we have a lot of individual stocks which are buzzing around as well.
Absolutely. Good afternoon, guys. So like you mentioned, right, IT is, leading the charts today, leading the way today. What is not doing well is Pharma, a bit subdued there. FMCG not managing to hold on to that much of a gain. But, do not forget, there are a lot of, points that are coming in for the FMCG sector, the consumption sector, in terms of better improvement, GST Council meet that's going to be there on 3rd and 4th of September. So that is something that everyone will be keeping an eye out on. But on that note, let's get started with the show with our first segment, that is Movers and Shakers, where first up, we're going to be talking about Zydus Wellness. Mangalam, this one is buzzing away in trade, 8-9% of gains, and after this acquisition.
Yes, the street is really liking the comfort of this acquisition, and it's clicked well for the company, at least as of today. And why do I say that? Because the acquisition that they made is that of Comfort Clicks, close to around 2,400 crore rupees, 239 million, British pounds. But more importantly, it's the first overseas acquisition of the company, and it is an acquisition in a space which has been growing very fast, and it's got a decent total addressable market as well. It's in the vitamins, minerals, and supplements segment, which is close to around $11 billion pound sort of market. And the company itself has seen a growth of almost 57% compounded over the last 3 years or 5 years when it comes to sales. So if I look at the last 3 years revenue of Comfort Click, from 52 million pounds a couple of years ago, it's gone all the way up to 134 million pounds, which is nearly 50% of the consolidated entity's revenue. And this revenue, which is growing at 50% plus CAGR, is also margin accretive. If you look at their operating profit and look at the margins, it's close to around 15.6%. This compares with Zydus' own margins at 14%. So good growth, good size, good margins. The question is, what price? The price has been fairly fair as well. They bought this company at 2 times sales and around 10 times EBITDA. Not particularly bad for a company that is margin accretive. And for perspective, Zydus' own valuations are close to 4 times sales. So they've gotten at a fair valuation, for which the company has said this acquisition is expected to be cash EPS accretive from year 1 itself. So your revenues grow by 50%, your margins improve, it's cash accretive. And at the same time, it gives you, revenue synergies from different geographies, because currently Comfort Click operates in geographies which are complementary to Zydus Wellness. So you get the cross-market revenue synergies, and secondly, you get channel synergies as well, because majority of the revenue currently is generated through e-commerce and D2C, whereas Zydus's, own sales in e-commerce and D2C are slightly lower. So all these factors doing well, and that explains why the stock is up 7.5%.
Yes, absolutely. A thumbs up, which is given to Zydus Wellness in terms of the acquisition. But let's move on to the auto space, and thanks, Mangalam, for that. Bajaj Auto is in focus on the back of its August auto sales. Sudarshan is here with more details on what it looks like. Sudarshan, over to you.
The stock is top Nifty gainer, and it has turned positive for 2025, and it's up 25% from 52-week low that stock had hit in April of 2025. Now talking about the auto sales that company has reported for the month of August, and those sales have looked largely in line to slight beat to our estimates. Total sales have increased by 5% up versus our expectation of increase in the range of 2 to 3%. It has come at 4.17 lakh units versus expectation of 4 lakh units. Domestic sales have slipped, but those numbers were largely in line. Total sales in domestic segment have slipped 8%. But if you talk about exports, those sales were up 29%, and along with three-wheelers, these two segments continue to do well. Three-wheelers were up 21%, export has seen an increase of 29%. So what's next for the stock? So in the recent commentary that the company had made, it expects that in export segment, it's targeting 2 lakh units. That might happen very soon. And also issue related to rare earth magnet has been resolved. And on the probability of GST cut in the upcoming GST Council meet and the festive season, these are the two major tailwinds for the entire sector, not only for two-wheelers, and also company on the launch front is developing commuter electric and sports electric motorcycles. So apart from the strong set of numbers that company has reported for the month of August, even tailwinds, there are so many tailwinds for the upcoming months.
All right, Sudarshan, thanks a lot for that. We started the show by saying all the IT stocks are buzzing. This morning itself, CLSA came out with a note and they see a valuation re-rating potential of about 10 to 15%. Rima joins in with the findings of that note. Rima, the IT index up nearly 2%.
Indeed, this is on the back of that CLSA note where they're saying that CLSA macro global economist is penciling in 75 basis points of rate cuts in the US in the next 1 to 1.5 years. We know that when the rate cuts come, when there are rate cuts, the valuations of IT companies go up. So therefore, CLSA believes that there is a potential for a valuation re-rating of 10 to 15%. Secondly, they also see a potential for discretionary spending picking up in real estate, utilities, materials, staples, and energy sectors, which is why they're positive on the Indian tech sector. And the key reason is attractive valuation. They've got an outperform rating on Persistent Tech Mahindra, outperform rating, a high conviction outperform on Persistent and Tech Mahindra, outperform on TCS, Infosys, HCL Tech, Wipro, so basically the entire large cap screen, a hold on LTI Mindtree.
Okay, Rima, thank you so much for that. So those were the top movers and shakers in today's trading session. Keep an eye out on them in the second half of the day as well. But a reminder for our viewers, unlock a value of and world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, a premium members only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions, and masterclasses and curated lifestyle benefits.
Welcome back. Well, you're still watching Halftime Report on CNBC TV18. It's turning out to be a steady day for us. So we have the mid-cap index, which is up around 1.5%. Like Vinny pointed out earlier, a couple of these pharmaceutical stocks are seeing some amount of pressure. So we have Sun Pharma, which is the top loser on the Nifty. It's down around 2.3%. We have a couple of others such as Cipla, which is just about flat with a little bit of a negative bias at this point in time. The other stocks which are seeing some amount of profit booking include Reliance Industries. So that one, remember, had its AGM on Friday. It's down around 0.3% at this point. ITC, which is seeing a little bit of pressure, it's down around 1% for ITC at this point. On the upside, it is Bajaj Auto, which is really cruising away today, no pun intended, along with M&M, which is up around 3% at this point as well. So good going for a couple of these counters. From the broader markets, maybe we can pull up the mid-cap index and a couple of gainers for you, because that seems to be where really the interest seems to be coming back in today's trading session. There is some amount of possible risk on which is taking place for our markets, and it's good to see that. So we have the mid-cap index, which is up around 1.5%. We have a couple of other stocks such as CSB Bank. We have Trigon Technologies. We have Astral. A couple of these stocks which are managing to gain at this point in time. So some amount of interest which has come back in terms of the broader markets. In fact, good time now to discuss the markets more in detail. We have Rajat Rajkaria, the MD and CEO at Institutional Equities, Motilal Oswal Financial Services, Amit Ramchandani, who's the MD and CEO Investment Banking at Motilal Oswal Financial Services, and Ashish Shankar, who's the MD and CEO of Motilal Oswal Private Wealth, who joins in now from the sidelines of the 21st Motilal Oswal Annual Global Investor Conference. So we have a full house this afternoon. Gentlemen, welcome to the show. Well, Rajat, I'm just going to toss this question to you. There seems to be some amount of risk on, which is back for the markets at this point. The mid-cap index is up around 1.5%. The headlines from India-China talks as well as the India-Russia talks seem to be more positive in nature. Do you think that's fueling some amount of sentiment for our markets at this point, Rajat?
Yes, hi. I think there are two important things. First, our underperformance has been very stark vis-a-vis the other global markets. Second, I think at least people are now looking forward to some reforms from the government, the GST meeting, a lot more things which are there in the offing. The last 2-3 days of headlines where our Prime Minister has been forging more new partnerships and better relationships with our neighbors. Just all in all, these things are helping the sentiment, which has been impacted quite badly over the last few weeks, led by the tariff news.
Right, we take that point, Rajat. But while we speak about wealth creation, sophistication, there are three major legs to that, so to say. One are the institutions, the second are the HNIs, and the third are the investment bankers, and as a result of which, the ones who make all these things possible. Let's talk about the institutional side itself. The last 3 years or so, we do have, serious money coming in from the DIIs, not so much from the FIs. In fact, if anything, the DII money is letting the FIs exit. And this at a time when everyone is looking at India as the next tactical, long-only allocation and not just, a purchase for the moment. What explains this, and what do you think will bring the FII money back to us?
Well, I think at some point of time, as you will see headlines stabilizing and the macroeconomic and news flows being better, you will see FIs coming back. But I want to harp on two things. I think we give too much of headlines to the FII outflows, and we give too less prominence to the DII inflows. This year, in the first 7 months, 8 months, we have already seen $60 billion of DII inflows into the market. I mean, pause that. It's $60 billion in 8 months. And with this trend, we should hopefully be $80 to $90 billion. In true sense, the Indian capital markets are exhibiting the Atmanirbhar Bharat theme that has been being played out. We do welcome the FII flows, but last 5 years we have seen how volatile they have been. What has been most predictable is the large savings domestic pool of money. I think that is going to be the story of this market for the next 5 years. That number is only going to get bigger. In this journey, if FIIs join us again, and they will join us, the real party will begin then.
Absolutely, real party will begin then. But, Amit, just coming to you in terms of, we've seen a lot of PE exits in the recent time, promoter exits that are coming in as well. Do you think the Indian market is in a space to absorb? Are we seeing a growth on that front as well?
So we definitely are seeing a huge growth there. I think from the mindset where investors were just willing to give primary to the companies, we have come to a scenario where they are very comfortable doing secondary exits as well. I think the point is well understood that if money is not required in the company, it is better that promoters or Ps take secondary exits. We have seen the cycle also only enhance. Initially, we saw investments of smaller number, maybe 1,000-1,500 crores was something which Ps were investing. But today, that number is up to $1 billion. We are seeing a lot of large transactions, and that's only because they have that faith that they will be able to exit. We have seen a lot of companies where large stakes of PEs got sold very easily. Right? We've also seen transactions where only Ps were there and they've been able to exit the entire stake through markets. So I think the investor outlook is clearly changed for secondaries, and whether it is the promoter or Ps, mutual funds as well as other investors are very happy to give those exits.
Okay. All right. Well, Ashish, I just wanted to come to you with regards to the HNI segment, because if you look at the statistics, they're absolutely mind-boggling. 33,000 millionaires added in 2024. The ultra HNI category is growing at around 12% CAGR. In that context, what do you think the pace is going to be? Do you think this kind of pace is going to continue, considering a little bit of the uncertainty that we're dealing with when it comes to markets? And I just want to add that, the 20 to 50 crore real estate space in the residential market seems to be slowing a little bit. Is that an indication of things to come? Ashish.
So, we look at the space in 3 different segments. So if you take the top end of the segment, and you can cut the number as you like it, but the way we look at it is the family offices or ultra HNI segment starts at about 100 crores, right? So today we've got about 20,000 families in that segment, and the total wealth pool is about 240 lakh crores. That's a staggering number. Now, if you come down to the 5 to 100 crore segment, you've got roughly about 70,000 families, right? But the wealth pool goes down as you go down the pyramid. It's about 23 lakh crores. And then if you go to the next segment, which is the 1 to 5 crores, you've got about 4 lakh families, right? Now, if you look at the total pool of wealth from a family point of view, it's growing at about 5%. So that's the number of families, right? But the total wealth is growing anywhere between 13 to 14%. So the total wealth is growing faster than even the nominal GDP. What is driving this growth of wealth is, of course, like Amit said, there are a lot of monetizations happening. Now, these monetizations either happen at a promoter level or they happen at a professional level, because increasingly a lot of companies which are PE funded offer pretty decent participation for professionals as well in the wealth creation journey. Second, what is happening is that you're seeing an explosion of professionals with a lot of newer industries getting momentum. And thirdly, you're also seeing traditional wealth shifting to financial assets. So whilst we've seen a lot of interest in luxury properties, we've also seen people shifting from traditional assets, which are physical in nature, to financial assets. And this is basically driving growth. We believe this compounding of 13-14% in the total wealth pool will continue in the days ahead. As far as your second question is concerned, I think in the near term, I think Rajat spoke about it. I mean, there are obviously challenges. But I think sometimes we get caught in the near-term noise and tend to underestimate the longer-term picture. We believe the longer-term growth picture is very, very intact. If you take a 3 to 5 year view, the wealth pool is probably going to double in the next 6 years. So there is a lot of opportunity ahead. The other big trend to also follow is a lot of this wealth is getting organized. So whether it is at the promoter level who are creating formal family offices, and formal family offices like to deal with more organized wealth participants. Similarly, what is happening is even in the industry, a lot of share is moving to organized wealth platforms. So you'll see a confluence of these three trends driving growth over the next 5 to 7 years. Take that point entirely. Rajat, Ashish, Amit, thank you for whetting our appetite on, the potential that this market, our market and the economy holds over the next 5 to 7 years, notwithstanding the very near-term volatility and underperformance. Global investors looking at India as a strategic shift as against just a tactical buy. HNIs and, all the investors are now getting a lot more sophisticated, with record paper coming in over the next few years as well. So all these factors keep our markets buoyant. We wish you to have a good conference, and we'll have this conversation once again, in a couple of months, revisit the trends that we are speaking about right now. With that, we'll take a short break, and as we do that, let's tell you something which is extremely important to us. The good news that comes in for all you viewers. India's business news leader, just a click away on the CNBC-TV18 all-new app, which gives you instant access to breaking news, in-depth articles, financial world updates, anything that you want at your fingertips. You can download the app either from the Apple Store, the Google Play Store, or just scan that QR code, which is up for you on the screen.
Welcome back to Halftime Report on CNBC TV18. As of now, Nifty is managing to hold on to gains of around 0.6%, 24,568. I'm going a bit too faster, expecting the 25,000 to come soon. But day's highest point is what the Nifty is trading at. But what's going to be happening in the world of F&O? What are the important cues that we're keeping an eye out on this afternoon? Mangalam is here to give us those details.
Well, the bulls are doing extremely well this morning, especially after the drubbing that we saw in all of last week. So the Nifty doing well, and this despite the Nifty Bank, which has been an underperformer for a while, continuing its underperformance. Today's top batsman has to be, the IT index, which is up by almost 1.6%, and that's contributing the most. Even the broader markets are feeling a lot better, in better shape today, where we have the small cap and the mid cap index actually outperforming the frontline index as well, with far more number of stocks which are advancing than the number of stocks which are declining. From an F&O standpoint, two things in particular stand out. One, with the Nifty moving higher, the India VIX has moved lower, telling you that there is put writing which is taking place and unwinding on the call side, and that's reflected in the put-call ratio as well. Going into trade today, the put-call ratio was at the lower end of the range at 0.72. Now that has spiked to closer to 1. So that is healthy signs from a bull standpoint for the market. Put writers are back. 24,500 put is seeing a fair amount of writing, though we are seeing some writing at the 24,550 call and the 24,600 call. So let's see where that goes right now. The 24,550 call has a premium of 80 rupees and the 24,600 call that comes up for you on the screen, a premium of roughly 50 rupees. So the Nifty has to sustain above that 24,650 mark for these call writers to feel the jitters and perhaps cover their positions as well. The other important mark on the way up now that we're doing well would be the 20-day moving average. Climbing and closing above that would provide some fresh support coming in to the bulls as well. A bunch of stocks which are seeing a lot of long positions being added. Keynes Tech, the management joined us on the channel today. They guided for some growth as well. So that stock seeing some fresh longs being added. Amber Ent and CG Power are the other two counters which are fairly well bid in today's trading session from an F&O standpoint.
Okay, all right, Manglam. Thanks very much for that. So that's on the F&O space. We'll take a short break now, but on the other side, Manisha Gupta will join in. She's going to give us an update on what's taking place in the commodity space. Kunal Shah of Nirmal Bang will be with her to tell her, to give her his opinion.
Welcome back, and joining us on the show now is Kunal Shah from Nirmal Bang. Kunal, hi, thank you so much for joining in. It's a strong day when it comes to gold and silver, both of those commodities. We're trading at record highs here. What is your sense on where the prices could be by the end of this year, starting with gold first?
Whatever has been happening in gold is quite interesting, mainly on account of what we are seeing is the sharp expectation building that you will see a sharp rate cuts in next 2-3 months, maybe a perhaps 100 bips rate cut by the US, or even more aggressive than that. That is building in the price. Second is the geopolitical standoff between US, India, and the way entire BRICS and the Western economies are decoupling right now. And that is sparking further geopolitical worries amongst the global investors that how this tariff and the global geopolitical tension would translate into the growth. And that is something worrisome for most of the money managers. So I think there is a shift taking place, the diversification into gold. If you look at the central banks, even at these rates, we are seeing some buying coming in. So net, it looks that gold is heading towards $3650, $3700. So the target is definitely on the upside. And the way things are shaped right now, there is no major option left but to invest in the precious metals, and that sounds quite safe haven and likely to do better. So you have upgraded. I was of the view that 3550 was the expected to be the top for this year. Now we are upgrading that to $3700.
3,700 for the international markets. What would that really mean for the Indian markets, where we've seen rupee continue to depreciate, the worst performing Asian currency that we've seen in the previous quarter as well? So from here on, with the kind of rupee depreciation, how does the Indian market calculation work like?
That should translate into somewhere between 1,08,000 to 1,09,000 rupees on Indian basis. And we don't know what is going to happen with the tariff, whether US is going to cut back another 25% duty which has been levied, or whether it's going to continue. All this is, big questions to determine the outlook of Indian rupee. But we expect if there is any positive news on the tariff front, I think rupee will sharply appreciate, because I think the major reason why rupee has depreciated is because of the US tariff. So let's keep our fingers crossed and expect some positive outcome. I think the maximum upside till then for the Indian rupee would be somewhere at 89. 89 should be the peak out point for the Indian rupee. And on the downside, we can see 86.50, 86, those kind of level would be the support.
Kunal, also come in on silver prices, because apart from the safe haven buying, silver also is about a deficiency this year. We also are looking at very strong industrial demand from China, from much of Asia as well. With 40 done, inching very close to $41 an ounce right now. What is your sense on where silver could be by the end of this year?
Well, silver, the story is not just demand, it's a supply-driven story. I've mentioned before in your show that a lot of the silver mines, top 2, top 3 mines in Mexico, which produces 25% of the global silver, those mines are likely to get exhausted by next year, or perhaps even in 2027. So this is a structural story where the supply side is shrinking and the demand side is growing quite rapidly. So we've seen a news where US has added silver into the critical mineral imports. So now looking at the way the data centers in the US, the way they are expanding, the way it is consuming the power and everything, silver they have added into a critical mineral list. So it means that the sovereign government of the US will be forced to procure silver. So I think at a time where the supply is shrinking, the deficits are growing, and the demand projections are increasing. So here, there is no point in predicting how much it can go up. It is going to go up quite sharply. I would say by the end of the year, by December, 1,35,000, 1,40,000, $45 on COMEX looks very much achievable, and it can really outpace my forecast and go up quite sharply. So be long in this commodity. If you see any decline, use those declines for the buying opportunity, and the outlook on silver is quite bullish.
So, Kunal, if you had like 100 rupees, and how would you divide it between gold and silver?
I would put 70 rupees in silver and 30 rupees in gold.
How are you also looking at the buying opportunities when it comes to India? We do understand that the investment is on the stronger side, not so much for retail or jewelry for that matter. And are these levels good to buy, even if for a fresh buyer?
I would say if you're buying, if you're not bought, and if you are buying from the investment point of view, keep a room to buy, because silver, we all know it's a very high beta commodity. If it comes down, it doesn't take time for it to come down by 5,000 rupees, 10,000 rupees. So whenever it comes down, you have a room to average. And I think one can remain long. 1,23,000, 24,000, they can buy it. I think it is going to go up. So my target for this year was 1,25,000. Even though the target is achieved, I would still recommend to buy, considering all the new development taking place. We've seen a small quantity bought by Saudi Arabia. Russia saying that they want to add silver in their strategic reserve. US is saying that we are adding this into a critical mineral as a commodity, like the way they are treating uranium, the same way they are going to treat silver. All these are indication that the more is likely to come as far as the upside is concerned. So I would recommend to go long, and I would keep, if I want to buy 100 grams, I would buy 50 grams right now, wait for a dip and buy the remaining 50 at the dip.
All right, that point is well taken. So if he had 100 rupees, he's going to buy 70 silver and 30 gold.
That's interesting, Manisha, because for 100 rupees at these prices, all you're going to get is Priya gold and some other silver, not the real gold and the silver itself. But be that as it may, what we'll do is take a short break, come back, get you more on the markets and stock-specific action. Stay with us. Welcome back. Virtually at the high point of the day for the frontline index, we have Bajaj Auto, which is doing well. But the last few minutes, we've seen a big spike in names like Eternal as well, which is up around 2% as we speak at the high point of trade. But we do have an important management coming in, joining in from the sidelines of the Motilal Oswal conference, Ekta.
Yes, absolutely. We do have the management of Krishna Institute of Medical Sciences. We have Sachin Ashok Salvi, who's the CFO, joining in now from the sidelines of the 21st Motilal Oswal Annual Global Conference. Sachin, hi, welcome to the show. If you could just start by giving us a sense in terms of the two important statistics for your hospital business. Your occupancy, which was at around 48% in the previous quarter, and your average revenue per occupied bed, which was up 11% in the previous quarter. How exactly are these two statistics panning out in this quarter?
So we were operating in 4 clusters. We have added one more cluster, that is Bangalore cluster. We have just now added. Our Bangalore hospital has started operation, in fact, from 13th of August itself. Once we have a full-fledged operations in all these clusters, I think the ARPOB will significantly improve, because for all these years we were having significant presence in Andhra Pradesh and Telangana. Now since we are having presence in the cluster of Maharashtra and in Bangalore, you will even have a significant improvement in this ARPOB as well as the ARPP, the two statistics which you have referred to.
Right, Sachin. Good afternoon. You know what, if you could give us a number in terms of ARPOB that we could expect for FY26, and also if you could talk to us about, your margins. Obviously, because of all this expansion, there's a bit of an impact that comes in on the margin front. So when do we expect normalized margins now coming in for the company?
So the Thane hospital has started operations only in the month of May, whereas Bangalore is getting commenced in August and September respectively. We are anticipating a EBITDA erosion on account of these three units in the current financial year, which would be typically about in the range of 60 to 75 crore financial year. As far as your first question on the ARPOB, we are doing about 45,000 kind of ARPOB. Given the higher ARPOB business which we are having from Thane, that is in Mumbai as well as in Bangalore, Thane we are doing almost 55-60,000 kind of ARPOB, whereas in Bangalore we are anticipating to do about 75,000 kind of ARPOB. Once that kicks in, the ARPOB is significantly likely to improve from 45,000 to about some 55,000 kind of ARPOB at a consolidated level.
Right, so 42,000 turns to closer to 50,000 even as your newer geographies stabilize and you expect normalized margins to come by in sometime at the start of next year itself. But, from a growth standpoint, what are the other vectors that you have? Will it be newer hospitals? Will it be newer verticals? Because I remember having this conversation with you sometime in the past where you said that you continue to focus on being this multi-speciality hospital in multiple regions and are not looking at maybe, diagnostic services or any other value accretive services. Are you still steadfast on that, or maybe some other opportunities have opened up for you?
No, we are sticking on to that. As far as the growth opportunities are concerned, we have a cluster-based approach. In our Andhra Pradesh clusters, we are heavily spending most of our resources on the oncology, which is the piece which we have said we will be concentrating heavily in the state of Andhra Pradesh. In case of Telangana, we are not doing much of a bed addition, but we are hiring more and more clinical talent for a particular specialty, and we are launching more and more specialties. We are launching more and more innovations in our Telangana clusters. Of course, Maharashtra as well as Bangalore cluster, which we have recently launched, we will be doing most of the oncology business as well as the other multi-specialty business in that market. In Kerala market, we will be spending our resources on the transplant surgery. We will be also concentrating on the international medical tourism. So there are multiple growth levers or multiple levers to extend in these respective markets.
Okay. All right. Sachin, I just want to touch upon a bit of news. The AHPI, which is basically the Association of Healthcare Providers of India, has withdrawn the suspension on Bajaj Allianz General Insurance, which was basically, there was an issue between the AHPI and Bajaj Allianz because of various issues in the insurance space. Are you a part of AHPI, and can you give us a sense in terms of what is the issues which are actually being faced between insurance companies as well as hospital companies? We do understand it's around revision of rates, around deductions, new empanelments. Is all of it solved?
Yeah, this is very much solved. So, as you rightly said, the issue was related to the price fixation, because the prices were not revised for most of the hospitals in last couple of years. When we have approached for negotiation, they were not coming for the negotiation on the table. Ultimately, when we were to suspend the cashless operations from our group of hospitals, they came onto the table and the discussion had happened in the positive ways. We have withdrawn the notification which was earlier issued. And I think the matter is mostly sorted. We want the insurance companies to discuss with us on a more of a we want to work on a more of a collaborative approach rather than a negotiating approach. I think once that is done, most of these issues will get resolved.
Just before we let you go, I'm looking at the annual report of Somnath Finance Corporation Limited, which is a related party. It was released yesterday, and there are a lot of related party transactions between the two as well. Could you, throw some light on this? Are they done at an arm's length basis? Are you looking to reduce these related party transactions, and what's your plan with Somnath?
Certainly this will get reduced. First of all, we do follow stringent corporate governance practices. All of these dealings or all of these transactions which has been done with related parties are at arm's length. And let me assure that all these transactions will die down or will be reduced to a larger extent in the coming years.
Okay, all right, Sachin, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Krishna Medical. That stock just about holding up within a gain of around 0.8%. We'll take a short break and be back. Welcome back. Let's go across to Hormuz now, who's there to tell us about all of the buzzing stocks which are moving around in trade. Hormuz, over to you.
Today is possibly the day of all the bombed out names making a move towards the upside, and Ola Electric being a case in point. Of course, it has continued to move from the second half of August, and it continues to extend those gains. 14% higher on that stock, up almost 30% now in the last 5 trading sessions. And take a look at the volumes here. Already we've had 65 crore shares change hands compared to a 20-day average of 18 crore shares. And of course, the month of August was the best one that it had since its listing last year. And with this move, the stock is also now comfortably above its 200-day moving average of around 59.5. The other one doing well today is Chennai Petro, and it's the biggest single-day gain that the stock has seen in 2 months. 6% higher on that stock. The stock is also doing well on very high volumes, almost 14 lakh shares changing hands compared to a 20-day average of just around 4.5 lakh shares. And in comparison to the charts, the next important level to watch out for on Chennai Petro is the 50-day moving average on the upside, which comes at around 692. The other bombed out name doing well is MobiKwik, and that stock is up almost 15% as we speak. It's come off slightly, but still a double-digit gain today, the biggest single-day gain since March of this year. We've already had more than 1.5 crore shares change hands, and take a look at the 20-day average. That's only 6 lakh shares, and still remains below its IPO price of around 278 rupees, but still significantly below, is almost 65% below its post-listing high, which is close to 700 rupees a share.
Okay, Hormuz, thank you so much for that. We'll be keeping an eye out on all those buzzing stocks as well. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, your business lunch, leaving the market almost at the day's highest point as of now.
Stocks perk up after 3 sessions of weakness, with mid-caps leading the charge. IT, power and industrials gain while FMCG drags. Reliance Industries aims to make AI accessible to every Indian and expects the opportunity to be as large, if not larger, than that of digital arm Jio. It is also setting up a JV with Meta for enterprise AI solutions. Auto industry leaders backed for one GST rate for each product category against the proposed graded structure based on engine capacity and size. Eicher Motors chairman Siddharth Dalal says 2 rates will be detrimental to Make in India. Even as India's GDP growth for the first quarter came in at much higher than expected 7.8%, the manufacturing PMI or Purchasing Managers Index for August has come in at a 17-year high of 59.3. Prime Minister Modi and Russia's Putin hold bilateral talks on the sidelines of the SCO summit in Tianjin, China. The leaders confirm Putin's visit to India in December. The Prime Minister also says he hopes for progress on the resolution of Russia-Ukraine war. Well, hello and welcome to Business Lunch live from the CNBC-TV18 Motilal Oswal studio. I am Bamakshi Thoria, and a lot had been spoken about, the kind of, about the dragon as well as the elephant, but it's actually the bulls that are marching on today. Take a look at the Nifty. It's almost 144 points higher, 24,570 thereabouts is where the Nifty is at. Supporting it is actually the Bank Nifty as well, which is up almost 0.4%. But other than that, what's actually driving it higher are the auto stocks. Of course, it being 1st September, we do have a lot of these sales numbers flow through. Take a look at Ola Electric, that is up almost 13%. Apart from that, when we look at a couple of other counters as well, like Bajaj Auto, the company also reported its numbers just a short while ago. That stock is up almost 3.5%. M&M is also doing extremely well, up almost 3%. But apart from the auto pack, what's also doing well is the IT. Of course, there was a note that came in from CLSA, and they appear to be quite bullish on the pack given the kind of valuations the stocks are trading at. And, no losers actually for the IT index. Emphasis is up almost 4.6%. Coforge is also doing extremely well in trade today. What's not doing well is the FMCG pack. Remember that this was the pack that was actually leading the gains, last week. But, there is some profit booking out here. UBL is down almost 3%. ITC also trading with a cut of almost 1%. And some pressure also creeping in on some of these pharma names like Sun Pharma, Ipca Lab, Gland Pharma, just to name a few. But, the big story for today is, of course, Prime Minister Modi and Russian President Vladimir Putin's meeting. They held bilateral talks on the sidelines of the SCO summit in Tianjin, China. Let's hear out what both these leaders had to say.
मैं हमेशा अनुभव करता हूं कि आपको मिलना मतलब एक यादगार मीटिंग भी होती है, बहुत सी चीजों की जानकारियों का आदान प्रदान करने का अवसर मिलता है। हम लगातार संपर्क में रहे हैं। दोनों पक्षों के बीच नियमित रूप से कई उच्च स्तरीय बैठकें भी हुई है। इस वर्ष दिसंबर में हमारी 23वीं समिट के लिए 140 करोड़ भारतीय उत्सुकता पूर्वक आपका इंतजार कर रहे हैं। एक्सेलेंसी, ये हमारी स्पेशल एंड प्रिविलेज स्ट्रेटेजिक पार्टनरशिप की गहराई और व्यापकता का परिचायक है। कठिन से कठिन परिस्थितियों में भी भारत और रूस हमेशा कंधे से कंधा मिलाकर चले हैं।
Друзья, мы очень рады нашей встрече.
आदरणीय प्रधानमंत्री जी, साथियों, आपसे मिलकर हमें बड़ी खुशी हो रही है।
Символично, что она проходит на полях саммита ШОС.
ये बहुत प्रतिमात्मक है कि वो SCO शिखर सम्मेलन से इतर हो रही है।
Организация, которая позволяет объединять усилия глав государств глобального Юга и Востока.
ये एक संगठन है जो ग्लोबल साउथ और ईस्ट के देशों के नेताओं को प्रयास मिलाने को एक मंच प्रदान करता है।
Усилия по созданию в Евразии архитектуры равной и неделимой безопасности.
यूरेशिया में समान और अविभाज्य सिक्योरिटी ढांचे को बनाने के लिए प्रयासों के लिए एक मंच प्रदान करता है।
Well, my colleague Parikshit is also here to give us a wrap of all the key highlights from the bilateral talks. Over to you, Parikshit.
This was a crucial meeting between Russian President Putin and Prime Minister Narendra Modi, the first in-person meeting since the BRICS summit in Kazan last year. In the run-up to this meeting, both leaders spoke to each other on the phone, and the Prime Minister also spoke to Ukrainian President Zelensky twice. This comes at a time when US is asking India to stop purchase of Russian crude oil. US has also imposed 50% tariffs on India, 25% additional penalty as a punishment for India's purchase of oil from Russia. Sources say the formal meeting between Modi and Putin lasted for around 50 minutes and the overall interaction went on for over 2 hours. Both leaders, of course, spent a considerable time discussing the Russia-Ukraine war. The Prime Minister conveyed that India and Russia always stand shoulder to shoulder, even in the most difficult situations. Modi said that India was looking forward to hosting the Russian president for the India-Russia summit in December. On the Ukraine war, Prime Minister said that all efforts must be made to bring the war to an end, as all of humanity wants lasting peace in the region. He told Putin that India welcomes constructive dialogue between Russia and Ukraine. Interestingly, in what is a sign of comfort and warmth in relations, both leaders traveled together in the same car for their bilateral meeting. Ahead of that, all the leaders of Russia, India and China had a brief exchange on the sidelines of the SCO summit. They could be seen in an animated discussion. They exchanged a few laughs as well, and they were exchanging notes on the summit, and possibly they had a discussion on the global economic situation as well.
Well, thanks so much for that, Parikshit. But do stay on with us, because Prime Minister Narendra Modi met Chinese President Xi Jinping on Sunday ahead of the SCO summit, with both leaders acknowledging a positive momentum in India-China ties. Tell us about this, Parikshit.
Well, Prime Minister participated in the 25th SCO meeting in Tianjin, China. He spoke about India's approach in strengthening cooperation under SCO framework. He said India seeks greater action on security, connectivity and opportunity at the SCO. Narendra Modi called for decisive action against terrorism and thanked SCO members for strong solidarity against the Pahalgam attack. He emphasized that there should be no double standards in dealing with terror, and all countries who perpetrate and support cross-border terror should be held accountable. Now, this was his message to Chinese President Xi Jinping. And interestingly, he made these remarks at a time when Shehbaz Sharif, the Pakistani Prime Minister, was also present at the SCO. The Indian Prime Minister Narendra Modi had a 55-minute-long meeting with President Xi on Sunday. Both leaders took note of the successful disengagement at the border and peace and tranquility in border areas. PM underlined the need for continued peace for smooth development in bilateral ties. There was a discussion on increasing policy transparency, predictability in economic relations between India and China. Both leaders discussed the international economic situation and the challenges that exist right now. Overall, the focus was how to leverage the current global challenges to see how India and China can cooperate and grow economically.
Well, thank you so much for bringing us all of those very important details, Parikshit. On that note, let's actually listen into PM Modi's remarks at the meeting with China's Xi Jinping.
SCO को लेकर भारत की सोच और नीति 3 मुख्य स्तंभों पर आधारित है। SCO, S security, C connectivity, O opportunity। पहले स्तंभ S यानी सिक्योरिटी के संदर्भ में मैं कहना चाहता हूं कि सुरक्षा, शांति और स्थिरता किसी भी देश के विकास का आधार है। किंतु इस मार्ग में आतंकवाद, अलगाववाद और अतिवाद बड़ी चुनौतियां हैं।
Well, you heard the comments from Prime Minister Narendra Modi, and those are some of the visuals of him, departing from China. Absolutely crucial meetings scheduled over the weekend. He did speak to Xi Jinping, as well as, had a bilateral meeting with, Russian President Vladimir Putin. So absolutely important meet, and those are some of the visuals there. But moving on then, let's focus in on the auto pack. The month of August just went by. It's 1st of September, and Sudarshan is here with all of the auto numbers that have come so far today. Sudarshan?
So most of the companies have reported sales, those sales were largely better than estimates. So first, starting with Bajaj Auto, total sales have increased by 5%. It has come in higher than expectation. Total sales were at 4.17 lakh units versus expectation of 4 lakh units. Domestic sales have slipped, but the numbers were largely in line with estimates. It was down 8% YO, while exports and three-wheeler segments continue to do well and seeing a double-digit growth. TVS Motor, it was an all-round beat. Total sales have increased by 30% YY versus expectation of 11% increase. Domestic two-wheeler sales also have increased 28%. So all the segments except electric vehicle segment have seen a double-digit growth, and sales for some of the segments have risen as much as 47%. Escorts Kubota too have reported sales better than estimates. Total sales have increased 27% YY, and those numbers were 7% higher than our estimates, and with both domestic and export segments for Escorts Kubota doing very well. And company is saying that going forward, considering an improvement being seen in the rural segment and with healthy monsoon, they expect sales, positive momentum in sales to continue going forward as well. For Ashok Leyland too, sales were largely higher than estimates, led by MNHCV segment. Total sales have come in at 15,239 units versus our expectation of around 14,967 units, and total sales have increased 5% YY. And while the biggest contributor, that is MNHCV, there also sales have increased by almost 8 to 9% YY. So overall, it's a healthy growth that all the companies have seen for the month of August 2025.
All right, thank you so much for that, Sudarshan. So healthy growth coming in from the sales numbers for the month of August. But let's slip into a very short break for now. We will get you more news and updates on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC-TV18. While India's gross domestic product grew 7.8% in the April to June quarter, the fastest pace that we've seen in the last 5 quarters, compared with 6.7% in the same period last year, as per the National Statistical Office data released on Friday. Now, India's gross value added came in at 7.6% as compared to 6.8% in the first quarter of FY25. Now, this GDP figure was majorly led by public administration and services growth, which came in at 9.8%. But, the bumper GDP growth data for Q1, along with expectations of a GST rate cut, could boost the economy. We spoke to economists from HSBC and ICICI Bank for their take. Let's listen in.
July has been a good month. Manufacturing growth is around 5.4% that the number came in. August also should be okay because the impact of the tariffs will be felt in September. And by end September, we expect the domestic economy to be humming by 22nd of September. So maybe 3 to 4 weeks, there could be somewhat of a lull. But I think there will be an inventory stocking ahead of the festive season when demand should be much more than normal because of the GST recheck. So overall, we believe for the quarter, we should be around 6.5%, if not more. And the deflator will play a bigger role even in the next quarter when WPI is actually running negative right now.
One thing I'm going to look out very closely. Is it going to be revenue neutral or not? Because if it's not going to be revenue neutral, it means that rate cuts in some items will be compensated by rate hikes in some other items. And then we have to be very careful. Is the net impact going to be positive or not? So we'll wait for this in the next couple of days. I think there are important GST meetings.
Well, let us now shift our focus to the commodity sector. Keep in mind, gold and silver prices have hit an all-time high in India. Manisha joins us with all of those details. Over to you, Manisha.
Well, yes, 2025 seems to be going down as one of the best years in last 5 or 6 years that you've seen for gold and silver. For the Indian markets, the gains are even more so because the rupee has depreciated quite strongly. For the international markets as well, we are trading at multi-year highs when it comes to gold and silver. So for gold prices, we are very close to basically $15 to $22 away from its all-time highs of $3,500 an ounce. For the Indian markets, we've been making record highs as a string for last 3 or 4 trading sessions now, with 1,05,000 rupees per 10 grams now broken on the higher side. For silver at $40 an ounce in the global markets, we are at a 14-year highs. But for the Indian markets, we are trading at around 1,23,000 rupees per kilo here. So when you look at gold, we are up by 33% in this year. When you look at silver, we have gained up by nearly 40% in this year. That chart should come in on your screen, which tells you on how the gold prices have gained in last many years. And this is a 5-year gap that I have taken in. And as you can see, in the last decade or so, the prices have kind of doubled every 5 years. Last year, same time, when you look at the gold prices, we were trading at a 75,000 rupees. We are trading at 1,05,000 right now. So very strong gains coming in. And the chart shows you also the kind of gains that we have seen. The last time we saw a negative was in 2021. And the last time you saw 33% gains were many years back. So very strong gains continuing into this one. Same is the case with silver as well. Last year, same time, we were trading at around 80,000 rupees per kg. We are trading at 1,24,000 rupees right now. And when you look at the kind of gains that we have seen, 2020 saw 46% of gains in silver, and after that it is in 2025 that we are standing at 40% tall here. Markets do believe that it has to do with the uncertainty, strong investment buying also by central banks, expectation of US Fed rate cuts come the month of September, and the weakness in US dollar index, all very supportive for a safe haven buying in precious metals.
Well, thank you so much for that, Manisha. So gold and silver continue to sparkle. But shifting focus then to the latest developments on the online gaming ban front. Sources say that Online Gaming Act will be notified soon, and the government had a meeting with banks, fintech companies. My colleague Ashmit is here with more details. Ashmit, what are you picking up?
Well, just to set the context straight, while the Act has received the presidential assent, it hasn't yet been formally notified. But even without that formal notification, banks as well as fintech companies had started to come in the way in terms of disrupting the flow of finances, flow of funds to and fro from these gaming platforms. At least that was the concern that had been cited with very many of these gaming companies had cited. They had cited how they had faced issues in terms of refunding the deposits that were made by the users. They were not able to refund the money back to the users, to the gamers. There were also instances cited where GST payments were not being able to be made on account of, again, banking restrictions. They had also cited that some vendors they're not able to pay, again, because there are restrictions in place. Now, we spoke to senior officials within the government. What they're telling us is that there was a detailed meeting held. In that detailed meeting, the government has conveyed to the banking institutions, too, as well as fintech companies, to ensure that legitimate transactions are allowed to go through, are allowed to sail smoothly. On that count, in fact, amongst the legitimate transactions, one chief amongst them has been the refund of deposit money that the gamers had made with these platforms. That money should be sent back. This is one of the key clarifications that the government has given. So clearly a nudge coming in, clarity coming in from the government to the banking community, to the fintech community, to ensure that at least the legitimate transactions of the online gaming system are permitted.
Well, thank you so much for getting us all of those latest details, Ashmit. But, let's take a short break for now. We'll get you more news and updates on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC-TV18. The Maratha quota protest in Mumbai's Azad Maidan has entered day 4. Now, activist Manoj Jharange, who has been leading the protest, has also vowed to stop drinking water from today. Santya is joining us from CST with more details on this. Santya.
See, right now I'm outside CST station, and this is the area where thousands of Maratha protesters are camping. Before I speak to them, let me first show you what's happening here. That's the CST station, and since Friday, thousands of Maratha protesters are camping all over South Mumbai. The number is said to be somewhere between 35,000 to 40,000. You can see their vehicles are parked here. Those special forces are here, but the number of police personnel are highly outnumbered by Maratha protesters. The protesters are led by Manoj Jharange Patil, who is on a hunger strike, and from today onwards he has stopped consuming water also. So what exactly are these Maratha protesters claiming? They want that the government should consider all the Marathas as Kunbi Marathas, and they should be granted a reservation. They should be given a reservation under the OBC quota. Something OBC community is not. Try and speak to a few of them. दादा, डिमांड आप लोगों की क्या है? आप रिजर्वेशन है, सुप्रीम कोर्ट के पास में अटक जाता है मैटर, ऐसा बार बार।
देखिए दीदी, कि सुप्रीम कोर्ट के पास मैटर अटक जाता है, आपकी बात बराबर सही है, लेकिन ये जिम्मेदारी जो अभी रूलिंग पार्टी है या जो रूलिंग जो भी है, हमें किसी के ऊपर उंगली नहीं उठानी, लेकिन जो भी है उनकी जिम्मेदारी बनती है, क्योंकि सरकार जो होता है एक पिता के स्वरूप होता है और जनता जनार्दन है। सरकार में कोई भी बैठे, वो एक हमारे पिता के स्वरूप है, वो उनकी जिम्मेदारी है उसको कैसे कायदेशीररित्या उसको कैसे हम हैंडल करें। दूसरी बात ये है कि कल नांदेड़ विद्यापीठ जो है, नांदेड़ मराठवाड़ा में एक स्वामी रामानंद तीर्थ मराठवाड़ा विद्यापीठ है, वहाँ के कुलगुरु प्राध्यापक सर्जेराव निमसे, उन्होंने भी कल एक शासन का जो गवर्नमेंट का जो अधिकृत उनका एक अमेंडमेंट निकला है, उसमें भी उन्होंने ये किया है कि सातारा जो गैजेट है, कोल्हापुर गैजेट है, मराठवाड़ा का निजाम सा गैजेट है, उसका अधिकृत उन्होंने स्टडी करके उन्होंने जो गैजेट निकाला था, उन्होंने उसमें ये लिया कि कुणबी मराठा एक ही है और वो अप्रूवल किया है। वो स्टडी उन्होंने कल सर्जेराव निमसे सर ने वो इंटरव्यू में दिया है।
वही चाह रहे हैं कि वही आप लोगों का माना जाए। So these people, the demand is clear that all the Marathas should be considered Kunbi Marathas and should be granted or given a reservation under OBC quota. But the problem here is that Mumbaikars are feeling inconvenience, they are facing inconvenience. Many businesses are shut here as the people have taken over, the protesters have taken over this area. In fact, women and especially women journalists have reported that protesters misbehave with them, harass them and attack them. As of now, today is the 4th day of the protest and the Maratha protesters continue to camp in South Mumbai. Back to you.
All right. Thank you so much, Santya, for bringing in the latest from that development. But with that, that's all the action we have on this edition of Business Lunch. Don't go anywhere because Midcap Radar comes up next.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me today is Hormuz Patakia. Hey Hormuz, what a day, right? What a start to the week, to the month as well. And it is unwinding a lot of the red that we saw in the week gone by. The Nifty is higher. The mid-caps are doing really well. Most of the sectoral indices are in the green today.
Starting off on some optimistic note, considering the pessimism that we saw last week, and it shows with all the auto sales numbers that have come out so far, and a lot of these broader market moves as well, that you're seeing. The bigger takeaway is the fact that the Nifty Bank, which was a pain point all through last week, is doing very well for itself, and that too is contributing to the gains that we are seeing on the index. But these are the headlines that we are tracking at 1:30 this afternoon. Stocks woke up after 3 sessions of weakness, with mid-caps leading the charge. The auto, IT and consumer durable indices are gaining, while Pharma and FMCG are the big drags.
Zydus Wellness forays into the UK and US supplement market with the acquisition of Comfort Click for £239 million. The stock rises nearly 8%.
Neogen Chemicals is doing well for itself today, and that is after its arm has entered into a joint venture with Japan's Morita to produce lithium salt. The stock is up over 3%.
Ather Energy surges after new product launches. Vahan registration data shows the company saw highest ever monthly registrations in August. Management tells CNBC-TV18 they are eyeing 20% market share and are not keen on discounting their products.
Above the mark of 24,600 is where the index stands, almost 180 points higher, recovering almost half of what it lost last week. But of course, there are some important levels on the upside. The 20 DMA is still quite a bit of a distance away from where things currently stand, but 24,600 on the index for now. Just a bit of pull up Mahindra and Mahindra before we move on. It was the numbers, the auto sales numbers were flashing at the bottom of your screen just a few minutes ago. The stock is slightly off the highs of the day, but still holding on to gains of around 3%. The overall sales for the month of August stood at around about 75,000 units, which was marginally lower than the CNBC-TV18 poll that came in at around 79,000 units, and the total exports have gone up by around 16% to 3,500 units compared to 3,060. There you can see the total sales 75,900 compared to the CNBC-TV18 poll of 79,100. So the stock still holding on to gains of around 3%. The broader markets too doing fairly okay for themselves. The Nifty Bank too is up around 200, 250 points. The mid-cap index is up 1,000 points. So what are some of the big movers on the broader markets? Sonal has jumped across to the wall to tell us what are some of those names, Sonal.
Jumped across the wall the way markets are jumping today, Armiz. Look at the mid-cap index. You just spoke about it, almost 1,000-point rally that we are talking about. Small caps are also giving that company, so big surge in small caps as well. But let's talk about individual names now, because there are far and few that we've been talking about. MobiKwik, that index, that stock is up around 10% as we speak. There's Yatra Online. That stock, since the time results have come out, has been on a one-way surging spree as well. HBL Engineering is the other one, up around 4.5% as we speak. Genus Power, KIOCL, Chennai Petro. Some of these refiners have been seeing good gains which have come by, and Chennai Petro is one of them, so up 6%. But on the losing side, we do have some names. Sterlite Tech, for instance, after they lost one of those cases in one of the customers, that stock is down 5%. We have Vari Energies, which is lower. Bellrise Industries, which was lower more than what it is right now. It has recovered from those levels, but still is down around 1.5%. You have Advanced Enzymes. That stock did really well last week, but has been seeing some sort of declines right now. And SpiceJet is the other one. That stock is seeing cuts of around 2.5%. So there are more gainers today than losers, but still thought we'll talk about some losers in trade today as well.
Of course, can't not ignore them. Sonal, thank you for those movers then in the broader markets. Of course, just pull a MobiKwik as well. That too is up around 11% as we speak. Of course, significantly below its IPO price and of course its post-listing high as well. But EV player Ather Energy has unveiled its next generation two-wheeler platform and a series of products and technology developments. Now, the sideline of this event, CNBC-TV18's Ritu Singh caught up with Tarun Mehta, the co-founder and CEO of Ather Energy, who revealed that a 20% market share is on their horizon, and he also added that they are not keen on discounting their products. Listen into excerpts from that interesting conversation.
We just announced today that we think the future is going to be several products, and we've just announced this new platform, the EL platform, that will go soon too.
Yeah.
And on that platform, we think we can build a variety of different scooters. We just showed how maxi can be, how a commuter can be, how a sports peppy scooter can be. We think there's a potential to build 3-4 different kind of more scooter products over the coming years.
Yeah.
Eventually, we also showcase a concept today, Redux, and I think that straddles that gap between scooters and motorcycles and bridges them beautifully.
Yeah.
While we don't have a launch date or any immediate commercialization plan for it, but that kind of at least expresses intent of where we think we can go. Motorcycles are there in the radar.
Yeah, I was going to ask next.
Preempting that.
Yeah.
Motorcycles are there in the radar. We do think this is now the time to go deep and invest in the R&D for that platform. Like how we've invested in the EL platform R&D, the new scooter platform R&D over the last 2 years.
Yeah.
We think now is the time to invest in very deep motorcycle R&D. But I would say an actual product launch is at least 1, maybe still 2 years away.
Okay, 1 or 2 years away. But you know, as Ather, you've projected yourself as this premium market player, so to speak, in the EV space. With Rista, you know, some would call it a more mass market product.
Sure.
Now with the launch of your EL platform, which you say will be more cost effective for the company, should we expect a bit more push, strategic shift towards a more mass market segment?
It's possible, certainly. We announced a lot of things on EL today that lower the cost of the platform considerably. They lower the material cost, they lower the assembly cost, they lower the servicing cost. So overall, and we are also going to produce this out of a much larger integrated facility in Chhatrapati Sambhajinagar, Aurangabad.
Yeah.
So all of that does help and it create a situation where we can price our products more aggressively. Obviously, we're not announcing price today, and obviously we're not giving you a specific thing, but I will acknowledge that. Yeah, I think EL does give us the ability to price products more aggressively.
Yeah.
Having said that, I'll also say I don't think the market is for products below a lakh.
Okay.
I've never been a
So
fan
at
of it.
1 lakh is where you draw the line.
Yeah, I think today our entry portfolio with software is somewhere around 120 plus. So there is a gap between 120 and 100, and I think there are amazing experiences we can build for our consumers there. But for us, the Lakshman Rekha still is a lakh. Because I think going below that, we are just leaving money on the table, and we're not putting together enough price to build a good experience for the end consumer. We'll never put out something that we're not proud of.
Okay, so the new scooters, the range of scooters that do come out on the EL platform will not go below 1 lakh rupees.
Lakshman Rekha.
Okay, Lakshman Rekha, got that. You know, the other big news recently that's, you know, from the Vahan data that we see, you've climbed up to the #2 spot just, you know, after TVS and ahead of Ola, Bajaj and Hero and the others. How confident are you of maintaining that kind of a lead, staying at that position, if not improving it further, especially given how some of your rivals do often resort to heavy discounting, something you haven't done much of, you know, to boost sales and have other advantages as well?
So we have the opinion that margin is not our lever. We don't play on margin. We don't hence play on discounts.
Yeah.
What we win and lose on are our products and the experiences we build for the consumers.
Yeah.
We didn't discount 450 to win market share. We built Rista,
Yeah.
a product that is fundamentally lower cost and can target a larger market.
Yeah.
We will build EL as a product that is even better cost structure. We'll not just take Rista and discount it by 10-20,000 rupees to win market share. So I don't think discounting is something you should expect us to do seriously.
Okay.
For us, we look at markets from a more fundamental perspective. How many consumers are there who would see value in what Ather is building? And that's a pie that keeps expanding. And that's not because of what even we are doing, and that's because of how the country is getting richer. I spoke about it even today, that we believe India is going to keep premiumizing because per capita income is just going up. It's one of the most secular things to bet on in India. And as people get richer, they will buy more premium products. We grew up in families where our parents had an Activa or a Splendor, amazing, successful two-wheelers, right? But now that we've grown up, we would want to buy something different.
Sure.
Right?
I mean, I get your point. You know, you're not going to win the market on discounting and on pricing.
Yeah.
But talking about market share, coming back to that, you've gotten to #2.
Yeah.
That's a place you think you can maintain with a wider lead?
I don't know. Somebody else could do something else. Honestly, it's not my business to predict what others should do. I think my business, it is my job to do, to build great products, build them profitably, and keep scaling them. I can't tell you if in a quarter somebody else is going to discount, or in another quarter somebody else is going to shut down stores. What I can tell you is that there is a secular path where people buy more and more well-built products. We have a great roadmap for them, and we are not straying away. We're not suddenly switching and saying, you know what, let's just build this basic entry product that means nothing, but you know, will give us some more volume.
Okay.
That's not who we are.
Sure, you're not doing that, but your stated objective, at least in the near term, is to get to that 20% share.
You're still at about 17 odd
I
percent.
think tactically on that, there are very good signs.
Yeah.
Every market that we've gone deep in and that
Yeah.
we've focused, for example, South, for example, Gujarat, for example, Northeast,
Yeah.
eighth has become number one. And these are three very different markets if you think about it.
Yeah.
South India,
Yeah.
Kerala, Tamil Nadu, Karnataka, Andhra Pradesh, very different from
Yeah.
Gujarat,
Yeah.
very different from Northeast.
Yeah.
In fact, there are towns after towns in even North India. There is Kharagpur, there is, I think, Ludhiana, Amritsar.
So no more of South India only
You're
brand.
not. And that's what I'm saying. It is...
Thanks to Rista.
Thanks to Rista.
Yeah.
So our bet has been that good products can be built in any category. We will build them. We'll build fantastic experiences. Like we've got a great lens even with the Year 01 here today to really build things that are not existing in the category today.
Sure.
We'll always do that.
So 20%?
Should not be I think it is in the horizon. I would say that.
Okay.
Because all these other markets, we've crossed 20% and more. 23, 24, 25, 27%.
So overall, you think you could get
I think
to
as
that
the
share?
distribution expands in the rest of the country, getting to 20% plus is something we can certainly chase now.
Since you say your Redux, which looks like a motorbike, but it's not a motorbike, it's a motor scooter. The launch of that is a few years away. The new scooter is 1 year away. Big things to look forward to in FY26. Whether that is margin improvement, any new launches, any.
You should expect
what
to
are the
see,
key
I think
milestones?
we're doing a lot of work on gross margins. We've been doing a lot of work on quality. With Aether Stack, there's substantial work that's now happening in software. We've launched 2 new variants of Rista and 450 each, higher range variants. And ultimately, it's more stores. The story in FY26 for us is, simply put, expanding distribution. We are going to take this business from 200 stores to 400 stores and eventually 700 stores through the course of this year. And that's the biggest piece that anybody should plan for us.
All right, that's the word coming in from Aether. The stock is a big gainer in trade today, but we'll slip into a short break. When we come back, we'll get chatting with the management of Mankind Pharma on the other side. Stay tuned. Welcome back. Let's get a corporate conversation going. This is from the sidelines of the 21st Motilal Oswal Annual Global Investor Conference. We are now joined by Rajiv Juneja, who is the VC and MD at Mankind Pharma. Mr. Juneja, good afternoon. Thank you so much for joining in. The kind of macros that we're seeing right now, I have to ask you about your export segment. X of BSV portfolio, you saw single-digit growth in your export business. Can you give us a sense of what the kind of growth are you looking at? What kind of product launches are lined up in FY25, FY26, my bad. And is there any impact of whatever has been announced in terms of tariffs? I know pharmaceutical products are not are exempt under that, but still, are you seeing anything that is happening on the ground?
If you just look at Mankind, we are majorly a domestic-centric company, and our export is very less in America. It must be approximately 1% out of total export of around 13-14%, including BSV. And the kind of question, your next question is that the growth is less because last time there were certain very special products which we were exporting over there, and naturally some kind of a dip has come in that export. But going forward, we always maintain the same thing, that our growth in export side will be in double digit.
Mr. Juneja, good afternoon. Thank you for joining in. For the quarter gone by, your consumer health portfolio has done really well when it comes to the growth, with almost a 33% growth on a sequential basis, 15% growth from last year from all your core brands within the consumer health business. Do you expect this growth trajectory to sustain? And if you could also tell us, by the end of the year, how much do you see this being a part of your overall revenue mix?
You look at everything from the lenses of quarters. We look everything in terms of years and long-term basis. We see that we always maintain that our consumer business is closest to our heart, and the growth will be in high teens, profits will be in high teens, and this approximately contributes to 8 to 9% of our total revenue. And going forward, we want to see this particular side grow faster, grow more, and become better. And that's one reason we have just carved out this division and made it special kind of a OTC division, where only specialized consumer division, OTC, FMCG products are there. And the most important, the talent is like that only, because to make any company progress and reaches to its full potential, it should be given the kind of people that the company requires. So that we are doing in terms of product upgradation, packaging, value addition, everything.
So were you expecting the consumer business to grow faster? So in light of that, you said you've carved it out as a separate unit, but are there any new launches that are in the pipeline, new products that are in the works for you this year, Mr. Juneja?
In consumer division, the most important thing should be understood is that it is not the number of launches only, it is always the size of the product, the size of the brand actually that matters. So we continuously working on our older brands, Manforce and Dragon News, and now Guess So Fast. Guess So Fast is doing fantastic. It has started giving sleepless nights to competitors. And one more product we have launched recently, and that is our Nimulid. It is the same brand we acquired from Panacea Biotech. That product, lubrificant, spray, anti-inflammatory, analgesic, we are just working on this right now.
Okay.
That's all for this year, and along with our earlier brand Health OK, where we promote this.
Okay. Mr. Juneja, the other update has been how you're looking at GLP-1. You expect to be in the first wave of launch in India itself. What are your plans here? Would it impact the anti-diabetic portfolio? How do you ensure that these two work in tandem for you?
This particular obesity is one problem which is here to stay. Anti-obesity products are here to stay for a longer period. For next, I feel 5-10 years. A lot of traction would be there in this particular therapy. And this will become a new norm now. I don't think it is having any kind of much of impact to anti-diabetic products. Rather, with this, people will become more aware about their diabetes, because a lot of people are not under the radar. A lot of people are not diagnosed. I feel these are two different things and should be taken differently.
Well, in that light, Mr. Juneja, you've the BSV acquisition and so on, your net debt as of the 30th of June stood at around 5,200 crores from what I can read from your investor presentation. Any intentions of bringing that figure down by the end of the year or say by next year? Have you put in a specific figure in sight? And if you could also tell us whether your net operating working capital days from 48 come down as the quarters go by, as the year goes by?
This every intention that we should become a zero debt company. We have always worked like that, and whatever promises we made in the past, like for example, selling our one property which we sold, bringing QIP we have done, and in no time I'll say that this year and next year, by the end of 27, will be almost zero debt kind of a company. We are doing everything possible because we understand that we don't really are very aggressive as far as the debts are concerned. So we are a very conservative player, always believing that less debt is always good for the health of the company.
So by the end of FY27, you are saying you would become an almost zero debt company, if I heard that correctly?
Yeah, almost. Hopefully,
almost.
Yeah.
If you could. So by FY28, it'd be fair to say that you would be a zero debt company. If it is almost by the end of 27, by 28, you would be zero.
Yeah, this year and next year, and maybe the first quarter of next year will be zero debt company. That's the kind of a belief we carry in our head.
All right,
Mr.
Juneja. Right. All right, Mr. Juneja. Thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. Rajiv Juneja, Mankind Pharma. Intentions to be a zero debt company at least by the first quarter of FY28. I'll take a short break. Just before we do that, remember to tune in to the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes the global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC-TV18 Prime at noon for the Global Reset, at 1 p.m. for the Big C, and the Global Lens at 8:30 this evening. Welcome back. Still at 24,600 at the Nifty, at the same place at where we started off started the day, or at the start of the show off rather. 170 points higher on the index. Some flashes on your screen. Russia may supply around 5 million tons of fertilizers to India and China, and that is courtesy Bloomberg. Just to pull up some fertilizer names just to see if there is a reaction in any of these stocks. NFL, RCF, and Deepak Fertilizers and the likes. Yes, RCF at the highest point of the day, and NFL too trading with gains of around 2% as we speak, and Deepak Fertilizers too trading with gains of around 1.25%. Remember, the stock will turn ex-dividend tomorrow, is Deepak Fertilizers, so keep that on your radar. So no significant reaction as of now, but just to pull up Bajaj Auto before we call time on the show, the stock is at the highest point of the day, 4% higher now on the stock, among the top gainers on the index. And some of the other movers in the broader markets include the likes of Keynes Technologies, now the second best performer on the Nifty Small Cap Index, 7% higher on that stock. And extending gains is Dixon Technologies, heading towards the 17,500 mark, 4.75% higher on that stock as well. We call time on this edition of Midcap Radar. From Sonal and me, thank you so much for watching. Your stocks on the other side.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in, as always. And it's a good afternoon that's coming in for the markets, right? Look at it. The Nifty at 24,600, just around that mark right now. And at the day's highest point is what the Nifty is trading at. Do not forget, all the indices are managing to hold on to that some bit of a green, except for Pharma. That's seeing a bit of a subduedness. Mid-cap, small-cap, clearly outperformance that's coming in from the mid-cap space as well as the small-cap as well. More than 1-2% of gains is what that we're seeing coming in for the mid and small cap. IT, that's doing well today, right? We had a brokerage note that came in as well, but IT, that's managing to hold on to strong gains, and that is also almost near the day's highest point as of now. When you look at it, the Nifty IT, 1.5% gain approximately is what we're seeing coming in for the Nifty IT. Advance decline ratio obviously clearly is in the favor of advances versus declines that we're seeing coming, and that has continued through the day. Look at the gap between the advance and decline, right? That's just there, and we're managing to see 2,000 stocks on the advance side versus 700, 800 odd stocks on the decline. But a lot of movers are coming in from the auto pack today. We have Bajaj Auto, Hero Moto, M&M, Tata Motors among some of the top movers coming in on the Nifty auto front, managing to hold on to good gains of more than 2% for all these stocks, right? So will be something that we'll be watching out for. Auto sales numbers is what has also come in for these companies, so keep an eye out on that. But this is a show where we solve all your stock-related queries, and that's what we'll be doing with our experts for today. Vaishali Parekh, Vice President, Technical Research at Prabhudas Leeladhar, as well as Gaurang Shah, Senior Vice President at Geojit Financial Services, to answer all those queries. Gaurang, as well as Vaishali, good afternoon, and thank you so much for joining us on the show. Let's get started with the stock-related queries now. First query for today coming in is from Keshav Kumar, who's writing to us from Andhra Pradesh. He's holding 100 shares of Coal India. This is at a price of 200 rupees per share, making a profit on this one. Wants to know whether to continue to hold or look to sell and book out their profits. Gaurang, your view.
Thank you, Vinny, for having me on the show. Good afternoon to all the viewers of CNBC TV18, to you and to Vaishali. A small disclosure, all recommendations are a part of our research team recommendation. Our company, Geojit or I, we do not have any personal investments nor any kind of financial interest, no conflict of interest either, but we give recommendations to our clients on similar lines. They might hold their investment position in the recommendations that are given across. So coming to Coal India, I think a lot has improved for Coal India from the time it was hit by lower quality of coal and lower output. I think with the washeries that were added some time back, things have changed for better. And most importantly, the investment that is there in Coal India at the level at where he's got invested is very comfortable. So from a long-term point of view, you can continue to hold Coal India.
Okay, long-term point of view, you can continue to hold Coal India. Vaishali, on the technicals, what are the charts indicating for this one? Does it merit continuing to hold Coal India?
Hi, very good afternoon, Vinny and Gaurang. So I would agree with Gaurang because technically also we have seen, if you see the longer term chart, Coal India is well placed. 360 acts as a very good support level. In fact, this is also to those who would consider getting into the trade, it makes it a favorable risk reward ratio over here. And once the clarity, we see the stock moving above 400, I think it's ready for a further upside. So according to me, these are attractive levels and continue holding, of course, to those who are holding.
Okay, continue to hold Coal India. That's the word coming in on the technical as well as the fundamental front. Let's move on to the next query for today. This is an investment query that's coming from Jinsi from New Delhi. She's looking for a good stock for the long term. Gaurang, I think this is simple, right? One stock, which one should they invest in?
Well, there are one too many, right, Vinny? If you want to really go in for large cap blue chips, yeah. But if you really want to, maybe a choice of one and two, possibly L&T as well as Reliance Industries. I think these two large caps will play a very good long-term investment bet.
L&T and Reliance Industries for the long term, the word coming in from Gaurang. Vaishali, your view, anything that's looking exciting on the long term front?
Well, I would add ICICI to it. I would also add some of the metal stocks because right now what we are looking at, market is at a very good level to start looking for good quality stocks.
Okay. That's the view coming in there in terms of the names that you could look at for the long term. Let's move on to the next query. We have Vinay, who's writing to us from Karnataka. He's holding 285 shares of IndusInd Bank. This is at a price of 1,040 rupees per share. He's making a loss on this one. Wants to know whether to hold or sell at current levels. Gaurang, IndusInd Bank, what should they be doing now?
Well, Vinny, I think all the negatives with respect to the derivative loss of 1,950 odd crores is now in the price. Point number one. Point number two, if I heard the reports right, there were 3 external agencies that were appointed for the forensic audit, and things have come out in better shape. We have a hold recommendation on IndusInd Bank, but since his acquisition price is at about 1,050 odd and the current level at 750, I think if the investor has got investable amount, he can average maybe half the quantity or less than that, whatever investable amount he's got from a long-term point of view. That will bring down the acquisition price to a very comfortable zone.
Okay, and on the technical front, IndusInd Bank, how is that looking like? Anytime soon that we could expect this, the viewer can expect their buy price coming back of 1,040, Vaishali?
Of course, it can take a while because this has witnessed a lot of whipsaws and it has been consolidating. But in my opinion, 700 is a very good attractive level. So one can average out at these levels because once you see the stock moving about 900, so for now, I would expect a range of 720 to 900. The clarity of an uptrend would be only about 900. So for now, I would just have a range of the levels that I mentioned.
Okay, keeping an eye out on those levels over there, keep an eye out on that range. You can look at averaging as well. Next query for today is coming from Matthew, who's writing to us from Kottayam, and he's holding 150 shares of Zaggle Prepaid. Price is 442 rupees per share. His investment horizon is now only 6 to 12 months. He wants to know if he should continue to hold or look to exit this one. Gaurang, your view, because it's just within a 1 year time period is max they're looking to hold. What should they do with Zaggle Prepaid, right? Overall growth had remained good for Q1 FY26, but does it merit holding it for a longer period of time now?
Well, so, sometime back when the IPO was there, Vinny, we had come out with a subscribe recommendation for the IPO, which was at a much lower level than where the stock is traded right now. More importantly, the query is for 6 to 8 months, which I am definitely not capable to answer. I think Vaishali would be in a better position to answer. But yes, business prospects look quite good in terms of long-term earnings visibility.
Okay, long-term earnings visibility is good for Zaggle Prepaid. But Vaishali, on the technical 6 to 12 months, what should the viewer do? We've seen almost a 15-20% return in the last 6 months. Does it merit holding? And will they be able to get back to that buy price of 442?
Well, I think so because chartically, if you look at it, the stock is corrected right from 600 levels. It did make a low at around 300 levels. And from there on, it's making higher bottom formation. So currently, keep a stop loss of 380. And today's volume also has been picking up. So I think this will very likely go towards 440 and perhaps higher from there on.
Okay, 440 and higher from there on is also a possibility. So continue to hold for this next 6 to 12 months at least. But on that note, we're actually going to slip into a very short break. So Gaurang and Vaishali, do stay on with us. But viewers, here's some good news that is coming in for y'all. India's business news leader is now going to be a click away for y'all. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store, Google Play Store, or you can just scan the QR code that will come up on the screens for y'all. Welcome back to your stocks on CNBC TV18. Markets managing to hold on at the day's highest point as of now. But let's get started and actually keep it going with those stock-related queries then. The next query for today is coming from Venkatesh, who's writing to us from Andhra Pradesh. He's holding 60 shares of Sun Pharma. This is at a price of 1,702 rupees per share. Currently making a loss on this one, but wants to know, should he continue to hold this, look to sell, maybe look to average? Gaurang, your view coming in for Sun Pharma, right? Obviously, we have all these tariff uncertainty that goes on, but apart from that, I do not see any problem for Sun Pharma. What's your view on that one?
It's a little bit of uncertainty was there in terms of earnings for its foreign counterpart that it acquired some time back, Sun Pharma, but we do have a positive outlook. And I definitely agree with you, Vinny, that tariff on pharma by US looks a little bit stretched out imagination, because it will eventually end up in increasing the healthcare cost in US. So that's aside, but we are positive. Since he got in at 1700 and the stock is quoting at about 1560, I think it would be prudent to first of all hold on to it and even average a little bit at current levels.
Okay, that's a view coming in on the fundamentals. On the technicals, Vaishali, what are we keeping an eye out on? The stock has seen a bit of a correction, right? It's not outperformed or any sort of that. Now, does it merit maybe, averaging out? Would you agree to that as well?
Say so, because 1530, 1520, that is a level where a number of times we have seen a good support taking place, and from there on we have seen a good momentum. And when I'm looking at the longer term chart also, I think it's nearly done with its correction. So 1500, 1530 is a support band. That is where he can start averaging out.
Okay, keep an eye out on those levels to average out as well. Let's move on to the next query. This is coming from Sriram, who's writing to us from Chennai. He holding 80 shares of Dixon Technologies. This is at a price of 3,500 rupees per share. Wants to know the outlook for Dixon Technologies in terms of a stock. How long should they be holding it as well now? 3,500 rupees is what he's bought it at, making good amount of profits. Gaurang, this is a stock that's run up a lot before. Then there was that split that came in as well in terms of the stock move as well, right? And then again, that's run up. Dixon Technologies, there's no stopping that right now. And EMS as a play, what are you watching out for now here?
So I think this one has defined the logic of gravity, right, Vinny? It doesn't seem to be stopping itself. But yeah, I mean, the sector, first of all, on the sector, extremely positive, the entire EMS segment. There was a bit of fear in the market, Vinny, because of the reach that India made out to China, whether Chinese companies will be, venturing into this EMS sector, and whether it will be not so productive or counterproductive for the Indian counterpart. But I believe the Indian government is going to do fair and leave out all level playing field for everybody to coexist. Having said that, no specific comments on Dixon Technologies, but it is one of the strongest companies in this EMS sector. One company that we have a positive coverage in the EMS sector is PG Electroplast. But yeah, the sector looks very positive.
Positive on the sector. That's the view on the fundamental front. Vaishali, on the technicals for Dixon Technologies, right? What are we watching out for now? Should they continue to hold? Just an overall outlook in terms of the stock.
I think it's in an uptrend. It has, in spite of all the whipsaws that market has witnessed, nothing really has happened to this stock. So in my opinion, this implies the inherent strength. But having said that, since he has bought it at lower levels, continue holding and keep a stop loss of 16,500. Because if these levels are broken, then maybe it can see further more correction. But I think with this stop loss, continue holding, we may see the stock retesting 19,000 as well.
Okay, 19,000 is also what we could watch out for. So keep holding the stock. That's the word coming in on the fundamentals and the technical front. Let's move on to the next query then for today. This is from Shankar from Bangalore. He's holding 29,000 shares of Vodafone Idea. Price is 6.37. So around the buy price is what the stock is trading at. Wants to know whether to hold or look to sell. We did have those monthly subscriber data that has come in as well, Gaurang, today. Overall, Vodafone Idea, does it merit holding this, or maybe just get out of the stock and look at another name?
So, Vinny, more than the company's merit, I think government's approach is something that a lot of people get excited about as far as Vodafone Idea is concerned on the street. You're talking about subscriber base. Well, if my memory serves me right, Vinny, Vodafone Idea is one company which has been losing subscriber base to likes of Bharti Airtel and Jio. Again, no specific comments. I don't know whether this gentleman has bought it purely from a punting point of view because the quantity 29,000 that he's got. There are better players. Look, Bharti Airtel and Reliance Industries because of geo mobility. Vodafone Idea, since there is no coverage, I won't be give out any specific. But a lot of people are tying hope to this particular company on fallback of what the government does. So I think fundamentally there are stronger players.
Absolutely. Fundamentally, there are stronger players. And the last time we had some comments also that came in, from the telecom minister, especially on this AGR and Vodafone, where they said whatever they wanted to do has already been done for Vodafone Idea. So that is also something that, they should be keeping an eye out on. To keep an eye out on that. But Vaishali, your view on the technical front, does it merit holding the stock?
I would not recommend this. I would definitely go for a Bharti or the other ones.
Okay, Bharti Jio, you can keep an eye out on that one. Vodafone Idea, it's not a positive view coming in as of now for the stock. Let's move on to the next query. We have PC Acharya, who's writing to us from Bangalore. He's holding 200 shares of CG Power. And this is at a price of 550 rupees per share. They're making a profit on this one. Long-term prospect of the stock he wants to know. And Gaurang, obviously just last week, I believe, we had that news flow that came in that CG Power is launching its first OSAT facility as well. We've seen that stock run up that day. Your view now for CG Power. Continue to hold this one.
Yeah, absolutely. And the investment is at a very comfort zone, Vinny. We are positive on the stock. We have a whole recommendation on CG Power. And you're absolutely right. It was the facility in Gujarat that they have kicked off. And it's a huge manufacturing facility. I believe it is in Sanand, if I'm not mistaken, somewhere near Sanand in Gujarat. We are positive on the stock. So hold on to it from a long-term point of view.
Absolutely, Gaurang. Yes, it's at Sanand in Gujarat as well. So that's an important and positive update that came in. But Vaishali, on the technical front, what are the levels that now they should be keeping an eye out on?
Well, I would say the stock has been consolidating for a very long time at around 680. So if longer term is the time period that one is considering, 650, 660 is a prominent support level. Today, in fact, it has opened with a gap up. So that implies the strength and more pickup to set in. So I would say for a near-term perspective, look for a target of 750 to 800. But if time is not a problem, I think this will go perhaps to 900 levels also.
Okay, 900 levels also. Is it something that it could reach? Long-term story. That's what we're talking about right now for the stock. Let's move on to the next query, and that's coming from Kiran Kumar, who's writing to us from Chennai, holding 150 shares of Tata Motors. Price is 432 rupees per share, and wants to know the long-term view for Tata Motors. Gaurang, your view for Tata Motors today, obviously surely among those names that are buzzing in trade after, we're seeing those whole host of auto sales numbers that have come in. But for Tata Motors?
I believe Mr. Kumar, if he's bought it 432, Vinny, you must have surely seen the price of 1100, right? Tata Motors. Yeah. And from those levels, it has retraced almost 50%. But having said that, we remain positive. I think the free trade agreement between India and UK should augur well. The agreement between UK and US also should augur well for Tata Motors. And of course, revival that is happening in China should also support the luxury segment sales side number as far as JLRs are concerned. We are maintaining a hold on Tata Motors. I think from here on, the downside looks very protected. And of course, there is this demerger news also happening of commercial vehicle and passenger vehicle. Let's hope, focused strategy for both the businesses should augur well in terms of earnings visibility.
Okay, so continue to hold Tata Motors on the fundamentals. On the technicals, Vaishali, what should they be watching out for? Do you think that 1100 could come in at least within a year now?
Well, I would go step by step because it has been a laggard all this while. But I would say 600 is a good support. The stock needs to go above 750 and sustain above that to aim for higher targets. So let's wait for it to cross at least 750.
Okay, wait for it to cross 750. They are making a profit on this one, but hold on to Tata Motors. That's the view coming in on the fundamentals and technical front. Next query for today is from Aman, who's writing to us from Mumbai. He's holding 70 shares of Eternal, obviously Zomato or Eternal as we know it, 230 rupees per share, making a profit, wants to know the long-term bet for Zomato. Gaurang, a lot of times we have, right? And now Swiggy coming into play. Would you still say that continue to hold on to Zomato or maybe, look at Swiggy as well?
Well, I think, Vinny, honestly, there is enough room for a lot of players to coexist.
Yeah.
And Zomato, Eternal, or Swiggy, as a matter of fact, they are the pioneers in this particular, quick commerce. I remember very well, the IPO was at about 76, if I'm not mistaken. That time it was known as Zomato. We had come out with an IPO note at that point of time, and post that we had come out with a standalone fundamental recommendation on Zomato, now Eternal, of course. Blinkit is doing very well, and that was one of the concerns for the markets when they actually took over that business and the price that they paid. Fast forward to the current situation with 2,000 dark stores, if they are able to do that by end of this year, I think the reach is going to be phenomenal. At the same time, they're planning to go into newer geographies, tier 2, tier 3 cities, and encash on the subscriber base. Long term, hold on to it.
Hold on to it for the long term. And Vaishali, your view coming in for Eternal, what should they be doing? Continue to hold on to the stock? Last 1 year, we've seen an uptick of almost 31%, right? But it has had its fair share of ups and downs.
I agree. So the recent rally that we witnessed is right from 200 to now at 320. Today's candle also, we are seeing a new round of momentum setting in. So that means it's a one-way rally, but still the indicators do not show that it's exhaustion or overbought situation. So I would say continue holding, keep a stop loss of 305, because once this momentum continues to show further up move, this can go towards 350, 380 from here on.
Okay. Continue to hold Eternal for the long term. That's the view on the fundamentals and technicals. But that was the last query for today. So Vaishali as well as Gaurang, thank you so much for joining us and helping our viewers solve all those stock-related queries. And as of now, markets almost at the day's highest point, actually. 24,610 is what the Nifty is trading at. 180 points uptick is what we're seeing. IT continues to be that outperformer today, and Nifty Bank also managing to hold on to gains of 0.5%. So no complaining as of now this afternoon in terms of the market. But that's all the time we have on this edition of Your Stocks in CNBC TV18. Thank you so much for tuning in. Remember, you can always email us your queries at the email ID at the top of your screens for you all. But don't go anywhere. The last lot of trade is still pending, and you have closing bell up next for that.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
That we're seeing some bit of a rise coming in for Hang Seng and Taiwan Index, which are managing to hold on to good gains.
Asia ex Japan, we've lagged now for the 4th straight month.
It's been an outperformer, but it's still, if you look at it in the last 10 months or so, it's still not at those highs that we saw. So that's one name I'll keep an eye on.
24,474 is where the Nifty is at. 53,824 is where the Sensex is at.
Now you need a very clear thinking about how to invest. I mean, in investment candidates, what all you are looking for.
Last month was nothing great in terms of the moves that we saw. In fact, it was the biggest weekly fall in 5 months that we saw last week. So some of those gains have come back.
कांग्रेस को जल्द से जल्द खत्म करने और स्थायी शांति स्थापित करने का रास्ता खोजना होगा.
The Indian Prime Minister Narendra Modi had a 55-minute-long meeting with President Xi.
Is still quite a bit of a distance away from where things currently stand, but 24,600 on the index for now.
Well, what a strong day so far it's been. 24,600 in the Nifty, 500 points up on the Sensex. We're at the day's high. You're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Rima, with me, Surbhi and Nigel. Hi, guys. It's only been getting... Yeah.
After a long time, actually. And the gains have been held on today, so that's a good thing as well.
It's actually just getting stronger.
Well, that's right. Getting into the last hour of trade at the high point of the day, that's looking good. And maybe some of those FIs are on vacation, right? Because the US markets are shut today. So that could be one factor at play as well. And tomorrow you'll have the weekly expiry playing out for the Nifty, which is the first one that will play out on Tuesday. So as things stand, some of those bears will getting a little jittery because the markets are gradually moving towards a 24,650, and the options data suggested that that's the mark they would like to protect. So let's see how this one goes.
Absolutely. And it's green across the board. It's also green in the broader markets. There's a lot of buoyancy in stocks, and we haven't seen that in a long, long time. So it's good going. Obviously, the auto sector is leading from the front thanks to all the excitement around the GST cuts, and also sales numbers actually, which have been mostly positive and slightly better than subdued estimates. So that's what's working out quite well. Let's quickly tell you what we're covering on the show. Well, a strong day of trade on the street. The Nifty has been surging to levels of 24,600. Auto sector taking the lead. Broader market is showing a lot of outperformance as well. In fact, we'll be putting the spotlight on the auto space as those sales numbers have come in for the month gone by, and a special spark coming in electric two-wheeler stocks like Ola Electric as well as Ather Energy. So what's the buzz? We'll tell you all about it. Zydus Wellness is one of the top buzzes today. This is after making a small acquisition. Again, that's a stock on our radar, and we'll discuss it as we go forward.
Okay, let's take stock of some of the big movers on the large cap screen. Well, it's auto all the way. Eicher Motors is up nearly about 3%. Bajaj Auto, 5% jump in the monthly sales numbers. M&M, Hero MotoCorp, and now even Tata Motors, where the numbers are out. In fact, the top 5 Nifty gainers belong to the auto space. After that, you've got a Trent and Eternal, so throw in some consumer. That continues to remain upbeat. And IT too is holding up quite well. Infosys and Tech Mahindra on the buyer's list. How should you position yourself in the last... Okay, we'll get to the technical strategies. Dipan Mehta is joining in. Dipan, finally a good day. Look at the mid-cap index, 1,000 point up. What have you been doing? Have you been buying? And what are your thoughts?
Yeah, Rima, good afternoon, and thank you for having me on your show. I think about time that we are seeing a pullback in stocks, and I think the kind of moves made by the government, and especially expectation of positive announcement for GST and the outcome of the overseas trips of Prime Minister Narendra Modi, that has lifted the sentiment over here, which is why we are seeing this kind of a current in some of the stocks. And also, I think easing of imports from China, so that entire China-related businesses, be it electric two-wheelers, or EMS manufacturing companies like Dixon, Amber, they are all in focus because there were certain challenges over there in terms of procuring raw material or getting investment from Chinese company, and that may get eased. after this particular meeting that Prime Minister Modi had with his counterpart in China. So it generally lifted the sentiment. And as far as the second question, what we have been doing, I think we are pretty much remaining more or less fully invested and looking for good stock ideas. This particular earnings season has not been that great, and there are fewer ideas than when we enter in it. But nonetheless, I think we're looking for domestic-oriented businesses which benefit from GST cuts.
Do you have any on your watch list?
I think retail is top of the mind, especially two companies come to mind, Vishal Retail and V2, Vishal Mega Mart and V2. Both companies came with very impressive set of numbers, and they are also in tier 2, tier 3, so they will benefit from GST cut and improve rural spendings as well. So that's then the entire jewelry pack, I think they did very well, right from Titan, Kalyan, Senco, all of those companies reported good numbers. And I think if gold prices kind of stabilize, these companies are looking at growing pretty well over the next few years, also expanding their network as well. And they're not really affected by Trump tariffs. So you have to look for domestic focused jewelry companies. That also is in line with this consumption oriented investment theme. And then there is these travel and tourism companies, especially Indigo, now that the stock overhang is almost done with. And we feel that this festive season will be exceptionally good for airline companies, especially Indigo. And then there's an online travel agency called Yatra, recent listing. That also did very well in the last quarter. So that's also on our watch list. So that's what we're looking at right now. But Rima, all these companies I spoke about, all their names, we and our clients are invested in them or looking to invest as a measure of disclosure. So our views could be biased.
Look at Yatra, 63% up this month. And the other one, Vishal Mega Mart, 5 consecutive quarters of a double-digit same-store sales growth. So it's managed to buck the overall weakness in consumption. But how, Dipan, do stay on. We've got Ashish Kyal also joining in for some last start trades. Ashish, morning. Have you been playing on the upside? What would the call be?
Hi, afternoon to you and all the viewers as well. See, if you look at the overall broader market, I think it's trying to find the direction. Last week we closed near the lower end of the range. We are trying to bounce back again from there. So I think as long as 24,400 is intact, there can be some consolidation. But stock-specific action has continued within this range. If I talk about the stock, then the first stock that is on the buy side is going to be RBL Bank. We can clearly see a very strong outperformance from RBL Bank. We can see that the stock has managed to show more than 1% of gain in today's session also, and it's consolidating. So there is a possibility we can see a move towards the level of around 275 on the upside. On the downside, one can maintain a stop loss on the stock at around 258 levels. And the next stock on the buy side is also going to be Bajaj Auto. We can clearly see the two-wheeler segment has started buzzing over past few weeks, and Bajaj Auto is just trying to catch up. It has been a lot of travel to do on the upside because we can clearly see the outperformance from TVS Motors and Hero MotoCorp, but Bajaj Auto is yet to get there. So one can create long positions in Bajaj Auto as well, expecting a target on the upside at around 9,700. On the downside, one can maintain a stop loss for the stock at 8,600 levels.
Okay, all right, Ashish, got that. Thank you very much for the trading calls. We'll come back to you in a bit. Let's actually talk about the auto stocks, which are absolutely electrified, as we've been saying as well. We have Sud joining in, and Ola and Ather both have become a study in themselves because stocks have been up and away. Ola is up some 40% in the last few weeks. It's up, in double digits again today. And then there is Ather. Ather, of course, posted some good numbers as well. That's Ola, 14% higher. Let's pull up Ather. Okay, so it's cooled off now. It started the day on a more buoyant note. But so tell us, what's suddenly electrifying these two-wheeler EV stocks of late?
So what a move both these stocks have been seeing for the last few days, especially Ola Electric. The day, if you remember, China had announced that they are going to lift the curb on rare earth magnet. That was the first day that we had seen a big move in Ola Electric. It has continued from 52-week low. The stock is up almost 54%, and it's up 50% in last 1 month. So what's the news? Major announcements over the last few weeks, or say over the last few months. So as far as August Vahan registration data is concerned, Ola Electric has reclaimed #2 spot, leaving behind Bajaj Auto and all the other companies. TVS remains at #1 position. Now Q1 earnings company had seen a sequential improvement. And also it has said that going forward, earnings are expected to improve. And recently it has announced that Gen 3 scooter has secured PLI certification. It's very important because Gen 3 scooter forms nearly 60% of its total volumes. And now it believes that it's going to impact PLI incentives positively in the range of 13 to 18% of total sales value. That would remain until FY28. And it's also going to boost profitability in Q2. Especially talking about auto business margin, company expects auto business margin to turn EBITDA positive in Q2. And in FY26, auto business EBITDA margin is going to be 5% or more than that. Also, recently China has announced that they are going to lift the curbs, and that also helped the momentum continue, positive momentum continue. Now coming to Ather Energy. Company got listed in May of 2025, and from listing price, stock is up 51%. And from the lows that had hit of 288 per share, from that level, stock is up 72%. Some of the announcements: August registrations, company has seen an improvement on a sequential basis. It's the highest registration in a month that company has seen so far. For Ather Energy also, Q1 earnings had seen a sequential improvement. Now, over the weekend, company has announced certain announcements. It has announced new platform, that is EL, and it believes that it's going to help in improvement in margin over the next few years. Now, on the market share, company saying 20% overall market share is very much on the horizon. Especially talking about the South India, company already is leading the chart. It has the highest market share amongst all the electric two-wheelers. Now, on the pricing front, everyone was talking that like so many companies have been launching products that would price below rupees 1 lakh, but company is saying that it's not going to play that part. Its prices of products will remain above rupees 1 lakh. And also on the brokerage front, all the brokerages have a buy call and highest target price is 480. But today it has crossed that target price also, and the high it had hit was 496. Just on one thing on valuations, Ola FY26 price to sales is 6.5 times versus Ather's 5.8 times. So what does it suggest? It suggests that market is expecting higher growth or better profitability potential from Ola versus Ather going forward, or say in FY26.
It's really interesting how the market's view on Ola Electric suddenly seems to be transforming. So we'll come back to you in a bit because we have to discuss the monthly sales numbers as well. But I just want to highlight for our viewers, let's pull up the intraday chart on the Ather Energy. Earlier we had fired Ather Industries, which is not the stock we're referring to. It is Ather Energy, and it continues to be absolutely electrified with a gain of about 9% right now. Dipan, hi, good afternoon. What a move on these stocks, right? And what a turnaround in sentiment on Ola. First of all, it seemed like Ola could do no right when it came to investors in the stock market. And now suddenly, when last 1 month, I mean, are you convinced about these, the so-called turnaround, the increase in the registration numbers? And what would your advice be on both the stocks?
Well, I think that we are just watching these companies, not looking at investing in them. And especially Ola Electric, the losses are quite incredible. And let us see the roadmap to profitability because they are making losses even at operating levels. So let's see where the break-even point comes for these companies as well. So I would just wait and watch. And it's not that they have a monopolistic position. See, unlike some of the new age businesses like say Swiggy or Zomato, they are duopolies, or some of the other platform companies have a very strong moat. But the likes of Ather and Ola Electric are also competing with traditional, the old automobile companies, the likes of say Bajaj Auto or TVS Motor or Hero MotoCorp. Of course, Hero has a stake in Ather. So from that point of view, I think the kind of challenge for them to grow and turn profitable is even more difficult. So I would not invest in these companies at this point of time. But yes, I think if they pull a rabbit out of the hat and suddenly show profitability and road to sustained growth, then we may change our view.
Okay, for now, you're giving it a pass. Sudarshan is still with us. And now let's talk about the August auto sales numbers. And just, Sudarshan, going by the price action that we're seeing, Bajaj up 4, the others up 2.5%, 3%. Numbers are good?
Numbers are very good. Most of the companies have reported sales for the month of August, and all numbers are looking much better than estimates. So we'll start with Bajaj Auto. It was the first company to report the numbers. Total sales have increased by 5%, has come at 4.17 lakh units versus our expectation of 4 lakh units. And good part is domestic sales, though, have slipped, but numbers are largely in line with estimates, and both exports and three-wheeler segments continue to do well. Next is TVS Motor. It was a beat across the segments. Except electric vehicle, all the segments have seen a double-digit growth. Total sales were up 30% YY versus our expectation of an increase of 11%. Domestic two-wheeler sales were up 28%, and similar move was seen in motorcycle also. It was up 30% YY. For Eicher Motors, company's growth over margin thesis continues to play out. Even in the month of August, total sales have come at 1.14 lakh units. That was up 55% YOY. Even export segment continues to do well, and that also has increased by 39%. For Mahindra & Mahindra, M&M Auto segment, after several months, sales have come below our estimates, and there is a reason to it. So, auto segment sales were at 75,901 units versus our expectation of 79,167 units. Company is saying that ahead of GST cut, that is the expectation, it has reduced the inventory, and that's so the decision was taken to reduce the billing because that GST Council is going to approve the GST, and after that, company will look to increase the inventory again ahead of the festive season. But as far as the tractor segment is concerned, it has done much better against estimates. Total sales were up 28%. It has come at 28,117 units. For Tata Motors, contrary to Mahindra & Mahindra, Tata Motors, after several months, numbers have come better than estimates, and it was led by CV segment. Both bus and truck segments have done well, and total CV sales were up 10% YY. Also, electric vehicle segment has seen a growth of 44%, while total PV sales have seen a decline of 3%. Escorts Kubota sales were better than estimate. Total sales were up 27% YY and 7% higher than estimate. Both domestic and export segments have seen a double-digit growth. Ashok Leyland also sales were better than estimate. Total sales have come at 15,239 units versus our expectation of 14,967 units, and total sales were up 5% YY. So ahead of festive season and ahead of GST announcement, these companies have announced wholesales for the month of August, and one line, sales were much better than estimates.
Okay, all right, sir. It's been a busy day for you. The engines are firing all cylinders. Dipan, what's your view? Well, what would you like to hop on to? You're an ICE vehicle or an EV? And within that, will it be a two-wheeler or a four-wheeler? What do you like?
I think, Nigel, that two-wheeler companies should do well, and monsoons have been good. GST cut, lower interest rates, reduced cost of ownership, stable petrol prices, especially entry-level two-wheeler companies like Hero MotoCorp. I think we've been quite bearish on that company for a long time. But risk-return profile is very positive for Hero MotoCorp. It's amongst the cheaper of the two-wheeler companies. Again, it is focused on mass market, large rural presence as well. And it's been a laggard, it's been losing market share. So I'm pretty certain that you could have a good trading rally in Hero MotoCorp, and it may turn out to be an outperformer within the two-wheeler space. Of course, from long-term perspective, our favorite stock, Eicher Motors, but won't talk too much about it. And very impressed with Mahindra & Mahindra's numbers. I think it's going from strength to strength. And I think that as we have done, M&M could be part of a core holding of investors. Having said that, all of these companies, we and our clients have investment or interest.
Okay, all right. Deepa, I wanted to ask you about a few more names. IMFA, that's Indian Metal and Ferroalloys. I'm not sure whether you track that one, but clean balance sheet, they are backward integrated. And ferrochrome prices have moved to the highest that we've seen in the last 9 months. Now, that stock in the last 1 month, I think it's up close to 17-18%. In fact, that was a stock to watch that we had spoken about this morning, in our morning chat. Any view on this name?
No, Nigel, I'll give it a pass. But, it's a nice cyclical company, and I'm sure if the prospects are looking up, then there could be a good trading rally in it.
Indeed. What works for them is that they're backward integrated. Chrome ore prices globally have been moving up. They get their chromo from their own backyard. So they benefit when ferrochrome prices move up. Clean balance sheet and capacity moving up. I think that's what the street likes on that one. Any view on the refiners? Some of these refining companies, MRPL, CPCL, I don't know whether you can put Manali Petro on that as well. These companies saw a big correction from the recent peak. But particularly on the core refiners, you have the GRMs that are holding up. Any view on these names, or there's too many moving parts? What's going to happen with regard to import of Russian oil? Refining capacity itself is, sharply lower globally. So that's what could help GRMs. Your view?
I think if you want to play the energy companies, go for BPHP. If you have the faith that the market will re-rate their earnings. We don't have that confidence in the market to re-rate the earnings, the P multiple, the valuation multiples for BP, HP, IOC. But there are some investors who feel otherwise, and I'm sure it may work out as well. And these companies, I think PSUs are the flavor of the market, and these companies really have been laggards. A lot of other PSU companies, including PSU banks, have seen their P getting re-rated, but not the case with BP, HP, and IOC. So maybe that may also happen over there. And in a market like this, where so many stocks are so expensive, I think low PE stocks certainly will get the attention. So if you want to play this particular high GRMs or the petroleum sector, I would say the best plays are HP, BP, and IOC. But end of the day, I think these companies are good trading bets. I'm not sure you can hold them for 3 to 5 year kind of a perspective.
Okay.
Okay, Dipan, we'll leave the conversation here for now. Thank you very much for joining in. As we slip into a break, here is a quick reminder for all our viewers. Unlock a world of exclusivity, expertise, and influence. Become a member of CNBC TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with the journalists, along with curated studio tours, e-learning sessions, masterclasses, and curated lifestyle benefits.
Welcome back. Well, the markets are holding with good gains, 190 points up. I think the only problem is the Nifty Bank. You know, the Nifty Bank can get its act together, then these markets will feel that they can move towards the 20 DMA, because as of now, even if you look at it for today, the Nifty Bank is up only 0.5%, while the Nifty is up 0.8%. That said, let's hop across to Hormuz, because there's plenty of action in the broader markets. As always, he's turning the spotlight on all the top movers in the market. Hormuz, take it away.
There's some interesting names that have come in, whether it be on the non-index front as well from the broader markets, and Huhtamaki India is one such name. This is the biggest single day again that the stock has seen since March of this year, and this 6.5% move has come on more than 6 lakh shares changing hands compared to a 20-day average of just 55,000 shares. Now, at this price, the stock has gone above its 200-day moving average, which is at 224. And despite this move, the stock is still down 15% on a year-to-date basis. The stock that is flying away today is MobiKwik, and the stock has seen its biggest single-day gain since March of this year, the 7% move. It's significantly off the highs. At one point was up almost 14-15%, but 2.5 crore shares already changing hands compared to a 20-day average of 7.5 lakh shares. And despite this move, the stock is well below its IPO price of 278 and still almost 65 to 70% below its post-listing high, which is close to 700 rupees a share. Now, Optimus Infra is another name doing well today, and this 7% move is after snapping a 6-day losing streak. 14 lakh shares changing hands compared to a 20-day average of just 1.5 lakh. It's broken above its 100-day moving average today, and the next important level on the upside is the 200-day moving average, which is coming up to around 591. But despite this move, the stock is still down on a year-to-date basis, but the stock had doubled in 2024 with gains of around 124%. And lastly, JTL Industries, the stock, if you look at the volume chart, has seen a very sharp surge in volumes after 1 p.m. And if you take a look at the moves as well, the stock is gaining on high volumes, but is declining on low volumes. Now, before today's move, the stock had declined for 4 days in a row, and today's session has already had 51 lakh shares change hands compared to a 20-day average of 12 lakh shares, while during that 4-day losing streak, the average trading volume was just 16 lakh shares. The stock has now gone above its 50 and 100-day moving average, and the next important level on the upside is around 83 rupees, which is the 200-day moving average. Back to you guys.
Okay, all right. Thanks very much, Hormaz, for the updates there on all the buzzing stocks. Let's quickly welcome in our next guest. Aman Chauhan, fund manager at Abacus Asset Manager, is with us. Aman, good to have you on. And you come in at a good time because the market finally seems to be getting some sort of a breather, some sort of a relief, and we have green on the screen. But what have you made of the way things are? And Aman, any changes in the portfolio, any new ideas? Because in this period of consolidation, stock prices have been fairly stagnant. While all the news and the noise has been coming through. So just tell us, what's new and what have you been up to last few weeks?
Frankly, last few weeks, nothing much. The sectoral preferences remain the same for us. So while the banking sector has not done well, because we expect in the next 2 to 3 months, it might stay stagnant because of the impact of the rate cut, but then the benefits of that will start coming in. So over the next 12 months, the sector still looks good. Preference for NBFCs stays. The larger NBFCs is in the, you can say, in our portfolio. We are getting more incrementally positive on pharma, just waiting for the tariff clarities to come in. Otherwise, that is one sector that is now looking good. Chemicals is one that is on the, you can say, radar to increase our exposure. So that's predominantly what it is. Consumers has been the buzzword, especially once the GST numbers get announced, and of late what the government focus has been. But within that, not many names which fit in the valuation criteria. So still not in the portfolio, though it's looking good incrementally because the monsoons are happening also good, but not yet in the portfolio.
So there is no consumption stock, or if you have any consumption stocks, if you could just tell us, Aman. Hi.
Hi. I can't share names, but yeah, we have consumption names, consumer discretionary especially, but it's not a heavy exposure for us. This will be like low single-digit kind of exposure for us.
Okay. What about IT? There is a possibility, there is one view that once the Fed rate cuts start playing out, there is potential for IT re-rating. Anyway, IT has underperformed. Would you be in that camp, or do you think this overall downbeat earnings growth will keep a lid on IT stocks?
I think there's a trading pop that can happen once the rate cut happens or once the tariff clarity comes in. But beyond that, IT is going to be, especially the large movers, because the growth rate is still going to be single digit, and hence I expect the returns also to be single digit. So not much of a, you can say, excitement for us that way. We would prefer more of platform companies, more of companies which have a differentiated business model, or maybe something in the mid and the small cap space, than looking at the larger cap ITs, because the growth rate there, because of the high base, is pretty low.
Hi, Aman. Good to see you. And Aman, let's talk about the sector of the day, which is autos. How are you all approaching this theme? What do you like? You know, the two-wheelers, four-wheelers, CVs, what is on your radar? What about the EVs? You know, you have Ola Electric at 40 rupees, no one is interested. 50%, you know, it's given you in a very, very rapid time frame. Yeah. And now people are talking about higher levels. What do you like? I mean, particularly on the EVs, if you could comment first, and autos on the whole, how are you approaching it?
So EVs definitely is looking interesting, both two-wheelers as well as four-wheelers. So we have small exposure in the four-wheeler EV segment, nothing much on the two-wheeler. The companies that you mentioned are buzzing, especially there is some liquidity there. I think there was a large PE seller in Ola, and that selling is over, and now people are back looking at these names. And overall, today has been a new age company day. Most of the sectors of platform companies or the new age companies are buzzing today. And I think that has helped Ola also and other companies also. From the portfolio perspective, it's looking good, but we are not yet in the portfolio, except for that four-wheeler exposure that we have. But I'm sure we all know about this. These companies are going to gain market share. It's just a matter of timing and the valuation. So what price do you want to pay and how long is your investment horizon? Otherwise, these companies are the future and they should be part of the portfolio.
Four-wheeler player is the one that has exposure to Europe, or the domestic one that has tractor exposure?
Domestic.
The domestic one. Okay, all right. So Mahindra & Mahindra would be the name that we're looking at with regard to the four-wheeler play out here. But what about these new age themes? You know, Mobiwick as well. You know, that one no one was looking at today. Suddenly that one's up 8% move on that name. Paytm has come out of nowhere. Ola Electric. You know, some of these themes that actually on listing there was not too much excitement for the next few months as well. They bid a lot of time, but now suddenly, you know, these stocks are doing well. One thought Paytm did its move at around 900. It's more than 1200 rupees today.
Yeah, so in the near term could be technical factors, as I mentioned. Today's the day all these companies are, but overall I feel there could be a move that people are moving from traditional IT services exposure and getting into these companies, right, where the growth rate is high. Valuations are definitely higher, but at least the growth rate is much more exciting than your traditional IT services companies. So that could be one reason. And overall, there is sector rotation every month. Every month there is some flavor, there is some buzz in sector, and looks like these new age companies are in the limelight in the current month. Otherwise, specifically, I don't see any major reason as to why the price moves today specifically.
Okay. Aman, from the whole consumption space, which is where there's so much excitement, of course, we've discussed autos, but otherwise broader consumption, given that, the GST cuts are the next big watch point, is there anything that you would add to the portfolio on a more durable basis than just a bit of a short-term pop? I mean, do you see something structurally, materially changing? And if yes, in which part of consumption?
So see, demand definitely is picking up for all the initiatives the government has taken, plus monsoons have been good. So the rural demand is also picking up. So consumer discretionary, say household items, small home appliances, those items, fans, these are segments that is looking good. In the building material space, this has been a laggard for almost 2.5 years now. Well, real estate number of flats sold have been rising every quarter, but the ancillary, the tiles and the pipes and the plywoods and the MDFs and the laminates and all these companies, they're being struggling on the demand. So things can move up there. So if people are going to spend, they're also going to spend on renovating the homes, maybe spending more while buying a home. So this segment looks good. It has lagged for more than 2 years now, and it's seeing first signs of bottoming up. We are seeing volume picking up in the last few months, and this can give a good, meaningful 2-3 year investment horizon and a decent return.
What about these electronic manufacturing companies like Keynes, Dixon? Very excited today, Sirma. Up, we're seeing gains between 5-7%. They were massive wealth creators, but in the last 1 month, again, like the rest of the markets, we did see some gains being shaved off. Stock prices didn't do too much. Have they moderated to levels which make the valuations attractive enough to invest for the next 2 to 3 years?
Maybe next 1 year, there might not be a big return in these names, but post that, see if somebody has a 3-year view, then you can still make a 20-30% return from these stocks. Because in the very near term, maybe the demand, because of the AC season is now behind us. Now the next season is going to be next year, which is going to be good, hopefully, but another 2-3 quarters of lag before the number starts to come in. The same way could be for other segments. Hence, 1 year, maybe near term, not much of return from these levels, but with a 2 to 3 year, with good 30-40% return from these names is quite possible.
Okay, all right. Great, Aman. Good to see you in. Thanks a lot for joining and wishing you all the best. And maybe the second half of September, we reconnect. We get a better sense about how demand's going on ground, and we'll have some clarity with regard to GST as well. Well, let's focus on a couple of stocks. I just want to look at Zinka Logistics. The reason I'm looking at the stock is because suddenly there was a very wild move on the stock. I don't know whether we have it in our system, but it's a 11,000 crore market cap. Suddenly, had a big move on that stock. It moved close to around 7 to 8% in a matter of a few minutes out there. Went down, sub that 600 rupees odd, and then it's bounced back. So it appears there is a large trade or something to that effect that took place in those last few minutes. But I think we have Nimesh who's joining in. He's joining in from the Motilal Oswal conference. Nimesh, D Street Chatter, tell us what are you picking up and how's the conference? What's the mood like?
Well, the mood seems to be quite okay, Nigel. Again, I met a lot of investors, both domestic as well as some large FIs as well. And it seems to be, it looks like Indian markets have been kind of a, time correction going on. And looks like that may still continue for the next few months. So that's the overall sense that I picked up. But again, from a domestic fund manager's point of view, there is a lot of liquidity which is chasing equity markets. So that support seems to be there and is likely to continue. Coming to today's market, I guess, simply because we were so oversold, again, you and me keep highlighting that when a market comes to around 0.7 PCR, it tends to pull back. And that's exactly what happened in today's market as well. A good 200 points rally on the Nifty. The broader markets are also participating in today's market. A lot of individual stocks seems to be doing good today. And there seems to be a bit of momentum back. But I guess from a flow perspective, it's largely the autos which is widely chased by the domestic investors, is my sense. And you've seen that reaction into the auto names as well. Of course, the auto sector benefits from the potential GST rate cut. So that's something which is playing out as far as auto is concerned. Again, broader market seems to be doing well today. As I said, a lot of individual names are buzzing 5, 6, 7, 10 odd %. So some bit of momentum is back. I guess technically too, we need to watch out for some important levels on the upside. But clearly, given that we were so extremely oversold, a pullback was on the cards, and that's played out in today's market.
Okay, all right. What about individual names, stocks on the radar? Nimesh, what's the buzz?
Well, sir, the first stock on my list today is Granules. That's been buzzing in trade and actually surprising a lot of people on the upside in the last many days. The volumes have also picked up in the last few days. I understand one of the very large influential HNI investor has been buying and accumulating granules at current levels. So that explains a big move in granules and outperformance in the last many days. The second couple of stocks where there's going to be MOC buying because of the FTSE rebalancing. Two names stands out in that list, Sai Life as well as Clean Science. Both stocks saw massive block deals last week or maybe in the last 10 days. And after that, there's a FTSE adjustment. So last 30 minutes, you might see a bit reaction in both the names only because of FTSE buying. Both are going to see an inflow of close to $10 million because of that FTSE. So that's a couple of stocks because of that reason. Third, a couple of stocks where I'm expecting fundraising very soon. Amber Enterprises as well as in Asahi Glass. Both have been consolidating with a positive bias of late, but expect fundraising in both those names in the days and weeks to come. And the last one is Sagility. Again, that's been consolidating in a range between 40 to 45, 46 in the last few weeks. But again, in Sagility, I understand there could be a potential large block deal coming very soon. So that's the buzz as far as Sagility is concerned.
Thank you very much for that. And the other stock that Nimesh highlighted in the morning with his standout brokerage report with Morgan Stanley on Emphasis, that stock is surging. Morgan Stanley says that Emphasis is their preferred mid-cap pick. They've raised the target price on Emphasis. They've highlighted 5 catalysts which position the stock for a potential re-rating. But on the macro front, the rate cuts, the expected rate cuts by the Fed should also help. On that note, we will slip into a very short break. We'll come back with more on the market. Stay tuned. Welcome back. Let's get the latest trends now from the futures and options space. Nigel is at the F&O desk.
Well, the combination that has been working is the FIs are net short, the PCR goes to 0.7. That combination has worked yet again because the FIs are aggressively net short, 91% of the positions on the short side. And the PCR, when we started trade today, was at around 0.7. Now the PCR has moved to around 1.15, because of the kind of action that we've seen today. But that bounce was awaited, and that's precisely what we have got. But look at the options data today. And remember, this is a very, very short expiry because the NSE contract will expire tomorrow itself. And if you look at the put writing, it's aggressive. 24,500 put. Premium has crashed out there. It's down close to around 80%. 24,600 put as well. Just take a look at the open interest build up. Premium has crashed out there as well. I'll tell you what, the bears in Friday's trading session, they got very, very confident. They believe that this 24,500 mark can be held out. 24,500, 24,550. Now what you're seeing is you're seeing a reverse because the bulls are fighting back. And in an uptrending market, you'd like to see a good amount of put writing. That's precisely what's happened. Moving to the call side now. Out here, there's a mix of activity because those that bought these calls, they have made a good amount of money. Case in point being the 24,650 call. Take a look at the premium. It's moved from around 27 rupees to around 47 rupees. So those call buyers, well, they are very, very happy. However, those writers, they'll be hoping the 24,700 mark actually can hold out because 24,650 call, 24,700 call, both of them massive open interest built up is what we're seeing out there. Which brings us to the levels. This 24,700 mark is the level that the bears will want to defend. However, going by the options data and going by the recent low, the 24,350 mark, that's a line in the sand. You don't want that one to break. And then you're looking at the 200 EMA, which is around 250 points away from those levels. So for the time being, the bulls will believe that they're in the game because we've seen a bit of a technical bounce, but we'll have to cross the 24,700 mark to feel better because that's where the 20 DMA comes in at. Moving to stocks in focus, there are a couple of themes that are playing out. Now, these tech-related names, well, they have been seeing a lot of shorting. Today, the tech index has moved up and these smaller players, which became shorting candidates, KPIT Technologies, big short covering bounce. Shorts are running for cover on that one. Tata Technologies, another big underperformer, has corrected big time from the top. We're seeing a short covering bounce on both those two names, while there is fresh buying being seen on the EMS theme. Whether it's Dixon Technologies, whether it's Keynes, or even Amber Enterprises, all these stocks are up anything between 4 to around 6%, and the open interest build up on all these three names is quite large. So for today, the bulls will feel good looking at the screen, getting into the final few minutes with those sort of gains. I'll tell you what, some of those FIs as well will not be active, which has actually helped in favor of the bulls. Back to you.
Okay, all right, got that, Nigel. Thanks very much for the update. So indeed, short covering really helping some stocks bounce around in a big manner. We've got Ashish Kayal back with us. So let's quickly get some final ideas for trade. Ashish, it's indeed turning out to be a really good afternoon. Most of the gains are intact as well. Final call and any other additional stocks?
See, the additional stock can be Granules India. We talked about it on 26th August when the stock was around 460. It's up by 10% from there. But even now, there is still a lot of potential. I think the stock has another value addition of 10% from here on as well. And it has formed a very strong candle with good volumes. So one can create long positions in Granules India even at current levels, or on the dips with a stop loss of 500 and expecting a target of around 565 on the upside. And the next stock is going to be Apollo Tyres. We can clearly see the auto space is buzzing, and including the auto ancillary, the tire space. And there is a potential that Apollo Tyre can move towards the level of around 495 on the upside. One can maintain a stop loss of 454 on the downside.
Maruti, by the way, is not participating in the overall optimism surrounding auto. Maruti's share price is in the green, up about 0.5%, but the auto sales numbers for the month of August were slightly lower than street expectations. And once that was out, you saw the stock come off from the top. Ashish, thank you very much for that. Sudeep Bandopadhyay, Group Chairman, IndiTrade Capital, is now with us on the show. Sudeep, afternoon, and thank you for joining in. First, Reliance Industries. We got all the big bang announcements on FMCG, on Jio, the new AI subsidiary, Reliance Intelligence. But the stock is sulking a bit. It's not participating. I mean, what are your thoughts? Is this a good buy?
Good afternoon. Yes, first of all, it's definitely a good buy. I think these opportunities are great opportunities for accumulating Reliance. The stock is sulking predominantly because of a couple of reasons. One is because the market is assuming that this will be an IPO whereby Reliance Industries will become the holding company of the Jio platforms. the newly listed company, whereby there's a holding company discount which may creep in. I think that's one of the worry. I think the second niggling worry is also the chairman talked about global expansion of geo platforms. Now, the expansion when you get into the global markets takes some time to stabilize. We have seen that getting played out in case of Bharti. When they went into Africa, I think it took them 5-7 years to stabilize the business. Of course, now it's a very strong, solid, sound business, which is contributing to the consolidated Bharti numbers. I'm sure Reliance Jio platforms can also achieve similar or even better results. But at least for the foreseeable future, if there is a global expansion, there may be some pain. I think market is also a bit worried about that. The third thing is probably there were no new major announcement as far as the new energy business is concerned. Of course, they talked about kind of meeting 10% of India's energy needs in 10 years and things like that, which was very, very encouraging and positive. But I think the market was expecting a bit more from the energy business, which didn't come. So there were some amount of disappointments, and that's probably taking its toll. Of course, we have to also remember the fact that today, FIIs are not present because of Labor Day holiday in US. So a little bit of lack of support from the larger counters is also visible.
The cat is away, right, Sudeep?
Yeah.
we won't get to the second part of that because all right, Sudeep, what about some of these pharma related names? How will you approach them? Today there are a couple of names like Sun Pharma. That's one of the notable losers from the word go itself. It's still sitting with a cut of around 2%. How do you approach the sector? What do you like out there?
I think I'm a little cautious, Nigel, on pharma for quite some time. I think there are too many moving parts. While I strongly believe that US will not do anything funny to affect the exports into US markets of Indian generic drugs, but you can never put things past the current incumbent at White House. So there are a lot of uncertainties there. The second thing is the competition in US market is genuine, and the pricing pressure is definitely there. The third thing is there are a lot of other challenges some of these large pharma companies are facing, which are company specific. So I've been and I will continue to remain cautious. If I have to look at pharma, I will look at domestic focused pharma companies, and Mankind has been my favorite for quite some time, and I maintain my view there. Overall healthcare space, we are very bullish on the hospital business. I think that's one segment which is booming and will continue to boom for the foreseeable futures.
Okay, all right, got that. Those are important updates coming in. It seems the IT minister has met representatives from the gaming industry today. Remember, there is a litigation already that has started in courts challenging the latest law that banned all forms of real money gaming, online or offline. More updates coming in on the screen out there. But for the time being, let's move on. Zydus Wellness has done rather well today. They were quite a small company in the UK, and the market's receiving it fairly well. Manglam's here with the details. Manglam.
Well, Zydus Wellness is one of the top gainers today, and that's largely on account of an acquisition that the company has made. And more importantly, it's an acquisition that ticks all boxes. Why do I say that? Because, one, it's called Comfort Clicks. It is the first overseas acquisition that the company has made, and it's a sizable one, nearly 240 million pounds, which amounts to about 2,400 crore rupees. And it's in the business of vitamins, minerals, and the supplements segment. Remember, this market itself in the UK and Europe is close to around 11 billion pounds, and the 5-year revenue CAGR of this company has been 57%. So to put things into perspective, the last year this business did about 1,340 crores of revenues, which is a 50% addition to Zydus Wellness's own revenues, and that has happened at better margins as well, because the adjusted operating profit of close to 21 million pounds amounts to about 15.6% as margins, and this compares with Zydus's own margins at 14%. So you have a sizable chunk, good growth and margin accretion coming in. The question is at what price? It's coming at 2 times sales and 10 times EBITDA, which is fair because the company's own valuations right now are nearly 4 times sales, and they've themselves said that this will be cash EPS accretive from year one itself. The biggest trigger is Comfort Click operates in geographies which are complementary to Zydus. So obviously there are revenue scale synergies for either of them. And the second part is that a large part of their revenues come in from online and D2C channels. So this opens another channel up for them as well. So all things clicked and the stock doing extremely well.
Okay, all right, Mangalam, thank you very much for that. We'll take a quick break on that note. Actually, before we take a break, just one more stock that deserves mention today would be Kaynes Technologies. And Kaynes has been up almost 6-7% throughout, building on those gains throughout the course of the day. Now, in the morning, we were in conversation with the company's management, and they gave us some interesting updates about, of course, their OSAT potential. They say that they're on track to start their semiconductor shipments from the fourth quarter of the current financial year. And they're saying that they see significant revenue accretion as well. In fact, they say by FY 27-28, the revenue from the semiconductor business could be significantly higher than the estimates of 1,500 crores that they had put out earlier. So higher revenue, and they also expect substantially higher profits going into the next 5 years. And that commentary seems to have really worked well for Kaynes. Stocks holding up almost 8%. In fact, hear out what the management had to say on some of those guidance parameters, which have been looking extremely robust.
FY 30, we said about $2 billion is the kind of number, and maybe about two-digit PAT at 11%. So 11% of 18,000 crores is what we think we'll hit at the minimum. Of course, we think that it might be north of that too.
Okay, all right, that's Mr. Jairam Sampath. Sudeep, what do you think? I mean, big move on the stock today. And if you heard that commentary, does it inspire you enough to look at a buy?
Well, if I have to look at this stock, I'll have to plan long term. I think valuation isn't cheap, but I think the prospect does definitely look good over a period of 3 to 5 years time. So if I'm looking at building a portfolio for 3 to 5 years, I think Kaynes as well as Dixon can be looked at. But if you have a shorter time horizon, I think I'll be a little careful. Fundamentally, there is nothing wrong. Opportunity is huge, and they are seizing the opportunities. With what's happening in India, with the government actively encouraging consumption through multiple measures, I think they will have a good time. But as I said, valuation isn't cheap. So yes, I will be looking at long term if I'm investing in these.
All right, Sudeep, but it was, when we asked the management for that comment on net profit, last year they did around 300 crores. By FY 30, they are talking about 1,800 to 2,000 crores. So currently the market capitalization is around 42,000 crores approximately. So it looks like it's trading at 100 times. But if they can achieve that 2,000 crores, then it's trading at more palatable level, of around 20 times or thereabouts. So we'll have to see whether or not they can get there. I'll tell you what, Sudeep, you stay with us for the time being. We'll slip into a short break. But as we do that, remember to tune into our all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and the Global Lens at 8:30 p.m.
Well, it's now a 2% gain on the mid-cap index, and so many stocks are, moving around with considerable strength. Delta Water, that's up close to about 13%. The market cap is just about 1,200 crore rupees, but that's got a big move. And look at the volumes, 28 lakh shares already traded. The stock has surged about 13.5%. This month it's up 41%. Zydus Wellness, we've been talking about it, and the acquisition. SPML Infrastructure, Gujarat Gas has spiked up. Prince Pipes has made a move. Lumax Autotech, Idea Forge, Manali Petro, Subros, Gabriel India. So we spoke about the frontline auto names, OEMs, but so many, so many of these ancillary names like Gabriel, etc., are also surging in trade. So it's a vibrant looking screen, and the Nifty 2 is now comfortably above 24,600. Sudeep, why don't you tell us? It's such an active mid-cap screen. Any stock that you particularly like?
Well, a whole lot of mid-cap stocks we do like. You talked about some of the auto ancillaries. We do like auto ancillary quite a bit, particularly the ones like Uno Minda. One can look at that, definitely even at current levels. Some of the cement names at current levels do look good. And definitely cement is one sector which we have been positive for quite some time now. And we believe, with the possible GST cut, which is round the corner, this will become even more attractive. All the cement companies are facing positive demand scenario, and pricing power has come back. Cost efficiencies have significantly increased. So while the Ultratechs of the world are definitely attractive, one can look at smaller players like Birla Corp. One can look at some of the other southern-based players as well. But if I have to pick one, probably I'll go and pick up Birla Corp.
Okay, all right. So the one industry that's actually continuing to move from strength to strength is the steel businesses, right? Because you see, sometimes some slowdown in various sectors, whether it's cement, autos, etc. But for steel, now we know there is a minimum duty, so there is protection. China continues, to reduce production, and that's heartening to see. The hope is that they gradually start picking up demand and consume more of what they are producing. That's what will help the global ferrous industry. But how do you look at these sectors, when you have global uncertainty, and yet these stocks are not too far away from their 52-week highs? What do you like?
I think, Nigel, you just started by saying that we have created a very congenial atmosphere for these companies as far as domestic markets are concerned, with safeguard duty and whatnot. Of course, domestic demand is also strong with kind of infrastructure spending, which is happening all around us. So cement, as well as steel, I think these two sectors are in for good time. And, we already talked about cement. Steel is definitely doing good. And I think, if I have to pick up one, probably I'll still go and pick up Tata Steel. Considering the efficiencies and the kind of valuation comfort we have at Tata Steel. If I have to go and buy more, I will go and buy JSW as well. I think there is absolutely no problem. Overall, metals, we have been positive for some time, and we believe that metals industry will do well for the foreseeable future. Of course, there will be volatility based on global news flows and global movements. But fundamentally, if you're looking at 1 year kind of time horizon, I think both steel and metals do look good.
Thank you, Sudeep, for joining in. Just wrapping up today's trading session. And it's been a strong start to the month of September and this week. The Nifty ending with a gain of 200 points at above 24,600. The Sensex higher by 560 points, 80,370 on the ticker for the Sensex, buoyed by the strong GDP data, what's happening on the geopolitical front with Modi's visit in China and meeting Vladimir Putin, plus expectations from the GST upcoming summit later this week. And even the auto sales numbers were fairly upbeat, which is why the auto index was the top star, with names like M&M, Bajaj Auto, Eicher Motors, Tata Motors, Hero MotoCorp gaining about 3 to 4%
Well, that's right. From the broader markets, but there were a lot of stocks were doing a jig of their own, actually. So let's pull up a few of them. Mobiwic, that was up close to around 8%. Good move out there. ABFRL, that was up close to around 8%. GMDC was up 6.5%. Swiggy was swigging it away. That was up close to around 4.5%. Ola Electric as well as Zeta, I think you mentioned those two, they as well did pretty well. On the flip side, a few stocks that didn't do too well. Z Enterprises was down in trade. Jindal Worldwide was down on very, very large volumes. Cafe Coffee Day as well was down closer to around 5%. But all in all, it was a good trading session for the bulls. The bulls have been, seeing a lot of pain in terms of the broader markets as well as the Nifty. Well, today, what stood out was the Nifty made a higher high after 5 trading sessions. The breadth of the market was very, very good. Though if one had to keep a quibble about today, it would be that the Nifty Bank continues to relatively underperform. We'll wrap up with this edition of Closing Bell. You don't go anywhere. The team of Markets Forward is waiting for you on the other side.
The markets start the week on a positive note with broader markets witnessing big gains. The Nifty reclaims the 24,600 mark. The mid-caps outperform as the index gains 2%. Auto and consumer durables are among the top gainers, while media, pharma are the indices that skid in otherwise outperforming market.
Auto industry leaders backed for one GST rate for each product category against the proposed graded structure based on engine capacity and size. Eicher Motors Chairman Siddharth Dalal says 2 rates will be detrimental to Make in India. Nifty Auto gains after reporting August sales data.
Torrent Power, CG Power and Suzlon perk up in trade on the back of positive brokerage commentary. Morgan Stanley initiates coverage with an overweight rating on Torrent Power and a buy rating on CG Power. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading session. I am Hormus Fatakia. With me is Vamakshi Thoria. Vamakshi, good evening. It was a very good start to the trading day. to the trading week and to the trading month as well. The Nifty, after the pain that was witnessed last week, has now given up and has now recovered some of those losses that were made and back above the mark of 24,600.
Well, absolutely, Hormaz. Over the weekend we were speaking about the dragon and the elephant, but it's the bulls that actually marched on today. So good going for the bulls, at least good start to the week, the month. The index did extremely well today, and this was being, and the index was actually being pushed higher by some of these auto names. Take a look at some of the top gainers on the Nifty. It includes it includes stocks like Bajaj Auto, which was up almost 4%, M&M, Tata Motors, Hero MotoCorp. So definitely on the back of the auto sales numbers, and Sudarshan was highlighting earlier, during the day that the sales data that came in from all of these auto companies was extremely healthy. So all of these counters did extremely well in today's trading session. The other pack that did really well was the IT. The IT index was up almost 2% or so, if I'm not wrong. And Emphasis was leading the gains on the IT index, up almost 4.8%. Coforge was another counter that gained upwards of almost 2%. Persistent, OFSS, all of these counters were flying high in trade today. But what did not do well is the pharma pack. Of course, we did have Sun Pharma decline in trade today. It was down almost 2%. And the FMCG pack as well did not do as well. ITC and HUL, both of these counters were down and out in trade today. But, let's get started then, and let's kick off the day's market action. And let's actually take you through a lineup of what we have in store for you today. Let's start with the top stock movers and shakers of the day. Nifty Auto surged in trade on the back of strong August auto sales numbers. Meanwhile, Zydus Wellness also saw an uptick after it acquired a UK-based company. Additionally, power stocks gained momentum on account of the ratings upgrade. Last but not the least, we delve into the key market events to watch out for tomorrow's trading session. But on to our first segment of the day then, we do have Hormaz taking us through some of the stocks that were moving around in trade today. Hormaz.
You mentioned the auto names. Actually, they were the highlight of today's trading session from the sales numbers that were reported through the day. Some reported during market close as well. And Bajaj Auto among the top gainers on the Nifty today, the first among those to report numbers. Almost all of them, be it Bajaj, M&M, Eicher, gaining anywhere between 2 to 4% in today's session. So in top gear were these auto names. What was also in top gear were a lot of these capital market names after a lot of pain that was witnessed last week. And look at MCX, JM Financial, Motilal Oswal, CDSL, BSE, all of them. BSE was hammered last week, gained 4% in today's session, recovering some of those losses, and gains anywhere between 5.5% for MCX as well. A lot of these EMS companies did well. Buying interest was witnessed in Keynes Technologies, Dixon as well, with a healthy up move today of 5.5%. PG Electroplast after the MOU with the Maharashtra government was up 4%. So all of these EMS companies did well in today's session as well. Among the newsmakers, well, Ola Electric continues to move higher now above its 200-day moving average, 15% higher in today's session. Zydus Wellness, of course, after the acquisition that it made. RPP Infra, 20% upper circuit after that order win from BHEL. And of course, positive brokerage note coming in on Emphasis and Premier Energy after the order win despite the shareholder lock-in period ending today, 4.5% higher on that stock as well. And lastly, some stocks that ended at a 52-week high today. Anand Rathi Wealth at a record high among the capital market names as well. Rishabh Instruments doing well. Gabriel India, 52-week high. And Lumax Autotech, a 6.5% up move too, taking the stock to a 52-week high, Vamakshi.
Well, thank you so much for that comprehensive list, Hormaz. But it's a good time to go to our guests, Sudeep Bandyopadhyay, who's the Group Chairman at IndiTrade Capital, and Jay Thakkar from ICICI Securities join us. Good afternoon to you, gentlemen. This is Vamakshi joining in. And Jay, let me first come to you, actually. After 3 consecutive days of ending the session in the red, we're finally seeing some green on the screen. Will this sustain going forward?
Well, see, Vamakshi, I would say that this is a technical bounce back is what we are sensing right now, and the markets were quite oversold. In fact, at all the technical indicators, it was quite oversold, and from the derivatives data as well, if you see the index net long position of the FI is at 8.59% as of last trading session. The India VIX has cooled off now. I mean, has been trading within that range of say 10 to 12, has not spiked up quite sharply, despite it is trading near the lower end of the range. providing some comfort that for a bounce back. And also this week, the expiry for the weekly has changed for the Nifty from Thursday to Tuesday, and tomorrow we have this weekly expiry, of which we are seeing some short covering happening as well. The rollover numbers were too weak, I would say, Mamakshi, and there was excess of shorts. I mean, for Nifty and Bank Nifty, the short rollover was almost 83 to 81% respectively, and most of the sectors and stocks had seen short rollover. So there was already clear signs of excessive shorts in the market, good short rollover, which clearly indicates that overall trend in the medium term is down. But in the short term, since things were quite oversold, we are seeing this technical bounce back. I mean, for this trend to reverse from down to up, Nifty has to close beyond the levels of 25,000 in September series, beyond which we can think that yes, the trend seems to have changed. Else, it can fizzle out somewhere between the range of say 24,800 to 25,000. So this bounce can get over between 24,800 to 25,000, and the next leg down can start. As those stocks are bouncing back, which had actually fallen quite a lot, may it be capital goods, may it be capital markets, may it be defense names, all of that. Banking and financial is one of the highest hit sector, which is yet to confirm any reversal, and we did not see much of reversal today as well. So on the upside, till 56,000 levels aren't taken off, I think any bounce in Bank Nifty as well, which can bounce till 54,500, 55,000, should be taken as a dead cat bounce.
Some important levels highlighted by Jay. Still 2,000 points away on the Nifty Bank, still almost 350 points on the Nifty for any confirmation of a reversal. But on to some of the top movers of the day then. Zydus Wellness was up over, it had a good day today, and its acquisition announcement that came in foraying into the markets of UK and the European Union. The stock ending almost 10% higher after the announcement to acquire Comfort Clicks for £239 million. Mangalam is here with more details on this. Mangalam.
Well, Zydus Wellness is one of the top gainers today, and that's largely on account of an acquisition that the company has made. And more importantly, it's an acquisition that ticks all boxes. Why do I say that? Because, one, it's called Comfort Clicks. It is the first overseas acquisition that the company has made, and it's a sizable one, nearly £240 million, which amounts to about 2,400 crore rupees. And it's in the business of vitamins, minerals, and the supplements segment. Remember, this market itself in the UK and Europe is close to around £11 billion. And the 5-year revenue CAGR of this company has been 57%. So to put things into perspective, the last year, this business did about 1,340 crores of revenues, which is a 50% addition to Zydus Wellness's own revenues. And that has happened at better margins as well, because the adjusted operating profit of close to 21 million pounds amounts to about 15.6% as margins, and this compares with Zydus's own margins at 14%. So you have a sizable chunk, good growth and margin accretion coming in. The question is at what price? It's coming at 2 times sales and 10 times EBITDA, which is fair because the company's own valuations right now are nearly 4 times sales, and they've themselves said that this will be cash EPS accretive from year 1 itself. The biggest trigger is Comfort Click operates in geographies which are complementary to Zydus, so obviously there are revenue scale synergies for either of them. And the second part is that a large part of their revenues come in from online and D2C channels, so this opens another channel up for them as well. So all things clicked, and the stock doing extremely well.
Well, thank you so much, Mangalam, for getting us a lowdown of the acquisition that was done by Zydus Wellness. But Sudeep, coming to you, as Mangalam was pointing out, better margins in this particular acquisition of Comfort Click. It's also done at a reasonable valuation. So, what do you make of it? Do you have the stock under your coverage?
We don't cover this, but I think the acquisition does definitely look good. I mean, a couple of things I'll point out. One is, it's completely complementary. There's no overlap as far as geographies are concerned, and that's a very good thing to begin with. Number 2 is the valuation. I think, the 2 times sale, I think, is definitely, and 10 times EBITDA is a definitely good valuation for acquiring any business. So that's good. Third is, of course, the company Comfort Click is margin is higher than existing Zydus margin. So I think overall we do like this acquisition, and we will definitely review the company after this acquisition.
Interesting. The other big move today came in from the auto names, as we spoke about earlier in the day. After the auto sales numbers that have trickled in all through the day, almost all auto companies did well in today's session, be it Bajaj, be it Eicher, or be it Mahindra and Mahindra for that matter. Sudarshan is here with a lowdown of how the numbers fared through the day. Sudarshan.
It was a festive cheer ahead of the festive season for auto segment. Nifty Auto Index we saw rising up to 3%, and all the top 5 Nifty gainers were from the auto pack, from Bajaj Auto, Hero Moto, Eicher, Tata Motors. All the stocks were higher, somewhere in the range of 3 to 5%. That was on the back of strong monthly sales that these companies have reported. So we'll start with Bajaj Auto. Company has reported sales that were largely in line with estimates. Total sales have increased 5% YOY. Domestic sales have slipped, but those numbers were also largely in line with estimates, and exports and three-wheeler segment continue to do well. Next up is TVS Motor. All the segments except EV have seen a double-digit growth. It was a strong beat against our estimates. Now, Eicher Motors. So company's thesis of growth over margin continues to play out. In the month of August, total sales have increased by 55%, and here also export continues to do well. In the four-wheeler segment, passenger vehicle segment was the underperformer, with both Maruti and Mahindra reporting sales that were slightly below our estimates, and Mahindra said that purposely they have reduced the inventory ahead of GST decision, and that impacted SUV sales. In the CV segment, Tata Motors and Ashok Leyland. After several quarters, Tata Motors has reported numbers that were much better than estimates, with both bus and truck segment continue to do well. For Ashok Leyland, sales were largely led by M&S CV segment, and total sales were up somewhere in the range of 3 to 5%. Now, apart from that, electric vehicle segment, Ola Electric and Ather Energy, both these companies have reported sales and improved sales month on month, and Ola Electric has retained number two spot amongst electric two-wheelers, and for Ather, August 2025 was the highest ever that company has reported registration. So overall, it was a good month for the auto companies, and sales were largely better than estimates.
Well, thank you so much for that, Sudarshan. Auto stocks clearly cruising ahead in trade today. Of course, we did have very healthy sales numbers that came in from all of these auto stocks, and we do have the upcoming GST rate rationalization, which could probably push the demand for all of these stocks higher. But Jai, do you have a technical view on any of these auto names, any of the auto stocks that you like from a technical perspective?
No, actually, I think from the risk point of view, now I like Bajaj Auto. I mean, this is one stock which seems to have not participated like the other two-wheelers name, but has recently catch up the rally. And today, I mean, in the morning as well, on your channel, I have recommended this stock, for a target of say 9100 and 9300. And I think still it looks quite likely, still trading around the levels of 9000. I think 9300 looks quite likely in the very near term. And Hero MotoCorp as well. I mean, but then overall Bajaj Auto relatively looks better from the risk reward point of view. Second stock, Amakshi, I would say is Mahindra and Mahindra. I mean, this stock has been a great performer, I would say, in the entire auto pack. It's been one of the outperformer. Recently, we have seen some correction wherein the stock fell until the levels of 3200. However, I think that 3100 for this stock is a trend, is a trend reversal level. So until 3100 levels are held, there is quite a chance that it again inches back to the levels of say 3500 going forward. So among the four-wheelers, I would recommend Mahindra and Mahindra. We have seen long build-up here. We have seen long rollovers as well. And Bajaj Auto from the point of view of short covering.
Sudeep, what about you in the auto space? PVs, CVs, tractors, two-wheelers, where is your inclination towards?
Well, just tactically at this stage, we do like two-wheelers. I think GST rationalization is just a matter of time. Festive season is around the corner. Rural income has improved definitely. We are seeing very clearly green shoots as far as consumption is concerned. Under the circumstances, I think Hero MotoCorp has been for some time and continue to remain our top bet in this two-wheeler segment. And we believe that after that one can look at Bajaj as well. Its performance, domestic performance hasn't been that good, but export markets, as far as Bajaj is concerned, is booming. So both Hero MotoCorp for a different reason and Bajaj for a different reason can be looked at current levels.
Okay, all right. And let's also actually speak about some of the power stocks. Torrent Power, CG Power, as well as Suzlon Energy were up in trade on the back of positive brokerage commentary. And let me take you through that. Take a look at the note that came in from Morgan Stanley on Torrent Power. They have an overweight call, target price of 1,444. They say that, the company has won an LOA for a 1,600 megawatt thermal power plant in MP. And they believe that the plant can in turn generate around 15 to 17% IRRs, assuming a 70 to 30 debt equity ratio. They believe the capacity charge could range between 4.1 to 4.3 rupees per unit, and they have also highlighted that the balance sheet has sufficient headroom for growth. Now, CG Power was the next stock in focus today. Morgan Stanley has initiated coverage with a buy call on this counter, target price of 799 rupees per share. What they say is that this is among India's most diversified capital good players. Keep in mind that the company has a very strong presence in manufacturing of motor franchises, is also a beneficiary of very strong growth that we're seeing in the power space, such as transformers as well as switch gears. And the company additionally, in addition to all of these segments, is actually building up capacity in semiconductors as well as railways. Now, they've gone ahead and given their estimates for each segment. For industrials, they're expecting a revenue CAGR of almost 14% and EBIT CAGR of 15% from FY25 to 28. Power systems is also, revenue of almost 35%, EBIT of almost 42%, and semiconductors, they believe, could see a peak asset turn of 1.9 times by FY31. And lastly, take a look at Suzlon as well. There's a note that came in from Motilal Oswal. They have a buy rating on this counter, target price of 80. They met the management and they said that the company is now transitioning from a turnaround story to a growth story. The CEO has reaffirmed his long-term commitment to the company. The recent order could be the beginning of a full-scale indigenization, is what they've said, and localization by foreign OEMs has its own unique set of challenges. Further clarity, however, is awaited on critical aspects of localization order. And as far as solar, BESS as well as wind is concerned, all are indispensable to energy's secure future, is what Motilal Oswal has highlighted. So a thumbs up coming in, Hormas, for all of these three counters, and resultantly, all three stocks were up in trade today.
Now, what's also common among the three of them is all three of them are down 20 to 40% from their peaks. So it's still a long way to go for these names. Jay, on the charts for all of these names, if anything that comes to your radar, with Suzlon and for Torrent Power, both of them are down at least 35% from the top. CG Power is down 20% from the top. Do you still see this as a buying opportunity, or would you have better bets to choose within this power space or go with the power financiers like the RECs and the PFCs?
Well, the entire sector, maybe power finance, had seen a good short build-up, and that is what we saw in the last series. In fact, at the end is where we saw a breakdown coming in REC and PFC from the sideways consolidation, and a lot of shorts build up there. And as a disclaimer, I would say that we had recommended shorts on both of those counters to our clients as well. On the long side, we believe that CG Power is the only one, and that's the reason it's outperforming overall. As you said, that is down 20% as compared to the other two stocks. So CG Power is relatively outperforming, and I think it still has a good upside pending in the short term. It can bounce till 750, 760 levels on the downside. I think that 700 is a good critical support levels. Until and unless it maintains those levels, it's likely to inch higher. It has technically provided a breakout from a sideways consolidation, as well as we've seen a long build-up here. Hormas, as far as Suzlon is concerned, I mean, recently entered into the F&O space, and the kind of fall which we have seen is mainly because of the short build-up. So whatever bounce we're seeing is out of short covering. So it would be difficult to say from the derivatives data that how much can it bounce back, but the clear-cut breakout is out there on CG Power, and as a disclaimer, we have recommended that to our clients as well.
All right, so you're looking bullish on CG Power. Thank you so much, Jay, as well as Sudeep, for joining in with us. But with that, it's time for a short break now. We'll get you the top corporate voices along with the key market events to watch out for on the other side, so don't go anywhere.
You're still with us here on Markets Forward, going across to some key corporate voices then. First up being Radico Khaitan. The company has seen the first quarter momentum continue into this quarter as well. Now they are expecting volumes to grow further by 20% in FY26 and anticipating to cross 500 crore rupees in luxury and their semi-luxury portfolio this year. Now they are also expecting margins to improve by 125 to 150 bips this year. Further, they're guiding for mid to high teens margins by FY28 and anticipating that they will be debt-free by the middle of next year.
Well, next up is Keynes Tech. It aims to start the commercial shipment of chips from Q4 as semicon exports will go to non-US landing ports. Further, the company doesn't expect Trump's tariffs to disrupt their exports. They also believe a good supply relation with China will be beneficial. And that's not all. The management expects significant revenue in FY26. It anticipates over 1,500 crore rupees of revenue from the semiconductor business by FY28. And before we wrap, we bring you some key market events to watch out for. My colleague Upasna is standing by with the key events to focus on for tomorrow. Upasna?
First up, let us look at the global economic cues. Coming to US first, S&P Global Manufacturing PMI data will be out tomorrow. Coming to Europe, CPI data for the month of August will also be out tomorrow. So we'll be closely keeping a track of both these counters. Now let us look at the key stocks to watch out for tomorrow on the back of corporate action. JSW Cement will be reporting its Q1 FY26 numbers tomorrow. So we'll be closely watching out for that as well. Now, stocks like Gujarat Narmada Valley Fertilizer and Chemicals, Ajmera Realty, Deepak Fertilizers and Petrochemicals and Eon Exchange, all these stocks will go ex-dividend tomorrow onwards. Now, moving forward, PM Modi to inaugurate 4th edition of Semicon India 2025 in New Delhi tomorrow, which starts tomorrow onwards. Motilal Oswal 21st Annual Global Investor Conference is also going on from 1st September to 5th of September. So a lot of updates there as well. Goyal Construction Company to launch nearly 100 crore IPO, which starts its subscription tomorrow onwards. And lastly, mind you, new US visa interview waiver rules will also be effective tomorrow onwards. So all in all, looks like quite an eventful day tomorrow.
Indeed, Upasna, thank you for that. With that, we call time on this edition of Markets Forward. From Amakshi and me, thank you for watching. News and updates continue on the other side. Stay tuned.
and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: Prime Minister Modi wraps up the SCO summit after resetting economic ties with China and affirming a long-term partnership with Russia. In their first meeting since the US tariffs, Prime Minister Modi, Russian President Putin discussed expediting an end to the Ukraine conflict and finding a durable peace settlement. Partners, not rivals. India and China reset bilateral ties and announced economic re-engagement after a summit between Prime Minister Modi and President Xi Jinping. Direct flights and border trade set to resume. The joint declaration at the SCO summit condemns the Pahalgam attack and calls for the perpetrators, organisers and sponsors to be brought to justice. Stops short of naming Pakistan. Prime Minister Modi calls the Pahalgam attack an assault on India's soil, with Pakistan's Prime Minister Shehbaz Sharif present in the same room. The Sensex and the Nifty start the week on a positive note. The Nifty reclaims 24,600. Mid-cap index gains 2%. The rupee hits a record low against the dollar but recovers in late trade, ending flat. Gold and silver prices in India rally to record highs. Hopes of a rate cut in the US and inflation data fuel a global surge in prices. 48 hours to go for the GST Council to meet on revisiting the tax slabs. Consumer-facing businesses hope for tax cuts to boost sales this festive season, as small cars, two-wheelers, white goods, garments and apparel likely to get cheaper. The auto industry bats for a uniform GST rate across the sector. Royal Enfield maker Eicher Motors says a differential tax structure could damage India's rapidly expanding mid-capacity motorcycle market. The garments and apparel sector also clamours for a uniform GST rate. The rules of the Online Gaming Act, which bans real money games, is yet to be notified. The government asked banks and fintech companies to facilitate the refund of deposits to users. Companies had flagged challenges in issuing refunds due to banking restrictions. The Supreme Court dismisses a petition challenging the government's decision to blend petrol with 20% ethanol. Government argues forces beyond the country cannot decide what class of petrol needs to be used. More than 800 people are killed and thousands injured after an earthquake jolts Afghanistan. Widespread damage in the city of Jalalabad and several villages completely destroyed, according to the Ministry of Public Health. The Maratha reservation protests in Mumbai enter the fourth day. An estimated 40,000 people have gathered in South Mumbai, bringing traffic to a halt. Reports suggest some protesters harassed women, including journalists and commuters, in trains. The Bombay High Court says the protesters must be removed from all places except Azad Maidan. Well, the top story this evening: Prime Minister Modi wrapping up the SCO summit in Tianjin after resetting economic ties with China and affirming a long-term partnership with India. The shift in ties, which had reached a historic low past the Galwan Valley clashes in 2020, comes amidst India's tariff standoff with the US government. Prime Minister Modi, Russian President Putin and China's Xi Jinping were seen exchanging gestures as they came together under the same roof for the first time since US President Donald Trump escalated his tariff offensive. The SCO members signed a joint declaration that condemned the terrorist attack in Pahalgam in April and called for the perpetrators, organisers and sponsors to be brought to justice. However, the declaration stopped short of naming Pakistan. Remember, Pakistan is also a member of the SCO, and all member states need to vet the text of the joint declaration before it is adopted. Addressing the summit, Prime Minister Modi called the Pahalgam attack an assault on India's soul, with Pakistan's Prime Minister Shehbaz Sharif present in the room. He asserted that the SCO must clearly and unanimously reject double standards on terrorism. The Prime Minister and PM Sharif were seen in the same frame at the traditional SCO family photo. However, there were at least 8 leaders between them. The Prime Minister also held a bilateral with Russian President Putin. We learned from sources that the formal meeting went on for about 50 minutes, where both sides discussed expediting the end to the Ukraine conflict and finding a durable peace settlement. The Prime Minister said India and Russia have always stood shoulder to shoulder. President Putin said that both India and Russia are closely coordinating efforts at an international level. In a rare occurrence, both leaders were seen travelling together in a car for their bilateral discussions. The Prime Minister and President Xi, meanwhile, discussed ways to balance bilateral trade. They noted that they're partners and not rivals. The two countries will resume direct flights and border trade.
मैं हमेशा अनुभव करता हूं कि आपको मिलना मतलब एक यादगार मीटिंग भी होती है, बहुत सी चीजों की जानकारियों का आदान प्रदान करने का अवसर मिलता है। हम लगातार संपर्क में रहे हैं। दोनों पक्षों के बीच नियमित रूप से कई उच्च स्तरीय बैठकें भी हुई है। इस वर्ष दिसंबर में हमारी 23वीं समिट के लिए 140 करोड़ भारतीय उत्सुकता पूर्वक आपका इंतजार कर रहे हैं। एक्सेलेंसी हमारी स्पेशल एंड प्रिविलेज स्ट्रेटेजिक पार्टनरशिप की गहराई और व्यापकता का परिचायक है। कठिन से कठिन परिस्थितियों में भी भारत और रूस हमेशा कंधे से कंधा मिलाकर चले हैं।
Усилия по созданию в Евразии архитектуры равной и неделимой безопасности.
यूरेशिया में समान और अविभाज्य सिक्योरिटी ढांचे को बनाने के लिए प्रयासों के लिए एक मंच प्रदान करता है।
Well, Prime Minister Modi there in his bilateral meeting with Vladimir Putin. Joining us now to take us through the key takeaways from the SCO summit is our colleague Parikshit Luthra. Parikshit, it's been an action-packed 2 days. The Prime Minister meeting with President Xi Jinping, also with President Putin. Take us through the big takeaways. What's the headline coming in from the SCO summit?
Well, Prime Minister Modi and President Putin spent almost 2 hours with each other on the sidelines of the SCO summit in Tianjin. The warmth in ties was visible, with Russian President Putin waiting for about 10 minutes for Narendra Modi to join him in his presidential limousine so that the two leaders could travel together to the bilateral meeting venue. The formal meeting itself was a good 55 minutes long. The leaders discussed bilateral cooperation, including the economic, financial and energy sectors. They spent a considerable time discussing the Russia-Ukraine war. PM Modi conveyed that India and Russia always stand shoulder to shoulder, even in the most difficult situations. Modi said that India was looking forward to hosting the Russian president for the India-Russia summit in December. On the Ukraine war, the Prime Minister emphasized the need to expedite a cessation of the conflict and find a durable peace settlement. Ahead of this meeting, all three leaders of Russia, India and China had a brief exchange on the sidelines of the SCO summit. The three leaders were seen in the lounge having a conversation and sharing some light moments as well. Pakistani Prime Minister Shehbaz Sharif was also at the SCO summit, but there was no conversation between him and Prime Minister Narendra Modi. Even at one point, they were all in the leaders' lounge and Prime Minister Modi and Putin walking together, and they walked by Shehbaz Sharif and the Prime Minister did not acknowledge him. The Prime Minister also had a 55-minute-long meeting with Xi Jinping on Sunday. Both leaders took note of the successful disengagement at the border and also the need for peace and tranquility in border areas. The Prime Minister underlined the need for continued and smooth development in bilateral ties as well. There was a discussion on increasing policy transparency and predictability in economic relations between the two countries. Both Prime Minister Modi and President Xi discussed the international economic situation and the challenges. Of course, US tariffs were also discussed. Overall, the focus was on how to leverage the current global order, challenges in the global economic situation, and use it to the advantage of China and India.
Well, Parikshit, many thanks for joining us. The big takeaways there from the SCO summit. And just minutes before that meeting between Prime Minister Modi and President Putin, the US Embassy in India posted a statement from the Secretary of State, Marco Rubio, America's top diplomat. And the statement said, and I quote, "The enduring friendship between our two peoples is the bedrock of our cooperation and propels the US forward as we realize the tremendous potential of our economic partnership," end of quote. This is a departure from the statements that have been coming in from Washington, from people like Peter Navarro and, of course, Scott Bessent and many others. Now, President Trump has claimed that without tariffs, the US would be completely destroyed and its military powers will be obliterated. His comments came after a federal appeals court struck off most of the tariffs imposed by the Trump administration, saying that they're not in accordance with the law. The court said that Trump overstepped his authority under the international emergency economic powers. However, all tariffs continue to remain in place for now as the court has delayed the enforcement of the ruling till October. This means the Trump administration has time to appeal with the Supreme Court, which is exactly what it now intends to do. On to the stock market action for the day. The Sensex and the Nifty started the week on a positive note. The Sensex up by about 550 points, the Nifty up by about 200 points, reclaiming 24,600. The mid-cap index up by about 2%, and the Nifty Bank higher by about 340 odd points. So that's the market story for you. So we'll be standing by now to wrap up the week that is starting for the Lal Street. Positive Monday, Surbi.
Well, it was a good day of trade after a long time, after what was a very disappointing week. This was a great start. Perhaps some excitement coming through because of the upcoming GST meeting. Perhaps it was all the geopolitical moves around the SCO summit. But overall, we had a trending up day after a very long time, a 200-point move on the Nifty, taking the index to the 24,600 mark once again. The other good aspect was that this was a very widespread move. It was not led by only 4-5 large cap stocks, but it was across the board. In fact, the mid cap index did even better than the Nifty. It was up almost 2%, and the advance decline ratio was very, very strong, with over 2,000 stocks advancing in trade today. Now, if you talk about the sectoral mix, then auto stocks really led from the front, and I'll come to the individual moves in just a bit. But defense, consumer durables, metals, a lot of these sectors added to the good cheer. Even IT saw some good buying today, following a positive note that came in from CLSA. Now let's talk about the key Nifty gainers. And first, the auto majors. It's across the board. Mahindra and Mahindra, 3.5% higher. Bajaj Auto, Tata Motors, and even Eicher Motors, despite that comment coming in from Mr. Siddharth Lal on Eicher, of course, being a little worried about higher GST on motorcycles above 350cc. Even that stock managed to rally pretty well in trade today. Other gainers on the Nifty included the likes of Infosys, Tech Mahindra, Trent, Eternal. So there's a bit of everything in terms of flavor. The losers, the actual pure play FMCG companies like HUL, ITC was down, and Sun Pharma was down about 2% today. The electrifying performance from Ola Electric as well as Ather Energy deserves a special mention. Ola has been surging for the past couple of weeks, and today was no exception. Double-digit gains coming in on Ola. And Ather, after some positive commentary coming in from the company and them saying that they're not looking to sell EVs below the price tag of 1 lakh rupees, that helped the stock. It was up almost 8% as well. Other interesting movers in the mid-cap market, like I said, it was very, very buoyant. Zydus Wellness on an acquisition, Rights on an order win, Keynes on very positive commentary on the way their semiconductor business is moving along. They're on track to start shipments by the fourth quarter of this year. CG Power and a couple of travel-related stocks like Lee Travenews, which is the company that runs Ixigo, and even RateGain had a big bump up. So a very good market, all-round buoyancy. Good way to start the week.
GDP is growing, savings are growing, and on top of it, participation is growing. So this combination of both is just explosive in terms of demand for the paper in the economy. Now, just because there is a demand for paper, stock markets are not going to go up. It is going to go up when the economy does well and when the earnings start climbing, which is what we expect in the second half of the year, or particularly the next year. I think we are going to see bumper increase in the earnings by maybe 15, 17, 18%, depending on the slew of reforms which is implemented.
A bumper increase in earnings next year. That's Ramdeo Agarwal on the back of the GST boost. Now, from stocks to commodities, gold and silver prices in India have hit fresh record highs. Global prices hitting multi-year highs on increased expectations of a cut by the Fed this month. Manisha standing by to take us through what is turning out to be one of the best years for precious metals. Manisha.
Well, yes, 2025 seems to be going down as one of the best years in last 5 or 6 years that you've seen for gold and silver. For the Indian markets, the gains are even more so because the rupee has depreciated quite strongly. For the international markets as well, we are trading at multi-year highs when it comes to gold and silver. So for gold prices, we are very close to basically $15 $22 away from its all-time highs of $3,500 an ounce. For the Indian markets, we've been making record highs as a string for last 3 or 4 trading sessions now, with 1,05,000 rupees per 10 grams now broken on the higher side. For silver at $40 an ounce in the global markets, we are at a 14-year highs. But for the Indian markets, we are trading at around 1,23,000 rupees per kilo here. So when you look at gold, we are up by 33% in this year. When you look at silver, we have gained up by nearly 40% in this year. That chart should come in on your screen, which tells you on how the gold prices have gained in last many years. And this is a 5-year gap that I have taken in. And as you can see, in the last decade or so, the prices have kind of doubled every 5 years. Last year, same time, when you look at the gold prices, we were trading at a 75,000 rupees. We're trading at 1,05,000 right now. So very strong gains coming in. And then the chart shows you also the kind of gains that we have seen. The last time we saw a negative was in 2021. And the last time you saw 33% gains were many years back. So very strong gains continuing into this one. Same is the case with silver as well. Last year, same time, we were trading at around 80,000 rupees per kg. We are trading at 1,24,000 rupees right now. And when you look at the kind of gains that we have seen, 2020 saw 46% of gains in silver, and after that, it is in 2025 that we are standing at 40% all year. Markets do believe that it has to do with the uncertainty, strong investment buying also by central banks, expectation of US Fed rate cuts come the month of September, and the weakness in US dollar index, all very supportive for a safe haven buying in precious metals.
Manisha, many thanks. 48 hours to go for the GST Council to meet on revising the tax slabs. Consumer-facing businesses hoping for tax cuts to boost sales this festive season. India's manufacturing activity grew at the fastest pace in 17 years in August, as per the HSBC India survey. Manufacturing PMI climbing to 59.3 in August as against 59.1 in July. And this improvement has come on the back of growth in new orders and production, which led to more input purchasing and hiring by companies. However, export orders grew at a slower pace despite remaining robust by historical standards. Now on to the August sales data. For the auto sector, strong demand for commercial vehicles and two-wheelers propelling Motown in the last month, but car sales remain in the slow lane as companies cut inventory ahead of the GST decision. Sudarshan Kumar here now to wrap up the month that was for auto. Sud.
So a festive cheer ahead of the festive season, that's what looked like from the auto sales for the month of August, and that helped auto index rise up to 3%, and all the top 5 Nifty gainers were from the auto pack, from Bajaj Auto, Hero Moto, Eicher. All the stocks were up somewhere in the range of 3 to 5%. So we'll start with two-wheeler companies. Bajaj Auto reported sales that were largely in line with estimates. Total sales have come at 4.17 lakh units against our expectation of 4 lakh units, and those sales were up 5% YOY, while domestic sales have slipped, but that also was largely in line, and exports and three-wheeler segment continue to do well. For TVS Motor, except EV, all the segments have seen a double-digit growth, and it was a strong beat against our expectations. So total sales have almost risen 30%, and some of the segments have risen almost up to 47%. For Eicher Motors, company's thesis of growth over margin continues to play out, and that helps company report growth of almost 55%, and total sales have come at 1.14 lakh units. Export contribution, while it's minimal, but again, it continues to see a healthy growth. In the four-wheeler segment, after several months of outperformance this month, M&M Auto segment reports sales that were below estimates, and there is a reason to it. Company is saying that ahead of GST decision, it has decided to decrease the wholesale billing that impacted the sales of SUV, which has seen a decline YOY. For Maruti, both entry-level segment and SUV sales have seen a decline, and that was the reason even total sales were down almost 1% YOY. But in contrary, after several months of underperformance, Tata Motors sales were higher than estimates, and that was led by commercial vehicle. Both truck and bus segment have reported a healthy growth, and good part was even electric vehicle segment has seen highest monthly sales, and were up 44% YOY. For Ashok Leyland, again, similar to Tata Motors, CV segment has done well, and that has helped company report sales that were better than estimates. Now coming to electric two-wheeler, both Ola Electric and Ather Energy continue to do well. Ola Electric is up almost 50% in last 1 month. It's a similar trend for Ather Energy. And for August month, Ola Electric has reclaimed #2 spot, and month-on-month sales have improved. Similar trend was seen for Ather Energy. For August 2025, company has seen highest ever monthly sales. Now, after strong August month, all the eyes would be on GST Council decision, because we are expecting a GST rate cut for several products.
Yes, that is right. Two-wheelers are likely to see a cut coming in, not for the EV side, because the EVs were already at the slower slab. So many thanks for joining us. But staying with the auto sector, it has called for a uniform GST rate ahead of the GST Council's meeting, which will take place on the 3rd and the 4th. Industry body SIAM urging the government to rationalize rates. Automakers, including Royal Enfield's parent company Eicher Motors, have voiced concerns over a possible different GST rate on premium motorcycles. The centre's proposal includes reducing GST on certain categories of cars, bikes and auto parts to 18% from 28% currently. It's also proposed raising GST on racing cars and motorcycles above 350cc and larger passenger vehicles to keep that at 28%. Meanwhile, the apparel sector is also seeking a single GST rate. Currently, the centre has proposed a 5% GST for ready-made apparel below 2,500 rupees and 18% for those priced above 2,500 rupees. All consumer-facing businesses are hoping for tax cuts to boost sales this festive season.
You look at some auto companies, particularly where the demand is very sensitive to the price cuts, say like motorcycles particularly, say if it comes down from 28 to 18, I mean, you could see massive surge in the demand. My sense is if it is honestly implemented from 28 to 18 for motorcycle companies or entry-level car companies, I think automotive will be one of the segments to watch out for in next 1 year.
But I think there will be an inventory stocking ahead of the festive season, and demand should be much more than normal because of the GST recheck. So overall, we believe for the quarter, we should be around 6.5%, if not more. And the deflator will play a bigger role even in the next quarter when WPI is actually running negative right now.
One thing I'm going to look out very closely, is it going to be revenue neutral or not? Because if it's not going to be revenue neutral, it means that rate cuts in some items will be compensated by rate hikes in some other items. And then we have to be very careful, is the net impact going to be positive or not?
Well, that is the big expectation. We will, of course, have to wait to see what is decided by the GST Council. But staying with the GST collections in the month of August stand at 1.86 lakh crore rupees. This is an increase of 6.5% compared to the same month last year. Remember, this is for activities in July and, of course, the GST print coming in on the 1st of September. The Online Gaming Act banning real money games will be notified soon. The Nodal Minister Ashwini Vaishnav met representatives from banks and fintechs today to discuss the rollout. Sources say the government informed companies that legitimate transactions have to be allowed. It also asked them to facilitate refunds of deposits to users. The industry sought clarity on how deposits made with gaming platforms can be returned to players under the banking restrictions. This was something that industry was seeking clarity on. Online gaming app Mobile Premier League will reportedly lay off 60% of its local workforce. As per a Reuters report, MPL will let go of 300 of its 500 India staff in divisions like marketing, finance and operations following the ban on real money games. This was expected. Big relief for the union government. The Supreme Court has dismissed a petition challenging the government's decision to roll out petrol blended with 20% ethanol. Now, the petition had argued that the non-availability of ethanol-free petrol was resulting in mechanical damage and leading to performance issues for vehicles. Defending its stance in the court today, the Attorney General, on behalf of the centre, alleged that there was a huge lobby, quote-unquote, that was opposing the move towards ethanol-blended petrol. The government said it had considered all aspects before taking a decision. That PIL has been dismissed. And before we wrap, Ather Energy has launched its its next generation scooter platform, which will enable the development of multiple scooters while cutting costs and assembly time. Speaking with CNBC-TV18, CEO Tarun Mehta said that Ather is on track to achieve 20% in market share.
I don't think the market is for products below a lakh.
Okay.
I've never been a...
So at 1 lakh is where you draw the line.
Yeah, I think today our entry portfolio with software is somewhere around 120 plus. So there is a gap between 120 and 100, and I think there are amazing experiences we can build for our consumers there. But for us, the Lakshman Rekha still is our lack. Because I think going below that, we are just leaving money on the table, and we're not putting together enough price to build a good experience for the end consumer.
Your stated objective, at least in the near term, is to get to that 20% share. You're still at about 17%.
I think tactically on that, there are very good signs.
Yeah.
Every market that we've gone deep in and that we are focused, for example, South, for example, Gujarat, for example, Northeast, Ather has become number one. And these are three very different markets if you think about it. South India, Kerala, Tamil Nadu, Karnataka, Andhra Pradesh, very different from Gujarat, very different from Northeast. In fact, there are towns of towns in even North India. There is Kharagpur, there is, I think, Ludhiana, Amritsar.
So no more South India, only Rand.
And that's what I'm saying. It is...
So Churista.
And Churista. So our bet has been that good products can be built in any category. We will build them. We'll build fantastic experiences. Like we've got a great lens even with the year 01 here today to really build things that are not existing in the category.
Sure.
We'll always do that.
So 20%?
Should not be a... I think it is in the horizon. I would say that. Because all these other markets, we've crossed 20% and more. 23, 24, 25, 27%.
So overall, you think...
Sure. I think as a distribution expands in the rest of the country, getting to 20% plus is something we can certainly chase now.
Well, that's Tarun Mehta there of Ather. That stock on a tear today. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Don't go anywhere. We're back in a moment with plenty more.
Hello and welcome to our special edition of Market Masters. The big talking point is this: will US President Donald Trump's 50% tariff on Indian imports trigger a deeper market correction? Does India's long-term story stay intact despite the hit to exports? To make sense of what this means for investors, I'm joined by a market veteran and one of Dalal Street's most respected voices. Ramesh Damani is with me on the program now. Mr. Damani, great to have you with us here as always. It's a pleasure, sir. So let's just get the ball rolling with just your initial thoughts on how you think about these tariffs. And I must say, you were absolutely bang on when President Trump was elected. You were one of the few voices on Dalal Street who was very circumspect in terms of how this is likely to play out for a country like India. So in that sense, you've got it absolutely right. We're dealing with 50% which has gone into effect in terms of tariffs. Opening thoughts, Mr. Damani.
Yeah, Prashant, thank you. I think what I said at that time was that the world is changing on its axis, and that's precisely what has happened. But Trump talks about making America great again. And let me give you some examples in history that actually made America great. In the 1940s, when America had beaten Germany and Japan in World War II, what they did was they announced a Marshall Plan to rebuild Germany and Japan of $100 billion. And that's what made America great again, not what imposing tariffs is. Closer to home, Prashant, in 1960s, when India was suffering a famine and was the leader of the so-called non-aligned movement, Indonesia, Egypt, and India were the leaders of the non-aligned movement out there. But India was suffering from a famine. So Kennedy and Johnson administration sent PL 480, Public Law 480, food and grains to India to avert the storage. That's what made America great again. Even later in the 70s, when America was stuck in a quagmire with Vietnam a few years ago, what they did was just a few years after the war ended, you could go to the Vietnamese War Memorial, which was basically bashing America, and buy a Coke by paying US dollars. That's what made America great again. So America has this outward, sunny disposition of taking the world along with it. What I'm afraid the president is doing a self-goal that will in the long term hurt America's interests, because it's the old fable in Aesop that you want to kill the goose that lays the golden egg. And I think they're forming some part of strategy of that, not understanding that when the world prospers, America prospers. So I'm somewhat disappointed in the direction and tone of US policy.
You were apprehensive and now you're disappointed. What next, though, is the question. You said, the world kind of the expectation was that it's being turned on its axis. Will it remain turned, Mr. Damani? I mean, is this kind of the new normal, or, it'll snap back in some ways? I'm not talking about a specific thing here, but is this kind of fissure, break permanent in your opinion?
See, I'm not a geopolitics expert, Prashant, but I'll tell you one thing, having played in a schoolyard, that if a bully comes at you, you have to stand up to the bully. Because it's not that he wants a better deal from you or he wants one particular thing. He wants to dominate you. And I don't think we fought for independence to be dominated by an economic power as important and as preeminent as America is. So I think there will be no deal that satisfy him. You look, he renegotiated NAFTA with Canada and Mexico. Then he made a deal with them, and now he's gone back on the deal. So no deal will really satisfy him. He wants dominance. He wants to prove that he is, the most important global historical figure, worthy of the Nobel Prize, worthy of the Nobel Prize in economics also perhaps. And I don't think any deal will satisfy him. I think over time, we will have to forge new relationships. And while I hope the 50% tariff will not last, I think at least for the next 3 to 4 years, America is proving itself to be a fairly unreliable partner, not only internationally, but also in what it's doing to its domestic institutions, whether it's the Federal Reserve or whether it's the Ministry of Health. I think it's proved to be a very unreliable partner. And I think that while India will pay a price for it, but as I go across this country, the last 6 months, I visited various companies across this country, And I come back always sunny and optimistic about the prospects, about the entrepreneurial vision of these businesses. And I'm investing myself in a wide range of businesses, even at the current time. So while there will be some pain for the textile people, for the jewelry people, for the shrimp exporters, and the like, I think it's bearable pain. I think what the government is doing is the right thing. For example, by recalibrating GST, by trying to subsidize a little bit of exports that India is doing. And I think not only will we survive, but God willing, we will thrive.
I think that's absolutely well put. Got to stand up to a bully because he doesn't want this or that. He just basically wants domination. Mr. Damani, for now, right, this, I know it's up in the air. We don't know. And there have been so many instances where actions have been ad hoc. Something has been announced. I'm talking about US and other countries over the last couple of months. Something's been announced. It's been deferred. It's been pushed back. Something has been said. Something else has happened. So we don't know. I mean, it's possible that this additional 25% goes off tomorrow. But what is your own sense? You're a keen follower of global news flow and you read a lot. What is your own sense, Mr. Damani? Because the longer this 50% stays, I mean, the larger the hit. I was talking to Sajid Chinoy of JP Morgan, who was making that exact same point. Sir.
I mean, I can't really speculate as to how long it will stay. But my sense is that it's very slowly getting baked into the economic forecasts of India and America. You know, America doesn't, at this point, really need Indian exports as much as it needs India's services. And I think that is a point that we should, look at least. We obviously have a lot of service exports to America, but America has a lot of service exports to India too, in terms of usage of Google, WhatsApp, Facebook, and the like. And, like China, for example, has followed a policy of domestic first. I mean, it's something that I'm sure they're considering, the Mandarins in Delhi are considering that, if you will. I think the only way they said they can get from 50 to 25% is not by buying Russian oil. I'm not sure you want to give up Russia because at the end of the day, during the 71 crisis, during the recent crisis, they stood by India as a decent friend. So I think we can, I don't know, the geopolitics is a different ball of game. I'm not really conversant with that. But I'm not sure we should abandon Russia altogether. And it's very hard for me to say it because I'm unabashed American admirer. I truly believe America is one of the great countries of moral force of the world. But if Trump is so determined to unmantle 50, 75 years of development of the world, I think we have to look at other options. And I think the world will come up with other options. I'm very confident the next year or two, there will be other options in the world. And America will see its own preeminence decline over a period of time.
Absolutely. I mean, 50%, of course, can't be a permanent rate in that sense. But whether this will be brought lower through negotiation, what's the off-ramp, or organically, right? At some point next year, US consumers will start to hurt as prices go up. And that'll, the midterms... Yeah, sorry, go on.
Yeah, I think you're right, Prashant. What the off-ramp is basically that when inflation strikes up in America, or when the economy does badly ahead of the midterm elections, or, we've been through this as a country. We know in the 70s and 80s, Indians were used to high tariffs and shoddy goods and a low standard of living. I mean, that's the same thing that's going to happen to America. America is such an innovative and competitive economy. Just to give you perspective, Prashant, when I was there as a student in the 80s, it was one of the biggest markets for consumer electronics. And yet, even in the early as the 1980s, it had no consumer brand that was American. All the electronics, the television sets, the radios, the tape recorders, the VCRs, were all Japanese or Korean or Singapore brands. They didn't have a domestic brand left of consumer electronics because it was an economy that thrived on innovation and moving ahead. So just right now, as it's powering ahead with AI and with data centers and with so many other things and leaving the other fields behind, I don't think Trump understands that. I think the feeling that he's going to bring back manufacturing to America, in my opinion, is a pipe dream. It's not going to happen. It's just so clear it's not going to happen. And as that reality sinks in after 6 months or 1 year, as the midterm elections rolls around the corner and the president is answerable to voters, I think that will be the off-ramp where he will change it. Right now, he's almost walking on water. Whatever he says is happening. Everyone is falling in line with him, whether it's the Fed Reserve, whether it's the Health Department. I have to believe that at some point, the road will hit the rubber and he will have to recalibrate the policy, because I absolutely refuse to believe that tariffs, inflation, low standards of living, shoddy living are something that Americans will accept willingly.
Absolutely. Mr. Damani, we'll get to markets in just a bit and what they're pricing in and whether more needs to be priced in. You said economic models and forecasts are slowly baking this in. But just one point, I mean, this is also such a critical moment in this the apex technology of our times is artificial intelligence, right? And US is clearly leading and China is close on the heels. And some believe that this is, every technology cycle, of course, in the beginning seems like it's going to completely demolish the older order, but some truly believe this one in a way will, because it's so transformative. Given, the 50% tariff is one thing, but it also kind of, this, tiff with the US in that sense also hurts us in these ways, right? Technology transfer, integration into that tech value chain, et cetera, et cetera. Are you worried about that, Mr. Damani, at all, if this goes on for a bit longer?
I tell you, the thing that I don't worry about is that we have 1.4 billion consumers, and as much as America may sneer at it, they need those consumers. I think Facebook, WhatsApp, Google, search would be much poorer offerings without the ability to tap into that 1.4 billion Indian consumers, So I think a lot of the language learning models are based on Indian databases. A lot of user cases for AI comes from India. So, I'm not really scared that they would, stop the technology transfer to India. I mean, that would be another example of self-goal that they would be doing. And if not, there'll be plenty of European companies willing to do it, or American companies setting up shop in India to do it. I think at some point there will be a reckoning, high noon for Trump's economic policies. It has perhaps been delayed. I thought it would be earlier than it's been now. I think 6 months into this draconian, I think he would have started feeling the effects. Clearly he has not, because the Dow is making a new high altogether, and the American markets are showing a lot of confidence. But somehow I feel that confidence is a bit misplaced, and maybe this will not be a drip, drip, drip type of bear market, but one fall day, it will be a straw that broke the camel's back. Something will happen that will trigger a fall in the market, and then the reality of how to deal with it will strike them. But I think what is going for India, Prashant, right now, is that we are 1.4 billion consumers strong, a very strongly domestic-focused economy. While there will be damage on the periphery, you cannot ignore that. There will be some damage on the periphery. I think India is well positioned to recover from that, because basically only about 1-2% of our GDP is consisting of US exports. So while it's important, I don't want to undermine the importance of that. I think it's an overcomable problem.
You mentioned markets briefly, Mr. Damani. That's exactly what we're going to focus on. But I have to take a quick commercial break. Stay with us. We're right back with Ramesh Damani on markets and what are they pricing in. Stay tuned. Welcome back. We're in conversation with market veteran Ramesh Damani, who's with us. We've been talking, of course, about the India-US tariff tiff, 50%, what happens to it. And Mr. Damani, of course, you clearly believe that, businesses here remain vibrant and we've got a large consuming class, which, as I put it, I think last week before last, is our rare earth, if I can use that terminology. I mean, that leverage or whatever you want to call it. Mr. Damani, let's talk about markets. Are markets adequately pricing all of this in right now? I'm talking about the markets here in India, although you alluded to US markets and what they may do. But here in India, what is your sense? Is all of this getting priced in?
I think, on the D-date, the markets were surprised that there was not a rollback. I think the market expectation was that it would be rolled back. It didn't happen, so the market has taken it on the chin for the next few days after that. So I think even as we speak to you, it is kind of pricing that in there. But, the impact is not on the domestic phase economy. The construction companies, the telecom companies, the hotel companies. I mean, I don't see why they would go down per se, because that is like throwing the baby out with the bathwater. There are certain export-oriented sectors which are a bit labor-intensive, but not very, very important to the Indian economy. Jewelry, shrimp exports, textiles, which will probably experience a slowdown. But the rest of the economy remains fairly well sheltered from that, because we are a domestic economy, like I've often said, and there's a lot of domestic-facing industry that will continue to do well. Thank you.
Yeah. Okay, fair enough. Markets have been, investors broadly for the last 1 year, Mr. Daman, you would agree. Of course, there are always cases, one-offs and some stocks which do well in any kind of market. But for the first time in the last few years, things have been flattish, Mr. Damani, right? What is your own expectation? I'm not asking for a near-term forecast, but what is your sense? A bunch of people we've spoken to recently have said, and foreigners have been big sellers, although local investors have been even big buyers, but foreign buying does matter. I think as this episode and past episodes also show, for markets to do well. What is your sense, Mr. Damani? Next 2 quarters, 3 quarters, will we make a bit of a bottom? As far as earnings go, will earnings start to perform better on an overall basis? And consequently, what does markets do?
Yeah, it's a question that, of course, perplexes me every day, Prashant. But we've had almost a stellar run since the COVID lows. We've gone up 3-4x on the index level. Individual stocks have obviously done far better out there. So if it remains range bound or sideways for the next years, 18 months, I'm okay with that. I mean, there's no indication yet to suggest that the bull market that began in COVID is over, that it will continue. And markets go through long periods of consolidation before they move up. Having said that, I mean, when I go and visit companies or I go and visit entrepreneurs, I go and visit speakers, understand what they're saying at conferences, I see no reason to be bearish. I see attractive opportunities to invest at valuations I understand and in businesses I believe in over the next few years, and that is both in the listed space and in the private equity space. So, from my end, I remain sanguine. I think it's a good time to invest in great businesses. And that's always been the mantra, rather than invest in any old thing, is find a good business and remain invested in that business. I think if the market consolidates for the next, say, 6 months, 12 months, it's fine by me. I mean, markets are not of the creature that should go up year on year, year on year. It happens in the first years of a bull market, then consolidate, and then picks up steam again. So I think we may be at best in a good consolidation phase. I certainly don't think we're in a bearish phase of the market. And I would expect that in some due course, the market will pick up and, challenge the old highs.
Mr. Damani, have you, dramatically shifted your focus to the private equity space, unlisted space in that sense? Many investors in your peer set that we speak to seem to suggest that. You're smiling, but is that correct? And do you think that's a function of valuations? I mean, you want to kind of go back and back to find, better starting points in terms of PE multiples. Go on, sir.
I don't know, Prashant. It's one of those things. Yes, I have done it. I moved a bit more money into private equity. Some of it has worked out pretty well for me.
Yeah.
So I think that kind of reinforces that. So you tend to do more of that if it happened. But I would say as an overall, say if you ask me my percentage, I don't think more than 10% of my portfolio is in private equity right now. But, yes, I have. It used to be like 98% listed equities, 2% private equity. So it's up to 10%. So it is, getting, to be serious amount. But I think some of the early decisions have proved to be correct or they made me money. So you tend to, do a bit more of what's making you money. And some of the valuations are, a bit stretched in the secondary market, which is fine. But I'm categorically telling you, thumping the table, I find as I visit companies, a lot of opportunities in the secondary markets too. So, I'm happy doing a mix of both.
That's interesting. Mr. Bani, you were bullish on the defense space in a big way. Lots of companies you own. Could you give us a relative sense of your exposure there compared to the peak?
I mean, they have been significantly reduced, but, I just got prices that, I believe were, forecasting, 2-3 years of growth. So I was happy to get rid of some of them. But some of them I've still kept. I mean, so it's not that I've exited all the defense. In fact, I haven't exited any of the defense names broadly. I've kept them. Some of them I've, lightened my position, just took some money off the table, if you will. But I think if you look at some of the public sector stocks in, say, the construction space, or you look at in the rare earth space, I think there are plenty of opportunities even in that sector in those businesses. So we have moved some money from, say, defense into, say, construction, rare earths, that kind of space, yes.
E-governance solutions, right? I mean, I think has been something that you backed, and you've done that in a way in different ways, right? I mean, on the private side as well. Still remain bullish, Mr. Damani?
To be honest, and I'd use this public medium first to explain this point to you, is that I'm not on any public medium other than coming on television. People ascribe a lot of shares to me, which I may or may not own. But having said that, so please don't follow social media. I mean, if I speak on TV, I am not on any other social media. But I have been bullish on this digital public infrastructure. The stock hasn't worked out. It had a pretty sharp fall. But it seems to have found its legs. Some new orders are coming in. The market seems to have bottomed out. So, I remain bullish on that. But I think I clearly probably overpaid for it. I think that was the risk in the stock. But, the opportunity still looks pretty promising. I wish I had done it at a low rate. But, that's the nature of the market.
Specialty chemicals, another area you like, Mr. Damani?
I have bet a few shares. I have a friend who knows that area particularly well. So he's kind of guided me into that area. Having said that, Prashant, I think the more important point I'm trying to make is that I'm not fully invested in the market, but I'm well on my way to being fully invested in the market. But as always, I'm over 85-90% invested in Indian markets. And I continue to look and hunt for opportunities to find good businesses. I'm not getting rattled by the tariffs or by other things. I think the expansion will continue to take place in India. There's continued opportunities to make money in India. And we are happy if, markets consolidate 2 years. I mean, I'm not certainly of the camp that says that if the market doesn't go up 20% this year, it's been a disaster. I mean, that's just not been my experience.
Well, that's very well put. And I think that nicely brings us to a close in this conversation, Mr. Damani. Thank you so much for your time, sir. And it's reassuring. And, of course, lots of insights in that conversation as well. We started, of course, with a bigger picture, 30,000 feet. I mean, US and its relations with the world, India, and, of course, a bit about the markets towards the end as well. Really appreciate your time here on this episode of Market Masters.
Thank you, Prashant.
Well, that's it from me. Stay tuned. More coming up after a quick commercial break.
Hello and welcome to News Center. I'm Parikshit Luthra. Prime Minister Narendra Modi has wrapped up the SCO summit in Tianjin after resetting economic ties with China and affirming a long-term partnership with India. Prime Minister Modi, Russian President Putin and China's Xi Jinping were seen exchanging warm gestures as they came together under the same roof. The first time since US President Donald Trump escalated his tariff offensive. Prime Minister Modi noted that India and China both pursue strategic autonomy and their relations should not be seen through a third country lens. PM Modi also held a bilateral with Russian President Putin. We learned from sources that the formal meeting went on for around 50 minutes, where they discussed expediting an end to the Ukraine conflict and finding a durable peace settlement. In a rare occurrence, both Modi and Putin were also seen traveling together in the car for their bilateral discussions. This was their first meeting since the US imposed additional tariffs on India for buying Russian oil. The SCO joint statement condemned the Pahalgam terror attack but did not name Pakistan explicitly. Pakistan's Prime Minister Shehbaz Sharif also attended the summit. The joint declaration also strongly condemning the airstrikes on Iran by Israel and the US. Here is Prime Minister Modi and President Putin speaking at their bilateral meeting.
मैं हमेशा अनुभव करता हूं कि आपको मिलना मतलब एक यादगार मीटिंग भी होती है, बहुत सी चीजों की जानकारियों का आदान प्रदान करने का अवसर मिलता है। हम लगातार संपर्क में रहे हैं। दोनों पक्षों के बीच नियमित रूप से कई उच्च स्तरीय बैठकें भी हुई है। इस वर्ष दिसंबर में हमारी 23वीं समिट के लिए 140 करोड़ भारतीय उत्सुकता पूर्वक आपका इंतजार कर रहे हैं। एक्सेलेंसी, ये हमारी स्पेशल एंड प्रिविलेज्ड स्ट्रेटेजिक पार्टनरशिप की गहराई और व्यापकता का परिचायक है। कठिन से कठिन परिस्थितियों में भी भारत और रूस हमेशा कंधे से कंधा मिलाकर चले हैं।
Усилия по созданию в Евразии архитектуры равной и неделимой безопасности.
यूरेशिया में समान और अविभाज्य सिक्योरिटी ढांचे को बनाने के लिए प्रयासों के लिए एक मंच प्रदान करता है।
To take this discussion forward, I'm now joined by former Foreign Secretary Kanwal Sibal, Ashok Kanta, former Indian Ambassador to China, and Jonathan Cheng, China Bureau Chief at the Wall Street Journal. Gentlemen, thank you very much for joining us on the program today. Jonathan, if I can begin with you. This meeting took place under the leadership of Xi Jinping and China at a time when the world has been hit by US tariffs. And there is a doubt about US's position in the global economic order as well. What was Xi Jinping's message to SCO partners at this point?
Well, I think the message is pretty clear. As you point out, this is a time of turmoil in the global environment. Of course, Donald Trump's return to office has upended a lot of assumptions about the way the world works and about foreign relations, and Xi Jinping does see an opportunity here. Certainly, we've just heard you talk a little bit about the tariffs that the U.S. has imposed on India, and I think that came as a big shock. I don't know that this trip was planned after those tariffs. I think it must have come before, but nonetheless, you do see this reshaping of the global jigsaw puzzle here a little bit, and I think Xi Jinping, with the wind at his back right now, I think the economy in China is not as strong as it could be, but it's strong enough on AI and on military and all sorts of different, cutting edge technologies. China is showing how central it is to the global economy with semiconductors and everything else. And I think it's a good time to signal to neighbors like India, like Russia, that there is another power that they can sort of cluster around here. And I think that's the message that is implicit there. Of course, Xi Jinping will not come out and say this explicitly, but I think you can see it in the imagery and in the body language and in the words that he uses as well, that this is part of the intent here.
Right. That's an important point. Let me take that to Ambassador Ashok Kanta. Ambassador Kanta, clearly Xi Jinping trying to send out the message that China is ready to fill the void that is being left by the United States. How do you see the meeting between Prime Minister Modi and President Xi that took place? It was almost a 1 hour long meeting. There was a discussion on the boundary dispute. There was a demand that there should be predictability and transparency in economic ties as well. But the question a lot of investors would be asking, will this meeting lead to a closer alignment, a more long-term alignment, or will there be cautious approach from both sides?
Well, this meeting was a substantive engagement between Prime Minister Modi and President Xi. Essentially, it has taken forward the process, which commenced when Prime Minister met with President Xi in Kazan, Russia, October last year. What we're looking at is a calibrated improvement of relations between India and China. We are trying to frame this relationship more in bilateral context, though, of course, turbulence in geopolitical environment, it does impact the relationship. Prime Minister was very clear that we are not looking at India-China relations through prism of relations with a third country or lens of a third country. I think that's the message he was conveying, that some speculation that India is moving towards China because it's under pressure from the United States. I think he wanted to allay such perceptions. Now, in terms of progress, yes, one can see greater momentum in economic contacts between India and China, apart from people-to-people engagement. But I think Indian side has made it very clear that there are issues that need to be addressed, including issues relating to border. Prime Minister reiterated that for normal development relations, you need peace and tranquility to maintain in border areas. Border issue is back to the center stage of the relationship, and there are a whole lot of other concerns which need to be addressed. So what I will say that, it remains a cautious expansion of relations, step-by-step improvement, rather than any kind of, a reset in ties between India and China at this stage.
All right, not a reset, but a cautious expansion in economic relations. Ambassador Sybil, if I can come to you, when it came to the boundary question, the Prime Minister underlined the importance of peace and tranquility on the border for continued development of bilateral relations. The two leaders noted with satisfaction the successful disengagement last year and the maintenance of peace and tranquility along the border area since then. They expressed commitment to a fair, reasonable, mutually acceptable resolution of the boundary question, proceeding from the political perspective of the overall bilateral relations and the long-term interests of the two people. They recognize that the important decisions taken by the two special representatives earlier this month and agreed to work further towards those efforts. Now, Ambassador Sybil, does the boundary dispute still take center stage for India? Because this statement seems to indicate that whatever has been achieved via the disengagement, we're happy with that. But what about status quo ante? That was the demand of India ever since the Galwan clashes took place, that we revert to the positions that existed before April 2020.
I think that position remains. But there was no sense in putting this position straightforwardly in the exchanges that they had. This has already been conveyed at various levels in the past, and I'm sure that this was conveyed to Wang Yi. They know what India's position is. The point the Prime Minister was trying to make is that we've had this disengagement, and currently the situation is peaceful. But there has been no de-escalation and, of course, no question of any redeployment. On the contrary, China is building this railway now from Xinjiang to Tibet, which will give them greater possibilities of moving troops and material and whatever to the Tibet region to maintain pressure on India. I've always asked myself the question as to why China wants to militarize Tibet so much. There is no military threat from India. Our position is essentially defensive. But leave that aside. If you look at the joint statements that have been issued when we've had high-level visits from China to India and vice versa, they're always forward-looking. And on the border issue, there always is an agreement to maintain peace and tranquility. In fact, in the 2005 and 2006 visits of the Chinese Prime Minister and the Chinese President, it was agreed that the two sides will begin the process of actually clarifying the line of control, actual line of control, which was agreed to in the 1993-96 agreements, but it didn't move forward. As regards this formulation that the border issue should be resolved on the basis of the political strategic perspective and everything else, this was the reason why the special representative mechanism was set up, not to go into long-winded discussions on legalities and history, but look at the political aspects and the strategic aspects, and then take a decision. Now, we've come back to the same formulation after, I don't know, 24 meetings of the special representatives that didn't produce any result. Whether now they'll produce any result, it remains to be seen, especially as China is very rigid on the issues of territory. And the gap between India and China, economic, military, and other, has increased, which is why it's not very clear why China would make any major concessions to India on the border. From our point of view, if we can maintain peace and tranquility on the border, then we can slowly open up other aspects of our ties in a limited way, so as to keep the relationship stable and also persuade China, and this has always been our case without getting any result, that we must reduce the deficit, trade deficit between the two countries. We've always said it is unsustainable, but the deficit keeps expanding. Now, whether as a result of these soft noises that are being made and the fact that Trump is throwing his weight around, is targeting, he's also targeted China, though they are confused messages.
Right.
If China is now willing actually also to look for alternative markets and everything else, because their market to the United States is bound to be affected, it has been affected. Actually, the exports, imports between the two countries have gone down pretty drastically this year. So
All right.
whether that will make them
I'm going to come back to that.
To a more balanced trade with India opening up their market, it remains to be seen. In the past, they haven't done it.
That remains to be seen.
Now, one can't say. I would remain skeptical.
Yes, and,
I would say
and
that
India has also been, Indian companies have also been dependent on Chinese imports all these years. That has also been a reality. But let me also bring in a question about what China was looking for its meeting with the Indian Prime Minister. And Jonathan, we saw how some powerful members of the Xi Jinping administration, including Kai Chi, the member of the Standing Committee of the Politburo of the Communist Party of China, also met with the Prime Minister. He was also supposed to have a banquet in the honor of the Prime Minister, but it could not happen due to scheduling issues. But they did have a bilateral meeting there as well. What did Xi Jinping come to the table with when it comes to an offer for closer economic relations, a closer handshake when it came to manufacturing, investments, and more long-term relations between India and China? What about reducing the trade deficit, buying more from India as well, as Ambassador Sybil was pointing out?
Well, I wish I was in the room with them. Unfortunately, I wasn't. But you know, the complaints that India has, of course, about the trade deficit with China are not unique to India. Basically, the same message, of course, has been coming most loudly from Washington. But so many countries have these sorts of complaints because China has spent so much of the last few decades becoming so dominant in manufacturing. And I don't see any real shift in the priorities in Beijing. I think the hope is still to maintain this edge. And it's not just at the very high end of the market when it comes to semiconductors, electric vehicles, solar panels, drones, and other sort of leading edge products. I think China intends to keep dominant in the entire stack across the whole spectrum of everything that is manufactured. And I think that is going to be a problem for China because it is going to alienate and cause problems with other countries. I think at this point, Xi Jinping thinks he has a pretty good hand, and there are many things that you can point to that support that claim. You know, I think when it comes to things like the border issue, we've already talked about it here, that China doesn't budge on that sort of issue. They're not going to give any ground there, literally or metaphorically. And I think also when it comes to trade, I think that's a possible area where perhaps there's a little bit of leeway. I think when there's enough pressure coming from enough countries, there may be some willingness to yield there. But I do think that effectively there is a message here from Xi to Modi to say, listen, we don't want you to get too close to the Americans. They're not trustworthy. Of course, under Biden and even under, I think, the first Trump administration, you saw a real effort to bring India into the fold under the Quad sort of banner there to encircle China in a certain sense with Japan, with Australia. And I think China wants to look for ways that they can loosen that right now. And I think India looks like the ripest target because Australia, I think, for the most part, remains in the US camp, and I think Japan as well. So I do think they sense opportunity with India.
All right, we're going to take a short break, but when we return, we're going to speak about Prime Minister's meeting with President Putin. And let's also not forget that on the red carpet earlier today, in the Leaders' Lounge before the photograph, you had President Xi, Prime Minister Modi and President Putin having a discussion. They shared some light moments as well. We'll discuss about that in detail once we return. Welcome back. You're watching News Center, and we're focusing on the Prime Minister's meetings at the SCO summit with President Putin and Xi Jinping, the Chinese president. Let me go across to Ambassador Ashok Kanta at this point. Ambassador Kanta, what do you feel about Prime Minister's meeting with President Putin? Very, very symbolic. They spent almost 2 hours with each other, 55 minutes in a formal bilateral setting. And before that, President Putin waited for Prime Minister for 10 minutes to join him in his presidential limousine. Then they traveled, spoke in the car for about 40 minutes to that bilateral meeting venue. They spoke about the Ukraine war. They reviewed the bilateral relation, including energy ties. What do these pictures and the fact that the Prime Minister and the President spent 2 hours together indicate to you?
Both pictures that come out from Tianjin, as also what we know about the substance of the meeting, clearly underline the fact that India attaches a very high degree of importance to relations with Russia. And this is a relationship which has been strategic in character, very durable, and India is not going to, change nature of engagement with Russia in different fields, whether it be procurement of oil from Russia or defense ties or engagement in other areas under duress. I think this message has come across loud and clear. Now, the fact that two leaders spent so much time together, they not only had a long meeting, but they traveled also in the same car, conveys its own message. And more than meeting with President Xi, where I think there was a degree of caution on our part that we don't want that meeting to be sort of misconstrued as India and China coming together to sort of counter USA. In case of Russia, it has been
a durable, long-standing relationship, and we had no hesitation in projecting that. At the same time, I would like to add that there doesn't seem to be any keenness to sort of project RIC kind of front, as some people are talking about, Russia, India, China coming together to sort of deal with USA.
Right.
I don't think India is in that kind of mindset.
All right. So India did not have the mindset to probably showcase or bring up an RIC grouping to rival what the United States is doing. Ambassador Sibbal, the question that a lot of people in the West were asking, and the Western media spent a lot of time discussing the meeting between Prime Minister Modi and President Putin. Do you think this could lead to some sort of ceasefire in Ukraine, some sort of halt, some sort of pause? Because different US officials in their own ways are saying that you have to help the United States end the war in Ukraine.
No, I don't think it's that at all. Trump has moved away from the ceasefire demand to going straight for a peace agreement. This is
That's what I'm saying.
despite all
Stop the war.
pressure from Europe, who've been fixated on this, and even more pressure from Zelensky, and he has rejected all that, and has said, to my mind, quite sensibly, that ceasefires can be broken, but it's better to go in for a peace agreement straight away, which means you discuss the fundamental issues, which is NATO membership, security guarantees, and territorial issues. Europe is adamant that they will not yield on these questions unless they are party to the discussions. And Zelensky, of course, has outrightly rejected any territorial exchanges, and he wants NATO-like guarantees for himself. Now, in this situation, for India to be told that the road to peace lies through New Delhi is utterly ridiculous. Prime Minister, if you notice, even in his conversation with Putin, spoke about Ukraine and lauded the fact that efforts were being made to find a solution, and again underlined the need for a quick resolution in the interest of the global community. So we are wedded to forward movement and peace. Now, the interesting thing is that Putin is keeping us fully informed of his talks with Witkoff, his talks with Putin in Alaska. He briefed our national security advisor, he briefed our foreign minister, and now, he briefed our prime minister in detail, sitting in the car, making sure that nobody could eavesdrop on this conversation so that he could speak freely to our prime minister on this subject. Clearly, Putin feels that keeping India informed, and through him, the global South, informed about the fundamentals of Putin's position, Russian position, is helpful. And given the fact that we have faith in each other, he thinks that India can play a positive role, not against Russian interests, but in favor of peace, in the manner in which Russia is defining what should be done in terms of moving forward towards a peaceful solution. So, to answer your question, no, I think it is not in our power to actually find a solution. Now, of course, Zelensky plays games, diplomatic games, before any meeting, including Eurovision. He will try and insert himself. So he spoke to our prime minister, gave him certain messages which he thought he could convey to Putin, which prime minister would have done. And we also want to keep our doors open to Zelensky. After all, we have diplomatic relations with that country. We have no quarrel with that country. We are not hostile to that country. And if
we have lots of students there as well.
In conveying messages, we are happy to do so.
All right, I'm going to come back to that. But Ambassador Kanta, do these pictures also indicate a fact? The fact that we spent so much time with Putin, the fact that we spent so much time with China, even though we said that this is not to be seen from a third country lens, but does this indicate that somehow there is now an understanding and an assumption that it's very difficult to sort out the relationship with US keeping in mind their current demands?
Clearly, some recalibration is taking place, but I don't think Indian leadership has any illusion that our difficulties with the USA can be tackled through, pitching, So that's why Prime Minister made it very clear, and that also was a message which came across in media briefing given by Foreign Secretary. We would not like to create such an impression that India is seeking better relations with China because there are difficulties on the US front. I would like to point out that the process of improvement in relations, in fact, commenced in October last year when Prime Minister met with President Xi in Kazan, and that is unfolding. So it's not something which started happening only when tariffs were imposed by President Trump on India.
Okay, my final question now to Jonathan. Jonathan, when it comes to the economic relations and having a sustained supply of high rare earth magnets from China to India, resuming flights. Now, all these are some low-hanging fruits as far as the relationship is concerned. Do you have any sense as to when the flights between the two countries could start? The Foreign Secretary has said that it could happen in the next few weeks. On rare earth magnets, we believe that some consignments for light rare earth magnets are being released, but that's still happening very slowly. High rare earth magnets are not being released. What's your view on how China would slowly lift these restrictions?
Well, I think if you just look at how China has been dealing with the US, I think you see a model for how China is probably going to play its cards with India, and that is very slowly, very carefully, very cautiously. And I think it will be conditioned on all sorts of things. I think if there's any sense in Beijing that things are not going as well, that they're not getting from India what they expect to get from India, I think you can expect to see that progress slow and perhaps even reverse. So with rare earths, with the US, it has been a case of 2 steps forward, 1 step back. There have been setbacks as the Trump and Xi relationship have gone up and down, and I think we can see that for India as well. I think with rare earths in particular as well, I think there's also a sense that China recognizes how powerful this card is, and I think it may have decided in certain cases to never really allow the flow to return. I think we're seeing that with the US for any minerals that may be especially useful for military applications. They're going to require a lot of paperwork, a lot of bureaucracy, and I think it's going to be very conditioned on all the other considerations that China has in mind, with national security at the top of that list.
Right. Thank you very much, Jonathan Cheng, Ambassador Kanta, Ambassador Sybil, for joining us on the program with some very important views on the SCO Summit. With that, it's a wrap on this edition of News Center. Thank you for watching. Goodbye. Hello and welcome to this special edition of Global Eye. I'm Parikshit Luthra. Our big focus this hour is Prime Minister Narendra Modi's meeting with Xi Jinping in Tianjin. It lasted for 55 minutes. That's right. PM Modi and Chinese President Xi Jinping have concluded their meeting on the sidelines of the SCO summit in Tianjin. The talks ended on a friendly note, with both sides stressing on the need to further ties between the nations based on mutual trust, respect and sensitivity. In his opening remarks during delegation-level talks, PM Modi emphasized on the need for friendship between two of the most important civilizations and populous countries in the world. There was also conversation on how the dragon and the elephant must come together. That was a point made by President Xi Jinping. Marking the 75th anniversary of India-China diplomatic relations, Chinese President Xi Jinping spoke about the significance of working together in a multipolar world and the need for India and China to work for the betterment of international relations as well. During the near 55-minute bilateral conversation between PM Modi and Chinese President Xi Jinping, PM Modi asserted that the relations between the two nations were thawing and assured that there was peace and stability at the border. Listen in.
Excellency, हमारे गर्मजोशी भरे स्वागत के लिए मैं आपका हृदय से आभार व्यक्त करता हूँ। पिछले वर्ष कजान में हमारी बहुत ही सार्थक चर्चा हुई थी। हमारे संबंधों को एक सकारात्मक दिशा मिली। सीमा पर डिसएंगेजमेंट के बाद शांति और स्थिरता का माहौल बना हुआ है। हमारे स्पेशल रिप्रेजेंटेटिव्स के बीच बॉर्डर मैनेजमेंट के संबंध में सहमति बनी। कैलाश मानसरोवर यात्रा फिर से शुरू की। दोनों देशों के बीच डायरेक्ट फ्लाइट भी फिर से शुरू की जा रही है। हमारे सहयोग से दोनों देशों के 2.8 बिलियन लोगों के हित जुड़े हुए हैं। इससे पूरी मानवता के कल्याण का मार्ग भी प्रशस्त होगा। परस्पर विश्वास, सम्मान और संवेदनशीलता के आधार पर हम अपने संबंधों को आगे बढ़ाने के लिए प्रतिबद्ध हैं। एक्सेलेंसी, चीन द्वारा SCO की सफल अध्यक्षता के लिए मैं आपको बहुत बहुत बधाई देता हूं। एक बार फिर चीन यात्रा के निमंत्रण के लिए और आज की हमारी बैठक के लिए आपका हार्दिक धन्यवाद।
Meanwhile, Chinese President Xi Jinping said that India and China must work together to uphold multilateralism. He also said that both nations must work together to ensure peace and prosperity around the world. Listen in.
The world today is swept by one-centric transformations. The international situation is both fluid and chaotic. China and India are two ancient civilizations in the East. We're the world's two most populous countries, and we are also important members of the global South. We both shoulder the historical responsibility of improving the well-being of our two peoples, promoting the solidarity and rejuvenation of developing countries, and promoting the progress of human society. It is the right choice for all of us to be friends who have good neighborly and amicable ties, partners who enable each other's success, and to have the dragon and the elephant dance together. This year marks the 75th anniversary of China-India diplomatic ties. Both sides need to approach and handle our relationship from a strategic height and long-term perspective, so as to realize the sustained, sound and steady development of our bilateral ties. we must also step up to our historic responsibility to uphold multilateralism, work together to bring about a multipolar world and more democracy in international relations, and to make our true contributions to peace and prosperity in Asia and around the world.
All right, joining us on the program are Pramit Pal Chaudhary, Practice Head for South Asia at the Eurasia Group. Let me go across to Pramit now. Pramit, thank you very much for joining us. We are getting a sense that the meeting has generated positive momentum. In the run-up to this meeting, the sense that we got was that it's not going to be earth-shattering or headline-making, but will lead to incremental steps and incremental improvement in the overall relationship. What do you think will be the trajectory going forward after hearing both President Xi and PM Narendra Modi?
I expect the trajectory to be positive, but the question is really, does it actually begin a genuine transformation of the Sino-Indian relationship, which, as you know, is has been extremely hostile or has had many problems, to the point that India still sees and continues to see China as its primary strategic competitor and rival. So what we're seeing here is a summit that's working, I would argue, on three levels. One is a process of normalization between China and India that goes back to the Galwan Valley border clash in 2020. And we've seen over the past 2 years, China in particular leading an attempt to end the fallout, if you wish, of that. And we will probably see the announcement of border airplane flights resumed between the two countries as part of that normalization process. The second level is a consequence of both countries' concerns about the increasingly unilateral and at times whimsical actions of the Trump administration. And I think the references to both supporting the multilateral system and global stability are basically in a reference to that. However, it is still the fact that India still sees America as a country that as its primary economic and strategic partner, and China is simply not on that same level. But the third level, and that's where we have to see where this trajectory goes and is potentially changing, history making, is that at the border negotiations between the Indian NSA and Wang Yi, they had mentioned, the Chinese had said that we are prepared to consider border demarcation, a process that had ended in 2005 because China had refused to go forward with it. But if China is genuine about that, that would indicate that they want to settle in many ways, one of the key reasons for the continuing problems between China and India. How far that will go, and whether China therefore will also become a lot more, constructive in a lot of the other elements of their economic relationship, that has yet to be seen.
Right. Pramit, an important point that Xi Jinping made was that it is the right choice for both countries to be friends, have good and amicable ties. We should be partners who enable each other's success and to have the dragon and elephant come together. Ahead of this meeting, the Chinese ambassador to India had extended an olive branch by saying that China firmly stands with India against the bullying of the United States. How do you read the message that Xi Jinping is delivering to Prime Minister Modi?
So he sees an opportunity that India and the United States had seen an increasingly close strategic relationship over the past 15, 20 years, possibly even further back, really going back to the George W. Bush administration. And much of that closeness was driven by a common strategic concern about China. And increasingly, that relationship had become not just strategic, it had become economic. You saw the movement of Apple developing alternative supply chains for its iPhones in India, largely at the detriment of China, and so on and so forth. So I think you see with Trump coming in, and he doesn't seem to share or really concern himself about these larger geopolitical concerns. And as you know, for him, whether or not you're an ally or an adversary, it doesn't really matter. He'll hit you with tariffs. And for him, it's all about a certain degree of this America First policy, China sees an opportunity. At the very least, we can potentially we can at least slow down the relationship between India and the US so that over the next 2 or 3 years, nothing very much happens. And potentially drive a wedge between India and the US, which would then help which would cripple America's original Indo-Pacific strategy, which is in many ways designed to contain Chinese power and influence. And I think for Xi, that's worth it. The question is, does he also see an opportunity to actually change in the long term the rivalry between India and the hostility between India and China? That is not clear, and that will be what we'll have to see over the next 2 to 3 years.
Right. Whether China sees an opportunity to change the course of India-US relations for good. Let me now go across to Mr. Shrikant Kondipalli, Professor of Chinese Studies at JNU, who is joining us right now. Professor Kondipalli, thank you so much for joining us right now. Both sides discussed early resumption of flights. Visas have already started. Kailash Mansarovar Yatra has resumed. Border trade has resumed. How do you see some of these confidence-building measures which have taken off? They were discussed in this meeting, this 55-minute-long meeting as well.
I think these are preliminary measures to improve the bilateral relations. As you know that on June 19, 2020, Dr. Jaishankar mentioned about the ban on apps, 218 apps, and the Confucius Institutes being shut down, and investment restrictions. So this is following the Galwan incident 2 days before the announcement. And now they are resuming some of these. But the core issue still is on the border. We have seen Foreign Minister Wang Yi's visit recently on the 17th and 18th August. And we have seen the core commander level meetings to be extended for the middle sector and the eastern sector. An expert group and a working group has been formed for this purpose. But what is important is that both sides have not removed their troops or equipment from the border areas, which indicates that there is something holding back. China has not initiated the steps towards de-escalation and de-induction. And so this remains still a major problem in the bilateral relations. China may suggest that border issues should be ignored right now, but we have seen ignoring the border issue resulted in a lot of tensions, including the Galwan incident and before the other incidents that have happened. So I think India is holding on for this multilateral meeting. And we should see more progress on the border in order for the bilateral relations to improve.
Right. That is an important point. Let me also get in Victor Gao, who is joining us from China at this point. Victor Gao, there has been a positive meeting between the two leaders. But how do we go ahead and trust this outreach by China unless the border issue is not resolved? And then you have the issue of terrorism. And China and Pakistan being strong friends and ironclad allies.
Thank you very much for having me. What happened for the summit meeting between Chinese President Xi Jinping and His Excellency Prime Minister Modi of India this morning is a very good, very important step. I think it will manage to reset China-Indian relations and pave the way for more constructive engagement between China and India. Now, it is very dangerous to think that China-India relations are only one-dimensional. No, there is a territorial dispute, of course, which need to be resolved. But the territorial dispute is not the totality of China-Indian relations. You talked about China-Pakistani friendship, etc. Yes, indeed. But I think if we look at sub-Indian continent as a whole, how to achieve lasting peace between India and Pakistan on the one hand, and between China and India, on the other hand, will be the most important thing. And I think if we are seized up by these territorial disputes of any kind, without enjoying lasting peace between and among these major countries, then it is a dangerous recipe for either China or India or Pakistan. So I think we need to adopt a very macro perspective. And I think Prime Minister Modi and President Xi Jinping said the right thing to restore peace and trust and mutual respect. From the Chinese perspective, there is no lack of respect for India as a country or the Indian nation as a people, for example. We want to do the right thing, to put the territorial dispute behind us. And allow me to emphasize, the territorial dispute is not created by China or India. It is created by the British Indian colonists. Neither China nor India should be held hostage by these very poisonous historical legacy left over by the British, which now still keeps China and India apart. I think we need to have all the courage and vision and wisdom to do the right thing, to put the territorial disputes behind us so that we can move on to solve all the other problems. For example, achieving more balance in our bilateral trade and also achieving lasting peace between China and India, between India and Pakistan, etc. And this will be really in the fundamental interest of all the people of our three countries.
Right. Pramit, let me get you in at this point. There was no discussion there on Press Note 3 or lifting ban on Chinese companies. But in the run-up to this meeting, India and China leaders have been discussing this at multiple levels. Do you think India can have an approach whereby the boundary issue has not been resolved fully, but at the same time, we start lifting ban on Chinese companies like TikTok, make relaxations on Press Note 3? Because the boundary issue is key for us. You know, that has caused a major conflict between India and China in 2020.
So first, I'll disagree with you one point. There is no link between the boundary dispute and India's economic restrictions on China. Press Note 3 was released before the Galwan Valley crash, and it was driven not because of the border, but because of Indian concerns about the People's Bank of China making a bid for 1% of HDFC Bank, India's largest private bank. There were other similar investments by China in what India would consider strategic sectors, especially in the digital and technology side. And India had begun to impose those restrictions even before the border clash happened. They accelerated after that, but understand that I would say that even if we had not had the Galwan Valley border dispute clash, those restrictions on Chinese investment and Chinese presence in the Indian economy would have still continued. China, in return, however, has imposed its own economic restrictions. And three of them were mentioned in the run-up to the present meeting. Tunneling equipment, which is used among other things in the border, but also for bullet train making in India. Fertilizers, diammonium phosphate restrictions were placed on India, though those are also global. And then, of course, permanent magnets, again, a global ban, but licenses began to be issued to Japan and Korea before they began to be at least considered for Indian companies. But there are other restrictions that China has put, and the biggest one, I would argue, now these three are now going to be Wang Yi had indicated that in his trip to India that those three would be lifted, but there are continuing Chinese attempts to undermine the movement of companies like Apple, Foxconn, even a company like Tata Electronics, from working with Chinese technicians, Chinese companies that make components, Chinese technology, some of which is not even Chinese, some of that is actually owned by Apple, and so on. Those restrictions, as far as India can see, are designed to undermine the shift of supply chains from China to India. Those have not been discussed. China has not lifted them. In fact, in July itself, we saw 200 Chinese technicians being called who were working for Foxconn, being forced back by the Chinese government. So we have to see whether those are being seen by the Indian side not just about as a consequence of the border or Press Note 3, but a deliberate Chinese attempt to ensure that India's economy doesn't grow or rise beyond a certain point, especially in certain sectors. The question now is for these two sides: does the politics, the border negotiations, these summit meetings allow the two to come to an understanding in which restrictions on both sides are at least mitigated? I don't think they will ever be completely lifted, especially on the Indian side, because those really are a consequence of a much longer term relationship of trust that simply it doesn't exist and would take a long, long time to come. But at least going back to where the economic relationship lay at roughly early 2020 would be something that I think both sides would be looking for.
All right, that's an important point. Taking back the relationship to where it existed in 2020, before the Galwan clashes happened and before April, as Pramit very rightly said, when India brought out Press Note 3 to prevent hostile takeovers from land border countries, opportunistic takeovers from land border countries. We're going to take a short break, but don't go anywhere. We'll be right back to discuss the outcomes of the Modi-Xi meeting in Tianjin. Welcome back to the special edition of Global Eye. You tuned in to CNBC-TV18. Meanwhile, after that high-stakes meeting between the two leaders on the sidelines of the SCO summit, Chinese President Xi Jinping expressed that the SCO should unite the global south in building an equitable system of governance while outlining measures for safeguarding post the World War II international order. He added that development was key and the ultimate form of security. The president also added that the Belt and Road Initiative served as a key platform for SCO practical cooperation. China's trade with SCO members stands at a record $890 billion, which is 14.4% of total foreign trade as well. Now, we all have with us still Victor Gao, Vice President of the Center for China and Globalization, Chair, Professor at Soochow University, Pramitpal Chaudhary, Head of South Asia at Eurasia Group, and Shrikant Kondapalli, Professor of Chinese Studies at JNU. Professor, let me begin by asking you about Xi Jinping's message for SCO leaders. And this has come via the Chinese state media. Xi Jinping and his vision is that there should be alignment between SCO and the BRI. And do you feel that this is something that would be acceptable to India as well? Because China would want the Belt and Road Initiative, the SCO countries to be more closely aligned, more closer economic partnership. Will India agree to that? Because, you know, we've had speakers through the day who've said that the SCO is a major trade grouping, and at a time when India's US relationship, trade relationship with US is faltering, we can concentrate with SCO to boost our trade.
You are raising a very... Are you asking me or the other panelists?
This is for Professor Kondapalli.
Thank you very much.
Yes, I think Prime Minister Modi mentioned in the Qingdao meeting of the SCO previously that India has reservations on the Belt and Road Initiative. and specifically in relation to the sovereignty and territorial integrity issues of India not considered in the Belt and Road Initiative project. He had mentioned earlier that there was the CPEC projects in violation of the instrument of accession that the Jammu and Kashmir Maharaja had signed with the Indian Union in 1947. So this is illegal and expansionist in design. So India will not accept the Belt and Road Initiative as long as CPEC projects are considered. India has, of course, no objection and is the second largest contributor for the AIIB, Asian Infrastructure Investment Bank, where the projects are of economic value rather than passing through sovereignty-related disputes. So on the issue of whether India will support China on the BRI, there is a definite no. All the successive governments in India have opposed the CPEC projects because it violates the Indian sovereignty. And since China is also concerned about sovereignty issues, India is reminding China that it cannot adopt double standards in violating sovereignty issues of other countries.
That's an important point. Let me go back to Victor Gao. Victor Gao, for India, the issue of terrorism is extremely important. In fact, we'll wait and see the kind of statement that the SCO makes on the issue of terrorism. Now, while China is reaching out to India with an olive branch, we also have to factor in historical tensions. There were tensions during the Doklam crisis. There were tensions during Galwan. China and Pakistan have a historic relationship. And we also saw support for Pakistan from China during the recent conflict during Operation Sindoor as well, from the 6th to the 9th of May. Now, how does India give up all of that to rethink the partnership with China? What has really changed in the last 3 months, apart from what Trump has been doing through tariffs, that would make us believe that we should accept this outreach by China and work towards closer economic integration?
Thank you. You are raising another very important question. I think, allow me to emphasize one point. SCO probably is the best regional cooperation framework which can deal with terrorist attacks, because SCO was started with the intent to fight against terrorism of all kinds in this particular part of the world. Now, 25 years have elapsed, and I think we still need to commit ourselves to fight against terrorism of all kinds. And that involves terrorism inside India or in Kashmir or in Pakistan or in China or anywhere involving any members of the SCO. So I think while India is complaining about terrorist attacks resulting in losses of life of the innocent people in India, I would say let's use SCO as the major framework to deal with these issues and really get to the bottom of that, to make sure that all members of the SCO should be united with one aim, that is to fight against terrorism and take out all the root causes which give rise to terrorism. That's one thing. Now, the second thing is that you talked about China and India and the United States. What President Trump has done to India is complete disrespect for India as a country and the nation of the people in India. Now, all the threats and the intimidation and the blackmail and the ultimatum they issued against India show that they do not respect India as an independent sovereign nation. And they kind of dismiss India. Now, if you look at anything and everything that China has been doing with India, ever since the People's Republic of China was founded back in 1949, China has never displayed any disrespect to India as a country, to the Indian nation as a people, for example, or the Indian civilization. What we are uncomfortable with is the territorial disputes, which still remain unresolved. And China will never accept the McMahon line being taken as the border between China and India. And that gives all the reason between China and India to do the right thing, to engage with each other, to solve the territorial disputes. In eternity, in perpetuity for mutual benefit. That means if you compare China versus the United States, no, China does not have a separate agenda against India. China wants to engage with India for the benefit of both China and India. Now, allow me to make another very good point. India wants to restructure the United Nations and become a permanent member state of the Security Council of the United Nations. Allow me to mention one thing.
Okay.
That gives more reason for
Mr.
India
Gao?
to befriend China rather than estrange itself away from China.
All right. Mr. Gao, I've completely run out of time, but I'd like to thank our guests, Professor Kondipalli and Pramit Pal Chaudhary and Victor Gao for also joining us. We've completely run out of time. But indeed, it is an important meeting which will set a new agenda for ties. How much can the two sides trust each other going forward? That's something that remains to be seen. With that, it's a wrap on this edition of Global Eye. Thank you for watching. Goodbye.
Hello and welcome to Business 360. I'm Shireen Bhan. The headline that we're tracking for you this evening: Prime Minister Modi wraps up the SCO summit after resetting economic ties with China and affirming a long-term partnership with Russia. In their first meeting since the US tariffs, Prime Minister Modi, Russian President Putin discussed expediting an end to the Ukraine conflict and finding a durable peace settlement. Partners, not rivals. India and China reset bilateral ties and announced economic re-engagement after a summit between Prime Minister Modi and President Xi Jinping. Direct flights and border trade set to resume. The joint declaration at the SCO summit condemns the Pahalgam attack and calls for the perpetrators, organisers and sponsors to be brought to justice. Stops short of naming Pakistan. Prime Minister Modi calls the Pahalgam attack an assault on India's soil, with Pakistan's Prime Minister Shehbaz Sharif present in the same room. The Sensex and the Nifty start the week on a positive note. The Nifty reclaims 24,600. Mid-cap index gains 2%. The rupee hits a record low against the dollar but recovers in late trade, ending flat. Gold and silver prices in India rally to record highs. Hopes of a rate cut in the US and inflation data fuel a global surge in prices. 48 hours to go for the GST Council to meet on revisiting the tax slabs. Consumer-facing businesses hope for tax cuts to boost sales this festive season, as small cars, two-wheelers, white goods, garments and apparel likely to get cheaper. The auto industry bats for a uniform GST rate across the sector. Royal Enfield maker Eicher Motors says a differential tax structure could damage India's rapidly expanding mid-capacity motorcycle market. The garments and apparel sector also clamours for a uniform GST rate. The rules of the Online Gaming Act, which bans real money games, is yet to be notified. The government asked banks and fintech companies to facilitate the refund of deposits to users. Companies had flagged challenges in issuing refunds due to banking restrictions. The Supreme Court dismisses a petition challenging the government's decision to blend petrol with 20% ethanol. Government argues forces beyond the country cannot decide what class of petrol needs to be used. More than 800 people are killed and thousands injured after an earthquake jolts Afghanistan. Widespread damage in the city of Jalalabad and several villages completely destroyed, according to the Ministry of Public Health. The Maratha reservation protests in Mumbai enter the fourth day. An estimated 40,000 people have gathered in South Mumbai, bringing traffic to a halt. Reports suggest some protesters harassed women, including journalists and commuters, in trains. The Bombay High Court says the protesters must be removed from all places except Azad Maidan. Well, the top story this evening, Prime Minister Modi wrapping up the SCO summit in Tianjin after resetting economic ties with China and affirming a long-term partnership with India. The shift in ties, which had reached a historic low past the Galwan Valley clashes in 2020, comes amidst India's tariff standoff with the US government. Prime Minister Modi, Russian President Putin and China's Xi Jinping were seen exchanging gestures as they came together under the same roof for the first time since US President Donald Trump escalated his tariff offensive. The SCO members signed a joint declaration that condemned the terrorist attack in Pahalgam in April and called for the perpetrators, organisers and sponsors to be brought to justice. However, the declaration stopped short of naming Pakistan. Remember, Pakistan is also a member of the SCO and all member states need to vet the text of the joint declaration before it is adopted. Addressing the summit, Prime Minister Modi called the Pahalgam attack an assault on India's soul, with Pakistan's Prime Minister Shehbaz Sharif present in the room. He asserted that the SCO must clearly and unanimously reject double standards on terrorism. The Prime Minister and PM Sharif were seen in the same frame at the traditional SCO family photo. However, there were at least 8 leaders between them. The Prime Minister also held a bilateral with Russian President Putin. We learned from sources that the formal meeting went on for about 50 minutes, where both sides discussed expediting the end to the Ukraine conflict and finding a durable peace settlement. The Prime Minister said India and Russia have always stood shoulder to shoulder. President Putin said that both India and Russia are closely coordinating efforts at an international level. In a rare occurrence, both leaders were seen travelling together in a car for their bilateral discussions. The Prime Minister and President Xi, meanwhile, discussed ways to balance bilateral trade. They noted that their partners are not rivals. The two countries will resume direct flights and border trade.
आपको मिलना मतलब एक यादगार मीटिंग भी होती है, बहुत सी चीजों की जानकारियों का आदान प्रदान करने का अवसर मिलता है। हम लगातार संपर्क में रहे हैं। दोनों पक्षों के बीच नियमित रूप से कई उच्च स्तरीय बैठकें भी हुई है। इस वर्ष दिसंबर में हमारी 23वीं समिट के लिए 140 करोड़ भारतीय उत्सुकता पूर्वक आपका इंतजार कर रहे हैं। एक्सेलेंसी हमारी स्पेशल एंड प्रिविलेज स्ट्रेटेजिक पार्टनरशिप की गहराई और व्यापकता का परिचायक है। कठिन से कठिन परिस्थितियों में भी भारत और रूस हमेशा कंधे से कंधा मिलाकर चले हैं।
Усилия по созданию в Евразии архитектуры равной и неделимой безопасности.
यूरेशिया में समान और अविभाज्य सिक्योरिटी सिद्धांतों को बनाने के लिए प्रयासों के लिए एक मंच प्रदान करता है।
Well, Prime Minister Modi there in his bilateral meeting with Vladimir Putin. Joining us now to take us through the key takeaways from the SCO summit is our colleague Parikshit Luthra. Parikshit, it's been an action-packed 2 days. The Prime Minister meeting with President Xi Jinping, also with President Putin. Take us through the big takeaways. What's the headline coming in from the SCO summit?
Well, Prime Minister Modi and President Putin spent almost 2 hours with each other on the sidelines of the SCO summit in Tianjin. The warmth in ties was visible, with Russian President Putin waiting for about 10 minutes for Narendra Modi to join him in his presidential limousine so that the two leaders could travel together to the bilateral meeting venue. The formal meeting itself was a good 55 minutes long. The leaders discussed bilateral cooperation, including the economic, financial and energy sectors. They spent a considerable time discussing the Russia-Ukraine war. PM Modi conveyed that India and Russia always stand shoulder to shoulder, even in the most difficult situations. Modi said that India was looking forward to hosting the Russian president for the India-Russia summit in December. On the Ukraine war, the Prime Minister emphasized the need to expedite a cessation of the conflict and find a durable peace settlement. Ahead of this meeting, all three leaders of Russia, India and China had a brief exchange on the sidelines of the SCO summit. The three leaders were seen in the lounge having a conversation and sharing some light moments as well. Pakistani Prime Minister Shehbaz Sharif was also at the SCO summit, but there was no conversation between him and Prime Minister Narendra Modi. Even at one point, they were all in the leaders' lounge and Prime Minister Modi and Putin were walking together and they walked by Shehbaz Sharif and the Prime Minister did not acknowledge him. The Prime Minister also had a 55-minute-long meeting with Xi Jinping on Sunday. Both leaders took note of the successful disengagement at the border and also the need for peace and tranquility in border areas. The Prime Minister underlined the need for continued and smooth development in bilateral ties as well. There was a discussion on increasing policy transparency and predictability in economic relations between the two countries. Both Prime Minister Modi and President Xi discussed the international economic situation and the challenges. Of course, US tariffs were also discussed. Overall, the focus was on how to leverage the current global order, challenges in the global economic situation, and use it to the advantage of China and India.
Well, Parikshit, many thanks for joining us. The big takeaways there from the SCO summit. And just minutes before that meeting between Prime Minister Modi and President Putin, the US Embassy in India posted a statement from the Secretary of State, Marco Rubio, America's top diplomat. And the statement said, and I quote, "The enduring friendship between our two peoples is the bedrock of our cooperation and propels the US forward as we realize the tremendous potential of our economic partnership," end of quote. This is a departure from the statements that have been coming in from Washington, from people like Peter Navarro and, of course, Scott Bessent and many others. Now, President Trump has claimed that without tariffs, the U.S. would be completely destroyed and its military powers will be obliterated. His comments came after a federal appeals court struck off most of the tariffs imposed by the Trump administration, saying that they're not in accordance with the law. The court said that Trump overstepped his authority under the International Emergency Economic Powers. However, all tariffs continue to remain in place for now as the court has delayed the enforcement of the ruling till October. This means the Trump administration has time to appeal with the Supreme Court, which is exactly what it now intends to do. On to the stock market action for the day. The Sensex and the Nifty started the week on a positive note. The Sensex up by about 550 points, the Nifty up by about 200 points, reclaiming 24,600. The mid-cap index up by about 2%, and the Nifty Bank higher by about 340 odd points. So that's the market story for you. Surabhi standing by now to wrap up the week that is starting for the Lal Street. Positive Monday, Surabhi.
Well, it was a good day of trade after a long time, after what was a very disappointing week. This was a great start. Perhaps some excitement coming through because of the upcoming GST meeting. Perhaps it was all the geopolitical moves around the SCO summit. But overall, we had a trending up day after a very long time, a 200-point move on the Nifty, taking the index to the 24,600 mark once again. The other good aspect was that this was a very widespread move. It was not led by only 4-5 large cap stocks, but it was across the board. In fact, the mid-cap index did even better than the Nifty. It was up almost 2%, and the advance decline ratio was very, very strong, with over 2,000 stocks advancing in trade today. Now, if you talk about the sectoral mix, then auto stocks really led from the front, and I'll come to the individual moves in just a bit. But defense, consumer durables, metals, a lot of these sectors added to the good cheer. Even IT saw some good buying today, following a positive note that came in from CLSA. Now let's talk about the key Nifty gainers. And first, the auto majors. It's across the board. Mahindra & Mahindra, 3.5% higher. Bajaj Auto, Tata Motors, and even Eicher Motors, despite that comment coming in from Mr. Siddharth Lal on Eicher, of course, being a little worried about higher GST on motorcycles above 350cc. Even that stock managed to rally pretty well in trade today. Other gainers on the Nifty included the likes of Infosys, Tech Mahindra, Trent, Eternal. So there's a bit of everything in terms of flavor. The losers, the actual pure play FMCG companies like HUL, ITC was down, and Sun Pharma was down about 2% today. The electrifying performance from Ola Electric as well as Ather Energy deserves a special mention. Ola has been surging for the past couple of weeks, and today was no exception. Double-digit gains coming in on Ola. And Ather, after some positive commentary coming in from the company and them saying that they're not looking to sell EVs below the price tag of 1 lakh rupees, that helped the stock. It was up almost 8% as well. Other interesting movers in the mid-cap market, like I said, it was very, very buoyant. Zydus Wellness on an acquisition, Rights on an order win, Keynes on very positive commentary on the way their semiconductor business is moving along. They're on track to start shipments by the fourth quarter of this year. CG Power and a couple of travel-related stocks like Lee Travenews, which is the company that runs Ixigo, and even RateGain had a big bump up. So a very good market, all-round buoyancy. Good way to start the week.
GDP is growing, savings are growing, and on top of it, participation is growing. So this combination of both is just explosive in terms of demand for the paper in the economy. Now, just because there is a demand for paper, stock markets are not going to go up. It is going to go up when the economy does well and when the earnings start climbing, which is what we expect in the second half of the year, or particularly the next year. I think we are going to see bumper increase in the earnings by maybe 15, 17, 18%, depending on the slew of reforms which is implemented.
A bumper increase in earnings next year. That's Ramdeo Agarwal on the back of the GST boost. Now, from stocks to commodities, gold and silver prices in India have hit fresh record highs. Global prices hitting multi-year highs on increased expectations of a cut by the Fed this month. Manisha standing by to take us through what is turning out to be one of the best years for precious metals. Manisha.
Well, yes, 2025 seems to be going down as one of the best years in last 5 or 6 years that you've seen for gold and silver. For the Indian markets, the gains are even more so because the rupee has depreciated quite strongly. For the international markets as well, we are trading at multi-year highs when it comes to gold and silver. So for gold prices, we are very close to basically $15 $22 away from its all-time highs of $3,500 an ounce. For the Indian market, we've been making record highs as a string for last 3 or 4 trading sessions now, with 1,05,000 rupees per 10 grams now broken on the higher side. For silver at $40 an ounce in the global markets, we are at a 14-year highs. But for the Indian markets, we are trading at around 1,23,000 rupees per kilo here. So when you look at gold, we are up by 33% in this year. When you look at silver, we have gained up by nearly 40% in this year. That chart should come in on your screen, which tells you on how the gold prices have gained in last many years. And this is a 5-year gap that I have taken in. And as you can see, in the last decade or so, the prices have kind of doubled every 5 years. Last year, same time, when you look at the gold prices, we were trading at a 75,000 rupees. We are trading at 1,05,000 right now. So very strong gains coming in. And then the chart shows you also the kind of gains that we have seen. The last time we saw a negative was in 2021. And the last time you saw 33% gains were many years back. So very strong gains continuing into this one. Same is the case with silver as well. Last year, same time, we were trading at around 80,000 rupees per kg. We are trading at 1,24,000 rupees right now. And when you look at the kind of gains that we have seen, 2020 saw 46% of gains in silver, and after that it is in 2025 that we are standing at 40% tall here. Markets do believe that it has to do with the uncertainty, strong investment buying also by central banks, expectation of US Fed rate cuts come the month of September, and the weakness in US dollar index, all very supportive for a safe haven buying in precious metals.
Manisha, many thanks. 48 hours to go for the GST Council to meet on revising the tax slabs. Consumer-facing businesses hoping for tax cuts to boost sales this festive season. India's manufacturing activity grew at the fastest pace in 17 years in August, as per the HSBC India survey. Manufacturing PMI climbing to 59.3 in August as against 59.1 in July. And this improvement has come on the back of growth in new orders and production, which led to more input purchasing and hiring by companies. However, export orders grew at a slower pace despite remaining robust by historical standards. Now on to the August sales data. For the auto sector, strong demand for commercial vehicles and two-wheelers propelling Motown in the last month, but car sales remain in the slow lane as companies cut inventory ahead of the GST decision. Sudarshan Kumar here now to wrap up the month that was for auto. Sud.
So a festive cheer ahead of the festive season, that's what looked like from the auto sales for the month of August, and that helped auto index rise up to 3%, and all the top 5 Nifty gainers were from the auto pack, from Bajaj Auto, Hero Moto, Eicher. All those stocks were up somewhere in the range of 3 to 5%. So we'll start with two-wheeler companies. Bajaj Auto reported sales that were largely in line with estimates. Total sales have come at 4.17 lakh units against our expectation of 4 lakh units, and those sales were up 5% YOY. While domestic sales have slipped, but that also was largely in line, and exports and three-wheeler segment continue to do well. For TVS Motor, except EV, all the segments have seen a double-digit growth, and it was a strong beat against our expectations. So total sales have almost risen 30%, and some of the segments have risen almost up to 47%. For Eicher Motors, company's thesis of growth over margin continues to play out, and that helps company report growth of almost 55%, and total sales have come at 1.14 lakh units. Export contribution, while it's minimal, but again, it continues to see a healthy growth. In the four-wheeler segment, after several months of outperformance this month, M&M Auto segment reports sales that were below estimates. And there is a reason to it. Company is saying that ahead of GST decision, it has decided to decrease the wholesale billing that impacted the sales of SUV, which has seen a decline YOY. For Maruti, both entry-level segment and SUV sales have seen a decline, and that was the reason even total sales were down almost 1% YOY. But in contrary, after several months of underperformance, Tata Motors sales were higher than estimates, and that was led by commercial vehicle. Both truck and bus segment have reported a healthy growth, and good part was even electric vehicle segment has seen highest monthly sales, and were up 44% YOY. For Ashok Leyland, again, similar to Tata Motors, CV segment has done well, and that has helped company report sales that were better than estimates. Now coming to electric two-wheeler, both Ola Electric and Ather Energy continue to do well. Ola Electric is up almost 50% in last 1 month. It's a similar trend for Ather Energy. And for August month, Ola Electric has reclaimed number 2 spot, and month-on-month sales have improved. Similar trend was seen for Ather Energy. For August 2025, company has seen highest ever monthly sales. Now, after strong August month, all the eyes would be on GST Council decision, because we are expecting a GST rate cut for several products.
Yes, that is right. Two-wheelers are likely to see a cut coming in, not for the EV side, because the EVs were already at the slower slab. So many thanks for joining us. But staying with the auto sector, it has called for a uniform GST rate ahead of the GST Council's meeting, which will take place on the 3rd and the 4th. Industry body SIAM urging the government to rationalize rates. Automakers, including Royal Enfield's parent company Eicher Motors, have voiced concerns over a possible different GST rate on premium motorcycles. The centre's proposal includes reducing GST on certain categories of cars, bikes and auto parts to 18% from 28% currently. It's also proposed raising GST on racing cars and motorcycles above 350cc and larger passenger vehicles to keep that at 28%. Meanwhile, the apparel sector is also seeking a single GST rate. Currently, the centre has proposed a 5% GST for ready-made apparel below 2,500 rupees and 18% for those priced above 2,500 rupees. All consumer-facing businesses are hoping for tax cuts to boost sales this festive season.
You look at some auto companies, particularly where the demand is very sensitive to the price cuts, say like motorcycles particularly, say if it comes down from 28 to 18, I mean, you could see massive surge in the demand. My sense is if it is honestly implemented from 28 to 18 for motorcycle companies or entry-level car companies, I think automotive will be one of the segments to watch out for. in next 1 year.
But I think there will be an inventory stocking ahead of the festive season when demand should be much more than normal because of the GST reject. So overall, we believe for the quarter, we should be around 6.5%, if not more. And the deflator will play a bigger role even in the next quarter when WPI is actually running negative right now.
One thing I'm going to look out very closely, is it going to be revenue neutral or not? Because if it's not going to be revenue neutral, it means that rate cuts in some items will be compensated by rate hikes in some other items. And then we have to be very careful, is the net impact going to be positive or not?
Well, that is the big expectation. We will, of course, have to wait to see what is decided by the GST Council. But staying with the GST collections in the month of August stand at 1.86 lakh crore rupees. This is an increase of 6.5% compared to the same month last year. Remember, this is for activities in July and, of course, the GST print coming in on the 1st of September. The Online Gaming Act banning real money games will be notified soon. The nodal minister, Ashwini Vaishnav, met representatives from banks and fintechs today to discuss the rollout. Sources say the government informed companies that legitimate transactions have to be allowed. It also asked them to facilitate refunds of deposits to users. The industry sought clarity on how deposits made with gaming platforms can be returned to players under the banking restrictions. This was something that industry was seeking clarity on. Online gaming app Mobile Premier League will reportedly lay off 60% of its local workforce. As per a Reuters report, MPL will let go of 300 of its 500 India staff in divisions like marketing, finance and operations following the ban on real money games. This was expected. Big relief for the union government. The Supreme Court has dismissed a petition challenging the government's decision to roll out petrol blended with 20% ethanol. Now, the petition had argued that the non-availability of ethanol-free petrol was resulting in mechanical damage and leading to performance issues for vehicles. Defending its stance in the court today, the Attorney General, on behalf of the centre, alleged that there was a huge lobby, quote-unquote, that was opposing the move towards ethanol-blended petrol. The government said it had considered all aspects before taking a decision. That PIL has been dismissed. And before we wrap, Ather Energy has launched its its next-generation scooter platform, which will enable the development of multiple scooters while cutting costs and assembly time. Speaking with CNBC-TV18, CEO Tarun Mehta said that Ather is on track to achieve 20% in market share.
I don't think the market is for products below a lakh.
Okay.
I've never been a...
So at 1 lakh is where you draw the line.
Yeah, I think today our entry portfolio with software is somewhere around 120 plus. So there is a gap between 120 and 100, and I think there are amazing experiences we can build for our consumers there. But for us, the Lakshman Rekha still is our lack. Because I think going below that, we're just leaving money on the table, and we're not putting together enough price to build a good experience for the end consumer.
Your stated objective, at least in the near term, is to get to that 20% share. You're still at about 17%.
I think tactically on that, there are very good signs.
Yeah.
Every market that we've gone deep in under their focus, for example, South, for example, Gujarat, for example, Northeast, Ather has become number one. And these are three very different markets if you think about it. South India, Kerala, Tamil Nadu, Karnataka, Andhra Pradesh, very different from Gujarat, very different from Northeast. In fact, there are towns after towns in even North India. There is Kharagpur, there is, I think, Ludhiana, Amritsar.
So no more South India only brand.
And that's what I'm saying. It is...
So Shurista.
And Shurista. So our bet has been that good products can be built in any category. We will build them. We'll build fantastic experiences. Like we've got a great lens even with the year 01 here today to really build things that are not existing in the categories.
Sure.
We'll always do that.
So 20%?
Should not be a... I think it is in the horizon. I would say that. Because all these other markets, we've crossed 20% and more. 23, 24, 25, 27%.
So overall, you think...
Sure. I think as the distribution expands in the rest of the country, getting to 20% plus is something we can certainly chase now.
Well, that's Tarun Mehta there of Ather. That stock on a tear today. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Don't go anywhere. We're back in a moment with plenty more.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. The rules of the Online Gaming Act, which bans real money games, is yet to be notified. Government asked banks and fintech companies to facilitate refund of deposits to users. Companies had flagged challenges in issuing refunds due to banking restrictions.
Growth stage investor Elevate Venture Partners has marked the final close of its maiden fund at 1,400 crore rupees, about 20% lower than its initial $200 million target. The growth stage investor has already deployed one-third of the corpus through investments of $8 to $14 million each across 5 startups.
Tessolve, an independent semiconductor engineering services company, has secured $150 million in funding from TPG. Tessolve will use the additional capital to strengthen global delivery centers, expand advanced test labs, and accelerate strategic acquisition.
OpenAI is scouting local partners to set up a data center in India with at least 1 gigawatt capacity. Bloomberg News reports OpenAI has formally registered as a legal entity in India and has begun building a local team. The company plans to open its first India office in Delhi later this year.
Google is set to face a modest EU antitrust fine in the coming weeks for allegedly anti-competitive practices in its ad tech business, Reuters reported. The fine will likely not be on the scale of a record €4.3 billion penalty imposed on Google by the EU competition enforcer in 2018 for using its Android mobile operating system to quash rivals.
On what's brewing today as India's electric two-wheeler market accelerates, Ather Energy is gearing up for its next growth phase. The Bengaluru-based startup has now climbed to the number 2 spot in India's EV scooter market. Its CEO and co-founder Tarun Mehta tells CNBC-TV18's Ritu Singh that a 20% market share is now on the horizon and lays out expansion plans to get to 700 stores by the end of the fiscal. Also details a newly launched EL platform in this exclusive chat. Take a look.
Motorcycles are there in the radar?
Yeah,
preempting that.
Yeah.
Motorcycles are there in the radar. We do think this is now the time to go deep and invest in the R&D for that platform. Like how we've invested in the EL platform R&D, the new scooter platform R&D over the last 2 years.
Yeah.
We think now is the time to invest in very deep motorcycle R&D. But I would say an actual product launch is at least 1, maybe still 2 years away.
Okay, 1 or 2 years away. But, you know, as Ather, you've projected yourself as this premium market player, so to speak, in the EV space. With Rista, you know, some would call it a more mass market product.
Sure.
Now with the launch of your EL platform, which you say will be more cost effective for the company, should we expect a bit more push, strategic shift towards a more mass market segment?
It's possible, certainly. We announced a lot of things on EL today that lower the cost of the platform considerably. They lower the material cost, they lower the assembly cost, they lower the servicing cost. So overall, and we are also going to produce this out of a much larger integrated facility in Chhatrapati Sambhajinagar, Aurangabad.
Yeah.
So all of that does help and create a situation where we can price our products more aggressively. Obviously, we're not announcing price today, and obviously we're not giving you a specific thing, but I will acknowledge that. Yeah, I think EL does give us the ability to price products more aggressively.
Yeah.
Having said that, I'll also say I don't think the market is for products below a lakh.
Okay, so the new scooters, the range of scooters that do come out in the EL platform will not go below 1 lakh rupees.
Lakshman Rekha.
Okay, Lakshman Rekha, got that. You know, the other big news recently that's, you know, from the Vahan data that we see, you've climbed up to the number 2 spot just, you know, after TVS and ahead of Ola, Bajaj and Hero and the others. How confident are you of maintaining that kind of a lead, staying at that position, if not improving it further, especially given how some of your rivals do often resort to heavy discounting, something you haven't done much of, you know, to boost sales and have other advantages as well?
So we have the opinion that margin is not our lever. We don't play on margin. We don't hence play on discounts.
Yeah.
What we win and lose on are our products and the experiences we build for the consumers.
Yeah.
We didn't discount 450 to win market share. We built Rista, a product that is fundamentally lower cost and can target a larger market.
Yeah.
We will build EL as a product that is even better cost structure. We'll not just take Rista and discount it by 10-20,000 rupees to win market share.
Okay.
So that's how we've
Yeah.
Okay, and that's how we've always gone about it. So I don't think discounting is something you should expect us to do seriously.
Sure.
Right?
I mean, I get your point. You're not going to win the market on discounting and on pricing.
Yeah.
But talking about market share, coming back to that, you've gotten to number 2.
Yeah.
That's a place you think you can maintain with a wider lead?
I don't know. Somebody else could do something else. Honestly, it's not my business to predict what others would do. I think my business, it is my job to do to build great products, build them profitably, and keep scaling them.
20%?
Should not be I think it is in the horizon. I would say that.
Okay.
Because all these other markets, we've crossed 20% and more. 23, 24, 25, 27%.
And now that you're a publicly listed company, the next milestone investors are looking for is when you turn profitable.
Yeah.
Is that looking any clearer with the kind of cost efficiency also you bring in with your new platform?
On the unit economic side, I do believe EL will play a pretty substantial role in the next 2 years in expanding margins because of its fundamental cost structures. And you will notice with this concept here, that lower cost is not coming at the expense of a poorly built vehicle or an entry-level vehicle. In fact, I think by almost all accounts, most people have called it more premium than almost everything else that we've done today.
Okay.
So I do believe EL will play a substantial role in expanding gross margins further.
Okay.
And operating leverage is anyways continue to kick in because scale is going up.
Yeah.
We've already capacitized our R&D substantially. So we don't expect that to continue scaling up. So overall on the fixed cost side, we don't expect a substantial increase any longer.
Yeah.
But volumes are growing up really well.
Yeah, true. But what you don't have is the PLI certification.
Yes.
You didn't qualify for that. That's one big benefit you're missing out on.
I think, and that's one feedback I keep bringing up for policymakers. A company like Ather, which has invested one of the highest in the world on R&D in electric two-wheelers, which has one of the largest teams out there, which is running the largest infrastructure. Literally, the Indian standard is the Ather standard, and is the number 2 player today, and has put out the highest capex. To not qualify for PLI means, I think we should really revisit if the definitions were ever startup friendly.
But anyway, you don't want to cross the 1 lakh rupee Lakshman Rekha to begin with.
Yeah, because I don't have PLI.
Because you don't have PLI. So if you got PLI, we would see a lot cheaper.
No, I think I'll rather Lakshman Rekha at 1 lakh.
Okay, finally, since you say your Redux, which looks like a motorbike, but it's not a motorbike, it's a motor scooter. The launch of that is a few years away. The new scooter is 1 year away. Big things to look forward to in FY26. Whether that is margin improvement, any new launches, any.
You should expect to see,
I
think we've been doing a lot of work on gross margins. We've been doing a lot of work on quality. With Ather Stack, there's substantial work that's now happening in software. We've launched 2 new variants of Rista and 450 each, higher range variants. And ultimately, it's more stores. The story in FY26 for us is, simply put, expanding distribution. We are going to take this business from 200 stores to 400 stores and eventually 700 stores through the course of this year. And that's the biggest piece that anybody should plan for us.
And moving on, India's love for biryani is going global. House of Biryani, one of the country's fastest growing food tech platforms, has raised 32 crore rupees in a growth round backed by marquee investors, including cricket icon MS Dhoni. Founded by Michelin-starred chefs, HOB is on a mission to make biryani the next global food phenomenon alongside pizza and sushi, with plans to scale from 22 kitchens today to 150 outlets in the next 3 years. And with international expansion already underway in Dubai, House of Biryani is combining tech, culinary expertise and brand loyalty to create a truly global biryani powerhouse. Joining me now to discuss the brand's growth plans is Mohammad Bol, the co-founder of House of Biryani. Mohammad, thank you so much for taking time out and being here with us on Startup Street. First up, House of Biryani has just raised 32 crore rupees with marquee backers, including MS Dhoni, right? So what does this round mean for your growth ambitions?
So firstly, I would just like to say, it's been a very difficult time, especially for cloud kitchens and food brands in general. If you track the funding space and the interest that has been, it's been quite tepid the last 2 years. But I think, having said that, one thing that really worked for us was listening to our consumers. And if you actually see the philosophy that House of Biryani is on, is we want to make biryani cool again. So majority of our consumers are Gen Z, and they don't like to be told on how to eat their biryani. Our flagship, you can say, marquee category is Meri Wali Biryani, where a user can kind of assemble their own biryani, which nobody else in the market is doing. And I think that is something that differentiates us from the others. As a core philosophy, we do not want to keep indexing on the Indian heritage authenticity. I think that space has already been taken up. And if you really ask me personally, I feel on the Indian story side, I think we've kind of overhyped it. What we really need is, or what the world needs, what we believe, is a global biryani platform, which serves you product that can be customized and slightly a little more universal to palates, irrespective of whether you're an Indian or not. So that's the mission we are on. And with that, we've just launched in Dubai a couple of weeks back.
So, coming to that, you're calling your firm the Chipotle of biryani, right? What does that vision sort of look like in practice, and how do you, plan to build a truly global brand? Like, you've started Dubai now, where else will we see you?
So firstly, when people talk about expansion, everybody talks about product market fit. If I were to give you the analogy, think of what happened to Mexican food pre and post Chipotle, right? Now, globally, Indian food is something people are aware of, but there is not an Indian brand which is probably giving you a universal product, which is similarly to what a Chipotle does with Mexican food, right? Recently, you have a brand called Kava, which has done this with Mediterranean food. And our philosophy is that, look, it's not about diluting the product, but it's about creating a product which has more universal appeal. Like, for example, the biryanis that we create. Fun fact, we've got 21 biryanis, but our 70% of the revenue is one biryani, which has actually no traditional spices of what normally you put in a biryani. So my point is that, look, the world wants to experience Indian food, but they want to do it in a way where it's not too intimidating, not an adventure. And they want to basically make it, you have to bring the cuisine to a point where it is probably okay for people to consume 2 and 3 or 4 times a week. And for that, you have to slightly tone things down and think of it like chicken rice, right? Chicken rice is super globally accepted. So why is biryani not had its, day in the sun with the same level of scale as these global QSRs are? And I think that's the mission HOB is on.
Absolutely. So 22 biryanis, and the most famous one is the one without too many of those spices. But, from 22 kitchens today to 150 outlets in the next 3 years, what's the sort of playbook that you have for scaling this fast while also staying profitable? If you could quickly tell us, because we're running out of time.
Sure. So firstly, I think we are going to be moving away from just a delivery-only format. We are testing out formats where, a user can go to an unmanned kiosk and probably swipe his credit card and select his biryani and, consume it within 5 minutes. The idea is to create these mini distribution biryani vents and do this the vision is to do this, find 30 of the most populous, densely populated global cities in the world and figure out a supply chain backbone and scale this to these cities with a product which has slightly more universal appeal and more Gen Z look and feel.
And, you're already EBITDA positive in your core markets, right? A rarity in especially food tech. So what's driving this capital efficient model, and how will you sort of sustain it as you expand globally? And also revenue-wise, where do you hope to end this year?
So revenue-wise, our aim is to at least go north of 120 crores this financial year. And the reason why we are so unit economic positive is purely because our repeats are very high. So our repeats are around 55%, 55 to 60%. We do not need to push a lot of discount. That is, I think, one of the main reasons why as a brand or as an org, we are super profitable, because we are not really chasing or boosting top line by giving discount or ads for that matter.
All right, Mohammed, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey of yours to make biryani a global phenomenon.
Yeah, we'll do our best. Thank you. Thank you for having us.
With that, moving to our What's Brewing segment, from a homegrown prototype in Bangalore to Time's Best Inventions Award, Cradlewise, a tech-driven hardware company, is redefining smart sleep solutions for infants. Now, with over 30 million hours of baby sleep data and a new factory in Pune, it is taking its Made in India designed for the world vision global. Joining me now to talk about building a cross-border hardware startup and the India edge in deep tech manufacturing is Radhika Patil, co-founder and CEO of Cradlewise Credelwise. Radhika, welcome back to Startup Street. You and Bharat built the first prototype in your Bengaluru home in 2018. Today, Credelwise is a globally recognized brand endorsed by Time and Sam Altman. What did it take to go from a personal idea to a world-class product?
Yeah, thanks, Shruti, for having me again. It's a pleasure. Yes, I mean, the journey has been very tough, honestly, because you're building for the most nuanced category, the parents, right? So one of the things that has helped us being extremely customer obsessed, because there is no scope for having a beta product. Like you don't have the luxury of having a beta product. So launching to the early adopters, listening to them day in and day out, and just being customer obsessed has helped us build this global scale.
Right. Radhika, you recently set up your own factory in Pune, moving manufacturing from China and Vietnam back to India. Elaborate on what this shift means for your supply chain and scaling strategy.
Yes, we built a state-of-art facility in Pune to scale the manufacturing. It was not just the scaling, but scaling with quality. And also for an innovative product like us, we just need better control so that we have faster cycles on innovation. So definitely the advantage of our manufacturing talent and the push by the PM on Make in India has really helped us take this decision as a next business move for us. So just leveraging the manufacturing talent and the proximity to the ports has been strategic in choosing Pune as the location. And as I mentioned, right, it's the faster innovation cycles that helps us, and also our commitment to the quality as we build a baby tech, world-class baby tech product.
Okay, speaking of Prime Minister Modi, he often says, Make in India, design for the world, and you've lived that motto with Credelwise. How do you balance, Radhika, building for Indian parents with designing a product that resonates with families across the US, Canada, and soon the UK and Australia as well?
Oh yes, oh yes. It is very difficult. It's like A.R. Rahman's song. It's loved across borders, right? And building for babies is you have to take the cultural aspect into because it's such a lifestyle and a cultural thing, right? Raising your own child is having so many nuances, and customizing the product for global markets and Indian parents. I think so. What has really helped us is the founder product fit here, right? We as parents can address these concerns upfront, and also we launched in the global market, so we got to test across cultures. And what we have done here is that apart from our Smart Soothe technology that where basically puts sleep on autopilot, we have given a lot of customization, because not only it's the cultural thing, even the baby kind of changes every week in its sleep patterns. So the cradle kind of grows with the baby.
Okay. You've often spoken about the role Credelwise can play in supporting working parents. Do you see Indian companies incorporating Credelwise into their employee benefit programs, just as they do with, healthcare or childcare allowances? Could this be a new way India steps up for young families?
Oh, yes, absolutely, Shruti. I think so. India Inc. is leading the way, and Indian government with the 26 weeks of maternity leave. I think so. It's one of the most pro policies, and I did not have it when I had my first kid. But yes, I'm very happy to see that the parents of today are getting this luxury of being with the baby. I think the most stressful period for parents is the transition, right? When you are starting back work, and then how is it going to work without me? And the good night's sleep is what the India Inc. can help fund and help support. In terms of mental health, productivity, and even retention, right? I think so. It will make a huge difference in terms of your bottom line if you support parents and if they come just more confident and refreshed. Apart from that, I think what really plays a role is that it's just that you can have help during the day, but during the nighttime, you need those quiet hours, and Credelwise could be a helping hand.
Absolutely. You know, very quickly, headquartered between San Francisco and Bengaluru, Radhika, you're running a cross-border startup. What is the biggest challenge and the biggest opportunity, and how do you stand apart from global incumbents in baby tech?
Right. So for us, cross-border has worked out amazing because of the talent and the manufacturing expertise that we have in India, and having access to the global market and testing, and being on our toes in terms of the certification standards, right? And having the global platform as our marketing leverage. So for us, it has worked out amazing with the talent from India and the manufacturing expertise that we get in, and having access to the global market. In terms of, we are living, obviously it is just like living across 2 time zones at the same time, but wouldn't have done any other way.
Okay, one final question before I let you go. Cradlewise has tracked over 30 million hours of baby sleep data. Radhika, how are you using this massive data set to sharpen your AI, and what's next in terms of product innovation?
Yeah, so this is one thing that, a lot of, the tech innovation lacks is baby sleep data. For adults, it's extremely easy. And now with all the wearable devices and your smart beds, it's very easy to have adult sleep data and to process that data. But for babies, it's very difficult, right? You don't want too many attachments and something touching the baby. So with the contactless monitoring that Cradlewise gets, we have the largest data set for baby sleep, and it helps us power some. I can just give you a cry classification. Why is my baby crying? Or even customizing your sleep pattern and giving. Now the next thing that we are working on, can we coach the parents on what is the right sleep schedule? And where the AI is not just on your laptop and co-pilots while you're working, but AI is actually at your home helping you with sleep.
All right, Radhika, we've completely run out of time, but many thanks for joining us on Startup Street today, and wish you the very best with all your expansion plans.
Thank you so much, Shruti. Thanks for having us.
On that note, it is time for us to head into a short break. But coming up next, few Indian brands have managed to turn design into a global identity. Nicobar is one of them. Started in 2016, it has grown into 200 crore rupee profitable business with 25 stores across India. We check in with the firm's founder to find out more.
Welcome back to Startup Street. Few Indian brands have managed to turn design into a global identity. Nicobar is one of them. Started in 2016, it has grown into a 200 crore rupee profitable business with 25 stores across India without venture capital. Aishwarya Anand brings you the story of how this contemporary lifestyle brand is redefining modern Indian design. Take a look.
I'm sure many of you have seen one of these. Maybe you gifted it to a friend or spotted it in someone's kitchen. Simple, elegant, and somehow familiar. Well, that is the design language of Nicobar. But what most of us don't know is that everything that Nicobar makes begins here at a farm in Chhatarpur, where Nicobar's entire philosophy of slow, mindful living takes root long before it reaches the shelves of the stores. Rahul, can you take us back to the inception story of Nicobar in 2015? What was the gap that you were trying to solve, and why the idea of modern living?
Core idea was, why do we only manufacture for the rest of the world? Why can't we create brands that stand for something from India for the world? In just the way that IKEA represents, let's say, Sweden or Scandinavia,
Correct.
Muji represents Japan,
Correct.
where is India's signature for the world?
Raul Rai and Simran Lal found inspiration during travels in Sri Lanka, where Geoffrey Bawa's tropical modernism posed a question. What could be India's own design language? That idea became Nicobar's North Star.
Simran made the statement that India has the longest coastline in the world, and yet there isn't a distinctive tropical signature from India.
Correct.
And so she said, everything we'll do will be inspired by journeys across the Indian Ocean.
After 18 months of research, the brand launched in 2016 with 3 categories: home, clothing, and travel.
Now walk us through the journey of a product, okay? From idea to store shelf, how much time and investment does that typically take?
It's almost a 8-9 month cycle. We start with deep research on coming up with the story. And so this could be a collection inspired by the plains of Bengal. That's put together by the creative directors, and then the product team start reinterpreting it. We probably end up investing, for every new drop that we do, potentially 3 to 8 crores. We use recyclable glass, jute, something in our brand that is just a little more in sync with the planet.
Here's where the script really flips. Nicobar has grown to over 20 stores across India, in Mumbai, Delhi, Bangalore, and even Lucknow. But they've done so without raising a single rupees in venture capital. No flashy ad campaigns, no celebrity endorsements, just organic growth.
Our retail stores turned profitable within the first couple of months. So Nicobar has just hit about 200 crores of revenue. Of that, 65% comes from our stores and 35% comes from online. 99% of that online revenue is on our own platform. Recently launched on Tata Click Luxury as our first third-party platform.
From Bengal weaves and Chanderi silks to Firozabad glass and Moradabad brass, Nicobar's supply chain is entirely artisan-driven. No factories, just design-led, craft-powered production. That philosophy defines its pricing too. On average, products sell for about 2,500 rupees with a basket size of 3,000 rupees and order values between 7,500 and 8,000 rupees.
Nicobar isn't just looking at today. They're investing in material innovation, experimenting with recycled fabrics, modular design, even AI in sourcing and customer interaction. While homeware and gifting remain core to the business, the company feels its next big growth is going to come from categories such as menswear, jewelry, and travel. With camera person Gaurav Tyagi and Lakshman Singh, Aishwarya Anand for CNBC-TV18.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
my childhood passion, and I'd been an aero modeler since I was 7. And in many ways, I consider myself to be a child of DRDO and HAL. We have to remember an aircraft and a spacecraft are crafted, and that's why there's craft in the word aircraft. So we find these children of painters, sculptors, weavers, basket makers, and we take these children when they're around 15 or 16, and for 3 years they're trained and certified to become aerospace workers. So in Bangalore, you've got entrepreneur, engineer, and craftsman. In UK, we have materials
and robots,
machinery, and money. This is actually taught as a case study at IIM Bangalore and IIM Ahmedabad.
Yeah. Today, everybody wants to be a defense manufacturing company. Is it that easy?
The two biggest things you need to bring to this business is patience and passion.
So, who came up with the names Cheel and Katil?
Well,
and there's Patang as well.
Patang is persistent. It's a tethered drone, which you can use for surveillance. The Cheel is an eagle, and then you see our Katil, which is an assassin. We also have a few other birds coming which have Sanskrit and Indian names.
Let's talk about the Tejas, which you've been involved with as well.
Right.
I mean, you had the Air Force chief go on record to say, look, I'm getting frustrated with the pace of delivery.
You can't blame HAL alone. It's the whole system. If somebody wants to go out and buy coffee for the year, give a contract, it'll probably take them more time than in Dynamatic we take to decide on a big machine worth 20 crore rupees.
Hello and welcome to the Young Turks Reloaded podcast. I'm Shireen Bhan. We're coming to you from Bengaluru. We're very close to the Bengaluru airport. So through the course of this podcast, you are probably going to hear aircraft whizzing past us. But that's also important because that's really the story we're going to tell you about here on the podcast today. If you've been reading the news and watching headlines, then you know that Make in India in defense and aerospace is the buzzword. It's the big theme today. We're seeing stock markets rewarding companies in this space. But what's important to note is that this is not an easy business to get into, and it's certainly not a business that can get you a quick buck or two. To really understand where we are in the Make in India story, where we are possibly headed, what the opportunities are, but more importantly, what the constraints are that we need to contend and cope with, is a man who spent the last 4 decades, starting at 20 in this space, joining us today on Young Turks. Toby, many thanks for joining us here on the Young Turks podcast. It's a pleasure to have you back on the show. As I said, 40 years now here at Dynamatic. Everyone's talking about Make in India in defense. Everyone's talking about the aerospace opportunity. I want to understand from you, where are we today? Is this the big breakout moment that you believe we could be sitting on, or do you believe that there's more hype than reality?
Well, when we started, we were Dynamatic Hydraulics Limited was a company that made hydraulic products for tractors, agricultural tractors, bulldozers, drill rigs, cranes. Pretty boring markets, but very high precision products because we were pumping oil at 3,000 to 4,000 pounds per square inch. So very highly engineered safety products. And in the early 90s, in a garage behind the pump plant, we started a little garage with a little board on it saying Dynamatic Aerospace. 2 or 3 things. One is it was my childhood passion, and I'd been an aero modeler.
Since the time that you were 7,
Since I was 7. And the second was being in Bangalore, which is home to DRDO, NAL, HAL. We had a lot of opportunities to develop, to actually co-develop. We were developmental partners for their R&D divisions, where we did prototyping, tool manufacturing, and the design of the manufacturing engineering itself before these things went into series production. And so we were involved in almost every program through the early 90s and early 2000s. At a certain point, HAL started building the Sukhoi 30. And roughly 1/6 of the airframe was built by Dynamatic in a plant, and that took us a step up. And in many ways, I consider myself to be a child of DRDO and HAL, which we learned a lot from and we grew. Around 2007, we started working for Airbus, and around 2009, we started working with Boeing Defense. And we rapidly became their global sole source for what we do. So around 850 Airbus aircraft, every A320, 318, 319, 320, 321 and A330, we make the flap track beam assemblies. So we actually have facilities in Bristol and Swindon. Now the wings of all these Airbus aircraft are made in the UK in Broughton. So what we did was we acquired businesses and then grew them, put in complete robotic lines. The raw materials which were sourced in Europe were machined at our facilities with robots. Now, India 15, 18 years ago had interest rates that were 16, 17%. Even now it's 9%. We borrow at 1% there, and we have completely robotic manufacturing of very high precision products at scale. And you're able to continuously run these machines 24 hours, 7 days a week. Now, the beauty of what India offers is very high quality engineers and craftsmen. So a lot of people think of an aircraft as a highly engineered product. But we have to remember an aircraft and a spacecraft are crafted. And that's why there's craft in the word aircraft. And so while it's a highly designed, highly engineered product, it's also highly crafted. And across the world right now, you're seeing generations of craftsmen who were there for maybe the last 60, 70 years retiring. So there's a need for fine craftsmen. And as a company, we've been very involved in supporting craft. So we work with craft communities, 55 Gram Sabhas around us. We take the children of actual artisans who've been working with their hands from the time they were 2 years old. So we find these children of painters, sculptors, weavers, basket makers, toy makers. And we, along with the government, manage a government-owned industrial training institute, ITI Devanhalli. And we take these children when they're around 15 or 16, and for 3 years trained and certified to become aerospace workers. These come into the workforce and they're world-class craftsmen. Now, Bangalore is also home to the largest cohort of global engineers. So in Bangalore, you've got entrepreneur, engineer, and craftsman. In UK, we have materials,
And robots.
machinery, and money. Low cost of capital. So what we've done is we've created a global best value model, and this is actually taught as a case study at IIM Bangalore
Ahmedabad and Bangalore
IIM
as well.
Ahmedabad. So, so that's the story in a way of what we've done. If you look at us today, we are a single source for Boeing Defense for their P-8 and F-15EX. Now, the F-15EX hasn't been sold in India, so this is not an offset. We are winning business based on kabiliyat, capability.
And just for the benefit of people who are watching, let's explain what this offset business is, because a lot of the Indian defense manufacturing came about on account of offset obligations. So you're saying this is not an offset.
If you look at what offset means, it means that India buys, let's say, 30 aircraft from Boeing or 50 aircraft from, any of these companies, Dassault, and they put a burden on the seller saying that you will buy from India a certain volume. You'll see a lot of Indian companies going out and selling offset capability that we will produce stuff so you can fulfill your offset obligation.
The mandatory local requirement as part of these contracts.
Yes. So by the way, if our product or production or export ticks that box, that's fine. But that's not what we ever offer. We offer basic, hardcore engineering, design of the manufacturing process, tooling. If you look around us, all the tooling is actually designed and built in Dynamatic. We have capabilities to create manufacturing processes, digitize erstwhile analog processes, and make it really global best of the best. So that's the Kabiliyat part of it.
I want to pick on this Kabiliyat aspect that you spoke of, because you make it sound easy, and it's not. It's far from that. What does it take to create a company sitting here in India that becomes a tier 1 supplier to the global best? Today, everybody wants to be a defense manufacturing company. Everybody wants to be an aerospace manufacturing company. Is it that easy?
The two biggest things you need to bring to this business is patience and passion. And if you're chasing money, you're not going to build a very good, valuable business. So if you take what we've done is, we are, in our heads, we have just built the foundation for a great future. So 2 years ago, we were awarded Boeing Supplier of the Year. That is the best supplier in the world. 3 years ago, we were awarded Airbus's first Global Sustainability Award. We've been Bell Helicopters Best Global Supplier. So for us, these elements of excellence will drive growth. And I think what we've done is, in the programs we have and the ability to consistently deliver reliably for over a decade, decade and a half, you have the trust of customers to do bigger things here and bigger programs, which will make everything we've done seem insignificant. And if you see this campus, you see it's scaled for the next level of manufacturing.
So give me a sense of what the next level could be.
Next level would be large fuselage sections. So if you look at all these companies, if you see our latest ramp up that we're doing for Airbus, it is all variants of doors for the latest Airbus aircraft, the A220. So it's very interesting, because when we started working for HL, it was a big thing that they were exporting passenger doors to Airbus. We're industrializing right now and we'll start deliveries soon. The passenger doors, the cargo doors, the overwing exit doors, the service doors, and the emergency escape hatches.
So all doors
all
on
variants
the Airbus.
of doors for A220. The second thing is, if you look at what we're doing with Dassault, we're developing entire fuselage sections for the world's best business jet, which is the Dassault Falcon 6X. And their volume of production is, for the Falcon, is greater than what they produce, the number of Rafales they produce. And when you look at a Dassault Falcon, you have a 2.5 meter diameter on the tube, on the fuselage, going to 2.8 and 3 meters. A 320, an Airbus 320 and a 737, just 3.5 meters. So once you're reliably delivering Falcon fuselage assemblies, the next step is to go on to commercial.
Let's start by talking about what we're seeing happen globally today. There is a fair amount of flux. Geopolitics is dictating who does business with whom at this point in time. There are all kinds of restrictions being put in place. And the view is that India must now focus much more on its own R&D, on its own sort of design and development from a strategic perspective. Now, as Dynamatics and somebody who's worked closely with HAL and DRDO since your inception, how do you look at that opportunity that's opening up today, the indigenization of the defense industry in India?
That's a great question. If you look at us 30 years ago, we were involved in Indian R&D for India. And then we focused, the volumes just ran away, and it's essentially we're a global business with very little Indian. We're India for the world, make in India for the world.
For the world, yeah.
And the government, the government has really recognized that there's a real value in India, make in India for the world. Looking at the technology denial, the raw material shortages that are developing across the world, and the disaggregation or fracturing of the global supply chain, they're looking at Atmanirbharta.
Yes.
So we are now coming back, making a whole U-turn back. If you look at us in terms of, we have my new garage, at 59, a new garage, which is called Dynaton. And it's really something very beautiful because we have deep technology. We have developed our own camera systems, our own gimbals, our own autopilots, our own control laws, 5 million lines of code, down to the PCB level. Even on the cameras, we just buy the lenses, we build the cameras in-house.
Okay.
And based on those subsystems, we develop drones. Now, there must be 500 drone companies in India.
I was just going to say that.
If you go to Bangalore, I can throw a stone. I'll actually blindfold myself, throw a stone, I'll hit a drone company. A stone for a drone. But let me tell
That's a nice
you,
line.
Yeah, new one. But let me tell you, most of these guys just import kits. They're doing stuff in 2025 that I did when I was 7 years old. This is not the way to build drones. And if you look at the very large businesses, a lot of them are going in and tying up with some very large global companies, but it's essentially a rebadged global platform. When you look at Atmanirbharta, it means not just India for Indians, but it should also mean with a very significant amount of Indian brain power.
Yep.
And if you look at our Cheel or our Katil, it's a hunter-killer that we've designed, which is quite unique. We have a bird that's persistent. It flies 8 hours. It captures data. It transfers it electronically to the Katil. The Katil flies in a GPS-denied, radio-denied environment. It cannot be jammed. And it flies with a jet engine. So it's flying at 600 kilometers per hour. It's a mini missile.
So these are essentially drones that you have designed, developed, and are manufacturing here at Dynamatics.
In-house, yes.
In-house.
We have roughly 23% is from strategic partners. Okay. For example, we have a very unique engine on the Cheel, which comes from Australia. Now, the platforms are designed so that they can be sold to India and India's allies. So we have 77% indigenous content. Of that 77%, roughly 65% is made in Bangalore within 30 kilometers of us.
So who came up with the names Cheel and Katil?
Well,
and there's Patang as well.
Patang is persistent. It's a tethered drone, which you can use for surveillance. And you don't worry because it's electrical. You've got a Jeep with a generator on board. This thing can be up for hours. And then when you're done with your observation post, pull it down and go to the next location. So put it at the borders, put it for crowd management. It's very versatile. The Cheel is an eagle. And then you see our Katil, which is an assassin. And they all talk to each other. All of them have electronics developed and designed by us. We also have a few other birds coming which have Sanskrit and Indian names.
For these birds in specific now, what's the procurement plan? I know from conversations that I've had with people in government that post-Operation Sindoor particularly, I think one of the aspects that the government does intend to focus much more on is drone. And the world is now, post-Russia, Ukraine, etc., what we've seen is move towards, drone warfare. So what do you see as the future for Cheel and Katil from an India point of view and from a global point of view as well?
We're a Bangalore-based Indian company that's global. Our products are designed for the world. That's said and done. The first customer, the first solution that we want to build is for our country. But the products aren't designed to just be sold here.
To India or for India.
They're world-class products, world-class technologies, which will be sold all over to friendly nations. The second part of it is the question you asked about the global requirement of drones. What recent military operations have shown all over the world is the efficiency, the sheer capability of drones in causing massive damage and the bang for the buck. So drones are a tremendous, their time has come. The second part of it is not just the drones, but the software on it, the AI on the drones. So we actually, when I talked about the Katil, the Cheel will give sighting information, targeting information to the Katil. The Katil then is unstoppable. It's got its own brain. We don't control it.
Let's talk about the Tejas, which you've been involved with as well. I mean, you had the Air Force chief go on record to say, look, I'm getting frustrated with the pace of delivery. What's the problem?
The Tejas is a really good aircraft. The fact that we are in 2025 struggling to deliver volumes, I think it's a serious issue and it needs much deeper thought. What we need is a process where the government reaches into all of us willing, private sector, globally competent companies. And they need to change the game. They have to stop thinking about manufacturing of fighter jets as something that has to be done in a traditional manner the way it has been done. You can't blame HAL alone. It's the whole system. If somebody wants to go out and buy coffee for the year, give a contract, it'll probably take them more time than in Dynamatic we take to decide on a big machine worth 20 crore rupees. I'll give an example. If you looked at Indian cricket, we never had that killer mindset that we have today in the past because everybody was focused on not getting out. So they would protect their wicket. And if everybody's protecting the wicket, you can't win. And then you created IPL and we started getting all these youngsters from all over India. And you have this hard-fought, high-tempo game. And suddenly you see India winning globally because these young Indians from all over, new places, new clubs that you never heard of 30 years back, are hitting and aiming for the fences and they're not worried about getting out. Because they know in the law of averages, if we swing for the fences and we are skilled and we train enough off the field and the processes are good, they'll deliver the match and bring the cup home. So I think in that sense, if I could use cricket as a metaphor, we need to do that in defense manufacturing in India.
You know, speaking of developments, global developments that could potentially impact your future as well as the future of the ecosystem that you were just talking about, bilateral trade deals, the UK-India FTA. I mean, you've already been transacting on a zero duty basis for, as you were telling me, for the last 18 years. So it doesn't really impact you. But what does it mean overall for more joint ventures, for more collaboration, for more partnerships, for instance? And we're still, of course, waiting for the India-US deal to happen, but the India-US defense collaboration has deepened.
Yeah, so India-US defense has grown warmer over the last decade and a half. The UK corridor that was established by us first has manufacturing in Swindon and Bristol and manufacturing in Bangalore. We're 1 hour away from Heathrow and we're right next to the Bangalore airport. So we looked at time rather than distance. And we said if we can shorten the amount of time, so we said it's only 10 hours. If we machine out, now you take an aircraft part, you take 100 kilos of raw material. The finished flying part is 8 kilos. Now you're only shipping 8 kilos instead of 100 kilos or 80 kilos instead of a ton. So instead of sending it by sea, we send it by air. So we have shortened the WIP cycle to 9 days. A typical, coming back to HAL or some of these big Indian, the largest Indian companies that ship 1,000 tons by sea, they have to suffer, you know, coming down through the Suez Canal, Somali pirates, monsoon, cyclones, and then ship it back. That's a 90-day WIP cycle. So in our working capital cycle, we removed $25 million just by shortening time. So I think that UK-India corridor that we developed so well with an FTA, with reduction of friction, with reducing rates both ways, with a common intent, can be a massive game changer for not just aerospace, but for everything. And the US already has very strong relationships with India in terms of IT and stuff like that. The question is the tariffs, and that's for them to sort out.
You know, one aspect that I want to talk to you about, because again, this is something that's been capturing mind space and headlines, is safety. I mean, you know, we've had unfortunate incidents, and it's been a tough year for aviation globally as well, and the focus is very squarely on safety.
Yes.
As a supplier, you know, I would imagine that that's the cornerstone for you. I mean, it's the cornerstone for the OEM, but it has to be a cornerstone for a supplier as well. I mean, how have you built for safety, and what does it take to actually do that?
So again, it comes back to process, it comes back to skill, it comes back to the traceability, the continuous, you know, trust but test. So if you look at everything we produce has written documents with signatures and stamps from beginning to end, from the suppliers, through our process, to the customer. And then what we've done is we've also created QR codes continuously. So the process is not only verified by hand in the document that travels with the product, but is also constantly picked up digitally and is monitored. Now, the people are skilled. You have a skill matrix. Over 2,000 people have their skill constantly tested. So we have a lot of sports in our company, and you'll find trophy cases across our factory. Some of them are for cricket, some of them for soccer, volleyball, kabaddi, but also for quality and productivity. And we have 48 teams. So you have a very collegial level all the way down to the ground, where people work in a sportsman-like manner with Corinthian values of a sportsman. So if a worker makes a mistake, they never hide it. They've been given that trusted space where they stop the work and they say, hey, this is what it looks like. And we either take it away or we have a documented plan to use the material, rectify it. So first it starts with the behaviors that you have. So nothing is hidden. That's very important. The second is the process that you apply to it. And the third is the constant skilling that you have for your people.
Well, we hope that you continue to build on the Kabiliyat, and thanks very much for sharing with us a very interesting perspective on where the Make in India story is for defense and aerospace. Toby, we wish you and your team at Dynamatic the very best of luck. Appreciate your time here today on the podcast. Well, with that, it is time for us to wrap up this edition of the Young Turks podcast. If you did enjoy watching this conversation, send us your feedback. If you heard all the planes above us, that's only because we're right next to the Bangalore airport at Dynamatics, bringing you the story of Make in India.
Hello and welcome. You're watching Global Lens and I'm Parikshit Luthra. US President Donald Trump's 50% tariffs on India came into effect this week. The move is expected to impact nearly $50 billion worth of exports, mostly from labor-intensive sectors. The US also ramped up the rhetoric on India. Earlier this week, trade advisor Peter Navarro termed Indian negotiators arrogant and dubbed Russia's Ukraine invasion as Modi's war. Later, in an extensive post on social media, Navarro highlighted that the 50% tariffs are also aimed at cutting off the financial lifeline India has extended to Putin's war machine. Navarro's statement came even as data sourced from Kepler shows that China remained the biggest buyer of Russian oil in August. It bought nearly 2 million barrels of Russian oil per day. India stood second, Turkey was at number 3, and Syria at number 4, followed by Azerbaijan. However, only India has been penalized. How does this damage the larger India-US partnership? Does penalizing India really help Trump in ending the Russia-Ukraine war? Joining us now to discuss all of this is Kenneth Rogoff, American economist and professor at Harvard University. Professor Rogoff, always a pleasure having you here on CNBC-TV18. Now, let me straight away begin by asking you about what Peter Navarro, the White House senior advisor on trade and manufacturing, had to say about India. He said that President Trump's 50% tariffs on Indian imports are now in effect. This isn't just about India's unfair trade, it's about cutting off the financial lifeline India has extended to Putin's war machine. Is coercing India going to help US in any way?
It's a very difficult question. I mean, the US-India relationship is incredibly important. And, you know, it's hard to interpret what he's doing. I'm going to use a chess analogy where Trump is playing a gambit. India is the piece being sacrificed in order to achieve a larger end. He believes that it will work. He believes he can repay India with interest, but it's very risky, clearly, in terms of the relationship. That's why it hasn't happened. That said, obviously, India itself has very high tariffs. India and Brazil are the two highest tariff countries until the United States walked in. And India has been buying the Russian oil, and it's been going on for a long time. And I think almost no matter who is president, this issue would have been confronted. Now, you ask why India? I'm at Harvard University. I don't know how you've been following, but President Trump's been punishing us brutally. He hasn't been punishing Princeton. He hasn't been punishing Yale. He's been punishing Harvard. It's easier for him to laser in on one organization and show what he can do. So certainly as one object of his attack to another, I'm in deep sympathy with you.
Right. But does this help him in ending the Ukraine war in any way? Because you've got China, which continues to buy Russian oil. You've got other countries like Turkey, which buy Russian oil and gas as well.
Well, I think it's a move in a longer game, to get back to my analogy. And I assume that, you know, at least he's hoping everyone will think he'll follow it with more. Turkey is an example of a country which is not only buying Russia's oil, but has been a conduit for goods from Europe to go to Russia without that are not supposed to, where marketers have closed down, but they can buy the goods from Turkey. I mean, also other countries, Kazakhstan, Azerbaijan, others. So no, this alone is not going to do it. China can just buy the oil that India has been buying. They can probably pay a bigger discount. No, this isn't a solution. It's very tough to be caught in the middle. I think at Harvard, there are some things that were wrong that certainly the diversity, equity, and inclusion maybe went too far. Anti-Semitism was a problem, but it is in many places. And he's hitting us very hard. And India certainly, has high tariffs, as Trump has noted, and India has been buying Russian oil, and it does help them keep their war machine going. So this is part of a larger game. And again, I think what Trump believes is that he can fix the India relations once he's solved the Russia war. I'm not saying that as someone who's advising him to do this, but that's my guess as to what their thinking is.
Right. Let me also ask you about another point that Peter Navarro made. He said that we can set aside the 25% additional tariff on India the day India stops buying Russian oil. But what would be the consequences of that? If tomorrow India does go ahead and stop that, could that not lead to a spike in oil prices? Will this stop other nations from doing so?
Well, the whole idea is to stop other nations from doing so. Again, I'm not a strategist in the Trump White House, but this is a step that the U.S. hasn't taken. There haven't been secondary sanctions. There haven't been sanctions against countries that are, in the U.S.'s mind, obeying the sanctions. Now, I have to say, one thing where the Trump White House maybe doesn't have a good vision is the importance of alliances. The United States needs alliances. India is extremely important. Of course, it's the fastest growing large country. Many U.S. firms are speaking of moving their business to India, moving their production to India in the future. India is going to take up a lot of the slack that's lost by cordoning off China. And certainly what Trump is doing to India in the short run benefits China. Again, I'm the last person in the world to describe Trump as playing 4D chess. I think it's a description he likes to have of himself. But I do think this is part of a larger game. You know, we'll see what happens of how this unfolds. It's far from over, and I am worried that this is going to last a long time. Right. Does U.S. stand to gain at all by damaging the partnership with India? Look, I think it's a very risky strategy. It's very concerning. India is certainly, you know, a democratic country. It's the large growing economy. It is a very important partner to the United States. The relationship is enormously important. I don't know what to say. I mean, I can't read Trump's mind, predict, you know, everything he's going to do. I don't know that it will be effective. We'll find out. There are people who think that Putin agreed to start at least talking again because of the threat against Russian oil through India. But it's very speculative. On the other hand, the situation in Ukraine's very concerning. The war is nowhere near over. Putin doesn't seem willing to give in. That is a dangerous, unstable situation, which, you know, ultimately could come back and hurt India as well. So Trump's taking a risky move. Is it absolutely stupid? No, not necessarily. But on the other hand, it's very risky in terms of this extremely important relationship. Maybe he should have gone after China.
Right. Maybe he should have gone after China. You said that in the interim, because of Donald Trump's policies and 50% tariffs on India, China is going to benefit. In the next few months, what is the realignment and benefits to China that you see? Well, first of all, they may be buying, you know, getting some business India doesn't get. But I think in the next few months, it's not where they benefit. It's in terms of making alliances. He's helping patch the relationship between India and China. Countries that see the United States as punishing them are naturally going to move towards China to counterbalance. That's how great power politics works. Smaller nations or nations that aren't the driving military powers play the alliance, the other military powers off each other. India has been doing that, you know, very knowledgeably for many, many years. And of course, India is going to do that. Turkey is going to do that. Syria is going to do that. Everyone's going to do that. Trump thinks he has the cards. He thinks he's going to get his way. We'll find out. Right. I would also like to ask you about the impact on the Indian economy. Currently, according to estimates, 0.4 or 0.5% of India's GDP growth could be impacted. What will be the impact on India in the medium and long term if the tariffs stay at this level? And do you feel, Professor Rogoff, that tariffs will stay at 50% or will they come down at some point?
No, I don't think they'll stay at 50%. That this is almost a wartime footing. I think we're going to come off of it. Some agreement's going to be reached. I mean, the thing, frankly, that India could offer, where it would help itself, is India has had a very difficult time bringing down its tariffs. They've actually been steadily coming down. They're much lower than they were a couple decades ago, but they're still very high by world standards. And maybe India can find some way to politically to make use of this to bring down tariff levels, which the country that puts on the tariffs lose the most. The United States loses a lot. American consumers will get inferior goods. They'll pay more. Tariff policy is first and foremost punishing the nation that puts on the tariffs. I think I would say the same thing about India's tariffs. So again, Trump believes that he's accomplishing a greater good and people will forgive him for this.
Right. I would also like to ask you about the resilience of the U.S. economy. The U.S. economy grew 3.3% in the second quarter, but we have seen private investment also slowing down. What impact do you feel the tariffs will have on the U.S. economy over the next 3 years of the Trump administration? Will the economy continue to show resilience and growth?
Well, of course, there are other forces at work besides the tariffs. The AI revolutions in the United States, there's a lot of energy around that. But the tariffs hurt the United States. I don't think there's any doubt about it. They also undermine the dollar. If it's hard to get your money in and out, any country which has a lot of tariffs, it's much harder to be a reliable, safe currency. The United States no longer is what it was. I've written a lot about this, and I think Trump takes for granted that everyone's going to, circle their economies, center their economies around the United States, and that the dollar's absolute dominance will remain unchallenged. But he's providing many incentives for other countries to move in another direction.
You would also, I may want to also weigh in on Donald Trump's attacks on the Fed and the recent firing of Federal Reserve Board Governor Lisa Cook. Being on a constant war path with the Federal Reserve, what's going to be the long-term implications for this? Because the world is watching.
I think this is one of Trump's policies where there's no upside. This is just a disaster. He's not helping himself. He's hurting himself. Sure, maybe he can hijack the Federal Reserve, firing one governor after another and replacing them with MAGA-friendly replacements. But even if he pushes down short interest rates, that's all the Federal Reserve controls, he's going to make investors think that inflation is going to go up. That's going to push up long-term interest rates. That's the whole reason why having an independent central bank works. He thinks he's smarter than everyone. He thinks he understands the economy better. This is one case where I think he's wrong. Well, it could turn out that the economy goes into recession thanks to his policies, and it justifies keeping the interest rates low. But this is a huge mistake. Central bank independence, I think I actually wrote the first theory paper on this almost 45 years ago. I think it's been one of the most successful innovations in macroeconomics of the last 70 years. And to just say, well, we don't need it anymore. We have Donald Trump. I think it's just a huge mistake. It'll last beyond his regime. Once that innocence is lost, once the trust in the Federal Reserve is lost, it's going to be very hard to get it back.
Right. My final question to you would be, how do you see the U.S. government's move under Trump to go ahead and buy a stake of 10% in Intel, have profit-sharing deals with companies like NVIDIA and AMD to allow them to trade with China? What's going to be the long-term impact of such deals?
I mean, it's state capitalism. He's making the same mistakes that China made, that other countries made. It doesn't justify the policy. I think we need to think about our restrictions on AI. We need to think about how we engage with China on innovation. But this idea of taking innovations, Trump just loves making deals. I think he'd like getting back to Harvard. I think he'd like to take a stake in Harvard. He's taken a stake in Bitcoin and deregulated it, made a great profit that way. It seems to be the way his mind works. But no, it doesn't make sense to me. This is a company that was very healthy. They didn't need a bailout. There was no reason to be taking a stake.
Right. We've run out of time, but thank you very much, Professor Rogoff, for joining us with that very comprehensive view, especially your warnings on the standoff with the Federal Reserve and the consequences that this will have, because future administrations may also act in this manner and expect the Fed to behave in a politically reliant manner. That is a danger. Thanks once again for being with us. We're taking a short break here on Global Lens, but don't go anywhere. We will bring you highlights from Prime Minister Modi's Japan visit on the other side. Welcome back. Let's try and track Prime Minister Modi's visit to Japan and the importance. The message was, come make in India for the world. Yes, that was Prime Minister Modi's pitch to Japanese investors during his Tokyo visit. Addressing the India-Japan Economic Forum, the Prime Minister highlighted the strength of the bilateral ties and noted that Japanese companies have invested over $40 billion in India, including $13 billion in just the last 2 years. In his meeting with Japanese counterpart Shigeru Ishiba, the two leaders charted a 10-year roadmap for economic cooperation. They set an ambitious goal of 10 trillion yen in private Japanese investments in India, with a special focus on small and medium enterprises and startups. Both leaders also reaffirmed their commitment to a free, open and rules-based Indo-Pacific while issuing a joint declaration on defense and security cooperation. Amid China's curbs on rare earth exports, India and Japan signed a memorandum of cooperation on critical minerals to enhance supply chain resilience. Other landmark initiatives announced include the India-Japan AI initiative, a next-gen mobility partnership, a sustainable fuel initiative to promote energy security, and Digital Partnership 2.0, which will advance collaboration in AI, Internet of Things, semiconductors, digital talent development. In a major step for space cooperation, the two nations agreed to collaborate on Chandrayaan-5. India and Japan also signed an MOU to facilitate the diffusion of decarbonizing technologies to reduce greenhouse gas emissions. Let's listen into what the Prime Minister Modi and PM Ishiba had to say.
Friends, हम मानते हैं कि जापानी टेक्नोलॉजी and Indian talent are a winning combination. जहां हम हाई स्पीड रेल पर काम कर रहे हैं, वहीं नेक्स्ट जनरेशन मोबिलिटी पार्टनरशिप के अंतर्गत पोर्ट्स, एविएशन और शिप बिल्डिंग जैसे क्षेत्रों में भी तेजी से प्रगति करेंगे। चंद्रयान 5 मिशन में सहयोग के लिए इसरो और जाक्सा में बनी सहमति का हम स्वागत करते हैं।
Japan and India shares the fundamental values, and in the Indo-Pacific region, we need to maintain free and open international order based on rule of law. We share the responsibility to strengthen such an international order as we see increasing opaqueness in the international circumstances. Japan and India need to bring their strengths together for peace and stability of the region.
Joining us now to discuss the business ties between India and Japan is Kazuya Nakajo, Executive Vice President, Japan External Trade Organization. Mr. Nakajo, thank you so much for being with us. Let me begin by asking you about the future areas of cooperation where Japanese companies are keen to diversify business relations with India.
Japanese businesses in Japan is slightly diversifying to more in FMCG areas, and also those which are appreciated by the diversification of life, or increasing this quality of life of India. So that is one area. The second area is due to this global supply chain changes. More and more like-minded countries are required for high-tech field, advanced technology field. So likewise, we have commenced to deploy some companies some companies in the semiconductor arena. We are expecting more cooperation in electronics and advanced electronics semiconductor field.
Mr. Nakajo, you spoke about future investments from Japan to India. What do you think would be the investment pipeline, and which are the kind of Japanese companies which are looking to make those investments?
Some companies are ready to invest in the semiconductor arena. Semiconductor manufacturing companies, and also some semiconductor material company are ready to invest in India. And also, I am hearing that some advanced textile companies are now ready to invest. And other than that, some of these advanced electronics company are now ready to go.
If there were areas where you feel that India could ease up regulations, Mr. Nakajo, or carry out reforms which would make it easier for Japanese companies to invest, what would those be?
The biggest obstacles for expanding Japanese businesses in India is that we are seeing some of the trade protectionism arise in India. So this is due to the or in line of the supply chain resilience or the self-reliant condition could are to be sought by the government of India. But this has given a side effect of making difficulties in importing some of the materials and components from outside of India, which prevent smooth operation of Japanese manufacturing in.
Mr. Nakajo, thank you so much for being with us and telling us about the India-Japan trade and business partnership and what lies ahead. That's all we have for today on Global Lens. Thank you for watching. Goodbye.
Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Prime Minister Modi wraps up the SCO summit after resetting economic ties with China and affirming a long-term partnership with Russia. In their first meeting since the US tariffs kicked in, the Prime Minister and Russian President Putin discuss expediting an end to the Ukraine conflict and finding a durable peace settlement. Partners, not rivals, India and China reset bilateral ties and announce economic re-engagement after a summit between Prime Minister Modi and President Xi Jinping. Direct flights and border trade set to resume. The joint declaration at the SCO summit condemns the Pahalgam attack and calls for the perpetrators, organizers and sponsors to be brought to justice. Stopped short of naming Pakistan, the Prime Minister calls Pahalgam's attack an assault on India's soul, with Pakistan's Prime Minister Shehbaz Sharif present in the room. The Sensex and the Nifty start the week on a positive note. The Nifty reclaims 24,600. The mid-cap index gains 2%. The rupee hits a record low against the dollar but recovers in late trade to end flat. Gold and silver prices in India rally to record highs. Hopes of a rate cut in the US and inflation data fuel a global surge in prices. 48 hours to go for the GST Council to meet on revising tax slabs. Consumer-facing businesses are hoping for tax cuts to boost sales this festive season as small cars, two-wheelers, white goods, garments and apparel likely to get cheaper. The automobile industry bats for a uniform GST rate across the sector. Royal Enfield maker Eicher Motors says a differential tax structure could damage India's rapidly expanding mid-capacity motorcycle market. The garment and apparel sector also clamours for a uniform GST rate. The Supreme Court dismisses a petition challenging the government's decision to blend petrol with 20% ethanol. Government argues that forces beyond the country cannot decide what class of petrol needs to be used. Chinese EV maker BYD reports a 30% decline in quarterly profits as competition heats up. Shares decline in trade even as the company's overseas revenue increased by 14%. A red alert in Punjab, Himachal and Uttarakhand as the flood situation remains grim. More than 2 lakh people affected in Punjab and 3 lakh hectares of crops damaged. Himachal Chief Minister declares a disaster. The Met warns of heavy rains and landslides in Uttarakhand and Himachal. The Maratha reservation protests in Mumbai entered day 4. An estimated 40,000 people have gathered in South Mumbai, bringing traffic to a halt. Reports suggest some protesters harassed women, including journalists and commuters, in trains. The Bombay High Court says protesters may be removed from all places except Azad Maidan. More than 800 people are killed and thousands injured after an earthquake jolts Afghanistan. Widespread damage in the city of Jalalabad and several villages completely destroyed, according to the Ministry of Public Health. The top story this evening. It is a new beginning with Beijing and an affirmation of India's decades-long strong relationship with Moscow. Prime Minister Modi's visit to China's Tianjin for the SCO summit is a significant event on many grounds. Let's decode them one by one. The Prime Minister's visit to China, the first in 7 years, comes amidst India's tariff standoff with the US government. Reiterating that we were partners and not rivals, both India and China reset their bilateral ties, which had reached a historic low post the Galwan Valley clashes in 2020. Both sides have also agreed on a mutually acceptable resolution of the border issue. The two countries will also resume direct flights, but no specific date has been decided yet. Prime Minister Modi also noted that the two countries should pursue strategic autonomy and their relations should not be seen through a third country's lens. We spoke with two former diplomats to get a sense on what the Modi-Xi meeting could mean for ties between India and China. Take a look.
From our point of view, if we can maintain peace and tranquility on the border, then we can slowly open up other aspects of our ties in a limited way. So as to keep the relationship stable and also persuade China, and this has always been our case without getting any result, that we must reduce the trade deficit between the two countries.
Prime Minister was very clear that we are not looking at India-China relations through prism of relations with a third country or lens of a third country. Prime Minister reiterated that for normal development relations, you need peace and tranquility to maintain in border areas. Border issue is back to the center stage of the relationship.
The economy in China is not as strong as it could be, but it's strong enough on AI and on military and all sorts of different, cutting-edge technologies. China is showing how central it is to the global economy with semiconductors and everything else. And I think it's a good time to signal to neighbors like India, like Russia, that there is another power that they can sort of cluster around here. And I think that's the message that is implicit there.
Well, reactions there coming into the Modi-Xi meeting. India and China turning a new leaf is not the only big highlight from the Shanghai Cooperation Organization summit. If at all, it is a new leaf in a sense. It also marked Prime Minister Modi and President Putin's first meeting after President Trump's ramped up the tariff rhetoric. Prime Minister Modi Putin and Chinese President Xi Jinping were seen exchanging warm gestures as they came together under the same roof. The SCO members signed a joint declaration that condemned the terror attack in Pahalgam in April and called for the perpetrators, the organizers and sponsors to be brought to justice. However, the declaration did not name Pakistan. Remember, Pakistan is also a member of the SCO, and all member states need to vet the text of the joint declaration before it is adopted. Prime Minister Modi and Pakistan's Prime Minister Shahbaz Sharif were in the same frame at the traditional SCO family photo. However, there were at least 8 leaders between them. The Prime Minister also held a bilateral meeting with President Putin. We learned from sources that the formal meeting went on for about 50 minutes, where they did discuss expediting an end to the Ukraine conflict and finding a durable peace settlement. Prime Minister Modi said India and Russia have always stood shoulder to shoulder. President Putin remarking that both India and Russia are closely coordinating efforts at an international level. Parikshit now standing by with more. Parikshit, one, of course, is the meeting between President Xi and Prime Minister Modi and that India-China reset. But the other equally significant meeting in the context of what we're seeing happen with the US at this point in time is the meeting between the Prime Minister and Vladimir Putin, a 50-minute meeting. Also, the two leaders taking a car ride together. Russia has been a strong ally of New Delhi, and there is a reaffirmation in the strongest way possible through the SCO summit on that front, isn't it?
Well, yes, and clearly President Putin wanted to convey something to Prime Minister Modi in confidence, and that's why he waited for about 10 minutes for Prime Minister Modi to arrive so that both of them could travel in his presidential limousine. And this is a limousine made by a Russian car company. It's not an American company. It's not a European company. It's a Russian